Good morning. Welcome back to Forex Focus. I'm Glenn Freibarger. With me, Pete Mulmat. How we doing, Pete? Happy Wednesday.
Happy Wednesday, my friend. How are you doing?
Not too bad. We had Monday off, so feels kind of like a Tuesday.
So what does a hip, cool
I'm not doing
guy do on a Monday?
It's way too cold. It's way too cold. You know what I did do,
So you
actually?
bunkered?
I did. And I
Really?
watched all four parts of the Saturday Night Live documentary. I, of course, watched the like special or whatever. So they haven't.
Was the documentary better than the special? Because the special, everybody's got different. I thought the special was
I thought it was pretty funny.
okay.
But did you watched the majority of it? Our friend Frank thought it was bad and just watched the first one and turned it off. So
I watched the majority, but I had recorded it because the amount
Yeah.
of commercials on there were
unbelievable.
absolutely brutal.
Yeah. But yeah, the documentary was good.
That's what I wanted to see more of. Was actually more of the old clips.
Yeah.
And more of the story behind it all, and it didn't
Yeah.
seem like.
The
So that
whole-
was what the documentary
Yeah.
was.
The whole second episode was about the more cowbell sketch,
Okay.
which was pretty funny. That they drew it out for a whole hour. But it was pretty funny. And then the third one was like a week in the life of the writers. Seems like a cool job.
Yeah.
Seems like a horrible job. They have 80-hour work weeks, so it challenged me to work harder, so that's good. Like Tuesday, they have their big day on Wednesday, much like I have my big day here on Wednesday, and so on Tuesday night they stay up all night writing sketches. So, I was.
And then they got a picture, right? That's
yeah.
the whole thing, and then
Yeah, and then even if they get their sketch picked, then they become the director of it for the
Right.
rest of the week. But then all the way up until dress rehearsal, they can air it for dress rehearsal
Right.
Saturday night and then still cut it.
Yeah.
And that just seems, gut wrenching.
it's an
and then you get one day off.
right?
And then
It's an
oh,
interesting
geez.
competition.
So yeah, I was up all night working hard.
That was
for
that
you,
Paramount Plus.
sir. Peacock.
Oh, Peacock.
But they actually, it turns out I was paying for Peacock. Didn't really know that.
I am so see. I am not going to subscribe to any more of these stupid
Yeah.
things. Paramount Plus is the Kevin Costner thing,
Yellowstone.
the Yellowstone,
Yeah,
and all that stuff. So
But yeah, Peacock actually has it for they have an SNL hub now,
Right.
and you can play episodes by
but you have
the
to be a
decade.
subscriber into it.
Yeah, but then you can do the 80s, the 70s, whatever. So yeah, there's some good stuff. So yeah, maybe one day I'll be on Saturday Night Live.
You could do it.
Hosting would be pretty fun because that already means you made it in some fashion. So
Again, you're a young technology crypto billionaire. You could be on.
I'm not a Doge kid.
You could be
so
Mark Zuckerberg with far better hair in a couple of years. So
I'm just one perm away from getting hair as good as his.
oh, there you go.
Yeah. So yeah, other than that, it's too cold to do anything. All right.
Yeah.
Except work.
Except work. Listen to you. Except work. Wow.
So it's good to have a purpose. Thank you for giving me
You
that
sound like
purpose.
the angry little man who complains about being overworked.
No complaining
Okay.
here. I relish at the opportunity.
There you go. See, you're a diplomat and a tactician. I like that. Very good. Very good. You want to take a look at these markets?
Yeah, let's hop right in to the platform we got here. We've got the U.S. dollar, a big resurgence this morning.
Yep.
What calls out to me immediately is we're seeing dollar strength against some more exotic pairs that aren't some of the majors, but we did see here looking against the British pound, we're seeing quite the fall off from some highs, and I think we got some inflation measures this morning from the UK, hotter than expected. Yet U.S. dollar taking charge. What have we read into that?
It seems to be Euro kind of, unraveled a little bit yesterday afternoon. Aussie did too, Canada. And it just continues to unravel a little bit. So, we've had a pretty good bounce. We knew that the bounce, whether you think the next stop in cable is 130 or Euro is 107, it's not going to go there in a straight shot. So, for me, either story works. If you want to be the short-term contrarian, 126 was an interesting level here. 105 was an interesting level to sell euros. Now they're getting back to interesting levels where if you want to, okay, we had a little bit of pullback from the run-up, and I want to get long. it's giving you, and what it does too within this framework now, I've got a pretty good set of guide rails of where I want to get in and what to expect from it. And we know we're expecting less than we would have gotten two weeks ago in terms of movement. But you could kind of set up, where I'm wrong if it crosses here and what I'm looking to expect. And I think that works for almost all the pairs here. So depending on your bias, this is one where if you're a dollar bull, I wouldn't be looking to sell, 60 pip break with the idea it continues to go. Can it? Absolutely. But if we do see any intraday bounce during the day and you want to resume that, you think that dollar strength is going to resume, because again, the president was talking tariffs again, talking 25%. I don't know what he's saying. And sometimes it seems like he doesn't. But I think it's going to be interesting. Number one, that really doesn't impact the markets like it used to. And two, we're back to looking at rates, rate differences. U.S. rates, yields are a little bit higher today. Bonds are a little bit lower. U.S. equities at all-time highs.
Oh, yeah.
Gold holding on to almost all-time highs. So traditionally, the correlation to those would lead you to see a little bit stronger dollar. Is that why sterling's slower, euro's slower? No, but I think it's an interesting piece. What will be interesting for me is this pullback we see today. And let's just jump over to the euro really quick. Excuse me. Excuse me, everybody. Bigger pullback here.
Yep.
We get back to 104, really even down here. If we start to stage a rally, irrespective of whether or not Spruce put a new lifetime high in on the opener or not, or they fall off, that speaks to a little bit, well, there's a little bit more euro strength out there than we imagine. And we're not the only rocket scientists thinking about, hey, that was a 100 pip pullback. I might want to lean into this a little bit.
Right. So
detaching from those things that traditionally drive are good because it means the market has a little bit of energy. So I think in the setup here is, again, anything between 104 and a quarter, 104 even is an interesting area. Anything below 103 and a half, you're probably between 70 and a half, you're wrong. So you're risking 50 points. What are you looking for on the upside? I think 50 points is a reasonable upside. If you're looking for all 100, you've got a little bit nothing wrong with that. You just got a little bit longer term trade horizon. I don't think you're going to get that in a day like today, but we'll see. Shorter week.
Yeah, but it's interesting because we are looking at these hourly candles, and it's like, man, I don't really remember, this much action. But yeah, if you weren't tapped in, this high right here is just from Friday.
Right.
And so you've had all this action from Sunday, Monday because Forex markets weren't closed. But if you go to the daily, you can kind of paint a picture of greater momentum there coming off of really rejecting that 105,
right.
And now well back within the range that we've been seeing from the beginning of the year, since really this is that December Fed meeting, which
right.
really kind of recentered some of these trading ranges.
No, and from you can draw a bunch of lines on this if that works for you, whatever. But what this really says is, okay, right now the market's bound a little bit. We know vol's in a little bit. Daily ranges are shrinking a little bit. Set those expectations around your trades for both winners and losers. 104 is an interesting value area. Can this bleed down to 103 and a half, 103 even? Sure. Do you want to wait if you're a little bullish? No, I think you got a decent setup here. But it'll be interesting to see. And as Forex traders, what we love is the ability to have time to manage a position. So this market, the back and forth that we've seen all the way running through Jan and February, these highs, these lows, they've been nice moves. 250 points to the upside, 250 points to the downside. But even on an intraday basis, we've got time to manage something. If we put it on and we can get a little bit something out of it, you're getting some time to manage that, which when we had that November dollar strength, it was all just one way. And it was just...
Yep,
yeah,
there
you
you
were
go.
just you barely got a reprieve of any kind if you wanted to play the contrarian. So here you're getting a little bit of that. And, so when we look at that 104.25 level, we say, well, it's only 75, 80 points off the highs. Sure, but it's at a level that we would have looked at last year and say, well, we were thinking 108 was cheap, 107 was cheap, 106 was cheap, just till it wasn't. So you've got to kind of put a little bit of context. And that's why I don't like to stick to just one time frame. I like to, looking at shorter time frames, if you're an intraday scalper, sure, that's where you look. But going back to that daily chart, again, gives you a little bit of context. So it's a good way to kind of ground yourself into, okay, where have we been over the last period of time? And that, if that helps you make decisions, that's great. So you've put together some slides. Let's take a look at them, my friend.
I do have some slides. You brought up a good point about looking across asset classes earlier. We might get all-time highs in equities,
right?
And gold all-time highs. That's been the story. And for people that aren't forex traders, I thought it would be interesting just taking a deep dive into how to track the U.S. dollar, because much like equities, you're looking for one number to kind of gauge the health, the strength. Metals as well, bonds, you look at the 10-year usually for a lot of movement. And so there's some interesting history in tracking the U.S. dollar. So if we want to get into it, I put together what commonly people look at outside the Forex market. Good. DXY is an index that measures the U.S. dollar strength. It has a weighted basket of currencies, and the history behind that was from the creation of the Federal Reserve. Or the Federal Reserve created this index in 1973 and decided these weightings that you can see on the screen here from a trade perspective. They were looking for the most balanced, free-floating currency basket based on their trade partners at the time, and those weightings haven't changed since 1973. And here on the left, you can see UUP is one of the ETFs that tracks this, so more of a tradable asset that you can get this exposure to. But when you pull back the curtain and look at these weightings, it's pretty interesting because you have majority euro exposure, you have a fair bit of yen exposure, a little bit of British pound, but then you've got the Swedish krona in there. Do you have any color on why that was added? Because Swiss franc, not as big a mover, but more relevant in the Forex space.
Right. Well, this basket this basket has 6 currencies now. It used to have 11. Before the euro, there was French franc, the Deutschmark, Italian lira. Again, krona is still, the Swedish krona is still an independent currency.
Gotcha.
So that was always part of the tradable basket. And also, so that was left in there.
Okay.
And that's why, as part of, it's trade weighted. And again, this measures the amount of trade that each of the countries does. That's the way the dollar, there's lots of different dollar indexes, but the DXY is traditionally a trade weighted dollar index versus a transaction weighted or whatever way you want to weight the index. So that's where that came from.
Cool. Well, I thought it would be an interesting exercise taking a look at this one and knowing our background with the individual spot Forex markets. The backdrop of this exercise would be that dollar baskets are something you can create on your own with spot Forex markets in just kind of a way of thinking that you can size your trades as small or as large as possible. So just wanted to get the gears turning as if we were to update this dollar basket, if we were to stick with trade partners, that would give us in 2025 a much different picture. Here on the left, we have a nice little graphic that is weighted by imports, U.S. imports, U.S. running a trade deficit. I thought imports better to look at than exports, perhaps. You get a much different picture here. And then on the right, added some hypothetical weightings to this. So we see our largest partner by imports is Mexico at 16%. Canada 13%. That gives you a lot of North American exposure
Right.
that you didn't have before. China 14%. If you don't see that on the right, I thought when you group this this import by continent, you get around 41% exposure to Asia. And so here I've just walked through a little bit of cutting it up, and you could cut it up in a much different way. But if you take that 41%, you could hypothetically take 21% Japanese yen, 20% Australian dollar, if you think that would be a proxy to China exposure, just because of we know how liquidity takes shape in the Forex markets, not so much in the Chinese yuan.
Right.
But then euro dropping all the way down to 20%.
And is one basket better than the other? Absolutely not. It's just what you want to get out of them. But the idea of trading a series of pairs is something we talk about at Tasty, trading small, trading offer, not having everything just in one space. Is it more, do I have to be a more sophisticated trader to do this? No, you don't. You have to determine, and again, do you need all 9 components? No, you can build your own basket. What your basket does is take some of the single currency specific risk off the table. So if something happens in Japan, or if a trade thing happens in Canada, being long the dollar against Canada, yen, Aussie, and euro as just a starting point is a way to mitigate that one off, but still have a collective dollar exposure. Different type.
Right.
But it is not any more confusing or difficult than just saying, I just want to trade euro. There you're going to take all that comes with that specific exposure. So the idea of understanding and that your premise isn't, well, UUP, they do a trade weighted one that is kind of, many people argue isn't really a relevant weighting of index anymore.
Right.
So when you go out and look at dollar indexes, and there's tons of them out there. I mean, Bloomberg has one, Refinitiv has one, everybody has one. You can look at this. There's frontier dollar indexes that have things like the real and Argentinian peso and everything. Lots of different ways to look at it. So this is really a great walkthrough.
Yeah, and I put together a couple more options. We have reserve currencies circulating throughout the world. And if you look at this pie chart, U.S. dollars, obviously a large component of that. So if you take that component away, what are you left with? You're left with majority euro. And so that kind of goes back to the traditional dollar index. Is it that far off? If you take currency reserves as your benchmark, then you are going to get a lot of euro exposure. You're going to get similar yen exposure, a little more pound exposure, and then sprinkling down into Canadian dollar, Australian dollar, and Chinese yuan. Is this, do you think, a metric anyone, the kind of overall flow of currencies?
It's another way to look at it, and I think it's a great way of, again, the concept of, do I have to do all 6? No. But the goal is that you're creating a diversified set of outcomes in highly correlated assets.
Right.
That is, you could argue that's next level or next iteration of kind of your trading style, but it's just putting together a different, and honestly, then not to divulge too much behind the curtain, this is something we've looked at from the product side too. Wouldn't it be great to give people the ability, hey, we'll assemble these for you and you can get at them. And it's a little bit of a work in progress, but an interesting dynamic to see, because the idea of, it's just like, the analogy is, I love Amazon. And if you had bought it, you're doing great. But the idea of diversifying that exposure across several, even if you want to stay in that world, several different things, gives you a better long-term probability of success. Same thing here.
Yeah, and here, you can get kind of that global exposure with just 4 to 6 different currency pairs. Last one, nominal GDP, taking the world leaders. And I know I said earlier, we broke up that China component into yen and Australian dollar. Taking a look at this one, is 40% Chinese yuan crazy? We typically don't look at it as much because there is, some liquidity issues. Some kind of People's Bank of China has a lot more say over the flow of currency. So this is the offshore yuan, but still subject to that kind of dynamic. But here you're really, if you go GDP, you're getting China euro split with a little sprinkle of anything else. So what do you think about that?
I think that's a really interesting way to look at it. And you highlighted the challenges. The Chinese yuan, the offshore trading is banded by the government.
Mm-hmm.
Now, that band moves. And to an extent, that band moves because they can't necessarily always control where it is.
Right.
And they can also use it as a carrot and a stick. And you've seen some of that. The yuan has weakened significantly recently against the dollar because it's like, yeah, go ahead, put tariffs on us. We'll just mark down, put a 10% tariff and we'll mark down everything by 10% with our currency, and we're off to the races. I think all of these are interesting places to start about, okay, I'm fascinated by this currency thing because it is diversified. I'm looking for exposure. I'm looking for opportunity that gets away from my core equities portfolio. FX definitely does that. I want to get next level diversification, looking at a basket, and you're right. You don't have to pick all six. Very honestly, if you wanted to look at yuan, euro, yen, you're good to go to start with. Now, as you know, putting the pound, Canada mix is pretty straightforward on tastyfx. So it's not difficult to do, and you can track it every day. I think these are great ways to start to look at the power of what currency trade can give you. And it's just not this single occurrence of one currency against another. We can look at basket performance. The way, you look at professional traders trading equities, they're trading baskets of equities against each other. It is not necessarily more complex, but it's certainly adding another level of diversification, another level of opportunity, and another way to look at how do I want to express my opinion. If you go up to the second one there, Glenn, slide 3, for me, this is, whether you go by imports or anything else, what this gives me is the ability to take some of the noise out of any single currency and get a smoother set of exposures to the FX market. So they're all, you can start with what you know, what you understand. With a single pair, it's great because you could size it any way you want.
Right.
What's great here is trying to build this with futures is next to impossible.
Yeah.
You're going to have a huge position because you can't break them down this way as easy. In spot FX, you can size this down to a tiny trade. So you could build your basket with $1,000.
There you go.
Probably do it with 500. So this is a great way to start to look at next level returns and better ways to engage with the FX market. So fantastic work out of you.
There you have it, constructing your own dollar basket. Thanks for joining us. And next up, we have Tom, Tony, and Vanetta. Stay tuned.
Awesome.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it!
See that? We knew it.
Pretty good.
Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same
16
team.
inch?
12 inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hi.
Hi, Sosnov. How are you?
Oh, hola.
Are you buying new merchandise already from the store, Sosnov? Is that why you're wearing that?
I have not bought any new merchandise yet. I'm waiting. I'm going to be sending out the. You know how like people like when they get married or whatever what do you call it? When you put a
Look,
Wedding
you're talking
announcement?
to the most single. I'm as single as a Pringle, honey. I don't even know what you're trying to say.
single as a
registry.
Pringle.
Yeah.
That's not bad. That's not bad.
Yeah, thank you. Thank you very much. I really don't.
When you put your name down in some place.
Oh, a registry.
A registry, right?
Yes.
Well, I
He
want
can't hear or see now.
Right, yeah.
everybody to be.
Like you asked that to the single cat lady.
Everybody,
After Valentine's Day and another single birthday, I'm fine.
I know.
At least all the
I feel
chocolate is
sorry for
half
my
off now.
co-host.
It's fine. I'm sorry. Go ahead.
Yeah.
at least everybody can use this now as a registry. It's your next level registry.
Okay. Oh, okay then. I guess
I haven't had a chance.
Katie McGurgle, she's getting married. You're saying you're gonna buy her something from the Tasty Shop?
Oh no, I don't buy people
Sold.
wedding presents. Yeah.
But you've
don't
known
buy
Katie
people-
since
you
she
don't-
was
you
a
don't
wee
buy
lass.
Yeah, I have. I don't know what to do. You know, Katie's been here since.
You stole her youth.
Since the dawn of time, Katie's basically one of the original dozen or so.
Yeah.
No, she was an intern at Kai when we bought Kai.
Kai was
Yes,
a production
yes.
company, not
Yeah.
Kai the person. Because some people have only been watching since like 2022, and they're like, Katie was an intern for Kai, who works at Kai. They're two different Kais.
And now we own Kai.
Yeah, we own both Kais.
That's right.
Yeah. So yeah, that's crazy, and that's a long time. Katie's she's what we call a lifer.
Yeah,
We have a couple
yeah.
lifers here. You're a lifer. She's a lifer.
Sadly, yes.
Beth's a lifer. Are those the three women?
Linda's a lifer.
Linda's a lifer.
Yeah.
We have 4 lifers.
Speaking of Kai, by the way, today happens to be his birthday.
Wow.
Happy birthday to the general.
Hey
Happy
Beth,
birthday
can you
to the
turn
general.
up? Can you turn up Tony's volume, please?
Oh, yes, Tom. Yes, so nicely.
Yeah, we have 4 lifers, 4 women lifers.
Yeah, yeah. We're trying to get out. Tracy's been here a
Ain't
while.
easy.
Tracy's a lifer. You knew her dad.
Tracy's been here a while.
Yeah.
Case has been here almost since the beginning. I can't think of
Literally your child, but okay. Yes, Case is your child. Case has been here a
I
while.
think who else? I mean, women-wise.
Yeah,
Liz and Jenny, Adrian.
Oh, Liz and Jenny, Adrian. Yeah.
yeah.
Forgot about that.
Yeah, we have
You
our
wanna go
own
through the
little
mails?
trauma bonding.
Who, Beth?
You want to go through the mails?
Want to do males? No. No. All the males are replaceable.
Finally. Yeah. See, Tom spent his
It
summer
happens.
listening to Taylor Swift, and now he's like, F the patriarchy.
That's all it took to rot his brain. Mm-hmm.
Thank God I didn't spend my summer listening to Taylor Swift. I mean, it could be worse, but
You
no.
love Taylor.
No. So you know what?
Chicken butt.
If you had your choice of who would play in the next Super Bowl,
The Super Bowl does not deserve Taylor Swift. After the men, the Brads, the Dads, the Chads, they treated her so badly. They don't deserve
say
the
Taylor
joy
Swift. I said
and the
who-
glory that
who
is.
would you, if you could pick, who would
But
be?
my tastes aren't like like I'm a pop girly. Like I would have
So who
I would
would-
have a tribute to Broadway montage from all the greatest
Oh my God. Who would be your choice to be at the next Super Bowl?
Alexander Hamilton.
Oh my God.
It brings America together.
No, that would not. Tony, who would be your choice to be at the next Super Bowl if you could pick one band? One band.
I would go with Scott Sheridan's favorite, Billy Joel.
Billy Joel? Oh my God, I'd kill
I
myself.
would go with Scott Sheridan's favorite, Billy Joel. That's correct.
Oh no, that'd be brutal.
I'm telling you, a tribute to Dolly Parton.
No.
You asked me. Okay, Mr. Big Shot, who
I don't.
would you
I'm
have?
just saying. I don't think a tribute to Dolly Parton would be right. Billy Joel, no. I mean, if you had to go that direction, I'd rather see Springsteen.
Springsteen's good.
Hasn't he? Has he never done it?
I don't know. I don't think so.
Bruce.
Oh.
I mean, if you had to pick, do you know who's going to be in Chicago in like a week or two?
No, who girl?
Elvis Costello. I didn't even know he was still alive.
What, Allison? What? No.
My aim is true.
Yeah. See, thank you, Bat.
Yep, you got it.
That's a good song.
Is that Elvis Costello, the Allman Brothers?
No, it's Elvis Costello. He's
No,
right.
it's Elvis Costello.
I'm right,
Come on.
yeah. I'm like the human jukebox. Yeah, that's it. Wow, I didn't know he was still touring.
How about Alicia Keys? Let's do
Alicia
her.
Keys?
And
Where'd you pick her out of?
Springsteen was in 2014, by the way.
Oh, he was?
Oh,
Okay.
nice.
Yeah, it's only 10 years ago. I know your memory's not that good.
I don't remember Springsteen.
I don't remember either.
Yeah, I
honestly.
just don't remember him.
All right.
Yeah. I mean, have the Red Hot Chili Peppers ever done it?
Yeah, I'm sure.
They're 65 years old.
How about Foo Fighters?
I don't think so. I don't know. I mean, what I look like a Super Bowl aficionado now? Jeez, I mean, honest to God, you got.
How about a Led
Google in
Zeppelin
front of you?
reunion?
You're just saying you want more just like yacht rock, more dad rock.
How about a Black Sabbath covered band? How about that?
How about Black Sabbath? They're back on. They're touring.
They're
touring,
doing, I think,
right.
one show with like Slayer and like someone else in the UK. I'm serious. It's
How about Metallica?
How about Oasis?
How about Oasis?
How about Oasis?
Yeah, there you go.
Yeah, there's some white guys for you.
How about Rage Against the Machine for the next Super Bowl?
Sure.
Yeah.
There we go. One of my favorites.
I don't know where this is going.
I was just testing.
Okay, that's cool.
I was just testing.
I saw a
What were you
TikTok poll.
testing?
I saw a TikTok poll on it. I thought it was interesting.
But it's like you're trying to, like, everyone's tastes are obviously like so very different.
I
Like, you
agree.
guys want more like rock. Like, I am a pop.
I don't think
girly.
they're going rap artists next year.
I am a pop girly. I don't know. What is the highest rated halftime show? Like, not highest, the most watched. I'm sorry, don't go. The most
I don't know, but I just hope
viewers.
it's not like Sabrina Carpenter.
I would love it if it was Sabrina.
That would be painful.
Oh my God. Do you know she has the new video out with Dolly Parton? Injected into my veins.
Oh my God, that's
No, Sabrina Carpenter, she's like, okay, you open the door, counselor, so I'm going to just.
It's painful.
Sabrina Carpenter and
Painful.
her performance ability it harkens back
Oh,
to
God.
like a Goldie Hawn in her prime.
Oh, God.
Like, she has the looks and the comedic sensibilities. Like, you're not seeing the vision that.
Oh,
Because I'm
God.
old enough to appreciate like a Goldie Hawn, like on a Laugh-In. Like, Sabrina is that. She's a comedy queen.
You weren't even born when Goldie Hawn was on Laughing.
No, but we studied it in journalism school. Yeah.
You don't
Like they're
remember
going to
Laughing,
study
do you?
us someday, Tom. They're going to study you, Vanetta. That's right.
Laughing when it first came out.
Rowan and Martin. Yeah.
It was great.
Suck it to me, baby.
Laughing was absolutely great. Everybody would stay in just to watch Laughing.
Yeah.
Yeah.
The last year was 1972-73 for Laugh-In. Sad enough. Can we get a little topical? Can we get in the 2000s?
She brought it up.
I brought it up.
She brought it up.
You brought up Sabrina Carpenter,
Yeah.
so I had to make it relevant
You
to the
ran with
boomers.
it.
Yeah,
I had to
I
make
did.
it relevant to the boomers, Bat.
I didn't bring up Laughing.
Hey, how about this? Let's shift gears to baseball. They are testing in spring training that you can now challenge the pitch in spring training.
I like it.
So each
I
team will
like
be
it.
given 2 challenges per game and will retain successful challenges. Only the batter, catcher, or pitcher can initiate a challenge. The challenge is done by like robots. It takes like 15 seconds. So you get a pitch or something that you don't like.
Love it.
Only one of the 3 positions can challenge it. They put it up on the big board.
So they're testing it in spring training? Mm-hmm. Love it.
Yes. So
Love it.
No.
Because sometimes the calls are so bad.
but they're human. Like, it's, you have a fraction
Why
of a
are
second.
they using humans still, but we don't need to anymore?
I don't. That's a question for the commish.
I know, but I mean, so yeah, bring the challenge in. Challenge. I don't think there's a single challenge in, let's see, in tennis, in football, whatever, in soccer. I think every single challenge that they've added is great.
Okay. But is this enough to make like baseball exciting? Because baseball is fighting for its life.
Is it? I thought by making it shorter last year was pretty good.
Was it? I don't know if the numbers were up.
Not in Chicago because we had the two worst teams. I mean, it's pretty hard to get people to go to a White Sox game when you win 25 games during the year.
Also, the Dodgers legit have $400 million. Like, what are you gonna do?
Yeah, what are you gonna do?
Well, any team can pay the tax if they want to.
I know, not any team. They have more than like the bottom 5 teams like combined.
Can you tell me who owns a Major League Baseball team that's not a multi-billionaire?
Oh, sure.
My point is anybody can pay. The Dodgers choose to pay the penalty.
Yeah.
Who owns any $5 billion company that's not a multi-millionaire?
Billionaire, I said.
Billionaire.
I agree. My point is, I hate when they say, "Well, they don't make any money." I mean, people don't buy it. These teams wouldn't be trading for $8 billion unless they were making money at $8 billion.
Yeah. All right.
Sure.
I guess.
I'll give you that.
Hey, Bat, what'd you get up to last night?
Ooh, what was last night was like a honeydew list for the Bat. Mama was on a vengeance for me to do something around the house.
Well, I mean, you gotta earn your keep.
Yeah. Well, we still ordered out for dinner. I mean, I'll put it to you that way.
No, that's okay. There's no shame in that.
It happens.
It's fine.
It happens.
Hey, there's not really a good segue into this, but I think we are on the precipice of a new star emerging in the world of influencer culture. I'm talking about Mr. Scott Sheridan. I overheard him when he comes in for his Tasty Trade segment. So I overheard him last week saying, he's like, oh yeah, I think I'm going to take a Waymo because he's in Arizona right now. He's like, I'm going to take a Waymo. So I sent him an email because we work for the same company. He knows who I am. And I'm like, Scott, if you do take a Waymo, I was like, can you film it for me and send me the clips so I can put them on social? Because Tom, Tony, and JJ were in a Waymo and none of them thought to film it. And so Scott was like, I got you. But Scott is so natural, so just giving commentary. Check this out.
He's good.
We're in a driverless car, my first time ever. Not really excited about the prospect of nobody sitting behind the wheel, but I'm with people I love, and if this is the way it ends, so be it.
Look at this, he get me B-roll? Look at these angles.
Who put the music to this?
I did.
Oh.
I edited it.
Now that we're about 2 or 3 minutes into this ride, I have to say way better experience than I thought it was going to be. A little nervous getting in. Literally nobody behind the wheel, and I guess in Waymos you're not even allowed to sit there, so you can only have 4 people. Here we go. Look at this. You can see we're stopping, yellow light, correctly so. Here we go. Red light stopped. We're almost at our destination.
A few minutes later.
So we're pulling up to our destination. I have to say, solid A+ for this experience. Shout out to Waymo and to Jaguar, and I look forward to seeing this type of rideshare in multiple cities, especially Chicago.
Thank you from our new Tasty Live correspondent.
There you go.
Very
Send him
nice.
out. Put him out on the road. That's what he's good at.
No, yeah, I posted it on social.
good.
Follow us. It's doing numbers. What you got?
I don't. You want me to drive around and drive? Want me to drive Tony around like driving Miss Daisy?
If I asked you to film
Was
yourself,
Scott drinking? Was Scott drinking in that video? Was
I
he
think so.
drinking? Was he?
Here, I'll tell you what I'll do. Tony, you get in the back seat of my car. I'll drive you around, and then we'll have somebody film it, and you'll narrate it. Tom's driving. He's trying to get me killed.
You jealous?
He just missed a truck. Now he's over the double yellow line.
You
now,
jealous?
Now he sideswiped another car. Oh my God, we're out of control. Watch the yellow light. Watch the red light. He just went through a red light.
You jealous?
I mean, if you want to do that, Tony and I can do that, you know.
You jealous? Anyway, but it's so cool. I want to ride one. I've never I've never done it, but
Been there, done that.
okay. Where's the footage?
I actually did take. It wasn't good. It wasn't good, so I didn't say it. I'm sorry. We were squished in there. You mentioned everybody that was there. There was 4 of us in the car. I mean, JJ. He feels like he needs to. Anybody who sits in the middle. JJ was sitting in the middle. You can't spread open your legs. You know what I mean? And JJ felt like he had to spread open his legs. Okay.
Whatever. JJ's the only one of you knuckleheads that works out. JJ's swole.
Swole.
Yeah, JJ swole. Yeah. Yeah, Tom sitting in the front there. He can't walk and talk at the same time, so he's not going to film. It was horrible.
I forgot who was in the back seat with you guys.
Good question. Wow, this person's going to feel bad, aren't they, when they see this?
No.
Did we take a random stranger? I don't remember.
Again, you guys could have been iconic, but Scott.
Oh, it was a kid from Tasty.
Was it
nice
David?
Kid, another big guy. Remember,
was it David
he was doing the
on the
demos.
trade desk that does the demos?
David?
Maybe David. I don't remember his name. Sorry, David. I love you just the same.
Yeah, I think it could have been David.
Yeah, he's a big guy too.
Yeah, he's big.
Yeah.
Yeah.
Anyway, but thank you for that,
He's swole.
Scott. Yeah, he's swole.
There you go.
Anyway, hey, we got a great show for you today. It is a wonderful what's today? Wednesday? Yes, it's a wonderful Wednesday here at Tasty Live. Headed your way at the top of the 8 o'clock hour. We got an options jive, higher order options Greeks. Yikes.
Yikes.
I'm sorry.
Right.
That's on me. To my credit, I just celebrated a birthday. This font is hella small. Yes, higher order options Greeks. But I think Sahil's going to be in to help you with that. Yes?
Yeah, we need help.
Yeah, you need help. So we're calling in the lefty. We're calling in Sahil.
Yeah.
AKA Baby Shark.
Second order Greeks are tough for Tony and I. We're too old to learn new tricks on second order Greeks.
You know what? I do have this question for you.
What's your question?
How come you did not do Greek life? How come you weren't in a fraternity?
Ooh.
Yeah.
I went to a state school. I don't think we had fraternities.
All state schools have fraternities.
Really?
I don't know.
I don't remember how's this? I don't remember a single person that I knew ever in a fraternity.
Really?
Yeah, I don't think that.
I'm just curious. There's no.
No, I understand that. I don't think that there was a single fraternity in upstate New York in the state schools. I don't think there was a single one. I don't remember. Not only do I not remember fraternity, I don't remember a single person ever saying they were in a fraternity.
Interesting. I was just curious because I think of your generation kind of like the Animal House generation. We
had a house.
Yeah.
I had a house. We had 8. I lived in the same house for 3 years with 8 people, 4 guys and 4 girls.
I bet it smelled crazy in there.
It was quite. It's
quite the motley crew.
It was quite the motley crew.
Okay.
8 of us lived together. Actually, almost all of us stayed together for 3 years. All the guys and all the girls.
Aww. Crazy. See, that's nice.
Yeah.
Then at let's see, 8:40.
Did you guys ever swap around, Sosnoff?
Nope. Hey, 8:40. It's a family show. It's literally 7:19 in the morning. Back.
Not really. There was some running around the house naked, but no.
I like that. So you're saying there's a chance?
No. And because it is Wednesday, we got What's Your Assumption at 8:40. So our viewers write in with an underlying, and they have a directional bias. That's going to be at 8:40. Then 9 o'clock, Skinny on Options Math with Jacob. Yes?
Skinny on Options Math with Jacob. Yes. And we're doing something really interesting.
Oh, okay.
Does it say in there what it is?
It says volatility and the parabola of expectation. What?
So we did a piece when we first started Tasty in 2011.
Wow.
And crazy as it was, because we answer all the emails, some customer wrote to me and said, hey, do you remember this piece you guys did in 2011? And I go, no, that was like 14 years ago. I do not remember a piece of research that we did. He's like, he goes, I'm looking for it. And I go, well, I don't know if we have it. But the funny thing was, I forwarded it on to Jacob, and he's like, you know what? I'm going to do another piece on this because it's 14 years later.
That's what Jacob does. That's just how.
And
his mind works.
he's like, you know what? It's time to update this piece 14 years later. And one of the things we love about Tasty is, updating pieces.
Okay.
So, yep, it's all brand new.
Okay, it sounds like a Barack Obama speech. I would like to talk about the parabola of expectation. No, okay. Anyway. And then we got live from the trade desk, big boy Scotty S. You know him as the hottest vlogger on the interwebs. No, he's going to talk about the top trending tickers over at Tasty Trade. And then we got Johnny Trade's Nikki Bat in the house, and that's around 9:45. This is for anyone with a smaller or more mortal-sized account compared to Tom. We love Nikki and his Johnny Trades. And that's going to be happening. I don't know if Liz and Jenny are on the floor of the SIBO today.
It should be.
Maybe.
But I don't know.
I don't know. I hope that they are.
Sadnov, I'm gonna save you here a little bit. I don't know if I'm gonna save you. What year did you graduate college?
79.
79. Okay, well, in 1953, SUNY took a historic step banning all fraternities, Sadnov, on all of its 33 campuses until 1977. So we're not gonna let you.
Yeah, I don't think they have.
For the most part, they were banned, and then like 2 years.
Yeah, I'm telling you, I don't know a single person was in a fraternity.
Interesting.
Thank you, my Taiwanese source, Ryan.
My son was in a fraternity. My daughter was not.
In a sorority. Right? Yeah. Okay. Hey, you guys want to do your daily dose?
Sure.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire.
This just in.
Top story. Just in.
Today's headlines. This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is February the 19th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Bat, any earnings on the horizon?
Walmart?
Yeah.
That's all I got.
All right, that's it. The aristocrats. Hey, getting to my first headline of the day. The S&P 500 eked out an all-time new closing high yesterday.
It did?
Yeah, it did.
Because they goosed it on the close about
They
15.
really goosed it up like around 10 minutes to go. And
right at 3 o'clock, they took it up about 15 handles, but I didn't realize that was a new high.
Yep, the S&P 500 squeaked past its previous record closing high on Tuesday at the top of a holiday-shortened week with earnings season winding down and Fed Reserve minutes on tap. But that S&P hit new highs.
I did not know that.
Look at you, Sadnov. Look at you. The S&P's making all-time highs, and you're not getting killed. What have you? Look at what we taught you. You're done.
What are you doing with your indice positions, like relative to each other, I guess?
We're a little short here.
Okay.
But most of it, short deltas, just came from the rally yesterday afternoon.
Okay. U.S. President Trump said yesterday he intends to impose auto tariffs in the neighborhood of 25%, as well as similar duties on semiconductors and pharmaceutical imports, the latest in a series of measures threatening to upend international trade. The levies on automobiles could come as soon as April 2nd. I hope that's not just bad. April 1st. I have to report. I can't.
You don't have to. There's no law that says you have to report.
I'm a financial news reporter, so this is
Nobody
financial
cares
news.
about
It's
tariffs.
Financial news. But if you're going to buy a car,
Nobody knows what they're going to do anyway for the market or the stock.
Just don't ever report on tariffs again. If there's ever a tariff story, never do another tariff story. Nobody cares.
I mean,
it's so.
I'm not. I'm gonna hold your hand when I tell you this.
I am not going to comment on stupid ass tariffs.
I will tell you this though, but it moved the Asian markets.
I don't care.
It moved the European. Okay, can we talk about currency markets then though? Let's talk about that.
Currency markets are unchanged today.
They're not unchanged today.
I mean, they're all basically unchanged. The yen's up a little bit, and the euro's down a tiny little bit, and the other ones are all pretty much unchanged.
Okay, well that's not.
Yeah, he's right. Okay. They're basically unchanged.
Yeah, they're basically unchanged.
How about this? This is crazy. Vanguard's S&P 500 ETF VOO is finally seized the title of the world's largest ETF. It took down the SPY. I didn't even
weird
know
is
this was by $1.5 billion. I know like the numbers
I've
like
never
fluctuate
traded
or whatever.
I've never traded VOO.
I've never even heard of VOO.
Because the options don't trade, Sad.
Yeah.
That's why you've never traded.
Okay.
So none of us have ever traded it, but the only reason that it's overtaken, do you know why it is?
I would love to have this discussion.
It's called fees.
Oh.
So what they did in order to overtake the SPY, they lowered their fees to 3. I believe it's 3
0.03 against 0.09 for SPY.
Yeah, so I believe it's 3 100, so 3 basis points.
Okay.
Which means that you probably have to manage about a trillion, at least $100 billion just to make any money.
Okay.
But
they have $633 billion in assets.
right, so they're 3 basis points. Spiders are, like Tony said, at around 9.
Oh.
So it's 1/3 the fees.
Right.
But
and it's also called supporting your own. Also, I mean, if you put money into Vanguard, where do you think they put it into? They don't put it into SPY.
Yeah, right.
They put it into VOO.
I mean, it's just a fee thing. There's nothing else to it.
Okay. I just thought it was really interesting. The Spider ETF. Do you know what year it launched?
Spider ETF.
Yes.
I'm gonna guess.
Okay, let's guess.
I'm gonna guess Spider ETF. I'm gonna say 2000.
Ooh, Bat, what do you say?
98.
1993.
I don't remember it in 1993.
Okay, well, it was the first U.S. ETF, and it was launched in 1993.
I know the Qs launched around like 1997 or something.
Okay.
But I thought the Spider was late, or if it launched,
Literally looking at it right here.
I know. then nobody traded it for like 10 years.
I believe you, Vanetta. I believe you.
Right. I didn't.
Nobody traded it.
Vanguard's lower fee Challenger didn't launch until 2010.
Okay.
So, hey, keeping it moving. Gold holds near its record as word that I cannot say, and geopolitical angst aid demand. Let's talk about gold.
Almost. Yeah, I mean, it's just kept going up yesterday. It was up like $50, up $9 this morning.
Gold is becoming really a pain.
What are you guys doing?
I actually am telling all my Italian friends not to wear their gold chains.
It's becoming a pain, like you said. It's just, it's been going straight up. It's kind of like a pain. I'm a little bit short here this morning, a little bit.
I think TP wrote about Newmont mining in the Cherry Bomb last night.
I don't know what he wrote, but
he's smart.
But I didn't know if you're doing any of the gold miners at all. I know those are its own sort of set of frustrations.
Thank God I'm not doing them because I would have got killed, but no position.
Okay. The largest bank in the U.S. has revealed nearly $1 million in holdings in spot Bitcoin ETFs. J.P. Morgan, one of the world's largest financial institutions, has significantly increased their exposure to Bitcoin and Ethereum ETFs, according to new 13F filings. What are your thoughts?
Is $1 million, is that the right number? Is it $1 billion?
Yes.
Is it supposed to be $1 billion?
No, it's $1 million. You're like, how is this news?
How is...
But it's into one ETF. I don't know.
JP Morgan has more than $1 million sitting in their Coke machine.
Sure. Okay.
I don't even understand how that's even a story.
Okay. Well, it is. And so let's talk about it.
$1 million.
Do you have $1 million in spot Bitcoin? Or they didn't write a story about you?
No, I'm just saying it's the most ridiculous thing I've ever seen. JP Morgan, they have what? I don't know how many trillions of dollars.
Sure. No, it's
$1 million. It's not a story.
$1 million.
Sorry, that's not a story.
$1 million.
That is not a story.
Kind of.
No.
No? Okay. Can we talk about Bitcoin in general?
You can talk about it. It's up 2,000 today.
Yeah, because it was down big yesterday.
It was down over 2,000 yesterday.
Right?
It's up 2,000 today.
Yeah.
What about our friends over at Coinbase?
My friends over at Coinbase, up $3 after being down like $13, $14 yesterday.
That's correct. That's where I was going to go.
Hey, in other news, this is so stupid. Michael Saylor's strategy, remember, it's just strategy now. They dropped the micro, so it's just strategy. Get it right. They plan to offer $2 billion of convertible debt in a private offering extending the self-styled Bitcoin treasury company's unconventional fundraising strategy. They keep doing these little offerings. There wasn't a lot of interest for their last one, so they're kind of retooling it. So they're gonna sell senior notes due in 2030 with a 0% coupon, if that means anything to you.
They're going to sell notes
$2 billion, yes.
with 0% coupon.
Yes, due in 2030.
So they're selling them at a discount?
Uh-huh.
I don't get it. Like what?
They're being offered with a 40 to 50% conversion premium, including a 3-year put option.
Yeah,
It's above my head.
I don't understand all the details. It sounds like the put option gives, I don't know what it means.
Okay. All right.
I'd have to look at it. It sounds like you're paying a 40% premium for Bitcoin, but you have limited risk because of the put option.
Oh, okay.
So that's what it sounds like, but I don't really know.
All right, that sounds good then.
But you're loaning money for 0? I don't get it.
MicroStrategy also has cut 20% of its workforce because they need more money for their Bitcoin
Why do they
addiction.
need a workforce?
I don't, because who's going to make
Somebody's
got
to push the button to buy the Bitcoin futures.
I mean, somebody's got to make these sweatshirts, but
yeah.
I don't know why do they need, I mean, somebody's got to do what? Tony, call them up and say, hey, buy me, let's see, $272 million worth of Bitcoin here. Thanks, goodbye.
Thanks, goodbye. MSTR
They call a
back.
bond desk.
I'm not sure what the stock is doing, if you can trade MSTR. at all.
Sure, you can trade it.
Is up around $2, $3.36.
Okay. You going to do something in there?
No.
Okay. Well, I tried. Hey, new policies from the top U.S. securities regulator is handing corporate boards more power over investors in ways that could curtail investor-initiated reform efforts. Since last month, when Mark Ueda has been named as acting chair of the SEC has made it easier for boards to block shareholder resolutions. What are your thoughts on this?
I thought they only made it easier to block women and minorities.
Okay. You're doing bits now? I'm just talking about board power versus shareholder power. That's it.
I don't know.
All right.
I mean,
Good joke, Zaz.
I don't know.
Well, what are you going to talk about with Dylan today? I forgot to mention. I was remiss. Skepticism at 1 o'clock. Thanks.
Dylan was a little under the weather yesterday, so hopefully he's back today and strong as bull.
Oh, no.
We are planning to talk about the concept. It's a discussion on deregulation of lots of different types of groups.
Okay.
So it's like on regulatory oversight. Where's the line? Did we go too far? Did we go too far with respect to too much regulation? And are we going to go back and go? Is there a middle ground, or are we going to go too far back the other way with no regulation? I mean, the concern is we don't want a repeat of 2008, 2009. And the question is, where's the middle ground?
Oh, you're talking in the financial sector.
Yeah, the financial sector.
Gotcha.
For regulatory oversight. I mean, we definitely went, under Gensler, we went way too far.
Right. You're talking like Dodd-Frank sort of stuff. We
went way too far. And the question is, under this new leadership changes.
Yes.
Where's the happy ground, and can they find it?
Sure. Okay. I will be looking forward to that. That's 1 o'clock here at tastylive.com or on our YouTube channel. But no thoughts on who has the power, the board of a company or share? Because then why would you be a share? Like, if you can't enact change then why be a shareholder?
It is very difficult for shareholders to enact change because the boards have.
Then why confer rights to shareholders? Then why be a shareholder?
The reason people are shareholders is because the returns have suggested that it pays to be a shareholder.
So just shut up and take the money?
At 10 or 12% annualized return, shareholders have benefited at a much higher rate than risk-free rates. So that's why it pays.
Hey, do you know what the number one stock, Beth, before you put up the next slide, do you know what the number one stock in the S&P 500 was yesterday?
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 Can you give me a hint?
It's kind of a thorn in your side. I mean, that doesn't really narrow it down.
The number one stock in the S&P yesterday?
Yeah, yesterday. The number one performer.
I would say, was it SMCI?
It was SMCI. That's so
really-
wild to me.
Not really a thorn in my side, but the way you said it.
Okay, well.
Yeah.
Oh, because you're crushing it in there?
No. I just put a position on. I put a position on yesterday afternoon for the first time. I didn't have a position on.
Oh, gotcha. Matt, what's SMCI doing this morning?
Up $3.59 a change.
We did some ratio spreads in there, and so I sold some strangles at the end of the day.
Okay. All right. Well, the
You're gonna
shares
be golden.
continue to surge, continuing a 4-day streak. The company's NASDAQ filing deadline is next week. But they're.
I like how fast they go from this whole entire company could be a fraud and they have accounting failure across the board to, oh my God, AI server deals.
Whoop, whoop.
Yeah.
What a time to be alive. Hey, Elon Musk's artificial intelligence startup XAI has unveiled its Grok 3, the latest iteration of its chatbot, and it says it outperforms DeepSeek, OpenAI, and Google Gemini for certain tests. The chatbot is being rolled out immediately to Premium Plus subscribers on X. Have you ever used Grok?
No.
Okay. I have.
But I can also say that the Tasty bot will outperform those 4 different bots if you ask it specific questions about trading.
Okay.
So, I mean, it's not, that's a pretty broad statement.
Sure.
Anybody that has a very like centralized bot
Yes.
can say that their bot outperforms other bots because your bots only know what they're taught, right?
Sure.
So if you have a bot like we have that's only been taught everything that we do here at Tasty, then our bot's going to outperform every other bot when it comes to certain questions about options and
or coleslaw. Yeah.
Or coleslaw.
Okay. Hey, Meta announced its new LlamaCon. It will be its first ever dev conference dedicated solely to generative AI called LlamaCon after Meta's
they need
Llama
better names.
family of generative. So LLM, don't you get it? See, LLM, large language model, llama.
LlamaCon?
LlamaCon.
No.
LlamaCon. It will take
language,
place.
what is it?
An LLM is a large language model.
Well,
So
what is an LLAMA?
an LLAMA is a llama. Is an
I
animal.
understand that. So what is
Wait a minute, is the
llama?
Biden
Just to play
administration
on
back?
words. It's
I
just
know,
to play
it's
on
a
words,
stupid
man.
thing, a stupid llama.
Why do you hate llamas? Well, he didn't look at his little face. He didn't do anything.
Llamas, they're mean.
They'll spit at you.
Large llamas. I can't do it. I don't know. I can't make it work.
First of all, llamas are not nice animals.
Okay.
But they will spit on you, they'll bite you,
Okay.
and they'll
Fine.
chase you down, and they'll stomp on you. But then if you ever had llama steak, they're pretty good.
Oh no.
Wait a minute. How many llamas have you been around in your lifetime? 0?
You might be getting them confused with alpacas too.
I'm not getting them confused with alpaca. I know what alpaca looks like.
Okay.
A llama is a different animal.
Yeah, I
Where
am
did
aware.
you touch the llama?
Okay.
What?
Where did you touch the llama?
I've seen llamas before.
Can we talk about
you've
Meta? Did
seen
Meta
them.
break its 20-day winning streak yesterday?
Yeah, it was down like $25 to $30.
Okay, so what are the opportunities in Meta? Let's talk about that.
Meta should be sold on every rally.
Okay, that's not.
It's down $4 this morning, $716 or so, $716. Sorry, closed at $716, $713 or just under.
Okay. Also, Apple's little event is today. So if you play Apple for binary stuff, probably going to get the new SE4 phone today. No one cares, but I'm talking to you out there.
Oh, we have to get my phone pretty soon.
We have to get your
Yeah,
phone?
you and
I can help you.
Okay.
I can help you. So,
I've been waiting like 6 months.
okay. All right. Hey,
Patiently, too.
This is interesting. I love, obviously, trends are cyclical, investment trends are cyclical, but some cycles happen faster than others. Obviously, we're in the midst of a pretty big AI boom cycle, but a startup called Humane AI Pin is already one of the casualties. They're being sold for scraps as HP is buying the startup's assets for $116 million. If you don't remember-
Humane AI pin?
So
What
it's
is
a pin. It was about this big. You pinned it on your
Yeah.
shirt. It was weird. It cost $499. You could talk to it. It would use AI, and then it would search like a database, and then it would project a message onto your hand. You're like, for the love of God, I have like a retina screen with like billions of pixels, but no, let me project this image into my hand that's wrinkled and I can't read it worth crap.
Well, what is it supposed to tell you?
whatever you want it to tell you. Like it says Bethany is calling. So that again, it got roasted by some pretty high level influencers like Marquez Brownlee. But anyway, so the company raised like $230 million.
I really like that.
What?
The pin.
Okay, well, you could have bought them for $116 million. That could have been you.
I don't want to buy them.
Okay, well, I don't know what to tell you, but the devices will stop functioning at 12 o'clock on February 28th. So if you bought one,
have it.
If you bought one, you are SOL. Hey, Walmart set to report their earnings before the bell, I think tomorrow morning. This headline just says, here's why they can, keep beating things. But while other retailers have been, beaten up, looking at you, Target, what are your thoughts going into Walmart earnings?
Honestly, I'm pretty sure I don't have a Walmart position on. Let me see.
Okay.
Oh, I do. What? WMT? What is this?
WTF, WMT.
I don't know, you've been doing this 40 years. You can't figure out what it is?
I have the 100-105 strangle. I didn't even know.
That's tight.
I didn't even know I had it on.
Better spread out, girl.
I will have to spread out. I have it on in March. Let's see how we're doing on it.
Okay.
We are we are up 25 cents.
Did you manage your winners?
I don't even know when we put this thing on.
You did. You put it on back on 2.5 Sadnoff, and you rolled one time on the puts. You rolled them up for 81 cents. You sold the strangle.
Yeah, so we have the 100-105. We're up literally 25 cents on it.
Whoop, whoop.
I will widen the strikes this morning, I guess.
Yeah.
You've done this. You've actually had this on a little bit longer. You've rolled up a few times. Yeah.
Yeah, it was not worth it. Ivy rank is 81.
Ooh.
Walmart has been on an unbelievable streak.
They have.
I don't know. I have to just widen out the strikes. Maybe, I don't know, Tony. What would you do? There's nothing really much to do in here in March.
I would probably close it, to be honest with you.
Ivy rank's 81. If Ivy rank wasn't 81, I would close it.
I mean, it could get out of hand, so just be careful. Hey, I got to keep it moving here. GameStop stock dipped after a plan to sell some international operations. Store counts in Canada and France have been shrinking for years, and sales in Canada represented just 5% of the total. Shares in GameStop slipped Tuesday. The stock was up 9.2% last week because they said they're going to start investing in cryptocurrency. Okay, GameStop.
It's so
$26 and change, basically unchanged.
Walgreens Boots Alliance, WBA, Illinois-based company. They're feeling the fun again. Stock was up 14% after media reports said that the pharmacy chain is in talks to sell itself to Sycamore Partners, and that those talks are still in the works. Walgreens Boots Alliance.
We don't have anything on.
Okay.
Yeah, now I remember you were talking about, I mean, it's an $11 stock now, but you were talking about a $9.50 stock before. I mean, and this stock hasn't had an uptick in what seems like forever.
Yeah, I know, but they're doing a good job now. I don't know.
Okay.
Hey, Tom, have you ever had an Olipop or a Poppy?
Poppy, the soda?
The soda, yeah.
Yes,
Olipop or a Poppy. You have?
Poppy, I have a case of them.
Oh, you do? Okay.
Yes, I have 2 cases. I have 2 cases of Poppy.
Look at you coming alive, talking about prebiotic, healthy sodas.
I actually really like it.
Bat, have you ever had the Olipop or Poppy? Bat, I'm asking
but
Bat.
I haven't had that one.
Hold on, this is the news. Oh my God, boomers. Hold on.
Not me. Don't put me in there with him. I didn't say a word.
Bat.
I speak when spoken to.
I've never had simply.
Bat, I'm trying to include him. Hold on. Bat, have you ever had an Olipop or a Poppy?
No, unlike Sosnoff, I don't need these things yet.
So I never have either, but I guess it's a prebiotic soda. It's supposed to be better for you and all of this.
I've had Poppy. It's really good.
Okay, but I've never had one. I'm not opposed to it. I mean, I am a Diet Coke girl, so give me the aspartame or nothing straight into my veins. But Coca-Cola is launching its own prebiotic soda brand to compete with Olipop and Poppy, and it's called Simply Pop. It leans fruity in a nod to the Simply Juice brand, and it is to help consumers who are looking for a healthier option. But are you following the Poppy drama on TikTok?
No.
Girl.
No.
People are mad because Poppy sent a bunch of influencers like their own personal vending machines, and people just thought it was just like egregious and wasteful, and that they could have been better served sending them to like college campuses or to like women's shelter. There's other places that you could send a vending machine and have good marketing PR, but like Alex Earl doesn't need her own Poppy vending machine.
So I was in Costco and they were handing out free samples, right?
Yeah.
So I tried it, Poppy. I don't know what Olipop is. I never had that. But I tried the Poppy and I'm like, wow, this is pretty good. So I bought a case.
Yeah.
And it's really good.
I do have to say people are making funny TikToks. You do have to be careful, though, because sometimes they're like, oh, it's healthier, I'll drink 2 of them. But they don't realize that each can, I think it has like 5 or 6 grams of fiber. And if your body is not used to that amount of fiber, so if you're just pounding 12 to 15 grams of fiber, just be close to home.
No. I liked when all these influencers thought, X or Twitter was going away, and they started going, they sent me this stuff, but I didn't really drink it. I don't really like it. I don't like the way it tastes. I like when they were being real. That's what I liked.
I've never had it, but
I mean,
I'm not sure what Coke is doing. KO
it's pretty good.
That's all I'll say. Okay.
I don't know.
Does anybody ever look at Coke? Coke is trading $68.90 on the bid, down about a dime, but it did have a nice run from around 63 to 69.
All right. Hey,
Good
Cheetos.
Ivy rank of 44.
Cheetos, Tom. When's the last time you had a Cheeto?
I had a red hot flaming Cheeto.
Flaming hot Cheeto? Yeah.
Flaming hot Cheeto, like a long time ago.
Okay.
I don't remember.
Well, they've unveiled a new flavor. What do you think about this? A dill pickle, a flamin' hot dill pickle Cheeto. Thoughts?
Yes.
Flaming hot.
Beth is a pickle fiend.
Oh boy.
She says yes immediately.
Beth does love a good dill pickle. I know that for a fact. Yeah.
Right.
There you go.
I hope her husband pounds you into the ground.
It's true. She does. Do you not, Beth?
I'm not answering that.
It's hitting store shelves nationwide after longtime pleas from pickle lovers everywhere. So that sounds like a GI nightmare.
I didn't mean anything by this, Beth. I'm getting guilty by past performance here. I didn't do anything.
Hey, I got another story. Yesterday on Last Call, you and Bat talked about Nike had a nice little move yesterday, and you were unsure why, because it's your girl, Kim Kardashian, as Pete Momat likes to say, is teaming up with Nike and her brand Skims to help reach more women. Nike signed a new long-term partnership with Kim Kardashian's shapewear company Skims to launch a new brand called Nike Skims. So Nike, oftentimes the worst performer in the Dow, actually kind of turned it around yesterday, but it was down small in overnight hours. So.
It's down about $1, but you are right, Vanetta. It rallied from around 73 to 77 and change. It sits right now at 76 and change.
But you have a Nike position, yes?
I do. I'm a little bit long.
Rank at 82 in there. Earnings
tiny
coming
bit
March
long.
20th.
Okay. But Tom, now you can work out when you go on Boomer Spring Break. You can wear some Nike Skims.
There you go.
Yeah.
Hey, Netflix. Yes, that Netflix is reportedly looking to purchase rights to stream NFL Sunday afternoon games from CBS or Fox. They had a hit of that Christmas success and they want more. A major shakeup in the broadcasting landscape of NFL games could be coming by the end of the decade as Netflix is looking to snag some of those rights. What are your thoughts? Look, my Netflix subscription is approaching like $30 a month, and it's ridiculous.
I can't even get
And I can't even tell all the dudes on Love is Blind apart this year. They all look the same.
I can't even get TV to work anymore.
Well, that's a you problem.
I don't care. Actually, I don't even care.
What about football going to Netflix? Like a regular regular football, and you got to have a Netflix subscription.
I only care if the Bears get better. I care. If they don't, I don't care.
Okay, that's valid. Bat, what's Netflix's stock doing?
Ooh, Netflix. Let's take a quick look at that. Netflix had its first down tick yesterday. It looks like it's having another one today. It closed at 10.35. It looks like it's under 10.30 right now, down around $6 or so.
Oh.
Remember, Netflix has been on a tear here.
Okay.
Down around 20 yesterday.
Hey, for my viral video of the day, I love watching like sports reaction videos. Tom, do you think you could return a serve from like a high-speed tennis player?
For sure.
No chance.
Self-awareness.
No chance. Zero.
When's the last time you played tennis?
I don't know.
Or you played pickleball at Scott?
I don't know. What do you want to know? Who's the person?
All right. Well, see if you could return this high-speed serve. Watch this.
Why, it makes a difference who it would be, Sosnoff?
What?
It's just a... You don't like flinch with it? It's a cat.
Oh.
Okay.
No, he only flinches as Big Bear is underneath the deck. Remember when he got scared?
Yeah, I know. Yeah,
we could play that. We could play that one on the break if we had it.
I'm going to tell you something. When you see these professional tennis players serve,
yeah,
it's hard to even see the ball.
I know. That's why. I mean, you're
at 120 miles an hour. You're not.
Yeah, no, I get that. I'm fully cognizant. Anyway, hey, that's my time. This has been something. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got Confirm and Send, where we look at viewer email questions. We'll be back in 90 seconds. It's Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Why are you forcing me to show my love and affection for my wife through I have to buy flowers and chocolates, and if I don't do that on this particular day for 24 hours? Yeah. And by the way, she bites. She bites. So if I don't do this,
where are you in the relationship? Are you at the point where she's like, yeah, I don't really care?
Where is he in the relationship?
Check out this dude, what's living under his porch.
I like things living under. I like
a bear? It's a freaking bear?
Yeah.
I'm going to do that. I really obviously want to just take a little video and then we'll get him out of here.
He's like, I want to take a little video, then we'll get him out of here.
Oh my God.
Freaking bear's going to move quick.
Why would you even take a video of that? Well, brown bears don't attack? I thought brown bears were the nasty ones.
Oh, bears. They're bears.
Nasty.
I don't think you caught that.
Tell me we got that.
I wasn't expecting the bear to move. Cat-like reflexes.
If you missed the live show, here's our cherry on top weekly recap.
Why are you forcing me to show my love and affection for my wife through I have to buy flowers and chocolates, and if I don't do that on this particular day for 24 hours? Yeah. And by the way, she bites. She bites. So if I don't do this,
where are you in the relationship? Are you at the point where she's like, yeah, I don't really care?
Where is he in the relationship? How much trouble can you be in? That's where he's at. Okay.
Wait a minute. Where are you? Because
he lives in that danger zone, which is he lives in that little bubble at the end. I love that question. Where is he in the relationship? Well, there's 2 bags that are packed living in the front closet. Okay. I'm closer to where you are than where Scott is. He doesn't.
No. You gave me an over-under on my marriage of 18 months. I went up to you. I gave you a shot. You were one of the first people I told. I said, Tom, I got married. Do you have any advice for me? He goes, I give it 18 months. And he walked away from me, Scott.
Worst job I've ever seen in my entire life.
Hey,
what did you do? Did you just sweep it back and forth like that?
It was 5:30. It was 5:30 in the morning.
My mother in a muumuu could have done better than that.
Get the full scoop by checking out the archives at tastylive.com.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, would you like to take a quick look at the market? Even the S&Ps are down $11. NASDAQ's down 22. Fairly tight range, just like yesterday in the E-mini S&P. It's about 25 handles pre-market. Russell's down 16. That's the weakest of the group to the downside. And the Dow is down 100. They're all down around the same, with the Russell leading the group. Volatility up 7 cents, still hanging out at that 1720 level where we've been sitting for what looks like eternity, but really it's only been 2 or 3 days. Bonds down another 15 ticks, Sadnov, flirting with 114. 114.04 is the low. 114.06 is where they are right now. Bitcoin gaining back its losses from yesterday, up $2,500 to 96.5. Oil up 68 cents. Gold continues its rally, up $4. Net gas had a big move higher yesterday. It's having an equally big move higher today. 414 and change, Sadnov. That's a 4% move in net gas. You can see those green bars on the right side. It looks a little bit like Netflix. Well, Netflix 48 hours ago. That's all I got.
All right, these are emails that came into us overnight. Lots of them yesterday. Very busy for some reason. Markets weren't that busy. What would you consider to be a beginner's futures option trade? In addition to the product, in addition to
those are notes you just bought.
10-year notes. I just added a little to my position. I'm buying some bonds and buying some notes here for a longer term trade. In addition to the product, what expiration and what delta would you target? So if you're a beginner futures option trade, product, delta, expiration.
Probably NASDAQ / NQ options would be the place that I would go. Probably something with defined risk if I'm a new beginner trader. Something, around the 30-ish delta on either side, maybe a little bit lower to the 20-ish delta. If you have a directional bias, I'd be looking to sell a spread down there.
For me, if you ask me this question, I would say one of the really good places to start is in the options of the future I just traded, which is the /ZN. It's the 10-year notes. The options move relatively slow. The markets are very deep and liquid. You can get filled a tick around mid-price. It's a good place. You could start with, for example, notes just sold off pretty good. And if you want
IV rank of 9, bond products. Do you think retail investors really understand bond products? They don't really have a correlation to the market.
No. I wouldn't be selling. This is not a short strangle type trade, but if you wanted to get long, let's say 10-year notes, because you thought interest rates might go a little bit lower, you could sell an out of the money put in the 10-year notes. We're just talking about a starting trade. I would do March with. Actually, right now, March has 30 days to go, so I think that's fine. And you can get filled on, some out of the money. I would probably, in the case of the 10-year notes, go very close to the 35 delta, which is the 108 puts. They're 26, 27. So leave an offer in at 27, see if you get filled. You only have to put up a little bit of money. Maybe, the trade works out for you. That's what I'm doing right now. And I still think it's a beginner trade. But listen, you could do what Tony said. Sell a puts. You're not going to sell anything naked in the NASDAQ options. You're going to sell a spread, like call spread if you're a little bearish, a put spread, iron condor, whatever it is. Let's go next slide. Does volatility have any sort of pattern on the day of monthly expiration? Does it contract more often than it expands, or vice versa?
Volatility sort of pattern on a day of monthly expiration. I wouldn't say it has any pattern to expiration. Volatility in itself typically follows an inverse relationship to the market. If the market goes lower, volatility goes higher. If the market goes higher, volatility goes lower. But I don't think it has any. I can't say that volatility always goes higher on expiration or typically goes lower on expiration. I don't have any of that.
Yeah, this would be very random, and it would be impossible to predict. If you wanted to look at historically, there's more volatility contraction on expiration than there is expansion. But when it does expand, the moves are violent. So it contracts.
So when you
more than
least expect it.
Yeah, the move on expiration, volatility contracts more than it expands. But when it expands violently. So it's very hard to draw any kind of like, oh, this is a layup type trade. But I mean, it's a very random answer. No, there's no pattern. Let's go next slide.
Mm-hmm.
I want to increase the number of occurrences in my account. I'm not sure what the best way of scaling up is. I'd rather have more trades of one lots than fewer trades of more contracts. Is there a way to scale up the number of trades?
I would almost look to scale up strategy before I went to look for number of trades too. Like if you're more of an iron condor person, try a few strangles. If you're more of a naked put person, sell a way further out of the money call just to keep you still with your long delta before I went to looking at more trades and more contracts. That would be my first thing. If you've done that already, your biggest jump is going to be from 1 to 2, because from 2 to 3 on a percentage basis, it's even smaller than that. So that first jump is the hardest, and it does double your P&L numbers daily. So it does take a little bit of getting used to, but there's no alternative.
This is a tough one because you could do what Tony said and go by strategy. My preference in this case would be to go to our watch list, which is which is in the menu bar. It's the second icon down in the menu bar. And when you get to the watch list, go to high option volume in the drop-down menu. And when you go to high option volume, sort by IVR from high to low. And you'll see there'll be certain stocks in there that are interesting. Like Intel has 105 IVR right now. Oracle is 101. Newmont Mining has a 97. And you can go down the list and, BABA has an 86. It has earnings coming up. But there are plenty of things on here. Nike has an 82, Walmart an 81, Adobe an 81, Target an 81, United Airlines an 80, all this kind of stuff. And so there are plenty of stocks in here that have decent amounts of liquidity and also have really high IVR. That's how I would do it.
Tom's right. I do that on my podcast. Option trades today, every Tuesday and Thursday. That's how I typically find my trade. So he is right there when it goes. You are right on that one. Good job.
Let's go next one. Next slide. Do you think markets have grown less sensitive to world events? With volatility below 16, it seems like markets just don't care about anything anymore.
I think you're 100% correct, or I think it's all baked in, or I think news travels real quick. Take whatever you want. Yeah, I totally agree with you. I also think we've become pretty complacent to all of these things, and that sets us up for a decent sized moves one way or the other. We've been seeing them all to the upside as of late. So yeah, I agree with you.
I mean, there's no question that markets, do become a little bit desensitized to different things that are happening. If there's enough craziness around, you kind of get used to crazy. If you've never been around crazy people before, then you think crazy people are actually crazy. If you hang around with crazy people, then you think crazy people are normal.
It's amazing because over the last decade or so, I could not identify a crazy person anymore. That's weird.
Yeah. I mean, when I was on the floor trading with all the crazy traders, I had no, I couldn't pick crazy out of the picture. I mean, it was impossible. So yeah, I think that it's not that the markets don't care, because they do care, because there's a lot of money at stake. There's a lot of other things, but it seems like they don't, because there's just a lot of crazy around. That's all. Don't worry. Yep. They care. Yep. Let's go next slide. So what do you think about a strategy for earnings where I sell a call or a put that's just out of the money in the current weekly series and buy a call or put that's further out of the money in the next week expiration series? We call that a diagonal. It looks like that is a trade I can do for a credit. I'm just wondering how to determine my risk.
Yeah, your risk is whatever you pay for the diagonal. So if you're selling front month and buying back month, no matter what the width of the strikes are, again, if you're selling if you, let's say on the call side, you're selling the call that's further out of the money than the option that you're buying on the back end. It's only what you paid for it. So it's a defined risk trade. It does have a high probability trade. It is a directional trade. It does have short premium to it, so you do get paid to hold the position. And believe it or not, you do want the product to go straight up to your short strike in the front month. You prefer to do it slower rather than faster, but either way would be beneficial.
Yeah, this is. I wrote back.
I like it. I like it when the back month volatility is equal to or lower than the front month volatility, which happens a lot during earnings and stuff like that.
I wrote back to this person and said, this is a classic diagonal. You're doing this trade for credit, which I understand. And so the risk of this trade is the width of the strikes minus the credit you receive. So in some cases, you might receive $1, some cases $2, some cases 50 cents. And the width of the strikes might be $5, $10, $15 wide. So you take let's say you take your $10 wide, subtract the credit that you received, and your risk on the trade is $9, for example. And that's what a diagonal is. This is a classic. We're both very comfortable with this. This is an earnings trade. You basically want nothing to happen. But, a small move either way, that's what you want. Let's go to the next slide. So this person asked, what percentage of your trades begin as directional trades? You often come across as bearish, but do you keep that opinion separate, and how do you actually trade?
I mean, I think you have a market opinion in the market's totality, and products like ETFs that follow the market, futures that follow the market. You may put on a bearish trade if you're bearish in those products. But when you look at a stock, you typically look at it on its own and take it for its own. If it's near the lower end of its range and you've never traded it before, being a contrarian, you'll probably look to put on something neutral to bullish. If it's on the higher end, you'll look to put on something neutral to bearish, especially if it has high implied volatility IV rank.
Yeah, I mean, what percentage of our trades begin as directional trades? It's probably like, a third. I don't know, probably a third. I'm going to guess 35, 40%. Sometimes as much as 50, but 35% is probably about fair. Often come across as bearish. Yeah, because we're at all-time highs and I'm a contrarian. If we were at making new lows, I would come across as a bull. I just always come across opposite of what the market's doing. So do I keep that opinion separate from how I actually trade? Absolutely not. Absolutely not. We practice what we preach 100% of the time.
Very good. You ready to take a quick 90-second break, my friend? Even the S&P down 875. They've been holding steady here.
Sure.
We'll take a quick 90-second break and come back. We've got an option job next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
It's option. Jive.
Tomas, we are back, my friend. Hey, look at this. We got my man Sahil in the house. Oh, Sahil, you suck up. Look at you. You wore the same shirt as Tom. You are, oh my God.
He called me this morning to make sure I was wearing it.
Yeah, honestly, I was looking through my class and I'm saying, how can I represent Tasty Trade? I wore the gray one yesterday, so I had to wear the black one today. I forgot Tom wears these shirts, to be honest.
Sahil, you look really good, my friend. You do it a lot better than Tom does. Show us what you got today for this option jive.
So today, I know Dr. Jim talks about this a lot, so I'm going to go a little deeper.
We were
into
inspired by Dr. Jim's talk about second order Greeks. And,
inspired by all the math.
Oh, we were inspired. We were so inspired. Yeah, Tony and I were jumping out of our shoes when we were done with Dr. Jim on
so much. I can imagine all the trading and email reading going on in the background.
It's not like people use second order Greeks because they just, maybe some of the prop firms do, but I think it is good to at least know they exist.
And what they are. They are in some of our beginner option courses, actually. Like, the names get mentioned. So, if you don't know what they are,
So consider this a good reference guide.
Yes.
Sure. Mm-hmm. Let's do it. Higher order option Greeks. Sounds important. The Greeks are metrics that we use every day in option trading to help us better gauge the health and risk of our portfolios. Technically, Greeks are all simply first derivatives of the Black-Scholes model. We have spoken about the main option Greeks many times in our research studies. But what happens if we keep going deeper, looking deeper into derivatives?
Yeah.
This would lead us to a lesser known, higher order option Greeks, derivatives of the primary Greeks that provide deeper insights into the risks and sensitivities of our option positions.
Just keep on deriving.
Yep, keep on deriving.
I know Jacob loves these.
Keep on deriving. Now that should be a t-shirt. Let's go to the next slide. The Greeks measure the rate of change of a specific variable with respect to another variable. For example, delta is the rate of change in an options price relative to $1 change in the price of the underlying asset. A second order derivative can be thought of as the rate of change, the rate of the change of the rate of change. Let me think about that for a second. The rate of the change of the rate of change.
Yep.
Got it. In other words, they measure how much the main first order Greeks change with respect to a specific variable. This allows us to see when our Greeks are most optimal in a trade, leading to better management.
So basically, we're going to prove all of our mechanics once again using these Greeks, why we put on specific trades the way we do. And yeah, the rate of change of the rate of change gives us the most optimal ways to put on
the rate of change of the rate of change.
I thought it was a cool way
I do like that. Let's go next slide, Beth. All right, so this is what we're talking about today. Charm Vama. Who thought of Vama? It's like the worst name ever. Color,
yeah.
Vanna, and Rho.
Yep, these are all Greek names apparently. And you have the derivative with respect to. So what this is basically saying is charm is delta, the derivative of delta with respect to time. Voma, the derivative of vega with respect to volatility, and so on. So that arrow is a fancy way of saying what we're deriving with respect to. So that's why we get the second order option Greek from.
Got it.
Yep.
So let's just see. Charm delta, Vama vega, color gamma, Vanna delta, and
Rho is price.
Price with respect to interest rates. Okay, got it. I didn't know Rho was a second order Greek. I always thought it was the first order.
Yeah, I don't know. Because
okay.
Yeah, a lot of people put it in the higher order because price is with delta always. So then, I mean, you keep deriving on price again. So.
Got it. Yeah. Okay, let's go next slide, Beth. All right. Here's where it gets a little complicated. Let's take a look here. What are we doing here?
So, I mean, so I try to keep this very simple when explaining all five. So we have the formula, the definition, the mechanics, and then a nice graph to go along with it just to explain it. So the formula for charm, that symbol means partial derivative. So it's just going over what we went over in the last slide. So charm is deriving delta with respect to time. And that's the definition. So it tracks delta as time decay, aiding in delta neutral strategy management. And the mechanics are, it's lowest for the at-the-money options, and it increases as you go further out of the money. The interesting thing about this graph is that it's a negative y-axis. So a negative y-axis means that the numbers are getting bigger as you go to the bottom. So that's why we have a higher charm out of the money and then lower charm as you get more in the money. And the application for this is, this is why we trade out of the money options, because delta has a much higher, delta has a much higher decay as you head out of the money versus at the money. So you're able to collect more premium, and yeah,
on a relative basis.
On a relative basis. Yeah.
And yeah, okay, I got it. So lowest for at the money options due to the smaller delta decay increases as you go further out of the money option. As you go further out of the money option. Yes. All right, makes sense.
The first tasty mechanic is this is why we trade out of the money.
Got it. Let's go. Okay.
Voma.
Oh, okay. So what do we got here?
So Voma is Vega's Vega and volatility. So it's deriving Vega with respect to volatility. And the important thing about this is that it peaks at around 5 to 10 delta, and then it actually is at its lowest point at the monies. And this is why we trade around the 16 to 35, because I wrote down over here, volatility changes too much when you're out of the money, obviously, because the VOMA is at its highest, and then it changes too little when it's at the money. So that's why we kind of trade in the middle when it's around the 16 to 35 delta mark. So that's another one of our mechanics that comes from VOMA, basically.
Because that's where you get the most bang for your buck.
Well, you get too much bang for your buck if you move at the money, and then you get too little if you move out of the money, because
that's where you have you're at the most optimal point on the decay curve.
Because you don't want it to move too much, otherwise you're gonna you're gonna breach all your strikes, and then you don't want it to move too little. You're not gonna collect enough premiums, so we take the sweet spot. Yeah,
that's good. That's a good picture. All right, let's go next slide.
Color.
Color.
Yeah, that symbol, the upside down L, is the symbol for gamma. If anybody wanted to know that, I mean, we use it sometimes, but mostly we just write down gamma. It monitors gamma's time change, and this is what we know about. We've talked about it 100 times in our research studies. Gamma increases as we get towards expiration. This is why we manage our trades. And the actual definition of gamma changing over time, that line, that's what color is. So, yeah. Mm-hmm.
Oh, that's interesting.
Yeah.
Mm-hmm. Yeah. Gamma peaks near expiration, meaning deltas also change dramatically. That is why we manage our trades. That's why we manage our trades early.
Yes, that's why we manage our trades early.
Yes. Exactly, because an option can go from 0 to 100 in basically 2 ticks.
Mm-hmm.
Got it. Let's go to the next slide. Little Vanna.
Yeah, Vanna. No graph for this one, but this one is delta's volatility sensitivity. So deriving delta based on volatility. And this is why we adjust our positions based on volatility shifts impacting delta. All this is saying is that being long Vanna means that you're paid quickly when you're right and heard when you're wrong. Heard quickly when you're wrong. And to combat this, we diversify across strategies, expirations, and we can hedge our deltas. The reason we're doing all this is to basically manage our volatility, basically. So different strategies are optimal in different volatility environments, different expirations, and obviously hedging our deltas also allows us to control our volatility as well. So,
yeah, well, the nice thing about Tasty Mechanics are that we pretty much sell things in high vol, but we don't buy things in low vol, so we don't have to worry about the one half of this.
Yeah.
Yeah. All right, good. I like it.
Yeah.
All right, next one.
And finally, row. I mean, don't get scared about this. Actually, we're going to get a very nice takeaway out of this. So this is price with respect to interest rates. So it assesses price sensitivity to a 1% change in the interest rates. And the mechanics are the biggest effects. So yeah, interesting is that interest rates most affects the stocks that are in the banks, brokerages, mortgage, and insurance companies in the financial sector, because that's when you're going to be dealing with interest rates the most. And so for these three down here, I took a random sample of 10 financial sector stocks over 10 years and calculated their yearly cumulative change in basis points, because in order to see a large change, you need to have a large amount of basis points. So we go by the year. I know many people do their studies with 5 or 10 years changes in basis points. And we can actually see that if you have a rate change in the year of 25, 50, or 75 basis points, the change in option prices is only going to be 5 cents or less. If it's between 100 to 200, it's going to be between 5 cents and 15 cents. If it's greater than 200, it's only going to be 15 cents or a little bit more. So the takeaway from all of from this giant slide
is that row doesn't have that much impact.
Is that row does not have that much impact. Exactly.
Got it.
So
Yeah.
a lot of people think interest rates impact option prices a lot, and like we need to be trading around the news a lot when the Fed announces all these things. But the reality of the situation is it has some amount of effect, and you can track it, but not that much.
When I first got in this business and rates were like, 15 to 20% or over 10, there was a lot of price sensitivity in options to interest rates. But since
especially in the back month, especially in the back month, especially in like a lot of our positions we put on, that stuff's been gone for 25 years now.
Yeah.
Yeah. Right. So you're right. Let's go to the last slide. I think the last slide. Yeah.
These are your takeaways. Yeah.
Okay. So takeaways. Charm helps manage delta's time decay, especially useful in optimizing delta neutral strategies or focusing on selling out of the money options. BAMA provides insight into the volatility of volatility, guiding traders to balance risk by choosing options in the 16 to 35 delta range. Color is crucial near expiration, tracking gamma's time change to aid in effectively hedging and timely adjustments for rapid delta shifts. Manage early, you don't have to deal with that. BANA allows traders to adjust delta exposure based on volatility changes, ensuring strategies remain aligned with market conditions. Again, we're aggressively adjusting, manage early, roll forward, don't deal a lot with that. And then Roe evaluates the impact of interest rates changes on option prices. In this point, what you're right is negligible, focused on other Greeks, and the more useful first order Greeks.
So, I mean, all of these Greeks prove our tasty mechanics, and I'm saying Roe is negligible, but really all of these are also have little impact on our trading strategies and stuff like that. So it's really useful to focus on the main, your delta, theta, vega, but it's still nice to know about all these and how it impacts. If you keep deriving the model, you can get some really interesting results out of it. So,
Sahil, that's great.
Yep.
Nice job out of you. That's heavy
Good
stuff.
job out of you, Mike.
That's heavy.
Good
That's
job
heavy.
out
Good
of
job.
you. And Daddy Shark says hi.
All right. Hi to him as well.
We're going to take a quick 90-second break and come back. We got the opening bell next. Good job out of you.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like, I live in Italy. Yeah. Like, we drive like...
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do. The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. With the opening bell, going to slap you right here in the face. Even the S&P is down 1375, sliding down near their lows of 6130, ever so slightly, one step at a time. Slowly, I turn.
Do you think it's weird that they're giving up the entire rally yesterday afternoon?
No, not at all. That rally in the last 5 minutes of the day or last 3 minutes of the day, no, I don't.
I agree with you.
think so
I
at
agree. That was a bullshit rally, but they were up 10 last night, so it kind of confused me. And then they gave the whole thing up this morning. But that rally at the end of the day yesterday was just complete garbage.
I agree with you 100%. Gold kind of giving up its rally too, but it's still up small or 60 cents unchanged. Net gas taking back 1% of its gain, still up 12.5 cents. Is a big move in net gas. I know not too many people have net gas positions.
I do, and it's got me a little bit trap-olded. And I also want to say that I'm really bearish on gold here.
That makes me nervous because I've got a little short delta in gold. I never like to hear that.
I know, and what the hell? Oh,
that's actually your gold call roll that you have, or is that?
That's all.
Gold. Yeah.
Now I don't think we traded any earnings last night.
No, we traded SMCI. It is up $3. Netflix is down $3. Meta continues its slide down $10 last 2 days. Meta down.
I had that call.
$35.
I just could not hold it for as long. I didn't think you see a $40 down move.
Total in the last 2 days. Yeah. Mm-hmm.
But at least we picked the top. Why is Oracle? Does Oracle have earnings? It must. Because the IB rank at Oracle is over 100. Why is that?
March 10th, Sosnoff. I don't think the earnings are affecting it quite yet, but you are
I know.
right.
But over 100 seems a little bit juicy. No?
A lot of bit juicy. I'm looking at the markets here. The markets are quite wide in there. I think maybe skewing the IB ranks out. Now, some of these out of money options are $1.59, $2.19.
Oh, got it.
So you might want to wait there a little bit.
I will. I'm trying to see if there's anything that's jumping off the screen early on. Trying to, I don't know. Are you picking up anything that's
nothing right yet? We mentioned Meta down 13 already. Netflix down 5. Home Depot down around 7. Goldman Sachs down around 4.5. Your beloved Adobe down 3.5, and Amazon down 2 or so. To the upside, let's check out what's going on there. To the upside, it looks like Lilly up almost $8. MSTR up $5. Tesla up $3. SMCI up $2.30. Qualcomm up $1.80. All quiet, Sodnoff, right now.
Very quiet. I'm just taking a look at Babalicious. We sold a bunch more premium in Baba yesterday, and just taking a quick look. I have some February Baba options on. I'm going to roll those suckers to March, I guess.
Baba looks like 126 and change, down 58 cents.
I just rolled my Febs to March. So we got a bunch of little Baba positions on here. Not too great. I'm just looking to see if there's anything kind of wild. Wild? No.
No, nothing wild. All quiet right now, Sadnov. GLD is only up 7 cents, with GLD up $3 and change after being significantly higher by about $15 or so.
I so want to get short GLD. I can't even see straight. I'm short.
It's got a good IV rank of 63. But the monthly applied volatility, Sadnoff, in the teens, 18, you got to be directional. If you're going to be short, do something maybe with put diagonal, maybe call spread if you have to.
I don't know what to like. It's such a hard stock for me to make any money in. I feel like if I'm going to make money in GLD, I got to take a shot.
Yeah.
You know what I mean? I got to do something I got to do something crazy. I'm not making any money by I'm not making any money by being a delta neutral trader in gold. That's for sure.
Yeah. I agree with you there too. Yep.
Yeah. I mean, listen, I don't say that about very many stocks, but that just happens to be the one where welcome to my world.
Yeah, delta neutrality is a tough one there.
Yeah. I kind of want to sell something. I'm not sure what to sell. And there's got to be some out of the money crap. Let me see. March. Not the greatest. I think you just.
I mean, the March 285 calls are $1.05. I mean,
I know they're like, all right, what do you want to do?
That's almost 2 times the expected move.
Yeah. All right, Mr. Batista, what else do we got here today? Anything giant moving? I don't see anything.
No, nothing at the moment. I mean, Bitcoin's the biggest mover on the board that we trade, taking back what it lost yesterday.
SMCI up $4. That seems to be the biggest mover. Looking at the rest of my screen, nothing much. I don't have a Tesla position on. That's a big mover. Nvidia's up. Tesla's up. Google's up a little bit.
Apple's unchanged. Better get that iPhone before the tariffs hit.
Yeah, I'm not really that worried about it. Okay. All right, let's go.
Let's take a quick 90-second break and come back. We got What's Your Assumption next, where you guys came to bat for us. So we're looking for assumptions from you. We're going to make a trade out of them. We'll be back in 90 seconds. Let's take the live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes, but the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, sound off with this. What's your assumption?
I'm ready.
Now you can do it.
A little what's your assumption? These are emails. These are trades that have come into us from viewers all over. We are very excited about this. By the way, before we do this, real quickly, don't forget, we have a huge event this Saturday. Dr. Jim's digital collectible goes up. And I sat through the live version. It's beginner trader. If anybody has anybody in their family, if anybody's just starting out or has anybody in their family, this is Dr. Jim at his absolute best. On stage, in front of people, with a whiteboard, with a chalkboard, with his slides. This is an amazing event. Pains me to say it, but he did an incredible job. I went to the live show in Chicago along with a bunch of other people, a sold out crowd that night, and Jim killed it. If you would like to see it, we recorded it about 2 weeks ago, and we just finished producing it. It's going to be minted this Saturday morning at 10 a.m., so you can watch it live, 10 a.m. Central Time. That's 11 o'clock on Eastern Time, and that's 8 o'clock on the P Coast. It's 6 hours ahead in London, so if you want to watch it at 4 in the afternoon, if you're in the UK, you can watch this from anywhere. We're going to play it.
But you don't have to watch it, right?
No,
I mean,
but
you can get
we're going to mint it live at 10 a.m. Central Time, and then we're going to replay it right afterwards. So we're going to go play it back to back. And then after that, you can watch it anytime you want, as long as you sign up for in advance. This is a digital collectible. It's an NFT. And there are tons of people signed up for this. This is probably going to be one of the best beginner pieces we've ever put together for trading options. It's kind of where Jim shines. And like I said, I sat through the whole thing. It was really freaking good. And Jim is in his element for this one. And in another month,
we have in that teacher role. He's really good.
Guns blazing. And we have another one a month from now, which is more advanced, but we'll talk about that one later. But this one, you have to sign up for it before Saturday morning. I'm not sure when the cutoff is, but there's no reason to wait. Go to tastylive.com/events. You can sign up for this one and for the one with Mike, Katie, and Nick coming up. They're totally free. There's no harm, no foul. And you can own them, play them whatever you want after that. Well worth your time. We paid a lot of money to have this done, have the stage set up. It looks great. You should see this. It's really good. Anyway,
And
that's
you
it.
can own it for free forever.
Yep. All right, let's go. What's your assumption?
I'm ready. Get to work, Sadov. Even the S&P is down 12.
DSZ from RSF, California. I don't know what all that means. Is RSF a military base?
Sure.
Sounds good, doesn't it?
Yeah, for sure. Absolutely.
All right, DSZ.
Or it could be Rancho Santa Fe.
It could be Rancho Santa Fe. Let's go with Rancho Santa Fe. Sounds good.
I like the military base. Let's do that.
The market's never going up or down again. Take advantage through a neutral zero DTE trade every AM forever. It's the new free money. Oh my God.
It is, and he's right.
There's not much premium in there. I can tell you that right now.
It's not, but it pays. It pays like money, Sadnov. It's like every day it pays.
Like money. It pays like money. It ain't money, but it pays
money.
Like money.
That's right. I got my boy Jack on this. My boy Jack's on this. Minting it. He's minting it, Sadnov.
20 Delta call. 20 Delta. I don't know which one to sell. Let's go this one. Let's go. We'll go 14 Delta put, 14 Delta call, 365. 360. Who knows? We'll see.
All right.
All right. I'm in the game. Let's go to the next slide. Bobalicious, Bill T from Tom's River, New Jersey. He's a little bearish on March earnings. When are March earnings? Thursday?
Let's take a look at that, Bob. I believe so, Sadnov. Last time we talked about it, it was on the 20th. Let's see here. It's on the. Oh, it's tomorrow morning. Yeah, there you are right. Walmart and Baba. Sorry, I missed that one.
Okay, Bobalicious tomorrow morning, March. I think not March 25. You want to do March. It's March 21st. Sell the 2 of the 165 calls. Okay. And 1 of the 110 puts. Okay. I think what you actually want to do, I got a better ratio.
It is confirmed for the 20th, Sadnov. It is. It'll be in the morning.
Better ratio. I'm going to sell 2 puts. And I'm going to sell 3 calls. I'm going to do this 2 by 3. And 2 by 3, you can do it for $590 something. $590, I don't know.
$590, I don't know.
$590, I'm doing some price discovery right now. 3 by 2s are a little more complex. So far, no bueno. All right, I'm trying to bet. I'm trying to be a little cute here.
You're allowed to be cute.
Nothing done yet. I thought I was going to get filled better. They're actually lowering the prices on me. I'm still working it. So far, nothing done. I started at $598. I'm down to $588 on the 3 by 2.
Okie dokie.
All right, let's keep going forward, and I'll fill this somehow. Somehow, someplace, somewhere, I'll fill this. It's got no delta, so it shouldn't move.
Yeah, that's for sure.
What is this stock?
VSVO. Let's take a look.
VSCO?
VSCO.
Victoria's Secret.
You know that.
Filled. 582. I tried.
You are correct on a 2 by 3 ratio.
The only yurt living option trader, Marlow, New Hampshire, toy lot. Let's trade in women's underwear. Oh, this is right up your alley. Not the most liquid, but if the bat How about a put spread, this guy says, or a put rate? I've never traded this. Have you traded this?
I have never traded it. Take a look at it. Has earnings, by the way, March 5th. Taking a look at March options.
It's straight up.
They're 20 cent wide. It is down $1. It's stock straight down. Is that what you're saying?
Oh, shoot. I have the wrong stock.
Straight down. It hasn't had an uptick since 50 when it traded back in December, Sadnov. It's 30 right now. Even after they put the Victoria's Secret runway show back on. Not a lot of volume in here. Markets are 20 cents wide.
Yeah, this is a put ratio trade, if it's anything at all. I don't know if it's anything at all.
Lots of luck.
Yeah. If you go to the expected move, which is $5, stock's trading at 30. Oh boy, this is a tough one.
Yeah. I mean, you could make a covered call out of this, Sosnoff, if you wanted to. It's low price, high IV rank. You get a little over $2 for the 31 calls, first strike out of the money. You could sell a naked put in here or put spread. I mean, you could do something like the 26.29. That would be almost 1/3 the width of strikes. Probably not going to get filled until 90 cents. You'd only have, $2 worth of risk, make $1.
The only yurt's putting us in a tough position. I did a put ratio spread just to test the waters. I wanted to do a little price discovery. I bought the 27 puts once and sold the 25 puts twice.
For 11 cent credit. I hate that trade.
Yeah, I know. I know.
I like my trade better.
What? I know. I'm just trying to find some stuff to do. I'm doing a little price discovery. I'll get more on later, but it's something to put on just for now to take a look at it. Let's go to the next slide. Brent from St. Louis, Missouri. Bullish Microsoft, April, May not participating. How could it continue down? What? Oh,
Microsoft down 38 cents right now. Microsoft on the low end of its range, 409 and change. Sadnoff. Microsoft has no earnings looming. Would you go to March or April here? 45 days. You're probably going to April if I was.
I think you're going March because 30 days is still good for March.
Well, I mean, you're going to roll in 9 days. These trades usually take 2 weeks to 2 to 3 weeks to work out. I don't know. I think you're being a little bit tight, but
he's got a 21 IV rank. Stock's down a little bit. I don't love this.
How about you do a March-April diagonal spread, Sosnoff, and we can both be right on what months you trade. You see, that's what I am, Sosnoff. I'm trying to be a negotiator. That's what we need more in this world. A little more negotiation.
I sold a put spread. I sold the 400-395 put spread at 140 to get a little bit long. I'm gonna go with Brent here. Take a little shot. By the way, bonds.
God, what happened to your testicles? Go ahead.
Bonds rallying a little bit.
Omaha.
Notes are almost unchanged. I'm going to take a little profits on the notes we bought this morning, not the bonds. What's next? Jay from Philadelphia, bullish. Let's ditch winter, get long CL. How about a broken wing butterfly? I don't do a lot of these in CL. Stock's up 91 cents today. He wants to do this on the put side, right?
Yeah.
Mino Love. The stock up 90 cents today. With Jay, if it was down today, I probably would have done this and done a put broken wing butterfly. Stock up. I think I'll wait. 2 days in a row rallying.
Okie dokie.
I think I'll wait on this one.
Gesundheit.
Thank you. Let's go next slide. MSTR, Ken from Idaho Falls, Idaho. You know what? We had an MSTR position on all. Ivy rank dropped really low down to 20. What does he want to do? He's bullish. Oh, I'm definitely not bullish. Bookcoin's held 90 for months. Stock's up 260 despite many sell-offs. He wants to go long. I'm not going to go long, but I would do something in MSTR. It's a tough one for me because I'm not bullish, but I like to have positions on in there. What would you do?
Poof. Let's take a look here. MSTR. How do you like your fills in there as of late with the
They're
Ivy
fine.
rank 21? Fine, you said?
Yeah, just got filled on our
notes.
Notes. We took almost 5 ticks out of it. 5 points. 5.
Beats a sharp stick in the eye.
10 ticks. Yeah, beats the sharp stick in the eye. Yeah.
MSTR, it's been going absolutely sideways, enough.
Absolutely.
Does have call skew. How about a double ratio spread?
How about a double ratio spread?
Just trying to mix it up a little bit. I know it's got an embedded short strangle. It's got embedded long call spread, long put spread. Interesting trade. You'd probably be able to go a little bit wider on the call side than the put side if you wanted to make it something like that. You could go fairly wide. Like you could do something again with all one click, right? You could do all 4 legs.
Yeah, I could do MSTR all 4 legs.
So if you go $15 wide on the put side, $285, $270, you could sell it for $1.49. That's as a standalone trade as an 87% pop.
You got to be outside the expected move. The expected move is $50.
Right. So $50. I'm at 285 on my buy. That brings you out of 50 out there.
Okay. So what do you want to do? 285. What's the other strike?
270. You could do it for about $1.60, $1.50 something.
$15 wide.
$15 wide, fairly wide, 87% pop on a standalone trade.
Okay, and what's the other side, the call side?
I mean, if you go to the call side and you go to around the same delta side, now if you'll be able to go significantly higher because of call skew, right? You might be able to go up to the 245 if you wanted to. I'm sorry, 425 on the call side. I'm just trying to go by delta. Maybe you want to go a little bit wider than that. And then the 440 calls. And if you do that, you're going to be able to get a big credit there. You're going to get almost like a $4 credit on the call side. So if you want to go further out on the call side to get a credit that's closer to $1, you'll be able to probably move about $40, $50 further away than that, Sadnov.
You know what? Of all your crazy ideas, I don't mind this one.
Good.
$5 credit. I did it for a $5 credit.
Beautiful. Look at you. I like it.
All right, let's see what happens. Let's go next slide. Charles from Salt Lake City is looking. I'm neutral to bearish on Walmart. Any suggestions for an earnings play? Walmart's what? Unchanged?
Let's take a look. Walmart has earnings. Yeah. Let's take a look. Walmart is unchanged. You are correct. Down a penny.
Yeah.
Even the S&P is still down 13.
They really haven't moved.
No, they have not.
Notes are unchanged. Bonds are only down 6. If you care. Say it again. Walmart earnings trade. I don't know, dude. What do you want here, dude? Here, Charles. You're bearish. Expected move in the stock is about $5. It does not seem like a lot, 5%. But what do you think here, Tony?
Ooh. Let's take a look here. Walmart. I mean, I don't find it very interesting. It has had nothing but upside play. You've been going in the 2-day options. You've been selling the puts. That seems to be the path of least resistance here, Sadnov. I mean, a guy like you on a $5 expected move with $2 days to go. I mean, the 100 strike is way too rich for you. You probably have to go down to 97s and sell those for around 47 cents.
This is a tough one for me, Charles, because I'm also bearish in there. I like the 95 115 in March strangle, but that's not bearish. I mean, I would probably, you're going to hate this, Charles, but Ivy rank of 83, expected move of $5. I probably just sell the 110 calls or the 111 calls naked, just outside the expected move. If you're bearish, 2 days to go. They go if the stock goes unchanged or down tomorrow, they're at a penny. You know, Walmart scares me a little because it has had some outsized upsized moves, but I'm a little bearish on the market here.
So you're just selling the call, Sadnov. This is not like you for earnings.
I know. I think Walmart is I don't know. I think it's just a naked call sell. I'm kind of agreeing with Charles here. I kind of like the naked calls in the 2-day. But you know what? I never make any money trading Walmart. So that's why I would just sell naked calls in the 2-day rather than try to do anything fancy. Every time I try to get cute in Walmart, I get hung. We just bought our puts back in the bond options. We sold them 59 this morning, bought them back at 53.
Nice. That's called scalping options.
That's
Hard
a
to
little-
do intraday, but not for a guy like you.
That's a little scalpy. Bonds are only down 3. Notes are actually up now. So we just scalped what we bought this morning. Let's go next slide. Nathan from Oahu, Hawaii, looking at short-term bearish in Goldman Sachs. Time for Tony to get his cheddar back. Yeah, Tony lost his cheddar a long time ago. This stock has not had a downtick since Trump got elected. The IPO market has not been as strong as anticipated, and I don't think we'll see a lot of deals. Let's see.
Sadnov, do you know what cheddar is?
Yeah, money.
Yeah, good look at you, my man.
Goldman Sachs. Wow, good call here, Nathan. Goldman's down $5 today. I think he had the right call. I don't know if he gets short down $5. What do you think?
What do you want to do?
He wants to get short Goldman Sachs. I think it's the right call. Stock's already down, though, almost $6. I think you got to wait, Nathan. I think you got to wait and see if it comes back a little bit later today. Yeah, I think it's just a little bit. I think it's down too much for me to get short right here. Let's go next slide. Okay. I got to wait. Zach from Allendale, New Jersey. Good news baked in. Headline risk on production. They got their little meeting and such today. He's bearish for the next 2 weeks in Apple. Let's see where we are. Where are we? We're a tiny bit.
Apple was unchanged just a moment ago.
Apple's up 62 cents. We're a little bit short Apple. Ivy rank is 27. Yeah, it's borderline. We could add to our position in Apple. We're short the 255s and the 235s. I don't love any of this. I'm going to add to my strangle, but it's not really even that. It's at 480. I don't love it here. The reason I don't love it, Zach, is just because the Ivy rank's not high enough. Stock's dead in the mud. I'm just selling a little more premium in there just because I took some off yesterday. We sold a little more premium in Apple. That's it. I wish I had a better, a better answer. Some of these stocks are kind of weak today.
Yeah, a little bit. It looks a little bit like yesterday, although we haven't had any movement in that direction.
Yeah, I'm looking at some of these stocks like Affirm, just stocks that haven't really had a lot of downticks. And, AMD, Affirm, AVGO. Now, these are stocks that are, not looking
Netflix,
that great.
Meta's down another $16 today. These are stocks that haven't had downticks.
Yeah. All right. What do we do? kind of a weird one today. Kind of a weird one.
Kind of a weird one.
Yeah.
Much like yesterday.
No, I'm talking about, oh, look at this Baidu. Not happy with this move. Little bit, stock's a little bit soft here. Thought it would be stronger. Beth, what do we do on the day?
You only did 9 out of 10. You got
JP Morgan, I'm sorry. Let's see what we got. So, another one, bears. Carlos, a lot of bears out there. Good, I like to see it. JPM, stock's down almost $2 today. Stock's been on an absolute freaking tear. Rise too fast, needs a bit of a correction. I gotta agree with you, Carlos. It's come too far too fast. What do you want to do here? Sell some. I think you got to. Oh, you know what? The Ivy rank is crappy. Tony, what are you doing here? I think you buy the 280, 275 put spread. It's cheap.
I swore off JP Morgan, but go ahead.
I'm going to buy the 280, 275 put spread for 207, which is a little rich for me, but I like that play. Ivy rank's too low for selling premium. Let me see if I've got anything else here. No. All right. What else you got, boys? Girls?
That's it.
All right. SPX. We sold a strangle to start off the SPX. Where are we in here in our strangle?
In SPX, I'll take a look at it.
We sold it
right now.
We sold it for $360. It's currently trading for $310.
315 or so. Yeah, 310. Mm-hmm.
So you got your 15 minutes and your 10. You got your 15% in 15 minutes.
Run like a thief in the night, Sad enough. Show them how it's done, but you might have to pay $315 for it.
Oh, I would never do that. We'll wait. All right, let's. Oh no, Phil, 310.
310. Look at you. Got the uptick in the market.
Sold it at 360, bought it at 310 while we're doing the show. See, that's fun.
I told you, printed money, my boys, printed money.
50 cents the fun way on SPX Strangle. Mm-hmm. Baba, we did a ratio strangle. Yes. Victoria's Secret, we did a put ratio spread. Microsoft, we bought a put spread. CL, we didn't trade. MSTR, we did a double ratio spread. Walmart, we sold a naked call. Goldman Sachs, we did nothing. Apple, we sold a strangle. JP Morgan, we bought a put spread. That's all we did. 8 out of 10, though. Not bad. Felt less, but that's okay. Yeah.
That's good. That's good. I mean, it's not as good as this next guy. That's right. Jacob Perlman coming in the Zoom room here. When we got him for the skinny on options math, we'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with this man, Jacob, in the house. Jacob, the skinny, on Options Math. How are you, my friend?
I am well, Tony. How are you two doing this fine February?
Great to see you.
Yeah.
Love a little
I
zero.
mean that.
Love a little 0 degree weather. I'm ready.
Zero? I don't understand. I'm too California. Is this some joke? I'm too California to get?
Yes. Yeah, it fires me up in the morning.
Yeah, it keeps you crisp and ready.
Does it really? Be honest.
It doesn't fire me up. It made me go back to bed every day.
No kidding.
That's why I didn't do well in Chicago.
Mm-hmm.
But everyone can go to where the weather treats them well now that we all live on the internet.
Yep. Well, what do you got for us?
So today, last week we got a very sweet email from a viewer who was looking for some old content, some very old content, some like 2011 content. And unfortunately, our archives just don't go back that far. And so to make it up to them, I'm re-updating one of the things that they were asking for, which is just a very straightforward, how do we take spot price and IV and get to expected moves? And we'll lay it out. We'll do it a little bit in depth. We'll get a nice little animated picture of it. Hopefully it'll seem really obvious by the end.
Let's do it.
Yeah. So we have the price and the IV today. What do we do if we want to come up with a guess for the price at some point in the future? Well, that's sort of a trick question because the efficient market hypothesis is very clear about what the best guess is. The best guess is just the current value. If it was any, or with the risk-free rate adjustment, but pretty much just the current value is the best guess for the future price, right? That if it was anything else, the market would already adjust, right? If it was really definitely, the best guess was going to be higher, then the current price would go up. And if the best guess was lower, then the current price would go down. And so the best guess for the future price is going to be the current price. But that's not the end of the story, of course, right? The best guess is just where the center of the distribution is. What we want to get an idea about is how wide the distribution and where it tends to fall. And so for that, we're going to incorporate volatility, right? Higher volatility should make us expect bigger moves. So the center of the distribution might be fixed, but how wide it is going to depend on volatility. And then the next question is, how much does that width depend on how far out into the future we're looking at, right? If we wait, a month, we get a certain amount of movement. If we wait 2 months, do we expect to get twice as much movement? Well, in sort of an absolute sense, yes, we do. We expect it to do twice as many days, so twice as many moves, so it moves up and down more. But some amount of that's going to cancel. So we don't really expect the net change in prices 2 months out to be twice the net change in price 1 month out, right? Only the absolute. If you add all the ups and the downs together, you expect twice as many. But when you account for cancellation, you expect there to be more cancellations as you look further out, so it won't be quite as much as twice. So on the next slide we'll go over Brownian scaling, which is how these things change over time, right? How adding more time into it compounds things. And the trick here and the math of it all is that we're using efficient market hypothesis and linearity of expectations. So so here we have our standard deviation, right? Our square root of the expected value of the square of our price change, right? XNT is our price at time t. And then we're going to break that up into a bunch of little small subintervals, n of them, capital N of them, for cutting up our long time span nt into a bunch of short time spans t. And then I'm expanding out that big square in the middle here, and that's what gets me this long term on the second line. And it's composed of two parts. One is the sum of the squares of each of the small changes, each of which by independence and identically distributedness is just going to be the change it makes on one of those small changes. And then this other term, which has all the cross terms, where you're multiplying the change over one time interval times the change over a different time interval. But the thing is that because of the efficient market hypothesis says that these are independent, when you multiply them in expected value, you get zero because one of them goes up just as much as the other one goes down, so it cancels out. So that whole term drops out. You're left with that first sum of squares. That first sum of squares is a bunch of terms that are all the same except at different times. So that comes out the front as a square root of n, and then we're left with the standard deviation of one of the chunks. So we see that if we're looking at the standard deviation for the price change nt into the future, well, it's square root of n times the standard deviation of the price change a single t into the future, which is to say that the amount of change you expect, right, the expected moves, are going to scale like the square root of the time until expiration. That's and this is sort of the key. What is an expected move? It's the current spot price times the implied volatility times the square root of the time until expiration. And the important part is the time until expiration needs to be measured in years, just because volatility is quoted as an annual statistic.
Okie
dokie. So this is, given to you by the platform, right? And when it says expected move plus or minus, that's exactly the math that it's doing. But let's get a nice visual representation here. So on the next one is going to be an animation of, so here we have SPY prices over time, and the VIX down at the bottom, right? The VIX is much smaller. And then opening to the right is the parabola of expected moves, right? Because there's that square root of time, right? Y equals x squared is a parabola opening upwards. Y equals x square root of x is a parabola opening to the right. So that's what those parabolas are. Those are the expected move cones or parabolas. right? If you look at any particular fixed time and you wonder, what are my expected values in the future prices, you look out across those parabolas as they open to the future. And the parabolas, you'll see when the VIX spikes, the parabola gets a bit wider. When the VIX contracts, the parabola gets a bit narrower. And the parabola is always based at the current price, right? And that's how expected moves come to be. And I feel like this is a nice way for people who the formulas are maybe a little bit much, and the math isn't just numbers and formulas and symbols. It's the whole understanding of the abstract system. And so if you can get to it by looking at pictures and graphs, that's just as good.
What is that? Just positive drift?
I mean, this is just an actual, like, those are just actual SPY prices for the past 2 years. It does look like it sort of hugs to the top of the upper curve of the expected moves, much more than the lower curve of the expected moves. But that's just the fact, right? If I went back further, if the data hub had been able to handle a longer animation, if I went back and included, 2020, there'd be a down chunk as well. But the past 2 years have been pretty much all up.
Got it. Okay.
Yeah. But yeah, so you expect it to stay within that cone 68% of the time if everything was normal. Of course, not everything is really normal. The Black-Scholes model isn't literally true, right? If the Black-Scholes models were true, that would be it. Everything would be Brownian motions and normal distributions. You'd be within 1x expected move 68% of the time. If you made the parabola twice as wide, you'd stay within that 95% of the time, etc. We need to remember that in reality, the market does not follow the normal distribution statistics. The volatility smile and surface always shows us this. Our law, we've done a lot of research at this point, and we have seen pretty consistently across underlyings that the implied volatility expected move doesn't capture 68% of the moves. It captures closer to 80% of the moves. And the way that this balances, right, the reason that this is that we don't just have a smaller implied volatility is because it's accounting for those really big moves that happen more often than normals, right? So you get these sort of average size, like, the 0.5 to 1 expected moves happen more often than a normal distribution would say, but then out past 2 and especially out past 3 happens way more in reality than it does in a normal distribution world. And we just need to, as traders, keep that in mind, right? Bear in mind that the expected moves that we're getting and the probabilities that we're looking at are all deriving from the normal distribution. And so we need to adjust them on our own to account for the fact that reality isn't that normal. So that, things that say 68 are probably more likely than that, right? They're probably closer to 80. But things that say, 1% or 0.5%, they're probably more likely than that. They're probably more like 2, 3, maybe even 5% likely. And so we need to, adjust for that in our own way, but that we use the Black-Scholes model, the normal distribution statistics, as our baseline, and then augment our understanding from there rather than just trying to fumble about in the dark. Yeah. That was it.
Okay, I'll take your word for it.
Oh, let's look at the animation again. Yeah. Right. So the idea here is that it only occasionally will the price leave that future cone, right? I mean, in the animation, we'll never leave the future cone because the cone is constantly being updated. But if you kept one of the old cones back in, you'd see that it almost always encapsulates the future movements, with the occasional rare spike below and the even more occasional spike above. Perfect. All right, we can go takeaways now. Thank you, Beth. So the implied volatility-based expected moves are a key tool for retail option traders who want to be able to know what they're getting into while trading a wide variety of underlyings, right? If you only ever traded in the SPY, you wouldn't have to worry about that much. You could just, have a good feeling for what the VIX is, where you want your strikes to be. You'd have, you like $50 out or $7. But if you want to trade SPY and IWM and Qs and Apple and all these things, then you need something that sort of lets you apples to apples try to compare between them, right? Which is why we rely on implied volatility and expected moves. The expected range a year from now is exactly spot price plus or minus the volatility, right? So if you have a 10% volatility, up 10%, down 10%. There's some shifting there for geometric versus linear arithmetics, but it's very close to right. And then how this expands and shrinks is just as a parabola because of the square root of time and the Brownian scaling. And so while we're assuming these normal distribution statistics and Brownian motions, and this is really an oversimplification, it gives us a really solid baseline. And if our understanding begins there and then augments it with what we know about how things differ from the idealized models, that's much better than just either being in the dark or putting our faith into these really abstract, fancy, stochastic volatility models, which it's impossible to say if they're right or they're wrong, right? The Black-Scholes model might be wrong, but we know how it's wrong. Whereas, these much more fancy models are probably also wrong, but now we don't even know what's wrong anymore. And so this is why I I think it's a good case for relying on these Black-Scholes expected moves, but then knowing the ways in which they are flawed, right? That you're going to wind up within one expected move more often and outside of 3 more often. That's it.
I think that's interesting. I think the first slide was kind of really interesting because I didn't I never thought about that the current price is the most likely future price.
Yeah, right. I mean, your bearish and bullish assumptions are never borne out by the efficient market hypothesis. The efficient market hypothesis is exactly neutral assumptions always because, right, it can say more volatile or less volatile, but it can't say up or down.
Yeah.
Okay, if you say so. Sadnov, good job out of him.
Yeah, he did.
Yeah, good job out of him. We're going to take a quick 90-second break. When we come back, we got Oh Joy, your friend and mine, Mr. Scott Sheridan, followed by Johnny Trades next. We'll be back in 90 seconds. Let's tape you live.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. So you know what that means. Enough out of you.
Who knows? We don't know. It's all.
Tasty Trade World Headquarters, your friend of mine from the Scott Sheridan Studios. It's the sponsor, Scott Sheridan. What's up, my man?
Yeah, good morning. Deep breaths. Okay, now I took a lot of heat. Oh my God. I took a lot of heat yesterday. Tom, you're going to like this one. This is a pro tip. This was the highlight of my day. Okay, I had a couple other highlights, but we're not going to talk about those. This is the highlight I'm talking about of my day. When you go to Ashland Tire, so for those that don't know, get a lot of nails and alleys in the city. You got to get a patch on your tire.
All right, what are you trying to say?
Fix a flat. How much they charge at Ashland Tire?
It depends what they do.
$50.
If they
but a
fix
patch.
What?
A patch. How much is a patch? It's like $50, isn't it?
I give the guy $25.
Ooh, big spender. You gave him a fever for a tip. You gave him a fever for a tip. You'll give the person who brings you food $5, but the guy who's going to keep you on the road, you give him $5 a fever.
No. The guy doesn't charge me. He just charged me. He just says, "Give me $25."
Oh, I'm calling BS on this one. I think they're $40 or $50, but whatever. That's not the point of the story. Easily. Okay, so that's not the point of the story. So we had a nail in a tire, so I'm like, let me see. Don't have an Ashland Tire. Let me call. So I just call a place. They're like, well, we're booked till Wednesday. I'm like, that doesn't help. I don't know why I didn't think about this. Costco. Okay. I call them. I'm like, do you guys just sell tires, or do you patch? So I was like, no, patch. So got in 4:00 yesterday, $14.
Wow.
There you go. $14. Now here's the other thing about Costco. Shout out to Costco today. They have a thought, and this really matters in Chicago where the roads are so horrible. They have a 5-year guarantee on their tires, meaning if you not in an accident, but if you have a pothole, whatever, you destroy your tire, they look at the tread and they give you a rebate based on how much tread you have left.
Don't you love it when Scott figures something out and he thinks he's discovered oil or found gold?
Have you bought tires? Have you bought tires at Costco?
I have one time.
I'm calling BS on that one too. Anyway,
oh my God.
$14. Go get your tire fixed at Costco. Wow, happy to see you too. Tony, how are you doing?
I'm doing great, Scott. Thank you.
Scott, when you're getting your tire fixed, if you go inside, you get a hot dog for $1.50.
I know. It is good. I went shopping, but the problem is
you can feed the whole family for $6 and soda.
I know. So I went shopping, and then the problem was the 6 was there, and the cart took a little longer, so kind of turned into a little situation. But we're good. We're back on track. Love Costco. It is arguably the greatest store ever created. Okay.
Well, the $1,000 price tag would suggest that other people agree.
Yeah, it's such a good store. And by the way, what do you do now when they make you scan your card? Do you tell them no?
No, I scan my card because I'm not a rebel rouser. I walk in, I scan my card.
I would have figured you would have been like, you know me. I did get yelled at in Costco. I wasn't really sure this was bad. So we were waiting for the car, and I had to go to the bathroom. So I had to go back in because in the tire center, whatever, the bathroom didn't work. So I walk in, show the card, and I cut through to go to the bathroom. Woman looks at me and says, "Where are you going?"
Nobody goes to the bathroom at Costco. That's embarrassing.
Had to. So gotta pee. So I walk through, and she looks at me. She's like, "I'll allow it this time." I'm like, "Oh, but she was so serious. It was like, I thought she was going to arrest me. I'll allow it this time. Okay, appreciate it. So I got that. I got that going for me, getting yelled at Costco. All right. So should we get to some business? Because I know you have Johnny trades, or is there some other topic you'd like to discuss?
First I have to tell you your video that you produced on Waymo. Not only is it doing well in the amount of views that it has, Vanetta was meat riding you to know. I mean, like she was
is meat riding good or bad?
Meat riding's good. Meat riding's good.
Okay, good. What'd she say?
She was meat riding you because she said you did great B-roll. Your angles were great. You did everything like a professional. She was so impressed by your filming screw.
Thank you. In fairness, I didn't film. Levi's girlfriend, Kyla, she filmed. So shouts out to Kyla. So
she did awesome.
Shouts out to Garrett. She may. Shouts out to Garrett because I couldn't get the videos to Vanetta because internally our systems block everything. Garrett helped me get her the videos. I was smart enough to tell her to do like 20-second videos, just do little ones. But I didn't see it. Are we gonna get it? Look at this.
We're in a driverless car. My first time.
Oh my God, we have to watch
Not
this
really
again.
Excited about the prospect of nobody sitting behind the wheel, but I'm with people I love, and if this is the way it ends, so be it.
It's a little dramatic, okay? A little dramatic.
He even does like the POV stuff,
If this is the way it ends. And Vanetta put the music to it. But here's what I don't understand. It looks like it's dark out now.
Better experience than I thought it was going to be. A little nervous getting in.
What's dark out?
Literally nobody behind the wheel, and I guess in Waymo,
right?
You're not
It's
even
dark.
What I love about you is that so you're so hurt ass right now that you didn't get the video.
Hey, I'm trying to do the video.
Here we go. Red light stopped. We're almost at our destination.
Hey, it's light out.
So we're pulling up to our destination. I have to say, solid A+.
How's it light out now?
Shout out to Waymo and to Jaguar. I look forward to seeing this type
I'm going to say the
ride
word.
share.
I'm going to say the word. I'm going to say the word. I'm going to say it. I can't.
Don't say it. No.
Do you have a beeper? Beat me.
Don't
beat
say
me.
it.
You are so freaking redundant sometimes. I mean, honest to God.
I just want to know how you went from darkness to light.
It wasn't me.
The light out is not him. That's just B-roll.
That's a woman. That's like stock.
That's like a stock photo.
Oh my God.
Why are you putting stock photos in there?
Oh gosh, Tom.
This is pathetic.
Front door stupid.
Is
He's so
pathetic.
front door stupid. I mean, honest to God.
This is B-roll. This is Scott.
Thanks, Beth.
This is B-roll.
He's so front door stupid.
This is Scott.
Why are we putting B-roll into our own things?
That's an excellent idea. I'll take that
Into
back.
our own thing.
Oh my God.
Seriously, do you talk to the board members like this? No wonder we can't get anything done. Honest to God.
Okay. Now, thank you for fighting my fight with that. I don't even know how you explain that. So, do you know the other day?
Look at Nick.
when
Nick can't believe he's under these three thumbs.
When they put your face on the body with the linen polo shirt, they're like, yeah, that wasn't your body. See, that's like artwork. That's so Vanetta was taking some artistic liberties, and then she wanted to pull something in from Waymo. Okay, so that would
Tighten
be
it up a little. Yeah.
Now, what I love about you is that if you would have had the foresight to have taken the video, which according to Vanetta, she asked you, but you forgot, you would have been all over it saying, look at this amazing video I took, but you didn't. So you're hurt ass that I did it. And I did it
not hurt.
As asked, you're hurt ass. It's okay.
No. Tom's only good for the Instagram posts, going to Vegas.
Yeah.
That's all he can do. He can't do the videos.
Yeah, I don't like videos.
I was surprised at how well you did that. You did like the little POV of you touching the screen, and like it was actually really well done. I thought you were going to give me like a Tom Boomer moment where it's like, you know, you're in the Waymo and all we can see is your face because you have the phone like right up, you know, like this. Like you're like, I'm in the Waymo, can't you see? And it's like
I don't have a videographer with me at all times.
Well, you know what? Next time you need one, you need somebody to help carry your bag and video. Those are the things you need.
Well, Tony used to carry my bag, but he doesn't do a good job videoing me. So I don't know what to do now.
We could probably get somebody who's willing to, I don't know, that actually might be a big ask. Getting somebody who's willing to go with you on a free trip, but they have to video you.
Not too many takers. Not too many takers.
No, but shout out to Vanetta. Nice job.
Nose goes.
Very nice. Very nice.
Very nice.
Woof. Tough audience.
There is always a fight. Like, you can't just be, Scott, nice job. Good thinking. Glad that Vanetta asked you to do it and you actually did it. It's got to be something.
I tried.
Oh my God, you're so proud of yourself because you took a 30-second video. It's your first contribution to the network in 14 years.
What can't you do, Scott?
Yeah, what can't you do? In 14 years, you've given us one 30-second video. Congratulations.
No. I gave you the Oprah video. That was good content, too.
No, that wasn't you. That's from like a million years before that. I'm just saying.
Yeah, but I served it up. So I've given you 2 videos in 14 years. That's pretty good. One every 7 years.
Yeah. Well, I don't think the Waymo video was as good as Vanetta thought. I mean, like, you know.
Oh, my God. Vanetta, how about this? Shout out, Vanetta. Nice job on the video. We'll leave it at that.
She's picking up my dog right now. She's picking a dog out for me.
Are you getting a dog?
No way. She's at the pound filming some videos.
Because I did see you holding a dog.
It's the shelter we are donating the revenue
to
to from the Tasty store. It's not the pound.
You looked awfully happy with the dog in your lap yesterday.
Oh, Pip. Yeah, I love that dog.
You looked awfully happy. So I'm gonna say I think the time's coming. I don't see you as a pound dog.
Yeah, I was surprised. I like that little dog.
Yeah, for sure. And that dog likes you only because I'm not there. But you're ready. I can tell. Oh, by the way, a viewer who I'm not going to name gave me an excellent point about your babysitting the other night when I said, how many times did the missus reach out? And you said none. And they gave it a very, very good point. I'm not going to call this person out. She has nanny cam. She was watching your every move.
Oh, yeah.
Oh, no.
Oh, 100%.
First
Tony, Nikki.
I hope nothing happened with him and Corinne.
4K nanny cam, every room, every angle. There's nowhere to run, nowhere to hide. Guarantee you, she had that thing sitting at the table watching the whole time.
100%.
I didn't ask, but I don't think so.
See, you're already fading. You say I don't think so.
I never thought of it. I don't think so.
Oh, you were on camera, so now you have to replay. You're going, oh my God, what did we do?
Omaha.
Now I got to tell her. Now she would have said something because I let the dog on the couch, which is a no for her.
Oh, that's bad. Which one? That's bad.
I don't remember, but she doesn't.
You can't violate the parental rules. Tony made this.
She doesn't.
Clear. You violate
she
the
does
rules,
not allow the dogs on the couches.
He's probably right because those have voice.
I'm a dog too. I'm a dog on couch person. I don't care if the dogs jump at anything. I don't really care. But she's crazy about that stuff.
Yeah.
Yeah. And see, just remember your classic line. You never fire anybody. You choose not to use them. So she might not fire you. You just might not be getting the call anytime soon to come back over. Might be going to Uncle Tony.
She doesn't have any
Uncle
other parents.
Nick.
She doesn't have any step parents or anything. She doesn't really have she's not in a good situation.
Yeah, you could get somebody off the street. It's okay. All right. Should we get to some business and then you guys could get to the real business, which is Johnny Trades?
Great job out of you, my friend. We're gonna play some music and we'll get my man in here.
I haven't given my list.
Oh, he doesn't listen.
What was that?
He doesn't listen.
This is like him leaving the artichokes.
His New Year's resolution is later this year he's going to start to listen. Starting around June, he's gonna listen.
Oh my God!
In October, I'm gonna start to listen.
Listen, yeah.
I thought we had a little something. Apparently, that was
I'm
all
sorry,
for show.
Scott. I got so caught up in your artistic video that I didn't know what we played.
I'll go fast. Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you, number 15. MSTR to 21. For everybody else, Tesla to 39, SMCI at a 63, Meta at a 14, NVIDIA at a 45, PLTR at a 59, Intel at an 84, Oxy at a 52, Apple at a 28, ANET at a 38, HIMS at a 103, Microsoft at a 22, IBIT at an 18, Amazon at a 17, CELH at a 90, and number 15 for Tom MSTR at 21. Rounding out the next 10, Baba at an 80, GLD at a 63, TSLL at a 68, Etsy at a 35, Baidu at a 62, Walmart at an 85, and AVGO at a 67. Now, Tony, you can say, bring in the real talent, bring in the music, and I will
play some music.
That was good.
That's right. It's Johnny Trade. What's up, Nick?
You want a couple trades?
I need some trades today.
I gotta say, I'm glad you're not sick anymore because you got like a better vibe to you. You're a little
never sick.
You were sick for the last 4 weeks.
I wasn't sick.
3
Yes,
weeks,
you were.
3 weeks for sure. Yeah.
I had walking pneumonia. It's no big deal.
Yeah.
You guys didn't care.
Yeah.
I fixed it myself.
I think he got some last night because he's been in a good mood.
I
like
fixed
something
it
like
myself.
slip in good mood. You know what I mean? I think he got a doctor's note said he can do it or something like that.
Ooh.
I can do it.
Is that why
I got
Hims
a
is
note.
up so
I can
much
do it.
today?
I can do it. What's that?
Yes.
Is that why Hims is up so much today? Did he get his shipment?
Probably.
Is that what
Hims
happened?
up 15-16%, Sosnoff.
Hims? I don't know. I've never traded it. I traded it one time. It sucks.
Yeah, it's a
Yeah, but you're a user.
A user, yes. Do I have a position on there? No.
Okay.
You would know.
Yeah.
Well, I'm not putting you in a position there. I got a couple other trades for you though.
Oh.
Ooh.
Amazon Lyft, little spy.
Yeah. I'm covering a lot of things today. A lot of different ones.
All right, let's see what you got.
All right, first one. Amazon, you got a position?
No.
It's been pretty weak over the last
Amazon, no.
2 or 3 weeks or so since earnings. It's down about 7 to 10% ish from the highs. Thinking maybe you get a little bit of long delta, but you do like a little 1x2 crab trade. So you buy April, you go to the 225, you buy that call. You can sell 2 of the 235s in the March 31st the March 21st expiration. I have to buy the wing because I'm a little Johnny, but
You're buying
for
April,
you-
what's called 225?
Yeah, right. It's right at the money.
Okay.
And then you sell 2 of the 235s.
In March?
Yeah. You could do it 1x3 if you want to, if you're
Why don't you sell
feeling
230s?
because I like to lean a little bit, like I like to get paid on the directional move. Like I don't like to be like, oh God, I gotta roll this.
You don't want to make the 15 cents?
Yeah. Like, I take like a little more risk than you.
Oh.
Like I like to have a little skin in the game as
Yeah. I get it.
Yeah. Like I don't like to neuter my positions on open. I try to, put a little risk out there.
I like it.
Yeah.
Yeah, sure. I mean, if I did that trade, I would think you'd probably want to do it one by. I guess it doesn't matter.
You do it 1x3. You do it for your nothing. It'd be a 50-cent debit.
85 cents. 1x3, 85 cents.
Yeah, I do a 1x2, and then I buy the wing to cap the risk. But
1x2 would be like pretty much delta neutral.
Yeah, but you have that positive gamma. So if you move higher over the next 2 weeks, you'll have long delta.
1x2, it's a little bit short
at the start. the glory of this position. You don't need the stock to move just right this second. You have some positive theta, a little bit of positive gamma.
I can't listen to you. Sure. Let's do it.
You got some short volatility because you're selling shorter duration options. You know, it kind of fits all the things.
What price you do it for?
I have a different trade, but yeah, because I'm a Johnny, you know. I don't have the big.
So it
grande
trades for.
kahunas.
It's going to trade for $3.95.
Okay, I like it.
Filled.
There you go.
$3.95.
I love it.
All right, what's next? 1 by 2.
Beautiful.
This is a little Johnny trade too. Little covered call.
Lift.
Yeah, it's down near lows.
I just took my position off in there. LYF.
It had earnings, I think, middle last week, but volatility is still relatively high. Uber, if you haven't seen Uber's like making highs 81 or something yesterday. I don't know. Buy the stock, sell the 14 call. You use about $500-$600. You do a 1 by 2 if you want to do like a delta neutral type thing.
Why don't you sell the 13 put?
You could.
Done.
There you go.
I'd rather sell 13
look
put.
at him.
Sure.
All right, done.
Similar.
In the clearing firm, 62 cents. What's next?
There you go. All right. We hit new highs yesterday. Do we put on a little bit of short delta?
I already have some, but go ahead.
I know you do. Us Johnnies have ridden this market to highs. I know you've been in pain the whole time.
SP, not
maybe
really.
you're gonna get some. Maybe you can get something back here. So I'm doing a little bit of a short delta play.
What are you doing?
In SPY, buying the 605 put in April, selling the 590 against it in March. A little put diagonal spread.
Buying the 605 put in April.
It's a 40-ish delta put. Selling one of the 490s in March. It's about a 20-ish delta put. So you get about 20 short deltas here. Net.
March. What put are you selling in March? Why are you selling the 590s? Why that far away?
It's 20 delta.
Oh, I would sell the.
He doesn't understand delta yet. We're going to get to that after we get to some third level
all
Greek.
this?
I would sell the 600 puts.
But then what do you make? What do you make on a down move there? 50 cents? How does that? That's why you need the hymns, because your positions don't do it for you. That's why you need the hymns.
Yeah, that's why. I think you buy the 430 put.
Why don't you make it a calendar spread and do it for $1?
Oh my God. I'm allowed
Johnny.
I like this trade.
Oh, pathetic. Sick.
Can't get filled though. Working it, boss.
They're so scared. They're so scared of you.
They are scared.
Yeah, they're scared.
I'm going to get filled here. I'm not going to raise up.
All right.
I'm going to get filled at 432 because I deserve a fill.
Yeah.
But I need an uptick.
He's trying real hard.
I am trying, but I'm not going to give them the extra penny. No, because one uptick and I'll be filled. All right, you got 3 out of 3 because I'm going to get filled on this.
I like that.
It's just a function of.
Oh, look at it. He can see the future.
Yeah.
It's a function of one uptick.
Love it.
Or maybe not, but I think it is.
That could be one of my best. A 3 for 3 doesn't happen very often.
Technically, you're 2 out of 3, but I think, yeah.
Well, you gave me the third, so
yeah, I'm giving you the third.
Can't take it back.
I just need an uptick. Let's see, bonds. Yeah, they're only down 2 now. We might get an uptick. S&P's only down 9.
Ooh.
I mean,
good job out of you.
You
son.
know the range we've had
worried.
today. We've had a $5 range all day.
Yeah, we have done nothing.
Friday was a 20-point range.
I mean, we had a 15-handle rally on the close. Yes, but we were down 15 at one point this morning, and we're down 9 now. So, like, we've literally had a 6 point range all day today.
Feb's a big expiration, though. So you probably get
big negative expiration.
Yeah, but you get, like, some chop back and forth, you know.
Well, nobody's going to do a better job than these two people, son. You're going to have to watch and learn here. We got Liz and Jenny from the CBOE, Sosnoff. You want to see some of your friends in the CBOE? Maybe they got some kind words to say about you. Maybe we'll give them the mic for a moment. We'll see what they have to say. Maybe they can tell us some stories about Sosnoff from the past. That would be fun.
Those two? No.
We're going to take a quick 90-second break and come back. Sosnoff is going to stay in frame for just one more second. Peace.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok game.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm gonna say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on. She's wrong. I'm right.
High school party, high school condom.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Die like squirrel.
everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette to the left of me is Jenny Andrews, and it's our favorite day of the week, live from the SIBO.
Live from the SIBO. It's the only thing that got Liz out of the house. So good to see you in person. She hasn't left the house in maybe 11 days.
In the words of Matthew Wilder, nobody's going to break my stride, not even this RSV.
No, you are looking good. It probably feels good to get out, even though it's 0 outside.
Well, the steroids helped. The steroids in the lungs, they liked the cold weather. It was good. It's good.
Well,
all is good. We're kicking its butt. Everything's fine, and we're happy to be back here. It's been pretty quiet.
Honestly, I'm surprised at how quiet. All-time highs. We're making all-time highs in the market. Yesterday, all-time highs. The day before, all-time highs. And it is very quiet down here on the trading floor.
It's very, very quiet. So, yeah, I mean, we're kind of parked here. We're down 12. We've been staying right here all morning between, down 12, down 8. We're locked and loaded here.
And we saw Jack Tucker selling more tranches of SPX iron condors this morning. We saw that on Twitter. We are going to be checking Twitter today. If you want to send us a tweet, include the hashtag LIZJNY. Liz and I actually traded some SPX this morning on the train.
We did. Yes, we did. We tried to be Jack Tucker. We're not as cool as you, Jack, but we tried.
We tried.
We took our profits way too soon.
I know if we would have left it, we're still right here. We haven't moved. I think on the open we were, down 12, down 13, and now we're down 11.75.
Yeah.
We haven't really moved much.
We've been staying right here, and I think that's where we're going to stay for the rest of the day. Now, there are minutes today at 1 o'clock or 2 o'clock, so I don't know if that's going to change anything, but what do we know?
What do we know? Not a lot, because our earnings trade yesterday didn't go too well.
They didn't, but as a whole, I think it's doing pretty well.
Oh,
net.
From the beginning, but it's tricky because you were gone for a week. I had TP on for a week. I never did those earnings trades that week. So if you could speak for yourself or I could speak for myself, doing them all.
I'm going to have to lock that guy down when I've got him for a week.
2 weeks from
I'm
Thursday.
Be like, focus TP. We need to do earnings trades.
2 weeks from Thursday, I'm out of here, and Liz has TP on all week. So the viewers love him.
And Tony from Mexico. You can't forget Tony from Mexico. He's a crowd favorite. He is he brings something to the table that nobody else does.
Oh, I love Tony from Mexico. He's amazing, and it's so nice that he's a really busy guy, owns many companies. It's really nice that he gives you his time to come on the show.
It's amazing, and I always feel like I'm a better trader after each show that I do with Tony. And TP, I will tell you, TP is amazing too. We're not knocking TP. TP, you're number one in my heart. But Tony from Mexico, they always bring him.
Okay, here's the difference. TP works for the company. TP works for Tasty, so I don't feel bad. I mean, I appreciate TP coming on. I appreciate all the time he gives me. But he does a lot, right? He sends the weekly emails, comes up with trade ideas, and I like having TP on. I feel bad calling Tony from Mexico and asking him to come on because he is such a busy guy, running so many companies. He's amazing.
And the best part about him is, this is our exact conversation. He goes, ooh, I'm going to start working on it now because I got to bring the boom for the customers. I was like, yes, I love it. He always comes with something amazing, so it'll be good.
Well, I'll be in the Bahamas and I'll watch the show from there.
Yep.
See what's going on.
That'll be fun.
See what kind of boom Tony from Mexico is bringing.
Boom! It's gonna be huge. All right, Jenny, we said this yesterday. I don't know if we're gonna stick to our guns. How do you feel? Are you feeling Jajun?
Hey, Cupcake sent a tweet. Cupcake sent a tweet yesterday asking for the Jajun trade. We are going to do the Jajun trade. Spoo's down.
Cupcake is from Twitter. She's not calling anybody Cupcake.
Hey,
not
Cupcake,
anybody back here.
No. All right, let's do it. Spoo's only down 8, 7, 10. It's only 10. It's only 10:02.
That's because we started early. We didn't come down here last week. We want to soak in all the time that we can and tell them to be quiet back there.
Do we wait till 10:15?
Yeah, let's manage.
Yeah, good idea. Let's manage our
10:15, 10:10.
All right, let's just manage our earnings from yesterday first. It's a little early for the Jajun, just a little early. We usually put it on around 10:15. As far as earnings go, Devon Energy, we did a diagonal. Devon Energy is up 344, beyond its expected move because 36.5 was its expected move. It's trading almost 38.5, so it's about $2 beyond its expected move. We made $80 on that. I'm going to close that.
Heck yeah, you are.
And you can see the spread is $1.50 wide, and that's about all we're going to get for this. It's $1.50.
It says $1.52, but you're not going to get that.
We will. We could,
a little bit,
our long,
a little bit more, but not
our
crazy.
Our long has, about a nickel in it. So I'm going to go. Hey, I'm going to get nuts, and I'm going to go for $1.55.
The natives are getting restless behind us. Can I
get $1.55?
Can you hear it? They're trading Devon Energy, ladies and gentlemen. I'm just kidding.
I didn't see that on the SIBO most active list today, but. No, all right. I'm not getting filled. Not getting filled at $1.55.
Bring it to 2.
I gotta
just get out at this juncture.
I know.
This juncture, just get the heck out.
Okay, $1.52.
That's where
we're out of Devon Energy. Etsy. we had all bullish trades on for earnings. Etsy went down. It's down 570. We have a diagonal because we did the 16-day. Here, if you did the 9-day, it's worth about 30 cents. 16-day worth about 55 cents. So the difference that we paid is you get it back now. Like it didn't really make a difference.
And it shouldn't make a difference.
It didn't make much.
It shouldn't
difference.
make a difference. Correct. I do have breaking news from Frank the Great, who is also the man on our YouTube chat. So if you want to comment, question, concern, go to Frank the Great on YouTube chat. He's saying that Jajun, straight out of the horse's mouth, said the earlier the better.
Jajun said that?
Jajun.
All right, let's do it. Etsy can wait. We're going right to SPX.
Breaking news.
Frank, it was your birthday. I'm not gonna question what Frank says.
No. Yeah.
All right, SPX. Here we go. 0 day. And we've got an amazing SPX study coming up from Jacob, but we're just going to put this on now, and then we'll look at the study a little later.
And it has to do a little bit with it, but yes.
All we do is we're trading 61.21. I'm going to buy the in the money call, sell the out of the money call, paying $260 for 265. Hit review and send, and sent, filled. And we're going to try to take a quick $50 out of this.
GTC it, lady.
So that's how.
Although it doesn't have to be a GTC, it just has to be a closing order because it's gone no matter what. In the SPX.
Right. Just so let's see. I bought it for. Let's go down to the SPX. Bought it for $265. I'm going to try to make $50. So I'm going to put in an order to sell it for $315. Close this position for $315. Now, our rule in the past
were spoos down 6 when we put it on, or are we making money already?
Down 7 maybe.
We're making $5.
Hey, we're $5. All right. I put in an order to close it for $315. Just try and take a quick $50. We're just looking for a quick scalp because according to Jajun's study, we'll get more positive 5-minute bars after about, according to Frank, 10 a.m.
Earlier the better.
Time.
Actually, it's earlier the better.
All right.
Okay, perfect. That being said, we're in Jajun. Now, sorry for the breaking in your thought process on your Etsy.
No,
back to Etsy.
That's fine. Right back to Etsy. Etsy was down on earnings. So... And we could see, it's nice having those diagonals, and we can always see what the expected move was because we know we bought the at the money and we know we sold at the expected move. So if we had the 56.63, we know the expected move was $7. It's down $5.40.
Under its expected move.
Under its expected move.
Yeah.
What I did with my Etsy was close this, take that 59.60 cents, and I sold a put in March.
So let me ask you a question. No, I agree with you.
But we could do whatever you want.
No, I agree with you. We did this on the train, so it was, wrapped around 8:30ish that we were looking at this. And what I did find, and I don't know if we've ever looked at this before, is on the open, the IV rank was about a 43. It was a higher rank, which is why you leaned towards the puts. And I think 26 is still there, but with that higher rank, you still kind of, the day, right after earnings, you still get that little...
You get on the... I usually manage these. Now, our show is on from 10 to 11. We manage our trades during our show. But I manage all these earnings diagonals on the open.
Yeah.
So on the open, I'm either closing it for a loss and then selling a put or rolling it out and reestablishing. But I'm usually doing it around 8:40.
Yeah.
Right. So right now at 8:30 because you're waiting for everything to open, the markets kind of settle down and markets to tighten up a little bit. But I don't wait till 10 o'clock.
No.
So we'll see. Let's take a look. If I can get 50 cents back from this, if I sell the March put, the March 50 put, ooh, yeah, $1.50.
It's not bad.
But when you talk about the vol coming in, I got $1.80.
Yeah, that's what I'm saying, because this morning it was closer to a 50 and now it's a 26. So you can see that it's okay. Whatever we do, it comes out in the wash. But on the morning of earnings, it does keep its wings up a bit.
Right, in the morning.
Yeah.
So, all right, let's look at that. That 50 put, the only thing I looked at was, okay, I lost about $250 in Etsy. How am I going to get that money back? If I sell that 50 put for $1.50, and I do that twice, this March and April, well, then I can get my money back.
So we've had, with these, I don't mind. So it's not a lot of capital. How much capital are you using?
Well, this is using almost $1,900. You can pay a dime for that 40 put and take in a dime less and use $800.
Okay, so it's not using much capital. I do like personally, and we can discuss this. I like a one shot at making it back.
Okay, like one shot and
one or two,
putting another diagonal on,
or a put spread. I don't mind, instead of like sometimes you'll take it off and be like, okay, I don't want this on my sheets or whatever. I totally understand that. But if you're putting an earnings trade on, we've seen some of these reverse.
Yes, we have. Hey, Enphase Energy just came back. We were looking at that. That was one from a couple weeks ago. That came back today. What came back yesterday that we were watching?
Oh,
PANW.
PANW.
Palo Alto Networks. That
yeah.
came back. So we have seen some of these losing diagonals make a comeback.
Yeah, for sure.
So let's give it a shot. We could give it a shot of either selling this put spread or.
And I'm okay with the put spread because I was just making a comment that you will see a little bit more inflated volatility in the morning.
If we close the one
26
we
isn't
have
bad though.
and put on a new diagonal, going to the expected move, selling the 55. I think this was the trouble I had with this. Selling the 55, buying the 53, it's only $2 wide. That was the issue I was having.
You're in the same cycle.
No, because I had the...
oh, I see what you're saying.
So if I go 9-day, 16-day, sell the expected move, buy the at the money, it's only $2 wide.
Yeah. I like the put, and I do 25 Ivy rank. If you're looking at a 6 right now, I wouldn't be doing it. If you're looking at under 10, I wouldn't be doing it. You still got a 26 rank.
But
That's
so
not
isn't
bad.
that weird? Only $2 wide?
Yeah.
If I put this in the money, then it's $3 wide. You're putting 70 cents in, and it's $3 wide. There's just not enough profit potential in that new spread. It's
I prefer the premium.
narrow.
Yeah.
It's too narrow. So let's get our. Honestly, this isn't bad. We're going to try to get. Oh, there was just a 60-cent bid. That's why.
No, I do like the put spread. I think it's okay. But I think you gotta buy something in it.
We're going to close out. We're going to close out our current position. Take in 50 cents.
Yeah.
And we're going to put on a new put spread just in March. It's trading 51.93, down 5.30. If we put in that 50-40 put spread for $1.38, do that twice, we made our money back.
Yeah, and I do like, and even if you make a little bit back, even if we don't do it twice, we've made something back.
So today, as we were coming into the city on the train, I did a little experiment, went to my year-to-date history and looked at my losing positions to see which losers on the year are diagonals. And really, there were very few diagonals in that list because in most of them, we've been able to kind of scratch our way out of that loss.
Well, and keep in mind, it's only February, halfway through February.
Yeah, but earnings season is almost over.
No, I know, but it's still like those will add up as the time goes on.
Oh, but earnings season's almost over. We've gone through almost all of the big ones.
What we've done, I think, why it's not so big in there is we do not have unlimited losses in anything.
Right.
So if you're going to lose a couple $100, it's a couple $100. Where I've gotten hit on earnings is you're trying to get $2. You're trying to get $2 out of a put and you're down $2 grand.
We've seen that happen before. So I kind of like our new system of no more naked options, and I'm keeping a close eye, very close, not no more naked options ever, but for earnings.
For earnings.
For earnings.
No, yeah, right. We like naked options for durational trades, not for earnings.
I know your vision's not the best.
Talk to me.
Jajun.
No way!
We did it, folks, in how many minutes?
Jajun!
How many minutes? Okay, let me take a look. Let's take a look. That
See,
was...
Frank the Great, thank you.
Thank you, Frank.
I love you. Frank the Great for telling us earlier the better. We would have just put it on now.
Okay, we bought it at 10:05, sold it at 10:11. 6 minutes. 6 minutes. That might be
6 minutes, $50. That's a Jajun record.
Jajun record right there. Cupcake, thanks for reminding us. We're back in.
You got to wink when you say cupcake. Cupcake?
I don't know if I can really wink.
You don't know how to wink?
Well, it doesn't look normal.
It doesn't look normal.
Let's see.
I can go either side.
We've got a little more eye control. I don't know.
Would God taketh away in sight, he gives you in wink.
All right, so that's done. And
you know what? We could be done for the day. We can close up shop now. We're done for the day. Jajun, amazing. I'm kidding to our SIBO team. We're not closing up shop today.
Well, what I will say is it was pretty quiet behind us, and when we yelled Jajun and high-fived, it brought a little more energy to the crowd.
They need us.
I think some orders started rolling in.
I think they need us.
Okay, now I've lost track.
Okay, we did Etsy. Now we're going to go to ANET, which is another wah-wah. And then we're going to do, here's our schedule for today. Then we're going to do the Jacob SPX study, which we're very excited for.
Yes.
And then we're going to trade all of our earnings for today, which we're very excited for. And then, what's your assumption?
And then what's your assumption? And I will say, when I talk about liking to do all the earnings, we don't know what's going to be winners and what are going to be losers. Oxy right here, we put an order and didn't get filled. That's up $3.
Yeah, it would have been.
So that was another winner because in my account, my Oxy and Devon Energy scratched ANET. So,
Yeah.
like, those two scratch the one.
And that's kind of what our premise was. We don't know what's going to be a winner or a loser. We never know.
We don't
so
know.
we just kind of peppered the infield with everything.
Okay, so ANET, we're going to give ANET, ANET's down $8. We're going to give ANET one more round.
Oh, it depends, and we got to see, because when we were on the train, the one more round wasn't expensive.
Let's look. So I'm going to look at closing our current diagonal and putting a new one on, going to the 9-day, selling the expected move.
And don't you think it depends, too, when you look at ANET versus Etsy? Etsy was worth very little. ANET's still worth $1.13. So I don't want to leave that. My two choices would be close it and take my $1.13, or put a little bit more in and hope for the best.
It's interesting because when I go to the 9-day, the one we would sell at the expected move is the exact same one we're long.
Oh.
So if I can't put it in as one order, it won't let me do that because we have that in there. It won't let me like sell that same line.
Well, you could put it in and then break it apart just so we don't have to do the math in our head.
Or I'll just go one strike higher.
There you go.
And know that this will cost us like 10 cents more or 20 cents more.
That's a number I can live with.
So if we sell that 110 in the 9-day and in the 16-day buy the 103, we have to put $2 into the trade. And we have the 103, 110, $7 wide. We got to put $2 into the trade. If we want to keep this going, or we could look at selling a put spread like we did in Etsy.
No, I mean, so ANET's got a 6. Oh, wait, hold on. I was in SPY.
37 rank.
37 rank, so it's high. I thought it was 16. I was in SPY. Now, the put spread's going to be higher. Let's take a look at the March put spread.
Well, yeah, let's look.
You could sell the 190 put spread for 260. That's not bad either.
Oh, no, that's not bad. 260?
Yeah, that's not bad. You could even go to the 102. 92 for 333. You love threes.
3-3, that's my birthday.
I know, do that one.
Me and Hibachi.
Hibachi and Jenny, birthday buddies.
Hibachi, this is for you. We're going to get 3-3. Oh, darn, it just changed. There it is.
There it is, 333. Put it in for 333.
We're selling the 102, 92.5 put spread. It's a little aggressive, but we're trying to cut down our losses in ANET.
You're the 102, 92.5.
We're like TP now. Trying to get our money back. That's exactly what he was on with me for a week. He's really rubbed off on me.
He's totally rubbed off on Jenny.
I'm going to start selling. I'm going to start selling
30 cent call spreads.
30 cent puts and lift.
Oh my gosh.
Hey,
okay.
That was all right. So right now I'm working that put spread for 333, and then I'm going to close this diagonal for $1.20.
Yeah.
Not bad at all. I know it says one or more contracts have no bid, but we have to get rid of that short.
Well, yeah, you got to get rid of the short.
Yeah, like that one probably has, or maybe, because what has no bid? Here, it's this one. It's the short we're trying to buy back. We can't leave that short or it'll use a lot of buying power, and there's still 2 days to go.
Yeah, close that whole thing.
I'm trying.
Pay up for it.
I'm trying, Mom.
Yes.
Get off my back.
No, do it. Do it now. For the sake of the show, take it, penny it down to 20.
120. 120 back on our diagonal. Still working
You could separate them to close it. Close the short first.
125 and a nickel. I know. Okay.
You know what I mean? You could separate the two.
Are we going to go green on the day?
Yeah. Why not?
Are we going to make new highs today?
Why not? Every day that ends in Y, all-time highs.
All right. I'm working both of those. I hate to change the 333, but I'll change it to just 330. Instead of like 333, I'll change it to 330. 330
could
credit.
let the 333 work because we're letting the other one work too. It's okay. We're filled.
$3.30 on that put spread, and I'm going to and we're filled $1.20 on getting out of that diagonal.
So I mean,
we're all right.
Net, when you look at it, you got $1.20 back, and you also got 33 cents. So it's
$3.30.
Yeah, it's $3.30. It's pretty good.
That's if and that doesn't continue to fall, and
if it does, we will continue
we'll have to
lose.
roll that put spread.
Yeah.
Okay, so as far as management, I think
that's it.
That's
right now.
all we had to manage today. Our Marvel put is making a comeback. Marvel's up $4 today. So that put is not in as bad shape as it was.
So that has earnings coming up. Is that? And that's after earnings. So we're down $50. I would actually put in an order to scratch that because I want to put in something for earnings on Marvel.
And on March 5th, guess what? Oh, I'm still here.
Yeah.
Oh no, I'm still here. I keep counting down the days.
I don't mind having something in for earnings on Marvel, and that put, the reason, I mean, we have the 100 put, and it's trading 111. The reason it's keeping its wings up is because it's through earnings.
But up $4 today, if it's up $4 tomorrow, it's a win. Why don't I just take our GTC from 50% to just like $50 or something?
Yeah, that's what I'm saying. Like just something smaller so we can put something in on earnings.
Okay, so we took in about $3. I'm going to try to just buy it back for $2.50.
Perfect. Was that a roll on a roll, or was it $3?
No, that's a new trade. That was a new trade.
Yeah, that was $2.95 new trade.
Okay, we have a lot to do, I know. Eventually, I do want to take a look at OKLO because it was down yesterday, down today, and we got out of our puts. Maybe we want to get back in. And Intel as well, we got out of our puts, and that's down today. Maybe we want to get back in.
And CCJ is down too. Like those
yes.
things get.
Nuclear,
CCJ has earnings today.
Uranium, they're all down.
Okay, wait, no. CCJ has earnings tomorrow.
Oh, is that the 20th?
The 20th.
And that's what it says for OKLO. So tomorrow's a big day for uranium and
but they keep pushing that
nuclear.
OKLO. I don't trust that date.
I don't know that we ever really had a date. And I told you my brother's on a convention right now, sponsored by OKLO. He's out with all the
sponsored by OKLO.
I told him to get us some swag.
I like it.
Get us some swag, please. Next week we'll be coming in OKLO clothes.
OKLO sweatsuits. Windbreakers.
Did you see Vanetta talk about those Dunkin' Donuts?
Oh my gosh, I would have loved to have gotten one for my kids.
I would have liked to have gotten one for myself.
They would have loved it, but they were $100 and $200.
They were expensive. Yeah, they were expensive.
Yeah. America runs on Dunkin'.
All right. What do you want to do now? 10:20.
10:20. Let's go to Jacob's study. Let's give.
Sure.
We are in the SPX pit. We are filming live from the SPX pit, and Jacob does a great job giving us, some information.
On the way to Jacob's study, we're just going to give a quick shout out to Jack Tucker and his tranches of SPX. Iron Condors here, 6100, 6130, his short strikes here, 6095, 6130.
His strikes are pretty similar.
Yeah. But he did one set at, well, and they're close. One set at 919, one set at 921. So, close.
Yeah, they're pretty close.
Yeah.
So my only question to Jack Tucker, and I know he can't respond, so it's a rhetorical question.
Maybe I can answer you.
Your commissions are going to be less if you do it together. You're capped
well,
at
you're
10.
capped at 10. You're capped at 10.
And aren't his tranches 10?
8 and 8.
8 and 8. So,
well, like, why not do 16 at once and you don't pay commissions on 6 of them?
Yeah.
Yeah,
I don't know. It doesn't
but
matter.
you are kept at 10.
Actually, Jack Tucker, you do you because like you're doing something right.
Yeah, Jack's doing something right. So,
but that'd be a lot of times when I'm over. If I'm thinking about doing that, a lot of times I'll group them in 100 lots, so I only pay commissions.
And he shifts them a little, so maybe he wants some at one strike, some at another, so
Yeah.
they're not all at the same.
You know what
strike.
though? You're right. I'd rather pay the commissions and have
And
what I want.
He's worth giving up the $12.
Correct.
Or what? Well, if it's 6 and 4 contracts, it is something to think about, Jack. Something to think about. All right, we will be back to Twitter, but let's take a look at this market measures sponsored by the CBO about avoiding PDT with 1 DTE. Do you want to tell everyone what those mean?
Pattern day trading rule. PDT is pattern day trading rule. If you have and you know what? Contact your brokerage because I don't want to be misspeaking on anything. But if you have under $25,000, you can't have so many in and outs within one day, which is why those 0 DTEs are a little bit tricky.
Right. So, and we are fighting the PDT rules. We are sending people to go lobby for, try to get rid of that PDT rule.
It's the dumbest rule possible.
We do not like it. I was talking to my daughter because she got into this law program over the summer, and
is she going to fight it for us?
Well, it's interesting. So these law schools, she's been looking at schools, and we were looking at the results of kids who come out of this school, what % of them go on to law school, and it was crazy. So Notre Dame, I want to say the Notre Dame pre-law program, 70% of those kids go on, they go on to become lobbyists or go to DC or go work right out of school. And I said, you can go lobby for the PDT.
She's already got her platform.
Yeah. You're on your way. She's going.
We're not gonna take it. That's awesome. But yeah, so this is something there. Like I said, it's an archaic rule. I don't know why the rule. I'm sure it was born out of good intent, but I guess so. But it's archaic now.
Right, it's archaic now. We're trying to get rid of it. But anyway, if you have an account with less than $25,000 in it, how do you avoid that PDT with 1 DTE?
DTE is days till expiration, which is so funny. Why are we talking acronyms?
I feel like this is like a tongue twister. Say this 5 times.
Avoiding PDT with 1 DTE.
It's 5 times.
No.
All right, here we go.
I'm on too many drugs.
Avoiding PDT with 1 DTE, 0 DTE option markets in the most popular underlyings
SPX
are extremely liquid and give investors access to rapid results, whichever side of the trade they choose.
Right. So far, our research has found success in selling 0 DTE premium at market open, provided winners were managed aggressively.
This can run afoul.
Great word.
This can run afoul of pattern day trader (PDT) rules, which place additional restrictions on accounts which buy and sell the same instrument on the same day.
Now, I don't believe, contact your brokerage firm, it applies to futures options.
Oh, no, but contact your brokerage firm. But we know a lot of people who, to avoid the PDT, will use ES
But
options.
then you got to close it, otherwise you're going to be long it. So
Right. It's not cash settled.
Forever give me there's a gotcha. This just disappears into nothing when you if you let it go.
Liz had the brilliant idea of trading ES options yesterday and wasn't even thinking that it wouldn't cash settle because we're so used to everything cash settling.
Within 30 seconds to go, I was like, oh, shoot.
I got to get out of this.
It's the drugs kicking in.
All right. What do we gain or lose if we instead sell 1 DTE options the previous close rather than 0 DTE options at market open? So honestly, when I heard Jacob was doing a piece on how to avoid PDT, I didn't think this was going to be the route he was going.
I didn't either. I thought he was going to try to spread it off.
I've said, well, he's just going to turn them into butterflies.
We know what's happening.
I know. He's going to buy a call spread and then sell a call spread, or sell that iron condor and then buy an iron condor. I did not think he was going to look at going to 1 DTE.
And I like it. He's thinking outside the box. So we're going to take a look at what Jacob has to say.
Everyone has a different thought process with their trading. So this is really interesting. I'm curious to see these results.
Yeah, for sure. Okay, the study, we know the study, and using 2 years of data in 0 DTE SPX options.
Almost 2 years of data.
It doesn't say almost.
It should. Unless we missed his birthday. We'll find out today while we're here.
Well, here's the deal, though. Aren't we using 1 DTE options? Why are we doing it in 0 DTE?
In the 0 DTE.
Let's just read. Let's just
All
keep
right,
reading.
Go ahead.
Considered selling either strangles at market close the day before their expirations at a variety of initial deltas. So we're thinking at night, 2:30, you're selling the next days,
So
which is not
in the
0
end of
DTEs.
the day.
These are 1, right? At the close of the day.
Okay. Examine the P&L just from holding these positions until the next market open. So after which they could be viewed as fresh 0 DTE trades, for the statistics of which see previous market measures. Now, this seems a lot riskier to me than selling like on the open and closing by noon. Selling at the close and selling them at the close and closing the next morning. You've got that overnight risk of something happening overnight.
That is true.
Yeah.
Now I will tell you though, considering where we're standing right now, having talking to some of these guys, the volume for the 0 DTEs is very heavy on the open and very heavy on the close. So that does kind of like track a little bit, but I agree with you. It is way riskier for me to carry a strangle in the SPX
overnight.
It's a little out of my comfort zone.
You don't say.
It's a little, just a little outside.
All right, the difference between a single overnight and a Friday close to Monday open. The difference between a single overnight and a Friday close to Monday was
they're not
doing the weekend.
I mean, because
then you got 2 days of.
Then you're bonkers.
You got the whole weekend of risk.
And then standard, all trades were assumed exercised at mid-price. Buying power controlling for long strikes are still needed, but the same ones can be purchased for both 1 day and 0 DTE positions. So,
Okay. I'm very curious to see these results.
Okay.
1 DTE to 0 DTE overnights. So we're looking at straddles, 40 delta strangles, 30 delta strangles, and 20 delta strangles. Average P&L across the board?
Everyone's a winner.
Everybody's a winner.
Any delta is a winner. Now, that being said, so think about it from this perspective. You're selling it at night and you're buying it on the open.
On the open. Now, what are you giving up for wings? I'm not entirely sure. In the past,
those wings are way more expensive in the 1 day
but
than
they're still going to have value in the morning.
They will.
So that's why I don't know what you're giving up for the wings, because you're buying them at night for the next day, but the next day they still have value.
Yeah.
So
and they should.
That the 20 delta strangle for $36, I don't think that's enough. That's not going to be enough to cover the cost of your wings. Unless you do it like, and we know people who will do this, buy their wings a little further out in time.
Like 30 days, you've just got your wings.
Yeah,
and it's
or
literally
10
capital.
days, or 2 weeks, or 7 days, or whatever. Buy your wings a little further out in time, and those are your wings, and they don't decay as rapidly, and do this strategy daily with those wings that you've bought once.
Yes.
But they're more money, but they're not decaying as quickly.
Yes.
There are different ways around this.
There are. Let's see what he's got going on here, though.
But when I look at this, $36 doesn't seem enough if I have to buy wings. And $59 is close if I have to buy wings. I think I have to go with the 40 Delta Strangle or the Straddle, which
I mean, I'm not
seems
selling
aggressive.
the Straddle. I'm doing a 40 Delta Strangle. But 40
yeah.
Deltas are close.
Yeah, they're close.
It's close. Like, and you can look, both of those are pretty close. You're looking at a $200 CVAR per night.
CVA.
You know, conditional that
CVAR. Yeah, $3,900 CVAR. They all have a high CVAR. You're selling overnight strangles or straddles.
Yeah. Yeah. They all have a high overnight. Okay, so let's go to the takeaways. Selling zero DTE premium has been generally successful over the past 2 years, provided winners were managed aggressively. But pattern day trading rules make it almost impossible to place and manage zero DTE trades without incurring additional account restrictions.
And honestly, we've seen over and over and over that the best case scenario is managing winners. So if you have that, if you have less than $25,000 and you're under those pattern day trading rules and you can't manage your winners, this is an alternative. You put them on at night, take them off in the morning. If you're overnight, you don't have that PDT.
$78 a day. I'm just kidding. Kidding, because I'm probably spending that much on my wings.
All right, PDT can be skirted by selling I love how he says skirted. Selling one DT options the previous close, since then they can be managed at zero DT without buying and selling the same instrument on the same day.
Don't you find it fascinating that he's actually closing them on the open instead of saying, okay, now this is my trade for the day?
Yeah.
He didn't say 25%.
He never said like at 10 a.m.
He didn't say 25% either. He said on the open.
On the open.
Huh.
So how much do you make if you leave him till 10? Double those numbers.
Holding these short positions overnight was net profitable, but incurred occasional large losses. Yes.
Yeah.
When overnight prices were making dramatic moves.
All right. Ironically, the rules intended to protect. Yeah, this is
Yes!
why. This is why
We're sending Lily to Capitol Hill.
It doesn't, because ironically, the rules intended to protect retail investors may push those looking to trade zero DT options to more risk, and it's true. What it's doing, if someone wants to trade these zero DTs but can't get in and out because they have a smaller account, they're forced to take more risk and hold these overnight.
Yeah. Send our studies to Capitol Hill.
We're coming for you.
They are forcing people to take more risk.
I know.
Instead of being able to have their risk done overnight, they're making them hold the risk.
Yeah, instead of having this trade on for a few hours, putting on at 8:30, taking off at 10 a.m. Or how long were you in your butterfly today?
7 minutes.
No, 14 minutes. We put ours on. We've sold the straddle. We did an iron fly, basically sold the straddle, bought some wings. I took mine off quicker. I was out in like 12 minutes. You were out in 14 minutes.
14 minutes.
So it was instead of it being in and out of a trade in hours, they're asking them to hold them overnight.
And once you close a trade, you can't take that profit away. That's crazy that they're asking them to take more risk. I would like to know, okay, the road to hell is paved with good intentions, right? But I would like to know what the intention was behind this.
Behind the PDT
I would like
rule?
to know. I don't think there's malicious intent. I really don't think they were like, we're going to screw them.
I mean, maybe it was people who were more of like gambling, trying to just scalp in and out of things, like quick buy and sell.
And I think that's where your buying power comes in. Like, you can't start with more than your opening buying power, because maybe you could make money and then...
Well, and overnight buying power can be higher. Overnight margin is higher than daytime. If you're in futures, like the daytime trading futures during the day is less than overnight. And so maybe they're trying to prevent people from getting in and out. I really don't know.
I would like to learn from a place of what was the intent.
When Jacob made the study, do you think he knew how mad it would make us?
I hope he's watching. We love you, Jacob.
We love you, Jacob.
We do. I love Jacob.
We're not on teams, but imagine the hearts floating in the background.
And the boys are going to do this on Thursday. So the boys, meaning the knucklehead counterparts, Tom and Tony, they will go over this, and I bet they're going to get equally as mad, if not more mad than us.
Okay, I'm going to go to this. So what this study is talking about, and don't avert your eyes, Liz, because on February 21st, or tomorrow, we've got the AM and PM.
Oh!
Is this expiration week?
It must be.
Oh. Where did the time go? Okay, here we go. What this trade is, and not the AM, it's the PM. Tomorrow, PM, would be...
40 delta. Just
40
go 38 delta. 38.35.
Yeah, 40 delta, 40 delta. Here, 40 delta, 40 delta. That was probably the best P&L. Selling this at the end of the day today, and then buying it back tomorrow.
And it only used $121,000.
Now, we're going to have to buy wings, and we both said these wings are going to be expensive.
They're not going to be that crazy expensive. Go out and go to the 6,200.
I was going to spend $1 and $1.
I was just going to say 20 cents and 20 cents.
Sure, I guess that's that makes the most sense for Jacob Studies. Spend as little as you can, 20 cents and 20 cents.
20 cents, and then go with like the.
Oh, it's going to be way too wide on the bottom.
Go to 59.50. Go at least like 40 cents. That's not bad.
Remember Studies on the downside 70 cents, on the top 30 cents?
Yeah.
So let's just take a page out of his study. 70 cents and 30 cents. So you're only using 8,500, but that's your risk to the downside if there's a whopper move between tonight and tomorrow.
I do kind of like the 70 cents, 30 cents.
I think I took that right out of a study of his. Like
You
70
did.
cents on the downside, 30 cents on the upside.
Well, he took it from the Jade Lizard.
70 cents and 30 cents. Okay, that's not bad, $8,500.
It's not bad.
Now, I'm guessing these win more than they lose, but you're going to have days where it's a full loss.
Mama said there'd be days like this, because there will be.
All right, we're doing good on time, 10:35, and we are almost done with.
Yeah, but what I do love about number one being in the SPX pit, it's fun to hear the noise. Number two, I like actually taking a visual.
Are you gonna try this tonight?
Yeah.
Well, let's see. I'll look at it at the end of the day. But what about on the end of the month? If you did the morning, then you just let it go.
That causes me heart palpitations.
No, because what's the difference if you're?
It's where it settles. The AM is the settlement. It could spike all the way up. Remember our last settlement? Do I not need to remind you?
I'm not saying we put on a calendar. I'm just saying if you're going to close something in the morning anyway, if you do the AM and you sell.
But the AM settlement is totally different than where it could be opening.
The 40 delta is gone tomorrow. You have nothing to do. There's nothing you can do.
But you don't even know what you have until about 10 o'clock.
Yeah, then you look at 10 o'clock at the settlement price.
And then you say, shoot, I just lost $3,000.
That didn't work out. And you know what else? It doesn't come off your sheets.
No.
So this buying power in the AM settlement,
it stays all day long.
At 8:30 in the morning or 9 a.m. or whatever time the settlement comes out, they don't give you back the buying power. Because I remember, I'm like, I want this buying power back. These are gone. And I didn't get the buying power back.
Until like 2 o'clock.
2 o'clock, I think. Late. It really messed with my trading for the day.
Yeah. Because she's got every ounce of buying power locked in there.
It was holding a lot of buying power.
I know, it was.
Dang it.
Okay, so that, I'm glad we did the visual on that. We'll take a look at that. And Jacob, I appreciate it coming from a different angle, which I didn't expect.
I would like to see a study on just the end of month, sell in the morning, just sell in the morning and let it go. At the end of the day, selling the next morning straddle.
With wings. Iron Condor.
His study didn't have wings.
$121,000 overnight.
No, fine, buy wings, but yes. Just the end of the month when you do the end of the night until the morning settlement.
Do me a favor, just because I want to show this. Like the wings are so important in the fact that you can get cheap wings. Go to the SPX, and I'm not saying I'm just saying $121,000 is going to be. You can get it for let's say $40,000 and have super cheap wings.
Oh, sure.
You know what I'm saying?
Yeah.
Like, there's no reason not to.
Like, let me look at his. I'm just gonna look at the straddle.
Okay.
And if you want nickel wings, instead of using
give 10 cent wings, like whatever. I love 10 cent wings.
Instead of using 122,000, if I buy 10 cent wings, and I'm trying to find 10 cent wings, here, 10 cent wing, 10 cent wing, and a 10 cent wing. 55,000.
That's what I'm saying. So instead of 121, no matter what, you can always take it down by giving up very, 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 very,
and those
very,
aren't
very little.
Protection.
Those aren't
protection. That's just a synthetic naked.
Yes, that's a synthetic naked, and you're cutting your capital in a third.
One day it could be a real humdinger, and then you're in trouble in the morning. This study is insane because it is
from 1920 humdinger.
Because you're right. Like they're trying to force these small accounts to have riskier trades.
They are, and it makes zero sense to us. Clearly.
Okay, maybe they'll clip this piece and send it right to Capitol Hill.
Yeah, it should go to Capitol Hill.
We're not gonna take it.
No. Okay, we have to. It's 38. We've got a lot of
38?
earnings. Yeah, 10:38.
We have so many earnings, which I think I'm going to prioritize earnings over what's your assumption for now.
I give you a second on that.
Okay, so Bob on Fire Thank you very much for sending in the earnings today. Carvana, Toast, Baba, Walmart, Unilever, maybe?
Yeah, probably.
Work? What's W?
Work. Wayfair?
Maybe.
I don't know.
And Shake Shack. All right. Carvana, I don't know. It's too high priced for me now, I think. Let me take a look at it. CBNA.
This was a Josh specialty. Josh loved this.
Oh my
didn't
gosh, Josh got long Carvana at $7. He would talk about it at the lunch table all the time.
He's super loaded now.
Yeah, how much longer is he going to keep working? When's he going to move to the beach?
I don't know, yeah, but he did.
Carvana, I can't do it. I can't do it. $38 expected move. You know this diagonal is going to be out of our budget.
Okay, so that's the one I think. I mean, I took a swing in Netflix, but I'm not going to take a swing in Carvana.
I'm not taking a swing in Carvana. No
Why?
way.
I mean, I don't understand Carvana. I don't get the concept. I know you like the
I'm going to
concept.
explain this to you one more time.
It's a used car dealership. I think unless you're getting a random car, there's no reason to go to Carvana.
No, I think it's a place. Okay, so let's say I want to buy. Let's say I want to buy a used Volvo, and I look at the inventory at the Volvo in Orland Park, and I look at the inventory at the Volvo in Downers Grove, and I look at the inventory at the Volvo at this place. I go onto Carvana, and I believe they all feed into that, so I get to see like every used car in
CarMax.
Carvana. But CarMax doesn't have every used car, and they only have what they have.
They can get them from everywhere, though.
No,
I don't know.
No,
I still don't
think it's
that.
just a way to look at every used car. And then if I say, oh, I want this one, then that car dealer sends it over to the Carvana machine, puts it in the machine, and I go put my token in, and out comes the car.
You spend $1,000 more to put it into a gumball machine.
I don't know, but I just think it's a way to see every car instead of going to every different website.
Yeah. Okay, I still don't.
It's just too expensive for us.
I don't like it. We're going to pass.
All right, let's see what W was. W, Wayfair, you were right. Now, Etsy, not that Etsy and Wayfair are the same thing.
No, they are not.
Not at all. Okay.
I bought my cherry rug from Wayfair.
And I like that cherry
It's cute,
rug.
isn't it?
It is cute.
Yeah.
I think I ordered something for my parents' bathroom remodel on Wayfair.
Yeah.
Yeah.
It's not bad.
All right, let's do it. All right, 2 days. Go to the expected move, sell that 53 call, and in the 9-day, buy the 40. This is not bad at all. 47.53, $6 wide for $2.29.
That's not bad.
That's not bad.
Okay, let's hit it.
Now, I'm just going to compare.
We're green on the day. We're flirting with green.
If in the 9-day, instead of the 9-day, we did.
I'm a fan of the 16-day.
The 16-day, it's $2.64 instead of $2.20.
I will give you $40.
If this doesn't work tomorrow,
in singles.
Good. I need them for the
I know you
train
do.
station. Couldn't find 2 singles today for the train station.
I know you do.
All right, 262, 255. We'll try. We'll see. 255. Working that Wayfair diagonal.
Okay.
All right. Frank, I see your nephew. I hope he wished you happy birthday. I don't know if Jeff knows that it was Frank's birthday.
He's just shaking his head. He does not like to communicate with us. He does not like to make eye contact.
All right, that's Wayfair. Toast, Baba, Walmart.
Okay, so I'm definitely in Shack. I think Shack's a big expected move too, isn't it?
Sure. Yeah, I don't know. We'll look. I'm not right now. I'm on Toast.
Okay, Toast. T-O-S-T. Hit it.
T-O-S-T. It's had a run. It's run from 20 to 40. Does that matter?
No. It's got a 70 rank. So it's a $40 product with a $5 expected move.
It's going to be cheap. So if I sell that 46 for 86 cents,
yeah,
and buy the 40
go to
for
the 16-day.
216, 217.
Oh,
I'm going to pay
yeah.
217 for
Hit it.
this.
Just pay 217.
All right, we bought the 40 in the 9-day and sold the. Now there we did the 9-day.
How
I guess
wide
if you
was
add
that?
it all up, maybe we are better off just doing the 9-day if you add them all up.
How wide was that when you put in?
It was
$6 for $2. That's
$6 for $2.
That's a good return on capital.
If it goes up on
if
earnings.
Not, you only lose. So this is what we were kind of talking about earlier. I've changed my trading style. You changed yours with earnings because I'm not going to sell a naked put for $1 in this, and it could go down to 30.
Yeah, and make 50 cents.
Yeah,
thanks. Picking up nickels to. All right, next up. What do we have?
Next up, I'll read them to you. We did Carvana Toast Baba. We'll go in
BABA.
order. We'll go in order of entrance.
Now, I do want to let people know. Okay, Baba's been on fire. we do have viewers, and what's your assumption? The viewers, with Baba and what's your assumption, and they're bearish. They are bearish.
I know.
Do you want to do a bearish diagonal in Baba?
So, okay, let's talk through this because I don't think there's a right or wrong to anything. We've been one-sided.
I know.
I don't know that we can start picking direction.
You can't pick and choose. You can't be like, I think this one's going up, and I think this
then
one's
we're
going
gonna
down.
be. Then you can lose on all of them.
Then you're right.
And this earnings, I heard this statistic this morning because I was up very early. This earnings season has been extraordinarily strong, and earnings across the board have given a 16% boost.
I just have a hard time with Baba at 125. So I've been in Baba. Baba is something that...
Wait, did Baidu have earnings the other day?
Yes, and it went down.
Okay.
So I have a hard time with Baba at 125 because I've been in Baba for so long, at like 70, 80, 90. At 125, I have a hard time putting on a bullish diagonal in Baba.
I get it. No, I understand what you're saying.
Maybe we pass.
And it's going to be expensive. It's going to be $4 for a $9. It's $4 for a $9 wide.
Or what do I know? Maybe we put it in.
Honestly, let's
$4 for $9 ride. We don't like that anyway.
Let's pause. Let's pause that one because let's go to Walmart.
Walmart, that'll be...
No, but I agree with you. I kind of liked what you said to me the other day, and it was with the PANW, and it's the one we didn't do on the show because TP was with you. You just kind of blindly did it. And guess what happened? Like, 3 were winners, 3 were losers, or 3 were winners, 4 were...
Some come back.
Some come back, and it wound up being okay.
And honestly, speaking of some coming back, I'm going to start with the 16-day. So then we don't have to go back. Let's start with the 16-day.
Okay.
In Walmart, if I buy the 104 in the 16-day, and in the 2-day, expected move is about $5. I sell the 109. So I have the 104, 109, $5 wide. It's not great because you're paying almost half.
You are paying almost half.
You're paying almost half. So let me...
The way to thwart paying almost half is you take your call that you're short up one.
So I did that. So I'll go to the 110, and then I'll bring I'll go the 9-day and go 1 in the money. So then 228 on a $6 wide.
That's much easier.
Better.
Are we all-time highs right now? Let me look again.
Probably, right?
Yeah, I think so. Squeeze are up 3.
Let's take a look. SPY. All right, we had all-time highs. We are trading 611.62. No, 611.77 was the high today.
Okay.
And the high yesterday was 611.49. So today we made, give it up for new all-time highs. Right while we're sitting in these seats at the SIBO.
Yep. You know Jenny's going to go wash her hands immediately following the show. No, I know you're just going to hold your hand up like this the rest of the show. No, but you're fine because if you wash your hands, you're fine. And I actually don't think I'm contagious anymore.
How long are you contagious with ours?
I don't think I'm contagious. It's just settled in my lungs.
Yeah.
Like whatever I had, I think my son had, and he beat it in like 48 hours.
I mean, if I get it, give it to me now, so it's over by the cruise.
You won't get it.
I think I'm good.
None of my family got it. I think JD gave me a cold, and then the cold settled in my lungs.
Yeah. All right. Well, anyway, new all-time highs.
ATH. I'm only going to speak in acronyms. ATH. Okay, so we are there. So we're in for toast. The next one on your list, Jenny Andrews, is you. We did. Did we do Wayfair already?
Oh, Unity Software. Yeah, we did Wayfair. Unity Software. We have been in this in the past. We had a viewer get us into Unity Software.
We did.
I don't mind. Okay, so here's something I want to bring to your attention. I don't know if you are in Unity Software.
I don't believe I am. I can't check.
This is the different reason why buying the 16-day is not that much more expensive than buying the 9-day. If I go to the 9-day expected move in Unity Software, $307. If I go to the 16-day expected move, $340. 30 cents more. So
and that's what you're paying.
That's the difference.
But in my mind, it gives me peace of mind. No, and like you said, you kind of get it back in the end anyway, even if it is a loss, because the farther out time holds some value. But it's just easier for me to swallow that you have a little bit more capital to play with if it goes around.
Now, if I go to the just in the money, the 21 put in the 16-day, it's $2. If I go to the expected move and sell that at 24, I'm paying $1.39. It's $3 wide. Not bad.
No, that's not bad.
Okay. All right, I'll just do that.
Unity Software.
Yeah, $1.40. Unity Software we're in. That was not bad at all. Not expensive.
Okay, then we did Wayfair, and then the last one is Shack, S-H-A-K.
And what were you asking about Shack?
I don't know where it's trading. Like I really had no idea.
111.
And so the expected move for the cycle is $10. That's kind of a lot.
Yeah. Shake Shack. Do you know of anyone just like heading out to Shake Shack?
No.
I don't either.
But a lot of people love it.
I
Do you know
don't.
what kills me? What kills me is I bought Portillo's I bought Portillo's because I love Portillo's. I mean, I grew up owning a hot dog stand, so I love Portillo's. And Portillo's actually is coming back this year, but it took a couple of years to get their PTLO.
And it's not really. I mean, where is it? 14. It's nothing like Shake Shack.
No, but you see, Portillo's has had a run for the roses.
Yeah, but from the IPO.
No.
From the IPO,
it's still,
the IPO was 27, 28.
Yeah.
So
right.
it's still lower than the IPO.
Correct.
You look at Shake Shack. But Portillo's is more local to our area. Speaking of, have you seen the new Portillo's on LaGrange Road in Orland Park?
No, where is it?
It looks amazing. It's right by my parents' house.
Oh, it is?
Right by my parents' house. It's pickup only, and it looks like a racetrack. So they literally, it's like...
By the is it by the Menopause Mall?
It's right by McDonald's.
Oh, really?
Yes.
I'll drive by it today on the way home.
Oh, yeah. So it's, you won't even recognize it. It doesn't look like a normal Portillo's.
I'm going to pick up some cheese fries.
It's just a big drive-through, and it looks like you're going through a racetrack.
It's awesome.
It's pretty cool. Okay, so Shake Shack, let's go back to the IPO of Shake Shack. You know, how long ago was that?
I mean, that was
$40. Now it's $111.
Yeah.
Portillo's is half the price that it was.
But Shake Shack is a national chain. Now, let's keep in mind, too, we were talking about liquidity, and Shake Shack only 610,000 shares are traded. It's not that liquid.
It's not that
so
liquid.
we also say, too, illiquid products have a tendency to move or gap in one direction or the other on earnings as well.
But these markets are wide. Like, the expected move is 170 at 220. These markets are wide. I don't think we have ruled out illiquid products.
Yeah. What is Shake Shack? How many stars is it?
And Shake Shack gets 2 stars.
Oh.
It's out. It's out. So as far as the earnings trades today that we did...
You're still working a couple. All we have in is Walmart and Walmart. That's it.
Wait, all symbols today.
That's all we're filled
okay,
on is
so
Walmart.
then I'm going to adjust these working orders.
You're working Toast, Unilever, and Wayfair.
And now I'm filled in Unity Software.
Okay.
Unity Software, and I'm still working Toast. I'll adjust that. I know I was trying to pay $217, but I'm going to go with $222.
Yeah, that's okay.
I'll go with Ducks instead of $217.
You got to do it.
Working Toast and
Wayfair.
Working Wayfair.
Wayfair's gotten away from us by about 13 cents.
Yeah.
I mean, it's okay.
I'll adjust it. So I'm adjusting them all. Just trying to get in. The one we didn't get filled on yesterday is one that would have been a winner.
Yeah.
Okay. Now the only one I'm not filled on is Toast. And Toast is $6 wide, $225 maybe.
Sure.
Filled.
And you're filled.
So we're filled in all of the earnings trades we tried to get into.
Yeah.
Right? Toast, Wayfair, Unity Software, Walmart.
So we have 5 on, right? 4?
1, 2, 3, 4.
4. Perfect.
4.
And they're all, I mean, $2.
They're not. None of them
none of them were too
Nothing
expensive.
was crazy expensive.
So the ones we've pushed out were Baba because it was $4 on a.
Yeah.
I'm okay with that.
I couldn't get into Baba at 125. And Baba might be up tomorrow. I just couldn't.
It doesn't matter. Yeah.
I get it. All right, we have 9 minutes, and it's time for you know it, you love it.
Da-na-na. What's your assumption?
What's your assumption? Although I do feel like we should take a look at Twitter.
Let's take a look at Twitter first. Honestly, what's your assumption? The boys did what's your assumption today. There are some good ones on there, and we will be doing. You can go through.
Okay.
People can walk through.
Oh yeah, sure.
So,
okay. So Jack Tucker came in. Actually, with futures, they're not capped at 10. So Jack, you know more than we do. We thought all the contracts were capped at commissions were capped at 10, but with futures, it's not. So
wait, is SPX futures?
I guess so.
He knows better than us. Thank you, Jack. We
Thank
appreciate
you,
your
Jack.
knowledge.
You're smarter than we are.
We appreciate your knowledge.
Frank Walsh, and this is coming in from YouTube, from Chris Taylor. CELH, Celsius Holdings, is it? Or is it Celgene? Or
I don't think it's Celgene. I think it's
it's
Celsius.
something I'd be interested to hear about from the ladies. Earnings brought forward to tomorrow and up to date with high IVRs. CELH.
I think that's Celsius Holdings, isn't it? It's Celsius Holdings. Jenny's favorite energy drink.
You know, I'm against these kids and these energy drinks, but
yeah, but the problem is it is everywhere. So, but
it was down so much. We had viewers writing in about this, trading it. I personally don't trade it because I don't let my kids drink it.
It's pretty interesting. My kids don't drink it either. My kids don't even drink. They don't even drink. My kids don't even drink pop, which I'm trying to get them to drink, like the mother of the year.
They were talking about Poppy today. I bought Poppy this weekend.
What is Poppy?
It's like some kind of like natural pop.
But they don't like the carbonation. Neither of my kids do.
Oh,
which is
Lily
really weird.
doesn't either. She won't drink anything carbonated.
Which means that Jade is never going to drink beer, so that's a good thing.
beer's not quite as carbonated as like a soda.
Oh my God, it's way more carbonated.
Not if you get
not if you shake it. Jenny does before she drinks her beer.
Not if you go and get like a big stein of it. I don't think.
How many steins of beer do you drink a week?
Hey, I was in Munich last summer. I don't remember a lot of carbonation in the beer.
I don't think Germany has a lot of carbonation.
No,
most beers have a lot of carbonation.
You don't pour a beer; it's not like bubbles coming up.
Yes, there is.
I don't think
Don't you ever remember the commercial? Tastes great, less filling. It's because the carbonation fills you up. That's why the commercial is tastes great, less filling.
Then it wouldn't have carbonation if it was less filling.
They're just trying to say that it's less carbonated than other beers.
I don't know. You drink a pop and it's fizzing. You drink a beer in a mug and it's.
Okay, I've got a keg at my house in my basement. Whenever you pour it, there's this much foam on the top. It's carbonated.
All right, I believe you. But
you can adjust the carbonation though.
It's interesting though. Your kids won't drink anything carbonated, and my daughter won't drink anything carbonated.
They're gonna get married and have no carbonation in their house.
All three of them. So.
In an uncarbonated house. I'm going to bring my own beer. I'm just kidding.
I did buy a case of that Poppy, though. It was like right in the aisle. I couldn't resist because I've seen it advertised and heard people talking about it.
I don't know what Poppy is.
Anyway, Celsius energy drink, I don't allow it. So
okay,
I don't. But I'll trade it. I guess I can trade it.
You've got a 95 rank. So, like, if you covered up Celsius, what if you thought it was Celgene Holdings? If she thinks it's Celgene Holdings,
then maybe I'd sell a put in there.
Because we're product agnostic. You've got a 95 rank. When are earnings?
Are we product agnostic?
Earnings are tomorrow.
I'll look at it. It's going to be cheap. So I'll tell you, this is going to be the diagonal. I'll put it on. It's going to be really cheap.
The diagonal will be cheap.
$1.50.
It's up
$1.50.
It's up 11% today. That's kind of a lot.
We'll risk $150 on this $4 wide diagonal
for those kids to get their energy drinks.
Ever since that kid got in my car and she drank like 10 Celsius,
she throwing them out the window in the drive?
No, she got in my car. She was crazy. And I said, Kiki, what's going on? I just drank 10 Celsius. She's lucky she's alive.
Yeah, that's not good.
That's not good.
Not good.
And these kids put the energy drinks in with their alcohol at college. It's not good. Steve knows what I'm talking about.
All right, we are almost out of time,
all right,
Jenny.
I put it in I'm shipping this trade in Celsius. We're only risking $1.60. That's the only reason I'm okay with it.
And we're filled. And so that's our preemptive earnings. I don't think
it's up 4. Now we are at all-time highs. Liz, mark this day down in history. Your first day out of the house in 11 or 12 days, February 19th. SPOOs are at all-time highs.
All-time highs. ATH.
Yeah. All right.
Okay, so we are out of time, Jenny. I think we should, instead of going to what's your assumption, because we're not going to run through those that fast, why don't we just go through what we did today, because you did quite a bit.
Okay.
Can you go bottoms up, and I'm going to follow along?
Okay, what we did today. So we never even made it to what's your assumption.
Nope, we did not. But we only have 3 minutes left.
All symbols today. We closed Devon Energy. We put on the Judging trade. Got in and out of that pretty quickly.
Okay, good.
Etsy. Check. We closed our diagonal and sold a new put spread in March.
Check.
ANET. We adjusted our ANET. Put on a new trade.
We sold the put spread, right? Yeah.
No. We did a new diagonal.
No,
buy to close, sell a put spread. Yes.
We sold put spread.
Okay, Walmart diagonal. Unity Software diagonal.
Not expensive.
Wayfair diagonal.
Not expensive.
Toast diagonal. Celsius Holdings diagonal. 5 earnings diagonals. Thank you for the 5th. We will see what happens tomorrow.
Yeah, everything's pushed out, which is great. Okay, so there was a lot today.
And we never even got to a whole 20-minute segment.
Yeah, that's true.
It was a busy day.
Well, Jacob got us all fired up with the pattern day trading.
All right, yes, we are out of. All right, everybody, we're out of time. Great show today, Liz.
World's best show. Fast hour of the day, done and dusted. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Hi, my name is Liz Deerking. The beautiful brunette next to me is.
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
I'm Hold on.
She's wrong. I'm right.
High school party, high school condom.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the day, throughout the show, I should say. Whatever you got questions on, strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day. I get to spend it with my buddy, Mikey Butler. How are you, sir?
Doing swell.
Yeah?
Yeah.
All right.
I closed the micro crude contract for a nice winner. There's like a $170 winner into this rally today.
Nice.
I might have actually.
Well, you missed the move because you were out, right?
Yes, I missed the initial move. So I got the.
And then it reversed the next day. So, okay.
But still got like $170 out of it.
It's great.
So that's a fun thing. But yeah, outside of that, it is just another slow day in the market here.
Been crazy.
Yeah.
Crazy slow. Low volume, low vol, low
everything.
Low everything. It's been a big old nothing burger all this week and, the end of last week.
Yeah.
3 trading days, which seems like eternity.
Truly. Baba earnings tomorrow morning.
Yes.
So there could be some fireworks there, but
Walmart as well, I think.
Walmart is before the open tomorrow as well.
Yes.
So we can check out some Walmart stuff, some Baba stuff.
Unity, CCJ, Shake Shack. After the close today, you have Carvana.
There you go.
Yes.
Baba's kind of scary. Baba's interesting.
It's had a nice move higher already. I mean,
yeah, nice move higher, but they don't have good earnings history. Like they miss on something almost every time. I mean, this is certainly an Apple partnership pump, we'll call it. But I don't know. This one I find harder. I see it a harder time to see this thing going higher.
Mm-hmm.
But
saying the move is already baked in with the stock
so.
up, 50% in the last month.
I feel pretty comfortable taking downside, placing a downside bet here, which scares me a little bit.
Ooh,
because that's very
You got to do things that scare you, Mike.
I know.
You know, you gotta get out of your
push yourself out of the comfort zone.
Yes.
Get some short delta. Watch the stock just create new highs above the chart.
Yes. Yes. Exactly.
Yeah.
Exactly.
Yeah, I think I'm leaning into a short delta play there. Walmart, I kind of have the opposite feel. I feel comfortable playing Walmart to just continue higher.
It is steady Eddie to the upside. I mean, this thing has just gone straight up. Remember where they did the split? I think they split to like the 60-ish handle when they did it, or 50, something like that. I don't remember exactly what the split was, but I remember that's the number we kind of ended on, and it's up like 40, 50% from that point in time.
Yeah, it was a
maybe more
3-for-1 split, January 30th, 2024.
Okay.
So
January.
Yeah, it was like $150 a share, and it's split to 55-ish.
Yeah.
We'll call it. And now it's double.
Why not?
Yeah, up 100% a year. Why not?
Why not?
But yeah, we've got inflation continuing to peek its head out. I mean, has not gone away, and I feel like Walmart and Costco are the darlings of inflation. Where you're gonna see higher sales numbers at Walmart and Costco when people are trying to pinch pennies.
Because we're all poor again.
Exactly.
Yes, exactly.
You leave your house, $200.
It's very true.
You go out to dinner, $200.
Yep.
There's no exception.
Yep.
It's actually insane.
E-mini S&P 500 futures up 5. It's been, as Mikey described it, a very dull day. Up 5 here is basically the high of the day, 61.57. I think that's actually 61.57 was the high about 5 minutes ago, which I think is the all-time high, if I'm not mistaken. The low today, 61.29. So we've had a 28-point intraday range after yesterday's 20-ish point range. We had a 15-point rally into the close. Friday was a big old nothing burger. We've been sideways for 3 straight days. 3 straight trading days, 5 calendar days. NASDAQ up 17. Again, it's basically had a nothing burger of a day. You got the Dow down 100 and the Russell really the only one moving, down 11. Oil catching a little bit of a bid, 72.38, up 55 cents. You got volatility futures basically unchanged here. I guess they're down 8 ticks, but that's pretty much nothing. You got volatility futures down 7 ticks. Volatility futures down 8 ticks. You got bonds down 7 ticks. Gold and silver both cooling off a little bit, but near highs. Gold at least is near highs, down $4. Silver down 31 cents. And then Bitcoin bounced in from yesterday's low of 94,000-ish and change, up 2,400 today. Futures up 2,400. Spot up 1,100.
Love to see it.
Yes.
Yeah, Bitcoin continuing its realized volatility train. Rest of the market, not so much. Not so much.
Yes, been a chop fest. I did do a couple other things today. I see our MCL position, nice little winner there. I closed out of the Tesla iron condor I had. I legged out of this one, so I had an iron condor. We had that big down move in Tesla. I closed out of the call spread. Then we had a nice little bounce. I sold the call spread out again. I closed the package today for $100, taking off some some profits and some risk into a nice little move here. And then I did 3 new trades for the Johnny traders. I did an Amazon upside crab trade, similar to what we were looking at either yesterday or last week. I forget when we were looking at Amazon when we got in this account. But anyway, Amazon down, 5-10% from high. I think it's an interesting time to nibble on some long delta to the upside. The crab trade gives you a little bit of positive decay over the short term, and a little bit of short volatility because you're in that near-term expiration with your short premium. So a cheap upside play. You do have upside risk, though, as with some of these crabs, like the Palantir position, that continues to be a thorn in my side. If the stock explodes higher, you do have some risk there. I also put on a slight downside play in SPY with us reaching all-time highs. I mean, come on. The market has to go down at least one day. And then in Lyft, I did a cover call. I know you took off a leftover call that you had in Lyft yesterday. I think it's still an interesting one for a little Johnny trade here, trying to incorporate some stock positions to sell calls against and kind of just continue with and just show that kind of process.
Yeah. Lyft chopping around here. Yes. Had a little sell-off after earnings, but it's recovered substantially since. Amazon, I placed that trade yesterday, the call diagonal spread, the 225, 235 into the sell-off yesterday. Still selling off a little bit today, but long time with the April cycle with the long option. Cool.
Very good.
Actually had a question on AMD. Someone reached out on Twitter. I've got the 120 call calendar spread that I rolled into after earnings.
April, March?
April, Feb 7. So I had
the Feb's that one's gone.
Yeah, so I had the April, Feb 7, the 120, 130 diagonal spread for $8. I rolled into a calendar spread. So I rolled the Feb 7 down to the 120 strike and out to the Feb 21 cycle for 60 cents. And now that's about to expire. But this is kind of the Goldilocks zone where any sell-off, it won't really change the premium too much in the roll. There's still 20 cents in the short call that's going to expire on Friday. But if you get a rally up to 120 or around there, that short call is still going to not appreciate in value, but the roll credit will. So those March options, the 130, the 125, the 120 even will increase dramatically. So I'm just going to hold on and see if we get a continuation of this rally this week. Maybe tomorrow, if we get a continuation, I'll roll out to March and up. I can right now, I could roll out to March and up to the 130 and re-diagonalize this thing for $1. But if we get a little bit of a rally or continuation, that could be $1.50, $2. So I have no problem kind of pressing on this situation where the short call is not going to appreciate unless we gap higher than 120. But
got low implied volatility too.
Yeah.
So if you do get a little, if you get a little bit of a down move and volatility expands, you won't miss out on a whole lot.
Yeah.
I get it.
Yeah.
Take a little bit of a stab at the upside.
Yeah.
And if you get another $3-4, you can either close the position, probably scratch it, or you can sell a call against it and continue with it.
Yep.
Don't mind that.
Finally seeing a little of a rally here in Microsoft from the absolute lows. Would love to see that continue too.
Yes. I have some long delta there as well.
Cool. We do have an anatomy of a trade for you today. Yes. We're going through Nick's Shopify trade. If you want to join us on Tasty Live's YouTube channel, just pop over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas, questions along the right-hand side chat. We'll get to them shortly. I've got the Cherry Picks newsletter link pinned to the top of the chat.
A good one this week.
Indeed.
Yes.
Indeed. But yeah, let's go through this quickly, and then we can look at some Baba earnings trades, Walmart earnings trades.
Yes. So this will be coming as a life cycle of a trade video as well. Maybe not this week, following week. So you'll see all the live adjustments here, but this one was a crazy one for the Johnny Trader portfolio here. You can pull up all these on the Tasty Trade platform. If you go to the follow page that we showed previously on the show here, you just type in shop into the symbol filter. You click on my little Johnny Trader icon there in the bottom portion of the platform, and it'll isolate all my trades there. In Shopify, you can see them all from the start to finish. So those are all the trades that we did there. Jumping to the next slide here, we'll look at the order chains. Again, this is another Taste Trade feature. You get the order chains, which links up all your trades together. So it allows you to track the position through multiple roles. Typically, when you're looking at other platforms, they just kind of leave them as realized and unrealized positions. So you really only just see your current open position. Taste Trade puts them all together so you can track this along, all your adjustments, and gives you an idea of where your position is at net. When we talk about rolling, it puts those buckets together of realized and unrealized P&L. That's exactly what you get here with the order chain. So you can see all my adjustments here as well, including the point at which I did those adjustments. So all of those days till expiration are at the time of that fill. So my first opening trade, I had 45 days to go till expiration. When I rolled up the put, and this is on the left side here on the 11th, when I rolled up the put, I had 39 days to go till expiration. Again, when I rolled up the put another time, it had 32 days to go. I rolled from 11 to 39 days for my rolling out in time, etc. So you can see all those options there. It's a nice little feature on the platform.
Indeed. Yeah, order chains certainly helps if you have trouble with the rolling concept and everything. It tracks it for you.
Yes, and we use it very frequently. Mm-hmm. So jumping to the next slide here, yes. So we got the 52-week chart. I've started to include this because I think it puts some context into just the magnitude of some of these moves and the things that, a lot of people look at the first part of this and say, oh, well, it's been range bound, that's perfect strangle opportunity or iron condor or whatever. So I opened the trade in the early part of November. Stock was trading about 80. You could see this is the sort of tail event or tail move that everybody is worried about when trading short premium. Of course, we always harp on the fact that you have to, the size of positions you have to be cognizant of, and you have to size them appropriately to your risk tolerance and how much capital you have available, because you will encounter things like this, a 50% or 60% or 100% move in a stock over a short period of time. These tail events do happen, a couple times a year when you're trading as frequently as we do. So it really hammers home the need to really be, in tune with your risk parameters and keep your size in check.
Yeah. Sizing allows you to absorb more variance on a percentage basis than if you're multiplying contracts and getting too large.
Yes, certainly. So jumping to the next slide here. So we take a look at just the price of Shopify at each of these adjustments. So you can see I started the trade. I did just a delta neutral strangle. I started at the 80 with the stock at 80 for this position. So it was a delta neutral strangle that, pretty cookie cutter entry point. I was short the 70.95 strangle, stocks at 80, did it at $3 and change, probably used about $600 or $700 in buying power, just a typical position for us. You could see along the route that we took of the stock just going to the moon, all those adjustments I did into this move higher, right? So I rolled up from the 70 strike put to the 80 strike put. I then rolled from the 80 to the 100 strike put. I then took the position out from the December expiration to the January expiration. That was when the stock was at like 115 and change. I adjusted those strikes, continued to battle it and roll up puts, buy the guts, sell the wings. We've done a little bit of everything on this trade, and you'll see that in our final risk profile at the end. But jumping to the next slide here for just the implied volatility, if we go to Delta. So you can see when we talk about, and we'll cover this in our live bash event that's coming up in March, all of my delta adjustments, and just from the original graph we showed of the price action, the stock went up 40, 50%. This position got really big from a delta perspective very, very quickly in the span of, a month, a little bit less than a month. It was, fully in the money and deep in the money on the call side. You can see all my adjustments are all under hedges. You're not, the biggest adjustment was a 40 delta adjustment or 45 delta adjustment. The 40 delta was when I was managing, the 45 was when I was closing the position. But the 40 delta adjustment is really the most that I did. And that's on a position that was basically short stock. I mean, this move was a short stock move. We're always looking to reduce overall delta exposure by 25 to 50%. And all of these adjustments fit that metric. When you're dealing with one contract, and the position goes to a 60 or 70 delta, each of your adjustments are 20 or 30 delta adjustment. And that's what you can see here with the delta of the position.
Yeah. And under hedging allows you to naturally lean against the direction of the move, which can help prevent whipsaw situations where you move your strikes and then you get reversed and then you're just in a headache situation.
And also to piggyback on that, it's contrarian. So it allows you to be contrarian to whatever the move in the stock is. You don't want to be long at higher prices. You want to be short at higher prices. And by under hedging and reducing your delta by 25 or 50%, you're always going to keep some of that contrarian delta, which is something that we, try to play into.
Yep.
Jumping to the next side here. So we look at IVR, of course. This is a product that typically does have high implied volatility. You can see at points it got very, very low. But at the start of the trade, 75% implied volatility. We ended up having some realized volatility, certainly over the duration of this trade. But just showing, that swings in implied volatility, definitely part of the game as well.
Yep. And rolling into high implied volatility environments gives you more credit that you can work with when you're manipulating strikes or just keeping the same strikes. You're just going to pick up more credit, all else equal.
Yes. On to the next slide here. So just looking at the IV of the underlying, you can see, and we've talked about this multiple times, of stocks that we kind of target in this $50 to $150 range that have somewhere between 40 and 80% implied volatility. Like that's our wheelhouse for implied volatility. Shopify is certainly a stock that has very high implied volatility. And when you look at the chart, the 1 year chart that we had in the second slide, there was a period of time where the stock went basically nowhere. And that's, where you really take advantage of that high implied volatility. Of course, we caught a tail, which we were able to manage through. But, this is the sort of implied volatility that we look for, generally speaking.
Yep. Higher IV, same story, more credit when you're rolling, more ability to be flexible with your rolls.
Yes.
If you're in a low IV environment, you can't manipulate strikes as easily. You can't buy the guts and sell the wings for a credit or a big credit. So it's just a harder environment to maneuver in.
Yes, certainly. You get paid to hold the risk. That's the other part.
Mm-hmm.
High implied volatility, you're getting paid to have that risk on through the duration of the trade. So looking at the risk profile here, obviously, it's a big move to the upside. You can see all the adjustments here. There is one point in the middle there from like the middle of December through the end of December where you'll see no break even there. And that's because that position is inverted so much so that my credit is less than the inversion. And so my best out there was to have some sort of loss, couple $100 loss. Of course, if you continue to roll the position and collect extrinsic value, it allows you, of course, to manipulate the strikes, but allows you to add more extrinsic value to offset that intrinsic value that you will inevitably have to buy back at some point. And so a lot of people get caught up in the idea of like, oh, well, if I roll to go inverted, I can't profit on this trade anymore. And yes, that at that point in time, if I had closed the trade at any point, there's no way I would have made any money on that trade. But that doesn't mean you can't continue with the position and continue to collect premium on it, which will help ultimately reduce the cost of that debit.
Yeah, I think it's very important to point out here that the stock went from 80 to 130 in a couple of months.
2.5, 3 months.
Yeah.
It's this is a worst case scenario type trade.
Yeah.
It's about as bad as it gets. And it was right from the start. I don't know if I did this for like an earnings trade or a couple days before earnings, but
probably earnings.
It looks like it was in the middle of November. There was earnings for something that moved the stock from 90 to 115.
Yeah.
Basically overnight.
Yeah, pretty sure that was earnings. I can double check though.
Yeah.
But yeah, again, you hear us talk about this all the time. Like you might not be able to be profitable in this cycle where those break evens don't exist, but the whole idea is to hold a trade through time so you can pile up extrinsic value and you can eventually get out.
Yes.
And if you don't intend to do that, maybe defining risk is a better way in the long run if you're doing it 1,000 times.
Yeah.
Maybe not for that occurrence.
Or
the
cut
next
your
occurrence,
size
but
down.
Yeah. Indeed.
Totally.
Beautiful. Well, nice work.
Thank you.
Yeah, reported February 11th. No, that was
the most recent
last one. November 12th.
I got bailed out on that one because it was like a $12 expected move.
Yeah.
And the stock opened, I think it was up like $3 and then sold off, and it was like ended the day down $3 or $4. It was a nothing move.
Yeah.
Which was great.
Yeah, the November 12th was an earnings move.
Yes.
Last year.
Okay. There you go.
So yeah, lovely. And Shopify currently sits at 126. Definitely chunking around, but big move from the lower end of the range for sure. Lovely.
But the short premium worked this whole time.
Yeah.
I mean, this is what you want to see. You want to avoid these type of situations, which, in this case was an earnings trade, which we've talked about a lot of, like kind of changing our strategy for earnings and doing a lot less naked positions into earnings. This is the sort of situation why we have adapted to that.
Yeah. But if we're going to choose products to have strangles in, it's going to be your Shopifys, your iBits, your DraftKings, because 50% implied volatility, regardless of IV rank, is still a good amount of premium to where you can manipulate strikes. You can pick up $1 credits, $2 credits on the rolls, and compile a ton of extrinsic value along the way that helps you offset intrinsic value moves against you. We're not selling strangles in your TLTs, your GLDs, where it's single digit implied volatility or 10% IV. But then you look at a chart and this thing is still moving. Like if you pick the wrong week or month and you're caught in this trade, there's no chance you have enough extrinsic value to offset your intrinsic value losses. So we like to be in situations where we can offset our intrinsic value losses with extrinsic value collections, and that directly correlates with being in high IV products like 50% and higher, I would say.
Yeah. When something is 10 or 15% implied volatility, it doesn't take a lot for realized volatility to outpace that.
Yeah.
When you put volatility into context, because volatility is a look at the expected movement in the stock over a 1-year time frame based on those option prices. So 75% implied volatility says that the options, the value of those options, are pricing in that the stock can go up or down 75%. Can that happen, and does that happen? Yes, but it takes a lot for that to happen, right? When something has a 10 or 15% implied volatility, it means that the market is projecting a 10 or 15% move over a year. When you look at something like gold probably has it's got 17% implied volatility. It's up 17% in the last 2 weeks. And so, though it's much harder for realized volatility to outpace implied. And that's why, a lot of these stocks like your GME situations, or you're seeing like HIMS go nuts and all that stuff. A lot of these stocks, when volatility starts to get juiced up, people lose money on both sides of the trade because it's so hard to outpace that implied volatility, and it usually explodes after the fact.
Yeah.
Like HIM's implied volatility is probably the highest it's been today relative to any other point.
Yeah. Because it's just a vertical bar.
Yeah.
But at the same time, it's hard to sell undefined risk premium here because the risk is real. But it's also hard to buy premium because the IV is so high, it's going to collapse anytime this product settles down or comes down. The IV is going to collapse as well. So it's like you can't touch that, you can't touch this. This is like the Goldilocks zone of like 50 to 80% IV. That's where we're selling strangles and taking undefined risk. Because like HIMS, like what are you doing here?
You
right
can't.
Now, like what are you doing here?
You can't. I mean, the only way you can profit from, and I shouldn't say only way, but the way that I would attempt to profit from a trade in HIMS or something else. Obviously, if you're trying to play for the continuation of this, you just buy the calls. But if you are trying to short this, you have to make money via intrinsic value. So you actually have to be short the shares or short, in the money puts or very, very close to expiring puts. Like you can't buy the 70 strike put in April and expect to make money with it going down to, 60. Like it's just that's already priced into the stock. The stock is priced in to move 20 or 30 or $40 in the span of, the next couple months.
Yeah.
So it's just a tough trade when you get to that high of implied volatility.
Yeah. Amazing.
Thank you.
All right. Popping over to the YouTube chat now. Get some questions going here. I think that news on Microsoft started the quantum chip AI rally again. So Microsoft has
the other one we traded, IonQ. That was one of them.
IonQ, yeah. Microsoft released their quantum chip Moharana. I keep reading as marijuana. I can't stop doing it.
Okay.
Moharana. Majorana. Released today, it appears.
Okay, I'll take it.
The quantum chippies are popping off.
Are back. Is Google moving too? Doesn't seem like very much.
Yeah. But the conversation has started again.
Okay, great. Bring it on.
What do you think about Celsius selling at the money straddle for Friday and buying at the money straddle for the 28th?
Does it have earnings?
I believe so.
On the 20th. Yeah.
Tomorrow after the close.
So we're selling the straddle today for the weekly, and then we're buying it for the 28th.
Yes.
You know my sentiment on these.
Yeah. I mean, these are just tough. Like you really need a non-move.
Yeah.
For this to work, because if this goes up or down $5, like you're
or
losing,
$3.
Yeah. Anything.
Yeah.
Really. Your intrinsic value losses are going to offset your intrinsic value gains. It's a pure extrinsic value play. Now, would I buy a straddle in the 9-day and sell the 2-day expected move? That's a little different. Like a 23-29 strangle in the 2-day, and then you buy the 26. Now you're playing for a move to the expected move or greater than the expected move, and you can profit on that. And it's a similar story. When you're buying both sides and you expect the market to move, you're going to lose money on one of the sides. So you really need to have a huge implied volatility in the 2-day to help offset your implied losses in the 9-day. So it's still tough. But I like the 26 straddle in the 9-day, and then you sell the 23-29 in the 2-day a lot better than just selling the at the money everything. Because now you can actually make money on a move because your total debit is less than $3, and both of these spreads are $3. But again, temper expectations because your profit potential is probably like $50 to $100 on that kind of move.
I was debating if I would just sell a put or something in here. Do a call diagonal. Let's play into this.
Little Celsius move. I mean, it's got to rally at some point, right? They're still all over the place.
It's at
I see them
Lowe's.
at every gas station. Even Costco has a Celsius variety pack.
27, 29. March, Feb for $1.20-ish.
Yeah.
Just a cheapie.
Or like the 25 April, Feb 29 for $2.85. I already have the 30 strike long call for the 2-day cycle.
Ooh.
That I've just had left over from a previous time we tried to buy the dip here. It's still pretty much worthless. I'm not going to hold it through tomorrow, but I'm hoping that this pre-earnings pump can just continue here and I can get more out of it. Like, it's not worth it to close now at 50 cents, but if we get another rally like today, this option will turn into $1.50.
Yeah, you hope for a goofy move.
A goofy move tomorrow before earnings, and then I just close it.
I did the 27.5, 29 for $1.30.
There you go.
Take a little shot. If we open at 30, I'll make 50, 60 bucks.
There you go.
You know, if we middle it, I'll probably be at the same 50 or 60 bucks, but I'll have a little bit more flexibility in what I can do moving forward. Roll the call, lean long.
Yeah.
I don't know. Just a cheapie. Little shot.
Perfect. Thoughts about a toast call diagonal for earnings and wrapping it into a March strangle?
Oh, God.
Every time I see a toast handheld thing, I just get sick to my stomach.
Mm-hmm.
Because we were trying to buy this thing when it was at 20.
12? No.
Oh, yeah, it was 12.
It was 12.
It was 12.
Yeah,
we
it
were
was
buying,
basically the lows.
Yeah, and we were buying hand over fist calls.
Very big position. What do they want to do?
Call diagonal for earnings, wrapping it into a March strangle.
So both a strangle and a call diagonal.
Yeah.
Okay, so I'm at June.
So
I got no
like
April here. That's annoying.
At 30, 34, 35, 48.
So
just $1 on each side in March. And
doing like the who gave us this? Is this us?
Smack Lovin'.
Smack Lovin'? Yeah, I figured it had to be. So this did he give us strikes? Did they give us strikes? No. This is what I went with. You'll tell me if you like this. So you go the call ratio, the call diagonal is going right at the money. So you got the 40 strike call out in March.
Yeah.
Sell the 45 against it in the weekly.
Yeah.
So you're doing that whole package at $2 and change.
Yeah.
And then you have the 35-48 strangle like you put in there.
I did the exact same thing, except I had the 46 short call for the weekly instead of the 45.
Okay.
So basically the same thing. So it's a super cyclable. But yeah, I mean, I don't hate it. You're basically.
Why not do
paying-
2 of the 45s in the weekly, and do this for at like basically 0?
Similar trade, yeah. Yeah, you're basically trying to finance the cost of the call diagonal with the strangle.
Yeah.
But you do have unlimited upside risk and you have downside risk on this trade.
Yeah. Oh man. I think I'm gonna do. I like that. That was an interesting idea. That I had fun with that. I think I'm gonna just do a little bit more simple and go a 1x2 crab type setup, buying the 40 strike because the stock has gone. I mean, the stock's a double.
Yeah.
In a couple months, I'm gonna buy the 40, sell 2 of the 45s in the weekly. You're selling those at almost $2.50. Overall cost at $1.30, $600 in buying power. Your break even is somewhere at like 50-ish, is where your risk sort of is. You can move this to like the 40. I'd keep it at the 45. This is what I'm gonna do. But I like the idea. It's just a little bit all over the place.
Yeah. But
if I tried to pitch that to Tom, I think he might, like his brain might actually melt.
Yeah. It's a toasty idea.
Yeah, I like it.
Love it. Hopefully it works out.
you know it's the end of earnings season when you're putting on
Toast.
a trade in toast. You have
Yeah.
Celsius earnings here. You know that
Yeah.
the market hasn't moved for a couple sessions when you're looking at this sort of
Yeah.
junk.
Speaking of earnings, Keenan has a 102.97.5 diagonal in Walmart, paid $3.14 for it. Would you close it out or ride through earnings? 97.5, 102.
Do we know the expirations?
I don't, but it's either March or April for the long option, and then I assume it's the 102 in the weekly.
Yeah.
Maybe you did March Fab or April Fab.
Mm-hmm. It's a good trade. I mean,
If you did March Fab, both of these are. There's not much more to make on this. I mean, you have the problem with this trade that I see is that you have this on right now. Like if you have the long March short, the 2-day, it's a 5.5 point wide spread that's trading for $4. You don't have any upside profit potential here other than the extrinsic value crush in the short option. But March is going to realize a crush too.
Yeah.
So like there's very little upside profit potential for holding this through earnings if you're long March and you're short Fab.
50, 60 cents of more profit to the upside.
Yeah.
If you get that $4 or $5 down move, you're going to lose
all of the intrinsic value.
Oh, yeah. You're going to go, it's going to go from a $4 spread to a $2.
Yeah.
So, when we talk about asymmetry of risk, this one has kind of it goes against you.
It goes against you in a binary event where you have no control over anything.
Yes.
I don't like it.
And there's no management or anything you could do. So I would take the money and run. If you want to remain long, start a new one. Do like an April, go to the April 105 and sell the March 110.
Yeah.
And
or even the 2-day 110. That's still cheap, $3.
Yeah.
Same thing.
Sure. Yes. And at least you take the $100 or $200 of risk off the table.
And your long options in April now instead of March.
If you get the $4 up move, you'll make $2 on this spread, whereas your current position you make 60 cents, 50 cents, 20 cents.
Yeah.
Nothing.
So yeah, I think adjusting to at the money strikes, closing the current one.
Yeah.
Moving to April if you're not already there, because April is going to have a sizable reduction in implied volatility crush. If you just look at the numbers, 31% in March, 27% in April, and all the other expirations beyond April are around the same level. And you could sell the 2-day against it, still pick up almost $1 for the expected move. That's what we would do. Back to Celsius.
Okay.
Put credit spread, 22.5, 17.5, or the 22.5, 20. Or
we're looking in the weekly?
I assume.
I can't sell 30 centers.
Yeah. If it's in March, it's not in March. It actually might be in March. I clicked the wrong thing. 22.5, 17.5. So the March put spread is $1.
Yeah, I don't mind
better. Yeah, I would rather go to March than the 2-day just because March, if it goes against you, you can hold it and you're picking up more. This is a directional move that you're looking for. So if it's in March, I don't hate it.
Yeah. Agreed.
So yeah, Steve, going back to Hims, how would you play it past earnings or getting long? No way this run-up lasts. Yeah.
Yeah, it's a tough one. I mean, I have the short delta here. I think one of the ways you can mess around here is with like some sort of ratio, like selling 1 to buy 2, like a back ratio type thing. It's just a tough trade. You have to understand that volatility is going to smash here.
Yeah.
On the downside.
I don't mind like an 80-95 call ratio. For a scratch.
Yeah.
Something like that, or like an 80-90 call ratio.
You talking about in March or into the
9-day? So like the 80, you buy the 81, so you sell 2 of the 90s. Your break even's at 101 and change.
Yeah.
Picking up $1.60. Like this is the way I would do it if you're fine taking undefined risk to the upside. Or you buy 100 shares and you do something like this, but you make it wider.
Yeah.
Like significantly wider.
Yeah.
Like a 72.86 with 100 shares of stock. Or you can even do this naked.
Yeah.
But a really wide call ratio is how I would do it.
Yeah. It's just
with 100 shares or without, depending on whether you want the upside risk.
The other spicy way I could think of would be to sell a near dated put to buy like 2 of them further out in time.
Mm-hmm.
Something like this, what this looks like. Let me get my position off of here. So this sort of thing, we'll give you the Theo. It's going to look very nice here, but you have to take a ton of volatility out of this. But the idea here being that you're selling super high implied volatility at the money and assuming this is like a slow, this is a sort of trade where you don't want the big move to the downside. You want kind of a chop and then a move to the downside. But you're gonna have to keep in mind that this volatility, you're gonna have to adjust this down by intuitively like 100%.
Yeah.
Like that sort of thing where you have basically a lotto ticket to the downside at this point for free, if the stock stays kind of here.
Yeah.
Something like that.
Keenan's got a short call in HIMS or short delta in HIMS. Major pain. This has to be a pump and dump, right? I mean, I would not be surprised to see this thing collapse back down to 30, but I would also not be surprised to see it go to 100 in the next couple of days. Like, it's just, this is a classic meme stock.
The 100% implied volatility.
Yeah. Yeah.
Got to expect.
For the next 9 days, you're looking at a 20-point expected move.
Yeah, it's crazy. Big move.
Yeah, I mean, I'm not sure I see HIMS as a sustained move up here. Because, like, what has changed, really, other than the Super Bowl commercial?
I think they bought some company today I saw do, like, lab testing or something. I don't know.
It's tough. But this is why you got to stay small. And especially in these products that are over 100%, like, we are defined risk.
Yeah.
So hopefully you're defined risk in here. But if not, hopefully you get a sell-off back down. IBIT has collapsed. Time to roll to the next cycle. Maybe you're talking about the implied volatility of IBIT.
Yeah.
I did already roll to April.
Ryan mentioned that in the...
I did. I know. I read his newsletter.
Yeah. Yeah.
I'll put a link
Tasty
to the
Crypto newsletter. tastycrypto.com.
Yeah. I'll
Get
put
it.
a link in the YouTube chat.
Yes.
But yeah, implied volatility in Bitcoin and IBIT has collapsed because nobody's talking about it. It's like the forgotten, like nobody talks about MicroStrategy anymore. But if you think that Bitcoin's going to moon still, this is the cheapest time you've had to buy
In terms of
premium.
implied volatility.
In terms of implied volatility. Like I don't remember the last time I saw MicroStrategy with a 70% IV.
Mm-hmm.
IV rank of 20. So that tells you we're near the lower end of MicroStrategy. IV rank of 13 in IBIT. We're in the lower end there. But yeah, low implied volatility. But IBIT raw implied volatility 55%. MicroStrategy raw implied volatility 80%. So I don't care about IV rank in these products because raw implied volatility of 50-60% is still plenty.
Yeah.
And we're collecting $2 every time I've rolled this. I've collected over $2,
Mm-hmm.
and I barely have removed the strikes at all. So that's what we're looking for with these longer term trades. But yeah, I'm already in April at the 55.70, and I will keep that 70 strike there until it loses a lot more value, and then maybe I'll roll it down to 65. But I really want to maintain an upside bias here with a lot of space, because if IBIT rallies aggressively, I want to be able to roll the whole thing up and out and not have upside risk. I don't want to take on intrinsic value to the upside is what I'm trying to say. But yes, we're already out in April.
Yes.
At least I am in this one.
Yes. I put this trade on last Friday. It's up about 55 cents into a down move. So I'm short the 50, and the 65 strangle.
Love it.
Nothing to do.
Nothing to do. Just sit and wait.
Yeah.
In VRT with a March 87.5, 145 strangle. I've made 50% on the 145. At what point do you look to roll down the 145 to a different strike?
You got to be profitable in this position.
Yeah. For sure.
I don't know how long you've had this on.
Yeah, you only have $1 left here to make total. I assume you've collected, you're probably up 50% overall, I would guess.
Yeah.
Because the IV in here is kind of low. I mean, you're well outside of the expected move. So either the IV has collapsed or enough time has passed to where the expected move is just collapsing in
They could have. I mean, if they're up 50% on the 145, that means they sold this at 70 cents, 80 cents. Which is
so when was it trading at 80 cents? We ask. It was trading.
I mean, like sometime in the middle of last week.
Yeah. So yeah, I mean, if you want to roll it down and take on more upside risk, you can, but at the same time, there's not too much more premium you're getting to roll it down. Like if you roll from the 145 to the 130, you pick up another $1, but you move your risk down 15 points. Which I don't actually hate because you're in a 30-day cycle, so it'll decay quickly if the market behaves, but I don't know. I kind of feel like this might just be a close the whole thing type situation.
Markets don't look super liquid either.
Especially because you're at the 87.5. If you were at like the 105 and you're taking on heat, then that's different because your 105 has $500 in premium, and if you roll from the 145 down to the 125 or the 130, you still have way more premium on the put than you would in the call. So a rally into that move would still help you. But yeah, both strikes well outside the expected move. I think you either hold on to it or you close it. I don't see a reason to adjust it. Time to short WFC into a hole.
WFC. Wells Fargo?
Fargo. Trading near highs.
Yep.
Wells Fargo has definitely been in the negative press over the last couple of years. And it's low IV. Yeah, these are like products I love to do like put diagonal spreads on.
Or Zebra or poor man's cover call.
Like the 80 strike April put is trading for less than $300. You could sell the March against it or just not sell anything against it and do a Zebra. Kind of like that. But yeah, I don't mind it.
Got goofy strikes. I'm going to try and do like a poor man's cover call. April, March. I was going to do the Zebra, but it was like $800 because the strike, you only have 2.5 point wide strikes to the upside. So I don't want to throw $800 at, fringe trade for me.
Yeah.
So I was thinking like the 85 in April and then sell the 80 in the March expiration. Do it at 388. Not quite a poor man's cover call. I guess you could move it to like the 77.5. I don't know. Keep it small.
Yeah.
388. There.
Beautiful. H. Montero asking about your anatomy. Didn't catch whether or not you went inverted, and while rolling, did you embed a different strategy, or did you stick with the strangle?
It was a strangle the whole time. Well, I did go inverted. I was deeply inverted.
Yeah. Where the multiple green bars, where the green dotted lines disappear, that's where you were inverted.
That was where I was inverted with no
profit potential.
No profit potential. I think I had multiple times where I was inverted as well.
Yeah.
throughout the trade.
But if you look at the legend, if you scroll back, if you look at the legend on the upper right corner, it shows you which line is the short put, which line is the short call.
Yeah.
I believe the solid line is the short put. And the
Yes.
dotted line, the red dotted line is the short call.
Yeah. And you'll see it in the order chains too when you look at the first slide to the second slide. It's one of them.
Goran, based on what you decide, what do you base your decision on for diagonals versus crab trades? Implied volatility, skew.
Yeah.
Whether you want upside or downside risk or not.
Yeah.
Diagonal spreads, you're not going to have risk to that one side. Crab trades, you will because you're more neutral. Let's put on a trade in Baba.
Okay. I thought you were frozen for a sec. I was like, doo, doo, doo. Wake up.
Let's put on a trade in Baba.
All right. What are you going to do?
I'm going to do a downside.
Okay.
You heard that right, people. A downside trade.
What are you going to do? April?
I'm going to do April and...
By the 125? The 120?
Yeah, the 125 April long and the short 119. No, short 118 for $7, just under $7.
Okay.
So long April, short the Feb 2-day for $6.95. If you did a crab trade instead, you would just do 2 of the 118s and then define your risk lower. That would bring in more premium, create risk to the downside, and give you a lower cost basis and a more neutral trade. Filled at $7 on my 7-point wide spread.
There you go.
Let's see if we get a downside move.
Yeah. The Amazon one that I did today in the Johnny Trader account, I think fits in the fact that there isn't an earnings within the expiration. I think I've learned for the Palantir earnings, the crab trade, because you have that tail risk, especially if you're going into the weeklies. I think that kind of makes it so that it's more of a diagonal play if you're going to do that.
Yeah.
Into a binary event. Just again, the same thinking as not being naked short premium into earnings.
Yeah.
I don't want to have big risk into earnings in general.
Yeah.
So I think that's how I'll adapt moving forward. But doing a 50-day versus a 30-day crab trade like I did in Amazon, you don't have the tail risk. Like for that to materialize in terms of this being a losing trade on an up move, it would have to be Amazon going to 270 overnight. You know, like it would have to be a really big move. And we can even show that here. So like, and this is with time, you know, it would have to be a huge, huge move.
Yeah. One more here. Brandon's got a 25 strike call calendar from rolling month to month in Celsius. Basis is $1.34.
Okay.
Short March 14th, long 30/21. Yeah, I mean, it's not going to move that much. If you had a short call at the 2-day and then you had a long March, that might move a little bit. But the 14/21 day out in time, it's just not going to move too much. You really need kind of like a sell-off so to where you can buy back your a March 14th call, and then you want to see a rally after that. So
close it and start fresh.
Close and restructured like a diagonal spread.
Yeah, move on.
Ace Wave, does Intel have much more upside risk potential here, or has it reached its peak? If it used to be trading at $50 a share, it can certainly get back up there. It was, nobody cared about it. It was just getting hammered month after month, earnings report after earnings report, but it's catching some light here. But yeah, just because it has been beaten up doesn't mean it can't go all the way back up to 50. Just the rest of the market is proof of that. We're out of time.
Beautiful.
Thanks for tuning in. If you got any questions, you can find us on the Twitters. I'm a Trader Mikey B, Nick's a Trader Nikki Bat. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA final. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
are back. It's Wednesday, February 19th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, we can't bring the green room conversation here, so let's talk about a different four-letter agency. We have the FOMC minutes coming up at the top of the hour. Are you thinking the market may finally get unstuck once those minutes are released?
I think it'll be insightful. I'm not sure if it'll... the bond sell-off isn't as bad as yesterday. I think we're finding some level of buyers and sellers here. I got out of my long position last week just at the right time, I think. I think it was luck, though, more than anything with my first bond trade, really. So I'll be looking at them. If it gives us something, it gives us something. If it doesn't, it doesn't. But I think the focus is going to be on tariffs for quite a while.
Yeah, we'll have to talk about bonds. Yesterday on Overtime, when I was doing the solo show, someone mentioned how basically if you purport yourself to be an unemotional technical trader, how could you stay long bonds? And it's like, that's a very good question. That's a really, really good question. I've been asking myself that here the last few months. It's perhaps been the most difficult part for me. I've had more difficulty trading bonds this year than natural gas, which would never have guessed that. But hey, we live and we learn. Let's talk about the signal and the noise that we're hearing today. If it's 25% tariffs or Trump claiming that Zelensky is a dictator and Ukraine shouldn't have started the war, we're hearing a lot of things that should on the surface be impactful for markets. But it feels like we have fully come around to the boy who cried wolf situation, right? A few weeks ago, and we've been talking about this here on Futures Power Hour, where the retractions and retrenchments to some of these headlines and statements we were seeing out of the White House were becoming shallower. First, it was DeepSeek Monday. Then it was the following week with the China, Canada, Mexico tariffs. That gap was covered in 2 days. The following weekend, we got steel and aluminum tariffs. That gap was covered as soon as the market opened within the first hour on Super Bowl Sunday. Today, we have 25% tariff talk coming from the White House from Trump, a potential major geopolitical realignment being hinted at, and stocks don't care. Thomas, we'll perhaps focus on the FOMC instead today. Well, where do we stand? As we set the stage for these FOMC minutes being released at the top of the hour, we also have a bond auction that just came out. We see here that the economy is perhaps going through a period of data digestion where we're leveling off in a growth rate that's maybe low mid twos. At the start of the quarter, we were looking at 3.9% on the Atlanta Fed GDP Now growth tracker. We're now down to 2.3 with the update today. The New York Fed Nowcast is still holding at 3.02%, although that has leveled off here over the past few weeks. The usual caveat applies. These are indicators early in the quarter. We typically don't take them too seriously until about 2 or 3 weeks out from the actual report. Instead, we're more focused with the directional move, the impulse of the data. And the impulse of the data has been sideways to lower, we can say, Thomas. While the tariffs haven't actually been implemented to such a high degree, the China ones are there, but Canada, Mexico, everyone else, thus far not yet. The government layoffs are beginning to accrue, and those are incremental spending hits that could drag down growth. Are you particularly concerned about growth in the first quarter, or do you think it really doesn't matter because we're looking at such substantive changes in fiscal policy potentially coming down the pipeline in the next few weeks and months?
Yeah, I think the focus is more out than it is for right now, especially like you said, with all the changes. One part of me thinks that, the Trump administration, they're putting out a lot of, they're casting lines in the water, kind of seeing how trading partners will potentially react to these announcements, trying to gauge, the appetite for these tariffs and things like that. So, the headlines, they do move markets. They're going to continue to do that. Once we get decisive actions and more of a roadmap of how exactly this will go, that's going to be really interesting. And I think we'll get that probably in the next couple months. One notable thing to say about tariffs is Walmart earnings are tomorrow. Walmart is the largest importer of containerized goods in the country and one of the largest retailers, if not the largest retailer. So their earnings call tomorrow morning, perhaps listening to their leadership and what they're saying about how they think tariffs are going to impact them, especially with how much Walmart imports from the Asian region is going to be interesting to look at in light of all this tariff stuff.
We are seeing that there's still some perhaps concern. If you are a bond investor, for example, and you're thinking about the potential impact of tariffs on structural inflation moving forward, then you're probably looking at the world saying that maybe the yields where they aren't enough. Some evidence of that today. 20-year auction just came out here at the top of the hour, which wasn't good. We'll get there in the bond portion momentarily. Let's take a brief reprieve before we get to bonds, however, and talk about these stocks that continue to churn. Yesterday, we had a late day move higher in the S&P 500, but for the final 5 or 6 minutes of trading, we were basically right around 61.30, 61.35 all day. Today, it's been very similar as well. It's a doji candle in a very tight trading range. We have not breached yesterday's high. We have not breached yesterday's low. High for today, 61.57. The low comes in at 61.29.25. We're currently in at 61.44.5. Thomas, we are holding that 1 week moving average, though, as this market turns here at the highs. What's your take right now on stocks? Even if the futures haven't pushed to an all-time high, yesterday was that day for the SPX cash index. It was also that day for SPY, the ETF that most people commonly hold, and that's SPY-B. This is SPY, the ETF that's most commonly held in people's 401ks and retail brokerage accounts when they go home from work and check their account balance. It seems like the futures are kind of lagging behind here. What do you make of this whole situation?
Yeah, it's like equity investors are holding the line right now, so to say. I think it's bullish personally. We have tariff news, we have some higher yields, and yet the market, we're holding on. So I think it's all about finding price right now, resetting a floor, people shuffling their positions before we take the next leg higher. A technical move that I'd be concerned about, we'd have to break down quite a bit further than where we are right now for me to flip to the bearish side. So I'm not doing that yet. I'm not taking a long. The only long I really have in equities is right now is in SMH, but nowhere else. I'd probably, not play the ES or the S&P 500 right now until we break higher. But once we do, I'm going to take a stab at it. Conversely, if we break some technical levels on the downside, a little bit more caution. I'm not sure if I'd necessarily get short, especially with how we're holding up in light of some fairly negative headlines. So we'll have to see how the FOMC impacts the rate cut setting and forecast and go from there, I think.
Yeah, you mentioned SMH, which is up here today. It's actually leading the NASDAQ right now, up 0.19%, and continuing to make headway towards covering the gap from DeepSeek Monday. We closed that previous Friday at 261.53. So we're only $5 off. It's 2%. That's not really much of anything. NVIDIA this week has already covered that gap. We did touch that yesterday when we were at the highs. The close that Friday was 142.62. We're currently trading in at 140.41. So all things considered, some of the heavyweights are holding up. Mag 7, generally speaking, today, a little bit firmer than the broader market, although not substantially. A name like Meta, for example, which saw its significant winning streak broken yesterday, does have a gap open lower here today, although there is some recovery on our charts right now. I would point out that 1 month moving average comes in at 691.88, so support not that far away if this is a market that's still very much in that breakout territory, Thomas. But the Mag 7 underperformance here, right, over the last few weeks, this has not broken out to a new high. I don't think that's necessarily a problem because below the surface, when we look at the equal weighted NASDAQ, for example, it closed out an all-time high yesterday. The breadth in this market is improving still, and that ultimately is a good sign. There's distribution right now. If we were looking at the Mag 7 holding up and QQEW falling apart, then you could make the argument that, people are reducing their riskier stock holdings. They're shuffling into the mega cap tech names, and they're hiding out for a little while. How long will that last? We've seen those divergences before, and that typically isn't good for the market. So the good breadth, that is an underlying sign of strength.
Yeah, we're seeing a lot of weakness in materials right now. So if the materials, if you took that off, we'd be up on the day on the S&P 500. Healthcare is doing good. Energy's doing fine. That's mainly due to the oil prices. But yeah, materials probably taking it a little more on the chin due to these tariff headlines than anywhere else. So I think that just speaks to the news flows that we're seeing. But yeah, like you said, breadth is fine. I don't think there's really a strong bearish case right now. If there is, I believe it would already be being pressed.
You know, you mentioned something about these tariffs. The sectors in the market that would be most exposed to tariffs are the ones that are suffering greatly today. ITB, for example, down about 2.47% right now. XME, you mentioned metals and mining. These are off 1.87%. Materials, XLB, that's off 1.47%. Again, broadly outpacing the indexes to the downside right now. So this is, you know, a market that's clearly grappling with some of that signal there, right? It's not just all noise. On a sector-by-sector basis, some of the churn that's occurring intraday today is very much of the, you know, what if we have to deal with higher rates for longer? What if we have to deal with an increase in lumber prices? And lumber futures hitting new yearly highs today, for what it's worth, as we have some talk of this 25% tariff initiative from the president himself. So, Thomas, it's not all skies clear, of course. And then we have these FOMC meeting minutes coming up. The December meeting minutes, if you read between the lines, the Fed was pretty clearly concerned about the impact of tariffs. And the concern they had was that it introduced a new variable that they couldn't quantify, right? To be clear, not that they're overly political, and I know some people read it as that. But the point is that we see a Federal Reserve that basically says there's this new variable in the playing field. We don't know when it's going to arrive. We don't know the impact. So we have to just kind of say we're sitting on our hands now. Is there any reason for the Fed's disposition and discussion behind the scenes to have changed from December to January?
Yeah, I mean, the fact that there's uncertainty around the fiscal policy, the executive policies. For instance, lumber, can that trickle down? And it does into home building cost. There is still a cohort of consumers in the economy that are waiting for rates to come down so they can buy a home. Is that going to counteract, and are they going to continue to save rather than spend in the economy? Can that impact discretionary spending? If it does, that would, of course, be bad for the economy. There's a lot of discretionary spending that's, is susceptible in terms of GDP and things like that. So, I think it's just a wait and see position right now. But FOMC, of course, that'll give us some clarity. I don't expect really a big market move on that, but I expect some risk to be taken out of the market. And then we just start looking forward to the next data prints after that. You maybe get a one day move, and then it's on to the next thing from there.
Maybe a catalyst that's coming up around the corner. We have a House spending bill that's due out formally, perhaps tomorrow. Trump has come out in favor of it. So knowing that we see his support behind that piece of legislation to get some money moving through the economy, perhaps that's a market moving announcement. And then we see a Federal Reserve that is in a position to respond sometime, maybe not even at the March 19th meeting, probably May at the earliest, or even June. I mean, you think about this timeline here, and they're kind of in a bind. So CPI last week, not really having that big of an impact. We see that Fed rates right now, or at least Fed fund futures, they're not moving all that much. SOFR rates today, unchanged for the near-term horizon. The market's very much in a wait-and-see mode. But we have those FOMC minutes, again, due out at the top of the hour. I'm sure we'll hear a lot of opinions from Radigan and Sosnoff about those minutes, Thomas. I, for one, am staying long deltas in stocks. Look, this is a market that looks like it's breaking out. The technicals are still catering to strong positive drift to the upside right now. Even with today, we find support where against that 1 week moving average, where we had former highs back in December and in January. This looks like it's a market that's leveling up right now and getting ready to push to new highs. So my exposure remains appropriate on the equity side. Long deltas here, 6150, 6300 call spread, NES, with a little bit more upside movement. I would like the opportunity to reset this because I am on the other side of the decay curve. So I'm playing this a little fast and loose and going outside the usual bounds of what the typical tasty trade methodology is. And I may pay the price for it, but I'm also not looking to sell the vol, right? I'm looking for the upside move. So I'm willing to ride this out perhaps through the end of the week. If we can get up to 61.60, I'm going to reset. It's time to reset, but I just want to get over that last hump, Thomas. The one that's throwing me for a loop is the Russell, because this poor guy here, you could see the tariff talk. You could see how that cost uncertainty for smaller businesses, higher input prices would be a drag. Forget that. If inflation's running higher, Thomas, you're going to have higher rates at the long end of the curve. And a lot of these companies that make up the Russell, floating rate debt. So we haven't been able to punch through 23.37, the January 22nd high. Until then, it's very difficult to justify in a technical perspective that this is a long in the same form or fashion that the S&P or NASDAQ looks like.
Yeah, it'd be really nice if the Russell did join the rally. That's a big question mark with where the rates are going. If there is going to be patience, of course, the Russell is going to lag behind. But as we've seen before, the S&P 500, it can go without the Russell. So if you're playing those names, if you're playing the NASDAQ, the S&P 500, you don't have to be, in my opinion, overly concerned with what the Russell is doing. It is a good thing to watch, given if you're judging how the market is reacting to rates. It's one thing to keep your eye on, but the Russell not joining isn't really something that holds me back from getting long in other places in the equity market. So I'm going to continue with that.
Yeah, and trying to quantify the impact of what tariffs may do, what the cuts to government workers may do. There's multiplier effects, there are offsetting factors. There's consumption. I mean, like there's a whole host of things that go into this. So it's not going to be necessarily one for one. It's, difficult to say it's going to be one for one. And so the Fed isn't necessarily going to make any movements around it, but that is the key feature here, right? All these Fed officials, and we've noticed the last 2 days, you've had a lot of Fed speakers on the calendar. The remarks aren't just landing the way they were. Whenever these Fed speakers speak, I mean, you noted in 5 Futures this morning, Austin Goolsby speaking tomorrow. I'm hard pressed to think his comments are going to move the market because I just don't think the market cares.
Yeah. It's they're not going to reconsider rate cuts until the second half of the year. So what's said now by Fed speakers is going to be taken pretty lightly in terms of market pricing.
Thomas, outside of that, it's a quiet day here in equities. I think we can turn our attention over to the bond market because it is a shortened episode of Futures Power Hour to make room for the two gentlemen at the top in Truth or Skepticism. So let's talk about this attempted bond recovery here over the course of the session. Looks like it's been cut short a little bit now after that auction. Let's go to that 5-minute chart here and talk about those auction results from the top of the hour. Prices are modestly weaker here. In terms of the auction itself, I just had that up on my screen. It wasn't great because the bid to cover ratio was lower than the last 6-month auction. And quite frankly, you could look further back in time, it's lower than the previous 12 auctions, the previous 20 auctions, the previous 50 auctions. So the bid to cover ratio here was 2.43. The previous one was 2.54. Not great. 1 basis point tail. Not good. You want to stop through. That's really what you want to see. You want to stop through on these bond auctions. So what you can see now after the 3s, 10s, 30s last week, after the 20s this week, investors are saying that the compensation that they're receiving at the long end of the curve is just not enough for the uncertainty that persists out there. Plain and simple. There's really no other way to interpret it. Now, whether or not there's a good trade on the board to take advantage of this is another story, because this head and shoulders pattern, or inverse head and shoulders pattern, I should say, has seemingly morphed into more of a symmetrical triangle of sorts. And Thomas, a symmetrical triangle in context of a down move typically is continuation. So those bullish affinities that we had for a potential bottom, we may need to curb our enthusiasm on that here in the short term. This actually looks like it could take a pretty significant turn to the downside again, but still neutral for now.
Yeah, I mean, the bond auction not doing well despite rates going up for the past couple days, I think you got to look in the context of where rates have been. If you look at the 20-year, back in January, we were trading at 5%, a little over 5%. The yield right now, it's 4.8. So like you said, investors, given the uncertainty, there just isn't enough there in the market right now. It's kind of what we saw last week. Definitely discourages me from getting long bonds again if I'm going to take another stab at it anytime soon. It would probably be near this support level for this triangle that you've carved out on the chart. There could be trouble if we break down below that, especially down below 113.
I don't know where this account came from, and I don't know much about it. It just started on X last month. L. Santello. I think that's supposed to be a play on Rick Santelli, CNBC's bond market reporter. In any event, at L. Santello is an automated Treasury auction reporter. It has 16 followers right now. It tweets out the auction results from the Treasury's API feed whenever the auctions come through. It's a great resource for traders who are looking at bonds, by the way, on these auction days. Figured I should give it a shout out. If they do anything inappropriate, and they haven't yet, they're not following anything inappropriate, but if they do anything, I absolve myself of any of that liability here. There's 14 followers, 14 following and 16 followers, but it's an automated Treasury feed. So hopefully it helps people. Thomas, those FOMC minutes, as I wind myself out of that rabbit hole, this set probably can be impactful here. If we're going along the lines of the logic that prevails following CPI, that we look at the lack of movement in CME rate cut odds, it also stands to reason that absent anything glaring and new that suggests there's a substantive policy shift around the corner, I don't think that these are going to be a reactionary set of minutes. We just had Fed Chair Powell testifying in Congress, right? You know, what would that say if he were to turn around and the minutes had a completely different set of remarks, a completely different direction of policy than what Powell was talking about when he testified? He'd get dragged back up to Capitol Hill. I could almost guarantee there's going to be very little daylight between his testimony on Capitol Hill and what the minutes have to say. So I think this is going to be a non-event here. I know it's up in 34 minutes, but I don't know if there's anything to do in bonds specifically related to FOMC minutes here this Wednesday, February 19th.
Yeah, I couldn't agree more. They're going to reconsider rate cuts in the second half of the year. It's going to be, pretty much non-event.
I think what's so fascinating is, how come the bond market's not moving on more of these tariff headlines? They did already. When Trump's odds started going up in October, Treasury yields started following them higher. When Trump won the election, we find ourselves trading at a yield of 4.42%. So since election day, and since we know he's going to be president, we're up 13 basis points. That's not a huge move to the upside, Thomas. This was the pricing in of all those potential tariffs. This is the actual result of him now being president, getting over the hump. The market moved there. So we need something more, right? We need the actual tariffs in place. We need to see that there are no negotiations going on and both sides have walked away and the deadline is around the corner. There's a lot of noise right now. So for the average trader who's out there looking at bond futures, Thomas, you're recently new to this market, I see a 6.1 IVR in ZN. Of the two products, Xeon is more appropriate than ZB for most retail traders. It's half the size, but it's a 6.1 IVR. Is that juice worth the squeeze? I'd say if we want to do a rate-sensitive trade, you can go to the FX market where there's a heck of a lot more vol. IVR is above 50 in some cases. And you could play a rate story there with, I think, what's a better use of capital.
Yeah, I totally agree. FX definitely has some volatility in it. So if you want to play, rates, tariffs, that's a really appropriate place to do it.
Do you have anything else to say about bonds? We're in long. You had a good trade. I know some people around here are trying to short Carvana or HIMS. I, for some reason, keep trying to get long bonds. Talk us off these cliffs that keep hurting our performance.
Yeah, I'm going to revel in my one positive trade that happened last week for bonds, and gonna just continue watching it for now. So
we got through the Treasury auction here today. Next week, there's a few things of note. Certainly not into the long end of the curve, and considering that the options market for Treasury futures, it's really ZN and ZB, and that's it in terms of significant liquidity. Next week, it's 2s, 5s, 7s. If you ever pull this up, go to the Treasury website or Google Treasury auction schedule, you'll get this PDF. This is the column that you care about, right? And so here we see that we had our 20-year bond auction today. We have 30-year tips tomorrow. Next one is 2s on Monday, 5s next Tuesday, 7s next Wednesday. So if you are a ZT or ZF trader, there's something to think about. But our concern for the most part is ZN and ZB, and there's nothing really in the immediate future that would necessarily tell us that those are in the crosshairs right now. We've also run the gamut of significant U.S. economic data, Thomas. I mean, what are you looking forward to most on the data docket side of things? Is there anything really
there's not
the next
too
week?
much. I mean, we have, initial jobless claims tomorrow morning. Yeah, okay. Yeah, not too much this week. So we've got no real big prints coming out on the calendar. None that I've seen.
Yeah, I'm looking at the next 2 weeks right now for U.S. data. Existing home sales this Friday, maybe durable goods next Thursday. Yeah, personal income and spending, core PCEs next Friday, but we know PCE for the most part because of what we can impute from CPI and PPI. The catalysts are starting to run thin, and then again, it goes, okay, so we're not really concerned about the monetary policy lever of things. Attention stays on Washington, D.C., and the bond market, like stocks, they're ignoring the noise that's coming out because we're waiting to actually see the tangible results.
Right, yeah. Durable goods, I don't know if it's going to be anything. We could see some strength there from importers kind of front piling things before, tariffs do go into effect, but it's probably not too considerable.
Thomas, let's make our way over to what's been my favorite part of the market recently, metals. Gyrating a little bit weaker here today, so not my favorite market today. Gold down to 2935.90. Silver off by 0.89%, $33.07 in the SI H5 contract. I want to stick here with gold on the 4-hour time frame for a quick second and posit that we are carving out, and we have carved out, what I would consider to be a little bit of a flag here. This is perhaps a bullish continuation effort. We typically look at flags after breakouts as continuation efforts. It also could be a top. Either way, though, we have a consolidation zone right now, which for the non-faint of heart, which, I'm not a short-term trader, and I certainly don't like selling gold calls. This actually may be a place where you could operate on a short-term basis against 29.70 or so. And quite frankly, if you're comfortable doing it very, very short-term and keeping it tight, it also may mean that we could stay bullish above 28.85, eyeballing it. Why does that matter? It might actually be a good short iron condor trade as we work through this consolidation. But given the distance here, and the distance is roughly $85, you're talking about a potential move up then that could propel us, say, above 3K, or one that could mark a potential top that drags us back down towards $2,800 an ounce or so. Either way, though, this is a particularly important zone for gold. It seems like this will determine the next $80 to $100 move, and we're in the middle point of that range. So for me, I'm long. I'm going to stay long. I have enough time to expiry as we work through the long 2950, short 3,000 call spread. But for people who are thinking about laying out capital right now, I would look at the churn and change in the short-term momentum here, and then the decline in volatility throughout this potential sideways move as a reason to think that maybe we have hit a short-term ceiling and there's a bit of a hurdle that we need to clear here in gold. So that may be difficult sledding moving forward, Thomas. If there's a dip to below 2,900, I think first blush I'm going to take another stab at it long because this has been treating me very well, and buying at support and a potential bull flag is a great risk to reward to know if you're immediately wrong or if you can catch a low.
Yeah, I like a gold long here. I think this is just some consolidation before next push higher. I believe it was yesterday. I was out yesterday, so don't quote me on this, or either Friday. The PBOC said they kept buying gold in January. So that's a fourth month in a row, I believe. But it's important because they started 2025 with gold buying again. So if you look at spreads like the Shanghai metals price for gold versus London or even the US, that spread is increasing. So showing that gold demand is rising in Asia, which comports with the PBOC buying gold. I think you'll still have a lot of investors here seeking out safety amid tariff headlines, political uncertainty, geopolitical uncertainty as this Ukraine situation evolves. So I think gold is still inclined to go higher. I'm still in my silver long position. I want to get long gold really soon. I'll probably do it this week before the weekend. But I like where gold is at. I like the price behavior over the past few months, of course. I think the 3K mark is going to be the hurdle to get over technically. I think once we do, we probably open some upside and keep going higher.
Yeah, it's interesting that you mentioned the Shanghai gold move, which Shanghai gold futures do close up at a new fresh high today here. The gold to Shanghai gold ratio has been dropping, which is, to say that the Shanghai gold is outpacing gains in gold overall. And there's a lot of local demand right now. I think that's a rather astute observation, Thomas. For the sake of that point, let's just take a look at the ratio here quickly, as it were. We can see the ratio has been trending lower over the last few months. Once again, signaling that there's a lot of demand for gold in China. So, Thomas, this is one of the many reasons, right? Central banks diversifying away from fiat. Whatever is going on with Russia and Ukraine right now, that seems to me like it's a kind of situation that would force a lot of our allies to maybe reconsider the role of the U.S. dollar in their reserves if we're going to be a less reliable partner moving forward. And what would they prefer to go to? Do we think that the EU is going to exchange dollars for yuan anytime soon? They would probably be a purveyor of hard assets. So I like the metals here still. It's a bit of a rough day. It's a pullback after yesterday's strength, but there's time. Not going to go up in a straight line, Thomas, as much as we would like that. Have to be patient. The technical structures remain bullish, and we will press on.
Yeah. I like buying on pullbacks, and I like buying on breakouts. So this is probably one I'll buy on a pullback here. I'll probably actually do it after the show here, get long gold, give myself a good bit of time there. But I'm keeping my silver on. Today is definitely not a good day for the silver position, but I've had it on for about a week and a half now. It's been doing well. I see no reason to pull it off just for a one-day pullback right here, so I'm keeping it on.
What's your take on copper here? We've had a fairly steep setback over the past 3 sessions. We're now back into a place where the market had previously turned on several occasions more recently. I want to size this up the correct way. There we go. This is what I'm looking for. Resistance in November, and again here in January. We pop through it. We run up into the highs from September. We fail. We've now pulled back 3 days in a row. Thomas, if we're looking to establish some long delta exposure in copper, are we getting into a territory where that might be appealing for you?
Yeah, I think the November swing high at 4.53, right around there, is probably your best place to get long right now. The move makes sense, though. I mean, so we had a really big move February, start of February, end of January. We broke out, got into some new levels, went on to hit the highest since June or somewhere around June. So profit taking makes sense right there. Market got pretty long, took some profits. We're resetting at a new base here where previous resistance can now churn into support. So I like a long trade here. You got to be careful with copper because it's pretty big, especially so if you have a smaller account. Defined risk is certainly the way to go, playing the options on that. That's the way I'll be doing it. But I like the 4.53 level right here, comporting with that November swing high. So, if it's a position that keeps selling off, I'd sell it pretty quickly, probably. But yeah, it's a good place to take a stab here, I think. The profit taking does come alongside, we have this geopolitical uncertainty with tariffs, but that was present also in January and February, and yet the copper market went higher. So it's telling you that the copper market isn't necessarily too concerned with tariffs. It's more of a global demand story. And, if you believe in the roadmap for green energy, the transition, all that, copper is still an appealing story. Especially when you get out longer term, 2026, 2027, with where the surplus and inventories are going to be, those surpluses coming down even more, or at least expected to. I think that lends it some long-term tailwinds there. But you got to be strategic with this. It's a big product. It's been making some pretty big moves. But you have a good trend. You get profit taking come down to a new support level, or potential resistance churn support. So it's probably something I'll be playing as well here in the next couple of days, actually.
Yeah, I'm thinking about what the International Copper Group recently put out. International Copper Study Group puts out these monthly and quarterly bulletins known as the Copper Bulletin. They're worth reading, they're worth looking into, but consistently what you see, and granted it's an industry group, the reported demand continues to go up for copper, right? It's exceptionally high through and through. You're seeing the banks upgrade the forecast. You're seeing various hedge funds upgrade their forecasts. Of course, they're all pitching their own books because they're already long the exposure through the various companies or the metals itself. But forget that in the short term. We're looking at the level here. You mentioned 4.53. I see that 1 month moving average near 4.53. And if we can get into that former high from November right in that area, you have a pretty decent setup where it looks like this is a clear dynamic supply demand zone in the market, maybe as low as 4.48 or so. To that end, if we were to look out to the HGK5 contract and thinking 64 days out, why? We want some time here. The other expirations, not quite enough. Right? Could we deteriorate further still here? Yes. Do I want to spend 3 or 4 days in a short put spread that's deteriorating before it potentially rebounds? No, I'd rather have some time on my side. So looking at the short 445 long 4, right now that's actually risking a little bit under 2 to make one, 68% probability of profit. If price can come back in a little bit more, this pop will go down. The max profit, max loss terms will change to something a little bit more favorable, in fact. I would be interested in playing it that way, Thomas. I think there's enough vol here if we turn to the copper ETF CPER. The IVRs are in the high 30s, and a further pullback in price probably gets a little bit more juice there in the volatility, and that makes this a pretty appealing short put spread trade. And if you break below 450, you know what? Just get out. We've made our turn through the technical zone. Small loss, move on, find the next setup.
Yeah, and it's important to note the Chinese government, so China smelts a huge amount of copper. They're actually stepping in with government interventions now to reduce, especially the teapots, the smaller smelters, from reducing and trying to go against this surplus that you have in China, trying to reduce it a bit so that profits don't plummet. So the government is introducing some safeguards there. I haven't looked into it much. Last year, the industry in China overall tried to self-regulate itself. That didn't work. So now we're seeing the government step in a little bit. So we'll have to see how their policies actually impact the broader market. But that's one thing to keep your eye on there for copper prices.
Yeah, and China's continuing to boost its productive capacity. Last report I saw, I think they smelted 14 million tons in 2023 or 2024, and they're boosting that to about 17 million per year by 2027. Yeah, it's could lead to some oversupply in the market, right? And if you think about a global trade slowdown. If U.S. consumers are pressured and broadly speaking, government spending falls, the impulse in the short term is negative. Yeesh. Yeah. Well, Thomas, it's a compelling trade though, right? And there's enough short-term juice perhaps to justify it. This is a nasty pullback. This is a topping candle that we had on Valentine's Day last week. We set a new high relative to Thursday. We closed below Thursday's low. It's a key reversal outside engulfing bar. So you need to see something green. So let's maybe get a little bit more weakness here. We have a potential trade for our watch list. We get some type of rebound, some evidence that we're going to hold support there, and we have a trade on the watch list queued up.
Yeah, I think that's a great way to play it. This is a pullback that can keep going from my view, looking at it technically, but if you get a green day, some consolidation, that's probably the best time to pull the trigger.
Let's move over to energy. We're going to move over to energy, Thomas, because I took my natural gas position off today. Kicking around the tires of resetting the position yesterday, and much to my chagrin, I did not. So today, despite this 4 or 5% move higher, I was only able to squeeze in like $20 out of the short put spread. So reset should have happened. Nevertheless, taken off. Nice little profit there. Thanks to you. As I told you in chat today, it's all on you. I'm 3 for 3 in natural gas this year, and they're all trades that you've pointed me in the direction of. So kudos to you. I believe I owe you some Malort next time I'm out in Chicago.
Please no.
So this has been a huge explosion to the upside, right? Back-to-back days where we have absolutely screamed out of the gate right now. Volatility is up-ish. 45 IVR. It's not exactly through the roof. So trying to call a top here and looking to sell calls in natural gas, again, almost like I'm afraid of selling calls in gold and silver and oil. When natural gas starts to get directional like this, do not arbitrarily pick the top. Something happening. Polar vortex, war in Europe, whatever it is. Inventories, though, continue to run low, as you have dutifully informed me of. If it's here in the U.S., it's in Europe. They are running below where they were the last few years, and they're trying to loosen restrictions on when they can be refilled from what sources. That to me says they're trying to get more natural gas from the U.S. and cheaper places than what the Dutch TTF grade is offering. But how would you play this right now, Thomas? Because this has been a sharp move to the upside. It feels like it would also be difficult to just even sell a put spread near the weekly open and expect to have a decent trade set up in front of you.
Yeah, so it's interesting. You mentioned the Dutch TTF futures. That spread has actually collapsed the past couple days, and that's part of the reason. Part of the reason is that because the U.S. prices have risen so rapidly because the weather forecasting in the U.S. for March has turned very cold. So it looks like we're going to get another one of those Arctic blasts. At the same time, production right now, you have very cold weather. It's causing freeze-offs. So that's when producers have to stop their operations because it gets so cold that it could potentially damage their equipment if they keep running. So production
Thomas,
in the
just
US,
a quick button as you're saying about this. This is the Dutch TTF contract. You mentioned how it's come down here in recent days. It's off by 6.87% this week as natural gas prices have risen.
Yeah. So that closes some of the arbitrage pressure for cargoes from the U.S., even though exports are still high. In the U.S., production is down to 101 BCF per day, so billion cubic feet per day. That's down from last week from 105. So we have 4 billion cubic feet of production that's likely offline from these freeze-offs or these operational pauses where they try to protect their operations. Energy demand at the same time is up. I forgot the number for it, but it is up. Of course, that makes sense because, again, it's very, very cold, especially on the East Coast. That causes people to use their furnaces a lot. That energy demand goes up. So we got March, we got incoming cold weather. We have the arbitrage window, less incentivized, but still where Europe stockpiles are going down a good amount. So they're going to keep pulling U.S. product. What does this mean for trading it? It puts us in a really hard spot right now because if you want to short it, this is a rally that can rip your face off in just a day. Can completely flip your trade in just one day if you look at these moves, especially over the past 2 days. I'm actually 2 for 3. I tried shorting it on Friday, got out of the position really quick. I think I took a $100 loser on that. You look at this and you want to short, you want to get that pullback, but with this March coldness coming, along with geopolitical things, Ukraine's attacked some Russian oil infrastructure. It's just not looking like the risk to reward is there right now if you want to short it. So I'd be really cautious to anyone trying to short this right now.
Yeah, it's getting a little bit runaway here and rippy. The trade structure matters though. So I'm looking to the NGK5 contract, and I look at that high that we had on January 16th at 3.789, and I think about 65 days out. And one of the reasons why it's worth, if we want to try to trade this from let's sell the vol perspective, and we'll use recent technical levels as thresholds to operate around, we want to look there for a few reasons. But first, an observation, we have not closed below the 1 week moving average here since February 10th. Right, February 7th is the last day. We've been on a rip higher since then. One tell that this uptrend may be breaking is a close below that 1 week. That's far from where we are right now, so you have to give some breathing room for a pullback. But if you do see a pullback and a close below that 1 week moving average, setting the strikes on the other side of that high you have in January allows the position to retain enough intrinsic value that if this is a loser because of how much time there is to expiration, we could say, you know what, this market's too jumpy. There's 60 days left. There's 55 days left. You know what? I can get out. It's not going to be a significant move. I can take a $100 loss here as opposed to waiting for this to go max loss near $1,000. We have to be careful. I would like to see some sort of pullback because I did take it off earlier today. I didn't make the adjustment soon enough yesterday. I'm kicking myself a little bit for it because then I wouldn't have made $20 on this last little bit because the position was basically at max profit. That said, though, there are ways to play this responsibly. I would not be looking to sell calls, though, right now, given the behavior here in the short term.
Yeah, I agree. I'm definitely going to be watching this with a keen eye through the rest of the week, keeping my eye on those weather forecasts. If those weather forecasts, they're pretty much as cold as they could get right now if you look at them. I mean, I shouldn't say that because it could always get worse, but where we're at right now relative to where we could go, it's likely to shift more to the bearish side. But again, you got to watch what's happening in Europe because the market today isn't like where it was 10, even 5 years ago, where natural gas was much more regionalized. The world has a lot more capacity to move it around. It acts more like oil than it did, 5-10 years ago. So you have to be keeping your eye on what's happening in Asia, what's happening in Europe, and especially those geopolitical concerns as well.
There was an interesting headline today that came out about oil that U.S., Russia, and Saudi Arabia are going to explore discussions on energy cooperation. A few years ago, Thomas, I used to write a series for the former division that we were with, and it was like gray swans, right? Attempting to identify black swans, and once you identify them, then they're no longer black swans, so we would call them gray swans. And one of those purported risks that I wrote about was, what if we see OPEC plus dissolve because the U.S., Russia, and Saudi Arabia have a new energy alliance moving forward? These are the three biggest producers. If the U.S., Russia, and Saudi Arabia all got on the same page, they would set the market, plain and simple. Maybe that's occurring. I need to think about that a lot more. It's not an idea I've revisited in probably 6 years. So there is definitely some wood to chop around there, but oil prices off their highs. There's still no vol. Come on, oil. Give us something more to work with. We just want to sell some volatility. Thomas, we got to wrap this up quickly, so let's go over to FX. I mentioned earlier in the rates portion of the show that if you're looking at trade rates or a rates play, I know people don't love doing this. Tom certainly doesn't love doing this. He tried at Ilya last week when Ilya said he was playing rates through the yen. The fact of the matter is that currencies do move on rate differentials, okay? And there's a lot more vol here. If the vols were the same, we would say just play rates through bonds, treasuries, right? Notes, what have you, your choice. But in a world with a 6 IVR in ZN, the 67 IVR in 6E is a lot more appealing. And if you think that U.S. interest rates are going up, that probably comports with a weaker 6E. And if you think that U.S. interest rates are going down, that probably comports with a stronger 6E. It's not one for one. They're not perfect hedges. These are not perfect relationships. The yen is perhaps the most interest rate sensitive of them all, with a 45.1 IVR. These are not the rate sensitive currency plays, but the Aussie has a 40.8 IVR, the pound has a 29.9, and the Canadian dollar still has a 49.5. Thomas, the point is that the FX futures are offering a great deal of volatility, and for newer traders, they may not look to the FX futures, but if you want to have some sort of conversation around rates, there's more juice to squeeze here in this adjacent market.
Yeah, and FX futures are really nice. I mean, the underlyings are super liquid. Sometimes the options chains in FX can be a little thin, but you can usually always get your trade in there. I've been long 6C since last week. Today's not the best day for that. But yeah, if you're trying to play rate differentials, if you're looking at yields, you can definitely strategize a game plan depending on what currency you're going to. You can also bring in geopolitical stuff into it, depending on the currency, et cetera. So it's always a good place to look that some new traders don't look at, and that's just because there's not much coverage on, you type in Google S&P 500, you can see 10, 20 articles just written in the past couple hours on it. You do that for the euro or something like that, it's a lot harder to get information, but that information is easily accessible just through the yield differentials. If you're looking at yields, looking at the headline news, you can easily do it. So it's actually an easier market to play than most people think that start out trading.
Dollar firms slightly. So what's next on the calendar? Tomorrow, interesting-ish day, jobless claims. Right? You say nothing. I think that's fair. There are events, but will they move the market? We've seen these Fed speakers. They're not really having any impact. So you got to say, keep your ear to the ground. At the very end of the session, though, keep in mind, just as futures close, there are Australian PMIs due out. So if you are trading 6A, then you may run into bit of an issue because the market's closed. So just mind your positioning by the end of the day tomorrow. As we do at the end of every one of these shows, we talk a brief bit of education. Today, we're talking introduction to products and markets. Head over to tastylive.com, top banner, learn beginner futures, or click the link here at the bottom of the slide to get there directly. Thomas, the main thing to remember is that a futures market refers to one commodity or underlying instrument. Some examples are crude oil, gold, and the S&P 500 index. But we separate these futures into their own sectors. For example, there are energy futures, metal futures, ag futures, equity index futures, foreign currency futures, and interest rate futures. We've talked a bit about all of them on the show, and when the WASDE report comes out and you're around, we try to cover the grains too. But these are important to understand. There are a handful of market participants in each sector that have very different priorities. So you're not just trading gold the same way you're trading crude or the same way you're trading stocks. Learn more about what those market participants do. Tune in here on Futures Power Hour, or go to tastylive.com, top banner, learn beginner futures. Click the link at the bottom of this slide. It takes you there directly. Thomas, we're out. We're running over. We owe Josh money, but he owes us money too. So we'll call it even. Up next on Tasty Live, we have Truth or Skepticism with Sosnoff and Radigan. Stick around. And guess what? On overtime today, it's me, Radigan, and Tony Batista. Be sure to come back for that. See you later, folks.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
He's welcome. He's welcome.
Hello, everybody. We are back. It's time for Truth or Skepticism. It's 1 o'clock Central Time. And I'm Tom Sosnoff. I'm here with Dylan Radigan. And we're ready to go today, Dylan. All fired up.
I know there's a I'm just going to cut to the chase, okay?
Cut to the chase.
There's different schools of thought when it comes to the use of power in relationships with other people.
Okay.
Some people are of the belief that there's a moral standard where the most powerful individuals should not overly abuse or exploit the least powerful individuals.
Okay.
This, could manifest in a sports team, in a corporate organization, in a government, in a village, anything.
I personally feel very strongly about that, just so you know. I don't like...
I would think so.
I don't like bullies, I like people that pick on...
Hold your tongue.
Yeah.
Hold your tongue, please. I'm aware of who I'm talking to here, so I'm setting you up.
All right. Set me up.
There are also those who believe that if you have power, or that, how do I frame this efficiently? That the only people that you need to deal with in life are if you have power. If an individual or an institution has power, the only counterparties you need to interact with are other counterparties with equal or more power. If your counterparty does not have any leverage over you, or to have any ability to influence you in the superficial short term, then you need not even address them. You could ignore them. That the only thing that matters, if you're Tom Sosnoff, billionaire Wall Street kingpin, or you're Dylan Radigan, New York Times best-selling author, global television celebrity.
Okay.
That the only people you need to deal with are other people like you or with more power than you. And if there's somebody less than you, you could ignore them and they'll just fall in line because they have no leverage. Basically, I guess the simplest way to say it is leverage makes the world go round. There is no morality. There's no right and wrong. I will do as much as I will do and get from whoever, the world, as much as my leverage allows me to get. And that's the law of power. The power of the law of the jungle. I take what I need, what I want, what I can get. And if I can't, I take up to that point. And if I can only get so much, then that's all I can get. And if somebody bigger, stronger, meaner takes more and takes mine, good luck. You got to, go with God. Can't help you. At a high moral level, it's easy to be outraged by that what you would say is bullying behavior, right? Like, it's just wrong. Obviously, why would you treat, like, I can bully my children, right? Like, I'm bigger than my children. I'll take my children's food. I mean, there's no limit to this theory, right? Or my aging great grandmother, I'll steal her dinner because I'm bigger than she is. This would be the most extreme interpretations of it. But setting aside the obvious moral issues with power, with power, purest power through leverage, however you want to describe this phenomenon, on a more practical level, what's wrong with it? Other than the obvious thing of what's wrong with it in terms of the moral. Like, is there a practical reason? Is there a practical flaw with this thinking, or is it only a moral flaw?
I kind of love a question that you also give the answer to with
I'm setting that answer aside.
Other than the moral, criminal, ethical, and everything else.
Other than the obvious answer.
Other than all the obvious infractions, is there anything else that I'm missing that could be wrong with this? I don't understand where you're going with this. I mean,
I'll tell you, I'll be very clear. The President of the United States has decided he only needs to deal with two people, the President of China, the President of Russia. If you're not the President of Russia, you're not the President of China, you don't matter. And he believes that because Russia and China have enough power that they're worth my attention, everybody else I can ignore. And again, I don't want to make it a referendum on, it's a referendum on the theory of power absolutism. And I'm saying, other than the moral issues with power absolutism, is there a strategic flaw in the thing, or is it only a moral flaw? I guess is my question.
Oh, I think moral flaws aside, which I don't even know how you can do that.
Moral flaws are glaring, obvious, and horrifying, but then there's no discussion. If once you get to the moral flaw, then you're just like, what are we talking about?
Yeah,
but
so on a strategically, there's plenty wrong with it strategically. It's the same argument. For example, if you put the big, huge wrestler in the middle of the ring, right? And Andre the Giant, 500 pounds, 7 feet tall, whatever. No single person is from somewhere else is going to take on Andre the Giant. But can 30 people take on Andre the Giant? And the answer is, of course, 30 people will destroy him. It's the reason why a pack of wild dogs can kill a lion. It's yes, there is strength in numbers, and there is a huge issue, with the strategy.
Because you're saying that the abuse of power, of the absolutism of power, is it creates an incentive for the pack to organize, basically.
Of course.
Against you.
Of course. I mean, there's almost no situation in history where a single power can, regardless of strength, can dominate. So no, not in modern times, not ever again. No, because everybody else will just gang up and destroy. You have to be very careful. That's a very dangerous place to be. king of the mountain or on top of the mountain is a really tough spot to hold.
Do you think my perception of what the American president is doing right now is accurately described by what I just framed?
I don't, not necessarily. Not necessarily. I think the issue, no, I don't really think that is the case. I just think that I think that the president of the United States has an infatuation with certain types of leaders. And I think that's, I think the people he considers to be role models are different than the people that you and I consider to be role models.
Mm-hmm. Are you surprised the U.S. is going to reopen the embassy in Moscow?
Am I surprised? I guess not. Not really. I don't know why.
Does your pessimism for Russia's future change by virtue of recent events?
No. What scares me about Russia's future is, first of all, I think Putin's a dead man walking no matter what. And I think that the fact that Putin's going to probably be caught off guard soon, thinking he's a little safer than he really is going to be very dangerous for him. But so I think Putin is dead man walking. But Russia has had a disastrous brain drain and economic drain, and I don't know that they can recover anytime in the next 10 to 20 years. I mean, there'll be this kind of false recovery, or they'll make it seem like they're recovering, but the Russian the intellectual class in Russia is gone. They're gone. They've left. They're core developers, they're top technologists, they're best engineers, they're scientists. Everybody's gone. Everybody's gone. They're literally all over the world now. And I don't think you can recover from that. It's going to take, the next generation of Russians that's going to build out their technology. They're still in grade school, high school.
The other, and I don't want to spend this whole podcast on the geopolitics.
No, I don't even care about it. I don't even care. They did it to themselves.
But I do feel like it's very much, this whole situation is to China's advantage.
I do think that,
I feel like China is winning right now.
Hold on.
By doing nothing.
First of all, China might be winning by the virtue of doing nothing, but China is where China is today because they're so incompetent. China is this massive machine with a brain dead head. And so China has a very powerful body. The way I've always described China, incredibly powerful body, strong as hell. But the head, idiots. Like, it just doesn't work. It's a dysfunctional brain. And until the brain becomes functional, I just don't see how China is competitive. Because you have to be crazy to invest directly in China. You can invest in China through, U.S. listed companies. You can invest in China through multinational companies. You can invest in China certain indirect ways with limited amounts of money. But until you can really feel safe investing in China, I just don't see how China goes anywhere. And the Chinese psyche has been destroyed. So I think that China is...
You're saying because of the internationalization of this and Hong Kong and the real estate...
The destruction of the real estate market, the destruction of the stock market, basically the destruction of all the goodwill they built towards capitalism just destroyed it. I don't see how fast they can recover. What China does have, they have a very strong intellectual class, and they have bodies. They have lots of bodies. They have the brain power. Russia doesn't have the bodies anymore. China has the bodies.
And America better than both?
No. America has a better system than both. So we don't have the same, we probably don't have the same we're probably not as intelligent, as China.
On average, you're saying.
On average, we might not even be as intelligent as Russia on average. But the difference is we have a system that works. We have a democracy. We have an economy. We have
that
markets.
capital market. I mean, it's a broken record, but the capital market is the
we
anchor
have
of the
liquidity.
world, so.
We have cash up the wazoo, and so we can do things that nobody else. And we have free trade.
Mm-hmm.
And so America is the only place that has all of the above. And we have the institutions if we want to ramp back up, and we have a very strong, intellectual elite. We don't have the bodies.
When you were a
China.
young lad, sorry,
we just don't have the bodies that China and India have.
Count.
But we have everything else.
Sure.
And more.
When you were a young fellow, I feel like you might have not been a big fan of lots of rules and lots of rule making. I feel like you might have been somewhat against having lots of rules.
I probably
was. Is that
was.
a fair assumption?
Yes, that is a very fair assumption. When I was a young person, I grew up in an
when you
era.
were 13, when you were 17, you were like, too many rules. We need more.
Remember,
less rules.
the late 60s was a very rebellious period. The Vietnam War,
I know.
Washington was up for grabs. It was a pretty dark period in American history. So, we were all rebellious.
And so does that make you a little bit sympathetic to the current sort of climate in the American government to get rid of to sort of flip through all the bureaucracy and toss out some rules around here? That don't you think that there's some truth to the focus on reducing regulation in America?
Sure. I've been on both sides
in that
of
same
this.
Spirit.
I've been I've been in this space and on all sides of this for quite some time. It was tough building businesses when the market's melting down in 2000 and obviously in 2008 where you saw an economic collapse due to lack of regulation. And then you saw a rebound because certain regulations were put in place that gave, regulations do a lot for market confidence. And I think that was really, the strength of Obama and what he brought back into the marketplace was just integrity and confidence in the markets because in 2006, 7, 8, the markets, they lost. There was no confidence, no integrity of market structure, and no regulation. Now we're back, then we got back to a point where, okay, I feel better now because there's some risk controls put in place, and the risk controls were really important. Then the risk controls got out of control in the last, 10 years, and we went too far the other way where we were over the top with respect to risk. And the regulatory agencies in this country over the last 10 years became, instead of being collaborative, the relationship was, I don't know the best way to describe it, but it was almost like, it was adversarial. There was nothing positive. The regulatory relationship with American businesses was just a disaster, and something had to give. So that's what's happening right now. Something is giving. The question is, hopefully it doesn't go too far. Like the problem is we always go to some extreme. In 2008 we went to an extreme. In 2020 we go to another extreme. The other way.
Meaning no leverage limits. Dump your toxic waste in the river. Whatever the
exactly
that version is, you're saying.
Exactly.
Or instead of no leverage limits, it becomes no leverage, or you can't use lemon juice in your factory, kind of a thing at the other end of the spectrum.
Yeah, we have to be careful because we're a nation that has one of the things that we've always done better, I feel like, than anybody else is we're we've built our economy around compromises, and we're the masters of the compromise, and the compromise is really good for business. In a way, Dylan, it's the ultimate form of leverage, is the ability to compromise. It's like deal makers compromise. The reason deals get done is because there's some form of compromise in the process. People that don't learn how to compromise never get anything done. People that learn how to compromise and make deals that could possibly be good for both sides, that's where stuff gets done. We built an economy around compromising, which is the strength of what the US economy is. Anytime we go too far in one direction, like too much, we get rid of too much regulation, or we bring back too much regulation, we put ourselves in a compromising position, but we forgot that we got here by compromising.
But so are you suggesting right now the risk is that we remove too many regulations, to be very direct?
The risk, it's not a risk right now because it's something we're watching it unfold, but it's a potential risk if it goes too far, because you have to have the purpose of the government. I mean, I shouldn't say the purpose. One of the purposes of the government is to maintain integrity, to avoid collapse, disasters, things like that. To avoid blowing up. And one of the ways,
stabilizer,
stabilize. That's the word I was looking for. Stabilize. Yeah. And you know what? It is not an easy thing to find that middle ground where you can stabilize everything. So I think that, that's what we're all challenged with here. And we're hoping that, yes, a lot of the crappy regulation goes away, but not to the point where it's like the wild, wild west again.
Why do you think the stock market is so happy these days? In the context of for all the hand wringing, I can be like, I can complain about this, or someone can complain about that, or we can. There's again plenty of things that I could point to as a point of anxiety, or a point of concern, or a point of whatever. Stock market is more than okay.
The stock market has been more than okay from 2009, to 2025. I mean, we're not looking at at any kind of a recent phenomenon. The stock market has been good for 16 straight years. The stock market has, everybody that believes that there's some other story here. The bottom line to the whole story is in end of 2008 and 2009, we basically thought we were crashing as a society, and everything got way too cheap. And it's taken 16 years to get back to normalize everything, in addition to all the crazy growth stories that are out there. And the amount of wealth that's been created over the last 16 years is a number that just, it's ginormous. And it's fed its way into so many places. Do I think the stock market's crazy here? No, not at all. I don't think the stock market's reading anything crazy. I think the stock market has done what we thought the stock market would do all along, which is the stock market doesn't care about your geopolitical stuff. It wouldn't matter today if Trump's president, if Joe Biden was president, if JD Vance was president, if Kamala Harris was president. It wouldn't matter. The stock market would be doing the same exact thing.
On the regulatory side, you have had many a strong point of view regarding regulation of financial markets, especially.
Yeah.
Is there an opportunity in a world where there's a new administration, a new SEC chief, a new regime? Is there an opportunity for an improvement in market regulations in a way that are more in the direction of where you might want?
Sure. I think that it really depends who the new head of the SEC, I don't know if anybody knows exactly what this person is going to be like. But we would be hard pressed to find anybody that was more anti-trading than the last person they had. So, if there was somebody that was holding back the world of the exchange-based, trading products, cryptocurrencies, sports betting, whatever you want to call it, all of the above, everything in a regulated or centrally cleared world, the last situation was as bad as it could be. The current situation is going to be, it would be impossible to replace the last person with somebody worse, in my opinion.
What's the most obvious regulation that you think is the most likely to get a change? Or a couple of potential. I don't want to try to corner you, but like, where do you think there's what's the most obvious domain? Like, in other words, like Bobby Kennedy comes in at HHS, and he's going to do some vaccine research, or he's into fluoride, or he's into like pharmaceutical ads on TV are going to get reviewed. You don't know if it's going to be a change, but there's going to be some tire kicking in those areas. Is there something obvious in the financial markets that you think is ripe for some review?
Well, the easiest thing, rather, because they don't have to they don't have to go after a specific agency, would be to actually create regulatory boundaries in the digital asset space and the cryptocurrency space. And in the digital asset space seems the simplest, most logical, and most necessary right out of the chute. But I think you're also looking at securities regulations that go back, as far as 5 or 6 decades. And I think it would be very easy to upgrade, make a lot of changes in the security space, and changes that are really needed, changes that would be welcomed by Tasty. So I think the bar is set pretty low with SEC and CFTC changes to help individual investors.
Meaning like the pattern day trader?
Yes. Pattern day traders, amount of margin required to make a trade, just, capital efficiency. There's so many rules that make no sense at all. Just the amount of time to clear and settle trades, the use of blockchain on the clearing side. I mean, there just seems to be the use of money transfers, the limitations to different exchange-based products and everything else. I just think there is enormous, potential. And remember, the more money you bring into the listed financial markets, the more liquidity and the more capital there is for innovation and investing in the economy and new businesses and things like that. So yeah, I think this is an easy one.
Do you think that the shitcoin market should be regulated? Like, remember the blue sky laws back in the day, where it was illegal to sell something that you knew was worth nothing?
I think that we do need.
I think it was in the 1930s.
I do think we need some regulation around, just like we don't let anybody in the world list a security and trade it. We shouldn't let anybody in the world on their home computer create a coin. Whatever, we're creating a few 100 million coins a week or something. Like, it's ridiculous. Yes. And he who has $5 million can list it on Coinbase. But other than that, it doesn't matter. I just think that there needs to be certain shitcoin limitations.
And where would you draw those? Would you even venture a line?
I would not venture a line. You're just saying
it's a worthwhile meeting. Sorry?
I would not venture a line, but it's a worthwhile meeting. I just, I don't know. I haven't never thought about it.
Yeah.
I don't like when individual investors, who I think are sometimes fragile with respect to know-how, get ripped off. It really bothers me because I've spent an entire career trying to legitimize the world of finance. And when some grifter comes along and rips off people because they list some worthless coin, for X amount of dollars, it just pisses me off. Just like when somebody pushes out and pump and dumps some NASDAQ bulletin board stock that's a deli in New Jersey and says it's an AI company. It's ridiculous.
Where's the biggest risk of deregulation? Like if the need for regulation, that the biggest positives for regulation are kind of in the area we talked about, crypto, some basic individual
It's always
investor
leverage, Dylan.
margin.
It's always leverage. It's always leverage. It's always anything that's not collateralized in some way. It's always some amount of leverage. The only thing that, I love to say this because it's so true. When genius fails, and genius kind of always fails, but when genius fails, it's always size. So it's always the unlevered. The over-levered. I didn't mean unlevered. It's always the over-levered trade. And that's where regulation, that's where deregulation will fail us, is allowing, I never want to get back to the spot when you can buy $1 million house for $50,000 down. Worst case, a $5
or $1
million
million worth of anything for $50,000 down,
right,
basically.
Exactly. We got to be careful. We don't want that kind of leverage, because then you run the real estate market blowing up again. You run, basically every single listed marketplace, you run the risk of them blowing up again. And we go right back to where we were, 16, 17 years ago. So I think the biggest risk is, and when genius fails, is absolutely when we lever up too much.
And is there a number? Is it 10 to 1? Is it 20 to 1? Is it 5 to 1? Is it 2 to 1? Or is it much more nuanced because it's 2 to 1 here and it's 10 to 1 there, because it's really tied to probability of default more than it is the absolute leverage?
I mean, here's the thing. The people that decide the leverage,
100 to 1.
Sometimes they don't understand the math. And the wonderful thing that works around equities and around futures is that it's a math equation on the back end. It's basically a 2 standard deviation move. Everything we do in the world of finance is 2 standard deviations. We can't control anything over 3 standard deviations, but 2 standard deviations, we can live with that risk. In the world of real estate, last time we almost took us down, there was no measure of risk. We were way outside of 2 standard deviations. We were like at 4 standard deviations before we started, and nothing made sense. So we have to be very careful, and we have to understand the math and behind the risk of everything that we're doing. And
the standard deviation risk, meaning the probability of default. That's a measurement of default risk.
That's right.
Whether on a credit or whatever it may be.
Anything that can be quantified, we have to be there. If it can't be quantified, then that's a risk we take. But if it can be quantified, we have to be there. And who takes that risk? And I think that's, we can't risk another 2008, 2009. Real estate's concerning to me.
What do you mean?
Just because there seems to be more, there seems to be a lot more wiggle room in real estate, meaning that the numbers required seem to be less tied to some regulatory framework. And so real estate scares me, more so than publicly traded companies or, listed exchanges, that kind of stuff. And you said, where's the risk? The risk is, over leverage and probably starting in, real estate or something like that.
And that risk deregulation that allows extending credit into real estate would be the sort of obvious place where a regulatory liberalization regime would go and would create risk. And that's where it's happened in the past, obviously.
That's where it's happened in the past, yeah. And you have an administration right now that's also used to that space, that has over-levered in the past, personally. So you've got to be, you've got to at least be respectful of that.
Mm-hmm. If you're not one of the big three, going back to if you're not China, Russia, or America, you're Japan, you're France, you're Mexico, you're Canada, you're England, and you're kind of watching this play out at the moment. What do you think? What do you think the best strategic maneuver is for a European leader or a Canadian leader or a Japanese, the non players in the current drama?
Well, it's funny. I'm going to go back to another wrestling analogy. If you're one of the big players, but you're not one of the hugest people, you're not one of the biggest monsters out there.
You're not the big three. You're the next five or the next
that's right.
10
You're not the big three. You're in the next 5 or 10. You kind of like the idea that of the big three, 2 of those 3 are going to end up dead. Like 2 of those 3 are going to kill them. Somebody's going to end up on top, and the other 2 are going to be dead. Because 2's going to fight 3, and then 1's going to fight the winner of 2 and 3, and then left standing will be 1. So instead of dealing with 3, you're only going to have to deal with 1 in the future. So I kind of like that position if I'm one of those 5 or 10 that are standing to the side.
And basically your position is just to sort of remain calm and stay out of the fray as much as and wait it out is your best strategic maneuver.
Yes, you're going to stay on the sidelines and let everybody else kill themselves, and then you jump in when the time's right, because the opportunity it'll be rampant. It'll be all over the place.
Does it change the relationship within those 5 or 10?
Yeah, maybe. I don't know.
It doesn't matter.
Doesn't really matter. Yeah.
Because you're just watching the big 3 play it out.
Yeah, you're just watching them kill each other. I mean, it's what we do in finance. Like, one of the things that Tasty does, and it's just how we treat our business, is we like when, Schwab and Fidelity and E-Trade all try to kill each other.
Mm-hmm.
And then we go after everybody else. It's exactly the way.
And do you think that's what's happening right now?
I think that's what it sure looks like.
We're setting that up a little bit.
Yeah, we're setting it up.
It seems to be setting it up.
Yeah.
Because my perception is that actually America is trying to bring Russia closer, not because America necessarily wants Russia closer, but because America is concerned about the proximity of Russia to China. That the American play diplomatically in Moscow is a play against Beijing. It's not so much of a play. People think, America's cozying up to Russia. I perceive it to be America cozying up to Russia, clearly, but with the motivation being to pull Russia away from China.
I mean, I don't know why anybody thinks that anybody would trust Putin. And I don't know why anybody thinks anybody would trust Russia or China. So the idea that
or Trump,
I wouldn't trust any of the 3. So this is much more. The situation we're in now is much more of a keep your friends close and keep your enemies closer than it is anything else. This is an absolute classic of just keep your enemies closer, and I wouldn't read anything beyond that. I think it's just a game of posturing and. And that's all that you're seeing going on. I mean, there's no way anybody trusts Trump. There's no way anybody trusts Russia. There's no way anybody trusts China. It just can't.
Mm-hmm. Yeah, no question.
Right. So just keep your enemies super close. Let your friends stay a little bit more of a distance. And, and it's just a game of let's not do anything stupid.
Just one more. So, but I will have a couple of minutes. So I have one other thing that's been in my head, which is there's so much right-wing criticism of the defund the police rhetoric.
Sure.
Which, by the way, terrible rhetoric in my opinion. So whatever.
Horrible rhetoric. Yes.
I mean, come on. At the same time, you have a government now that's defunding a lot of enforcement, defunding tax enforcement, defunding the FAA, all these things. I'm just sort of, how do you read into the Law and Order Party defunding
politics.
Law and Order agency?
From a politician, Mr. Radigan, which you have been.
Not a very successful one, by the way.
Well, maybe you didn't maybe you didn't pass your class in hypocrisy. That you must have missed that day, the day they taught, the oath of hypocrisy. Yes, if it comes to Black Lives Matter, defund the police. But if it comes to White Lives Matter or white collar lives matter, then defund the FBI, or the Consumer Fraud Protection Bureau, whatever it is. It's insane. It's nothing more than ridiculous hypocrisy from ridiculous politicians. But I don't know why that surprises anybody. That is what Washington has been about for 100 years, and it will be what Washington's about the next 100 years. I don't think this would surprise anybody from any party on any level. You say whatever you need to say in the campaign promise. In the moment. Mm-hmm. And then when you're in power, you realize, oh, well, what does Tony always say about me? Don't listen to what he says, listen to what he does, or don't whatever it is. It's the same.
Whatever it is, it's a metaphor for extremely hypocritical behavior.
Whatever it is, it's a metaphor for don't listen to what he says.
You like the Doge dividend? You like the idea of a dividend? Is that a scam too? The idea of a rebate for government savings, $5,000 for everybody.
That would be really hysterical, because I don't understand how paying a dividend would reduce the deficit, but whatever.
Because you're just spending the money differently at that point. You're just instead of doing it strategically, you're just redistributing it, basically.
Yeah, in
other words, it betrays the very purpose for which it's spoken. The claim is to balance the budget, and yet you're still spending all the same money, just in a different way.
Yeah, I'll take. It's a way of bribing 300 million people that so that you can give a few hundred people a few $100 billion, and you can bribe everybody else with a few $5,000 checks. No, thank you, sir.
No, thank you. You remember when didn't George Bush give everybody $200 at one point? I remember that was the most. I remember I actually received mail.
I don't remember Bush doing that. I thought wasn't there a rebate check during COVID or something?
Well, no, they did those PPP loans. Which was
no, but I thought there was also a rebate check. I can't remember.
Was there a check? Oh, there was a check. There was a COVID check.
Yeah, there was a COVID check.
I think you're right. But George Bush, I swear, I'm not that old. George Bush sent out everybody like $180. It was one of the most ridiculous things I've ever seen in my life.
I do not remember that. For the life of me, I can't remember that.
All right. Well, it happened.
But there have been, Alaska has sent out money. There have definitely been states that have tried. It's pretty interesting. It's an interesting philosophy. I can't say if it's worked or not. I don't remember it ever happening with us. But no, that to me.
Oh, I know. The last thing I want to talk about. I'm sorry to annoy you with all these questions today, but I'm excited. You see that the president refuses to let the Associated Press in the press room until they start calling it the Gulf of America. Did you know that?
I saw that. Yeah.
You like that?
Well, the problem with that is that it sets an incredibly bad precedent into the future. I can't even begin to tell you why all the things wrong with this, because the precedent that it sets is just, it's too
my
deep.
favorite. I'm going to leave you with this. I'm going to leave my favorite of them. I'm sure you've seen a lot of this content, but there's one circulating that they've got that Prince symbol, when he changed his name, and they had that, he changed his name to that crazy symbol that's like a squiggly thing, whatever. And so they've got that on the Gulf of Mexico, and it just says the Gulf formerly known as Mexico.
I like that. See that?
So that I'm calling it that. So if you can, you feel free to partake.
I mean, there have been some effective, Cassius Clay to Muhammad Ali Lou Alcindor to Kareem Abdul-Jabbar. We've had some solid name changes, but
Ralph Lauren, Bob Dylan.
No, that's not the same thing.
That's not the same thing because that's an entertainment racket. You're saying?
No, I'm saying because nobody knew who Bob Dylan was before he was Bob Dylan, but everybody.
Oh, there
knew
was not a name change because it was one name. I see what you're saying. Like Cassius Clay was famous.
Yeah, he was famous
before he became Muhammad Ali.
Yeah, Lou Alcindor was great before he became.
Was a known actor.
Yeah, I mean, I can't remember who World Be Free was before he became World Be Free, but
that was amazing. That's my favorite. And then they would call him World B. They have World B on the outside.
God, I can't believe I can't think of his name right now. Drive me crazy. I'm Tom Sosnoff. He is Dylan Radigan. This is Truth or Skepticism. That was a fun talk, Dylan. 40 minutes went by really fast. Have a great week, and I will see you next Wednesday.
With pleasure, and I'll see you in an hour and change here with the Overtime Boys.
Ciao.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who is not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What is going on, and welcome back to today's assignment. Today, it's been another volatile day in the market. We had FOMC at 2 o'clock today, but we're going to get into all of that, talk about some directional trading and managing risks and some things just to think about whenever trading that way. But today, it's another Wednesday in the market. We're still alive. We're still intact. Not too much fear so far, Dr. Jim, but how are we doing today? I did see your tweet right on time, 17 minutes before the announcement, but we made it. How are you doing today?
I'm shocked. I'm shocked that we made it.
Shocked.
I mean, we had to endure. I don't know if you saw, but when the number dropped at 2 o'clock, the NASDAQ moved like 3 points, man. I mean, it was a big move. I mean, it was really something. So I'm still not convinced that this is indeed real life, but we'll have to wait and see, if, this turns out to be reality. But yeah, very slow week. I mean, the Fed minutes, pretty much a yawner for the most part. I don't even know what they said, but the market reaction was very muted either direction. So, now there's not much going on tomorrow, not much going on Friday, I don't believe. And so, earnings and whatnot. I think NVIDIA might be next week. If I'm not mistaken, NVIDIA is next week. And then the following week, we have the jobs report. So maybe things will pick up, at that time. But, these are those kinds of markets where they just lull you to sleep. And then the next thing you know, the VIX is 23.
It's a ripper.
So, you never know.
No, I know. I was looking a few minutes past 2:00 Eastern, and then I went to go check. It's funny because I went to go check on Twitter to see what the news was, what was going on. That's when I had seen your post, but I did see it a few minutes after 2:00 Eastern. And I was wondering what the lack of volatility meant. I was like, yo, what was going on? What was said? And then I saw your tweet to reaffirm we did indeed have FOMC at 2:00 Eastern today. But yeah, not much of a move. I do have some positions on that. After we get through these slides, I'll just get your thoughts on. I have some things expiring at the end of the week, and right now we're on the brink for a couple positions, but we'll talk about that here in a little bit. But directional
the market reaction was so slow. It was so muted that I was like, did they release the number? Like, did it come out? Like, it was one of those deals where I'm like, are they late? Like, did they forget to release it or whatever? And so, but it was just so muted that there's just nothing to do.
No, most definitely. We're trading directionally today, Dr. Jim. I am curious, though, how you kind of been managing some of your positions today, but we can circle back around to that conversation when we hop into the platform here. But directional trading, Dr. Jim, do you ever, buy or sell outright futures contracts sometimes? Do you ever have more of a directional opinion, or are you kind of just always hedging on the side of capitalizing on that theta decay? Or is there a Dr. Jim in there that will sometimes go a little bit more directional than usual?
No, definitely. No, absolutely. And I certainly do that. And I think that, it's always really interesting, right? Because like when you trade directionally, you're just, when you think about profitability, right? You think about the ways that you can make money as a derivatives trader. It's going to come from one of three things. It's going to come from direction, it's going to come from time, and it's going to come from volatility. Well, when you're selling premium, all three of those are always working no matter what you do. But when you sell premium, you typically have, more of an emphasis on the time element and more of an emphasis on the volatility element. But if you're going in with like outright futures, like, long NASDAQ, short NASDAQ, long Russell, short Russell, whatever it might be, you're pretty much putting all of your eggs in the direction basket. You could also make a case that you're kind of playing the volatility, maybe playing the back and forth, maybe playing, a big momentous move in one direction or whatever. But you're not really playing the time element. There is no decay on a futures position. That's just outright. And so you just need to keep in mind that, you have these three factors that are going to determine whether or not you make money on a position. How you choose to trade, i.e. short premium, i.e. futures, whatever, you're just shifting the emphasis around, placing a greater emphasis on one kind of at the expense of another. Whether that's good or bad is kind of a longer discussion, but you just have to understand what you're signing up for.
No, most definitely. And, there's a couple points I want to get into, Dr. Jim, before we kind of break down a little bit more about directional trading and managing your risk. Like we know, if we click on a futures contract in the platform, what is the pop going to be? The pop is going to tell you it's going to be a 50% probability of profit. Whenever you're selling a futures contract, buying a futures contract, it's going to price it in that it's going to be a 50% probability. So how do we go about that? Why is that a position that would even be attractive? Why would we want to do something like that? And what are a couple things to focus on if we do have something like a 50% pop when we're trading these futures? Well, one of the things that we have today is focusing on the risk to reward ratio. You might want to think a little bit more about it whenever trading directionally, or if you're trading directionally more regularly, I guess you could say, right? Because there's a 50% probability or 50% probability of profit, you have to rely on maintaining a good risk to reward ratio, right? Because ideally, if we want to aim to a 1 to 2 or higher, which it's just where I kind of have my rule of thumbs at, is trading for at least a 1 to 2 risk to reward. It means for every dollar that you risk, you can aim to gain at least $2. And even if you're right half the time, this can still lead to profit. So whenever we're trading these things directionally, I just have some rules for myself, Dr. Jim. I want to take trades that make sense. And I want to take trades, to where I could potentially be ahead of the curve at the end of a month, at the end of 2 months, at the end of a year, especially trading with these futures contracts. But before we go to the second bullet point, Dr. Jim, Is a risk reward something that you would focus on if you're trading directionally, or what are your thoughts on something like a risk reward? Because I know we can get into other conversations about maybe not having a stop loss, maybe being small enough to where we don't need to get stopped out of a trade and we can wait till it trades into our favor. So where do you kind of stand? What are your thoughts on this first bullet point?
Yeah, so we've had this conversation before, right? And you might remember that I'm kind of on the opposite side of the fence when it comes to this. Yeah, and so I think that this is kind of directional trading, like future stock, whatever. This is kind of like the standard approach to thinking about the risk reward ratio. And I think it's good. I think it's a great reference point. I think it's a great starting point for a lot of traders. I mean, it does take a lot of pressure off when it comes to thinking about, all right, this is a 50-50 proposition. If I can make $2 on my winners for every $1 that I lose on my losers, then that puts me in a pretty good spot. Like I should be able to come out ahead, kind of in the end when that's over. I actually like to take a different approach. So I view this very, very differently, where I'm like, man, rather than trying to stretch out those winners, like rather than trying to go 1 to 2, 1 to 3, 1 to 5, whatever the RR ratio might be for you, what if we approach this in a similar fashion to how we would approach short premium, from the standpoint of, I'm going to sell premium. Let's say I'm going to sell some out of the money strike, right? I'm going to make money, as long as the stock doesn't beat me. I'm going to make money as long as the stock just kind of bounces around in this little range. Man, what if we go in with futures, do the same kind of thing, and just looking to pick up some money kind of in this little range where, we're potentially, okay with risking 3 or 4 or 5 or 6 for the winners that we have, but we get so many winners in the end that we can come out ahead. So it's just that, the reason why I bring that up is not just to share kind of my approach, but also I really think very similar to short premium. Yeah. There's so many ways to be successful at this. So if you're trying one way and it doesn't really jive with you, there's probably another way that you could try.
Yeah, no, most definitely. And I was glad you expanded on that, because there's more than one way to skin a cat. And
I still don't even know the first way, to be honest with you. Like, can I YouTube that?
The first way is the first bullet point right there, Dr. Jim.
I mean, can I YouTube that? Like, can you walk me through how to do that?
We could, but position size, and I know the second bullet point kind of ties into what you were just talking about, Dr. Jim, in terms of position sizing, and being able to hold and not maybe prematurely getting stopped out of trades. But risk management is crucial when dealing with 50-50 probabilities. You can adjust your positions, adjust your size, and to a level to where you're confident. And I think also confident within taking the trade, but also being able to take a confident loss. Maybe if you're using a few contracts, right, you're getting a little bit more emotional because maybe you're oversizing the trade, whatever the case is, just adjust your size to a level to where you're personally comfortable, because somebody might, be risking $100 in a trade and somebody's risk tolerance might be $200, right? We're all kind of different. And I think finding that risk tolerance is important, and position sizing can help you do that. So Dr. Jim, I know you're going to hone down on the idea of position sizing, because I think you say position sizing is the antidote to most trading issues, if I'm not mistaken. I don't want to put words in your mouth, but I feel you lean on that side.
No, that's 100% right. And what's interesting about that is, so we kind of have two different philosophies here, two different schools of thought when it comes to the RR, when it comes to, risk return and kind of thinking about a purely directional trade. But what's interesting is the common denominator across both of them is going to be position size. Like if you're in a situation, especially with the way that I'm viewing things, with the losses being much larger than the winners, but even still, even if you're at a 1 to 3 to 1 to 4, 1 to 5, return to risk ratio, whatever, you still want to make sure that you are small enough to where if you take, 1, 2, or 3 losses in a row, it doesn't put you out of business. Like it doesn't put you in a situation where now you're all of a sudden you've got catastrophic losses that you can't recover from. Like that's not going to be a good scenario for anyone. So position sizing really truly is the antidote to most trading problems. And here it is again as the common denominator amongst, probably every single directional trading philosophy. The position size has to be kind of nailed down tight. It has to be.
No, most definitely. I know kind of everything what we touched on here. In our next slide right here, we actually have a little bit of a graphic to help break down what this would look like visually. So right here,
look
what
at
we
that.
have,
Look at
Dr.
that thing,
Jim.
man.
Yes, there we go. What we have right here, Dr. Jim, is a little table that kind of breaks down our win rate and our risk to reward. And depending on what type of risk to reward you shoot for, and depending on your win weight, if you will be in the negative, positive, or if you're going to be breaking even. So this kind of helps break it down. I know we talk a lot about, 1 to 2 risk to reward, maybe potentially making 2 times the amount of units that we risk. Excuse me. So right here, right, we'll start with the most basic one. We already understand that if we have a one-to-one risk to reward, and we have a 50% probability of profit or a 50% win rate, we're going to break even at a 50% win rate. That kind of makes sense. That one's a little bit more straightforward. Now, if we go to a 1 to 2 risk to reward, maybe, for every 1 unit of risk, we're making 2 units of risk back. We can even have a 40% win rate and still profit. So this just gives us a little better visual of the breakdown when it comes down to your win rate and your risk to reward ratios and what you can kind of expect. It'll help you manage your expectations. That's why I like looking at this visually. But one thing that might kind of catch you off guard is like, you can break even with a 20% win rate, but it's like, what type of risk to reward would you need theoretically, right, to be able to break even at a 20% win rate? And that's going to be a 1 to 4 risk to reward. So again, this is just another visual breakdown just to help manage expectations and how some of these numbers will kind of crunch over the long haul. But I thought this visual would be really interesting to break up and want to get your thoughts on that too, Dr. Jim. Have you seen something like this before?
Yeah, of course. I mean, this is really, really well done, by the way. This is a really nice graphic to visually kind of support, what it is that you're talking about today. I think it's really nice.
Right.
This is kind of, for lack of a better phrase, this is the calling card of the approach where, you win $2 for every dollar you lose. You win $3 for every dollar you lose, etc. I mean, this is the reason why you're doing that. Is that correct? I mean, this is it.
Correct.
This is the reason why you're doing it.
Absolutely. Yeah.
Yeah, right. Because you're looking at this and you're saying, hey, it's direction. It's going to be hard to be correct. Like, I completely agree 100%. So you're like, man, if I can bank more on my winners than on my losers, then I can get away with a much lower win rate and still make a lot of money. Okay. But so could I push back a
Absolutely. Oh, absolutely. It's welcomed always.
So the thing I think that gets lost in here is when you're going for a 1 to any of these really, but this really starts to kind of show itself when you're talking 1 to 3, 1 to 4, 1 to 5, or even higher. There's going to be, and anybody who's traded, me, you, anyone else who's traded knows exactly what I'm talking about when I say this. There's going to be so many scenarios where you don't get 1 to 4. You get 1 to 1.5, 1 to 2, 1 to 2.5. But because your target was 1 to 4, that ends up being something other than the 1 to 4. Maybe it ends up being a scratch. Maybe it ends up being a small loss. Maybe it ends up being a small winner if you scale out, whatever. Like, there's ways around it. Like, I understand that.
Right.
But my point of my approach is it's so difficult. I actually think TA, whatever you're using, it's very hard to find consistent 1 to 4s, 1 to 5s, 1 to 6s. And so, man, maybe there's some opportunity instead of going for those, those Grand Slam home runs. What if we just keep hitting some singles? What if we just keep hitting some doubles? And so that's kind of my approach. I think that, I'm gonna ask you, does it happen often where you have a 1 to 4, 1 to 5 that you were kind of looking at and it comes back against you?
I would say not necessarily. So, for example, in my experience, it's typically.
So you're pushing back on the pushback. This is good.
I am pushing back. I'm pushing back a little bit on the pushback. Yeah, I think that, from my experience, what I would tell myself if I was regularly shooting for a 1 to 5 or a 1 to 6, I would think that's a little bit more of a naive approach to myself from my personal experience, because what I found is if I have a trade where it's a 1 to 6, 1 to 7 risk to reward, 1 to 5 risk to reward, it typically happens because I didn't expect it. I'm typically shooting for something a little bit more modest, like a 1 to 1, a 1 to 2, a 1 to 3. And then the 1 to 5s, 1 to 6, 1 to 7s just kind of happen because the market offers a larger outlier move that I didn't see coming, and then it just happened to work in my favor to where I was able to obtain a 1 to 6 or a 1 to 7. But I'm not typically shooting for that. I'm personally shooting for more of like a 1 to 2, 1 to 3. So I don't usually find myself in a position where maybe I'm up 6 units of risk and I'm aiming for 7, and then it turns around and then maybe I stop out at break even or I get stopped out for a loss. Typically, if I'm up that much on a trade, I'm not gonna hold it. But completely, I've been in trades before where that has happened, and that is probably one of the worst feelings in a trade, is when you're up so much on a trade and it comes out even at break even. It's got to be one of the worst feelings. So I think also from that experience, I've been a little bit more modest when it comes down to the reward, and maybe I'm a little bit more satisfied with securing a 1 to 2 or even a 1 to 3, which in my eyes would be really good.
Okay, so your sweet spot, your sweet spot tends to be where, would you say?
A 1 to 2, 1 to 3. That's the sweet spot.
Right.
That's the sweet spot. From my experience.
No, definitely. And I mean,
right. I know it's all anecdotal based off of, I know others.
But that's all that matters. That's
right.
another thing that drives me insane. If you could allow me a bit of a tangent here.
Oh, of course.
Another thing that drives me insane is just from a research standpoint. People always say in all fields, not just our field. In fact, they probably don't even say it that often in our field. They say it in other fields, where it's like, hey, I don't know if you've ever heard of like the n=1 like fallacy, right? Which is like, hey, your own lived experience, your n=1, right? It's just a data set of 1. It doesn't really matter. It doesn't really mean anything.
Right.
I always find that to be laughable because I'm like, actually, n=1 is the only n that matters to me. That's actually the only n that actually ultimately makes a difference to me. And so it's like, yes, we want to look at consensus. We want to look at, consistency across results. And we want big data sets to drive our thinking, whatever. But then at the end of the day, n=1 is the only n that matters. And so, like, if you have found a 1 to 2, 1 to 3 sweet spot, or even 1 to 1 where you like to live, whatever, sometimes you're able to get 1 to 5, 1 to 6, 1 to 7. Go for it. You're going to have to let me in on your secrets to know when the market's going to give you those 1 to 6s and 1 to 7s.
Yeah.
I would love to know that.
No,
but yeah, n=1 always makes me laugh.
No, yeah, completely. That's a really good point that you bring up. I haven't heard n=1 in a long time until you brought it up right now, Dr. Jim. That jogged my memory.
Oh, yeah.
But no, I actually wanted to jump into the platform here. I took a loss today on NASDAQ, and I want to kind of break that down. Yesterday was a good day, but I want to break down a little bit how I've been looking to manage my risk like a day today. So loss management is kind of the topic of today, but I got a couple positions I want to get your thoughts on, Dr. Jim, and then kind of just share how I've been managing this risk in this portfolio as of late, especially with all this news. I think if I'm not mistaken, there's been a lot of news.
The white background now? Whoa.
I forgot. I went back and I had to switch it up again. I was like,
turn off the lights on those charts, bro.
You remember when I was, I think maybe a year ago, I was playing around with the different settings, playing around with the themes, and kind of getting my own, kind of look going to the platform. You remember that? I think you used to critique it.
Of course, yeah. Well, you keep hiding behind this colorblind thing, which we both know isn't true, and so it's like you got to be something though. Like if you think that looks good, something ain't right. I'll tell you that, because that is very hard to see.
Wait, is it really? Do you like?
Well, not when you zoom in like that. So when you zoom in like that, it's okay.
Right. Well,
but even still, like look at the candles though. You've chosen two colors that are like right next to each other on like the hex numbers.
But
like
I can
the blue and
clearly
they almost
see-
look the same.
I can clearly see one is black and one is blue. I'm colorblind and I could see that.
It's not. See, that's what I'm saying. You're not color anything. If you can see that easily, no, man. You got to have I need like a magenta and a black.
It's called color deficient. I think that's the actual term for it. Color deficient, something along those lines. Like I don't see black and white, but other colors, depending on the shape, will look like completely different colors.
Okay.
But anyways, anyways, Dr. Jim. Anyways, we got a couple positions on in the portfolio. We have a SPY position. This one is 30 days till expiration. We'll most likely be managing this one by next week. Calls are still sitting out of the money. The market has been rallying ever since what I think about an hour after the bell today. The market's been absolutely rallying. So I'm gonna have to be patient for that. QQQ sold two call spreads at the 540 strike. My break even is gonna be sitting at about 541.60 ish. I have a total credit received of about $3.22 on that one. This one expires at the end of the week. These were sitting really pretty this morning, Dr. Jim, but not after an hour from the bell. We've seen a massive rally in the market since then, and then also sitting in the portfolio. Got a little bit of an $80 loss on the micros today on NASDAQ, Dr. Jim. But look at this.
We found a chink in the armor. We found a chink in the armor, man.
Absolutely.
This is the first loss that you've ever shown, I think.
That's true. That is true. And, we'll talk a little bit about, the risk to reward and win rate. But this is a great example.
I'm just saying,
today.
I don't even know what you did there, but I already know that you went for a 1 to 5 and you had a chance to cash it in at 1 to 1. You didn't do it.
Yeah.
That's what happened. You could have had a green trade, man.
I could actually.
I'm only
show you
one man.
exactly
I can only do so much.
Yeah. No. But I got to say, Dr. Jim, right now. Let me see. We were getting short a little bit this morning. It was a couple contracts. We started to get short a couple contracts at around 21,000.
You're still trading with market orders? Oh man,
Bro,
we got to go
Dr.
through this
Jim.
again. No, dude.
Dr. Jim, I was gonna
at
you.
So.
I was gonna at you on Twitter a couple days ago because there was a trade I was looking to get in, and I sent the limit order through, and it just completely leaves me and runs 100 points. And I was about to screenshot it and then tag you and be like, Dr. Jim, this is why I use the market orders. But I gotta say, Dr. Jim, we were looking to get short this morning at around 22,170. I'll kind of show you what I was looking at, and then I'll show you kind of where I managed the trade. But it was about a 19-point loss, right? Excuse me. And yesterday, Dr. Jim, with a couple contracts, I believe we snagged about, let's see, I could do the math if I wanted to, but I believe it was around 70 points. It was around 70, 80 points that we had captured yesterday with a couple contracts, same position size. And then today we got stopped out with 2 contracts with a 17-point loss per contract, where yesterday we had about a 70-ish point profit per contract. So that's kind of that risk to reward at play from today and tomorrow. Because, for example, today, if I would have never cut that trade to the upside, which I cut it at 22,189, if I would have never cut that, I would have been sitting in some deep water today because the market kept rallying, maybe another, from just looking at it, another 50 to 100 points. Let's see, I can give you a visual on where I cut the trade. And this is why I do think, depending on the position size that you're using, it's important to manage that risk because I don't think you can see this, that those lines are probably white. Why you can't see that? I cut the trade.
You're killing me on these.
Yeah, these lines are white. All right.
My man's got for those of you that might be listening to the show today, my man's got a white background and he's got a white marker to annotate his charts.
Hold on.
So we got some invisible ink on this chart where you need ChatGPT to figure out what's going on.
Look at that. I clicked on the invisible line and I was able to change the color.
That's brutal, dude. That's so brutal.
But Dr. Jim right here. So, we ended up cutting the trade at around 22,170. And I think we started a trade around a high of almost 22,300. So I would have been down another 100 to 150 points. And just kind of using this one to make the argument for sometimes it could be useful in my sense to maybe manage those trades a little bit sooner. But then again, maybe the market sells off by the end of the week and I wouldn't have had to worry about even managing that trade, and I could have been a little bit more patient with it. But there's a little bit more of that risk to reward at play. Again, Dr. Jim, it was the $80 loss today, but yesterday we made a few $100, so it's like, I'll take it day by day and, try to manage that risk best as possible. But when it came down to, just trading very directionally, like regularly, like not just once a month, like doing this maybe a couple times a week, 3 times a week, I would say is pretty regularly. Just managing that risk reward has been really helpful and at least been helping my sanity sitting in trades. Cause I don't think I can withstand, where I'm at personally as well. I don't think I can withstand a 200, 300, 400 NASDAQ point drawdown, even with one micro. So I think that's why I err on the side of, managing that risk a little bit ahead of time. But you got any thoughts on that, Dr. Jim?
No, that's fair. And see, that's the type of self-awareness that you need to have.
What's
like if you're gonna be successful, especially with directional trading, you have to have some self-awareness. Because like for me, like I look at it so differently, especially with a short trade at these levels.
Right.
Like if I'm selling the NASDAQ at 22,100 or whatever, right? 22,150. The way I'm looking at it is this. I'm like, all right, now again, nobody knows. I could be dead wrong. So obviously that disclaimer is out there. But the probability that even if I have to withstand 2, 3, 4, 5, 600 points to the upside, the probability that there aren't lower levels at some point fairly soon seems so low to me, or so high to me. How did I say that? we're going to see lower levels. Let me put it really clearly. We're going to see lower levels because it's not like we're sitting at like coming off of a huge crash. Like we're at all-time highs. All-time highs. So like for me looking at this, I'm like, man, it's not like, 22,100 is going to be the lowest level the NASDAQ ever sees again. And then, it's 30,000 and just off to the races. I don't see that as a possibility.
With my look, that'll happen to me, Dr. Jim. With my look,
anything is possible. So I could be dead wrong.
With my luck, we're sitting at 23,000 right now on NASDAQ with my luck. But no, hopefully we get a little bit of a rejection here at these levels, Dr. Jim, because again, I do have these QQQ call spreads that I sold. Again, I sold the 540s on QQQ. Essentially, I'm expressing my opinion through saying I believe the end of week is going to close beneath the all-time highs on NASDAQ. That's essentially what I'm saying by putting this trade on. That's how I'm expressing my opinion on the market for this week, at least for the next couple of days. But that's what we have on there right now. We have the SPY position, again, just being patient with that. Going to have to manage that one by next week. But that's what we got right here, Dr. Jim. Unless you have anything else to add before we hop out today. I know that was really directional trading kind of focused today, but I wanted to touch a little bit on it.
No, it's good. It's good. I think a lot of traders are trading this way. I think a lot of traders want to know how to trade this way. They want to use it as a tool in their portfolios. So, no, I think it's a great discussion. And then next week, I think we have NVIDIA earnings. Wednesday, next week.
Yeah, NVIDIA earnings, that's going to be an interesting one. You kind of still on the semiconductor hype? You think that's kind of fizzling out? Or what are your thoughts on that space?
I don't know, actually. I'll let you know next Wednesday. I don't know.
Yeah. Let us know. That's going to be it for today. Thanks for tuning in with us. That's just a couple more tips on trading directionally, some things to keep front of mind whenever you're doing this. But Dr. Jim, as always, we appreciate you having you here, getting your thoughts and your experience on the topics that we talk about. But that's going to wrap it up for today's assignment. We'll catch you guys next time. Peace.
Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Good afternoon, everybody. Tim Knight here, and we're going to look at some charts together. We got the Fed minutes out. I've never quite understood the importance of those things, and for whatever reason, it seemed to have positive boost to the market. We are green on the ES and the NQ, down a little bit on the RTY. That's a mixed bag. I've got, how many positions do I have? I think 12 positions, and some are up and some are down. It's just a mess. Some new positions I've got are stocks that have just blasted higher recently, and I've finally gotten to zones that I consider appealing. So let's jump in. We begin with a spider, as we always do, and goodness gracious me, we've got a lifetime high on this sucker. There we have it. This was the former lifetime high. We teased it a little bit here, a little higher, and then today we started weak, but it's been climbing pretty much all day, especially after the minutes. So there we have it, lifetime high on the spider. Where she stops, nobody knows. It has been bull market in perpetuity. Overseas, some, I think, interesting exhaustion points for the major futures markets, like, for example, the Hang Seng index futures. I'm using this line as a guide, kind of a line in the sand between the overhead supply and all this mess for the past couple of years. And we've just lunged toward it in recent months, but pretty long in the tooth. And we are seeing a little bit of red right now. And the same can be said, I think, for the Eurostoxx futures. In this instance, even from this great distance, because we're looking at decades and decades of data, you can see this just ferocious spike higher. Interestingly, we're actually lower now than we were a quarter century ago, as you can tell. But this had been ripping higher, almost uninterrupted greens until very recently. So it kind of reminds me of Meta, which had gone up 20 days in a row, fell hard yesterday. And last I looked, it was actually down today as well, in spite of a green in Q. And this one, this is just an example of what I speak of regarding repetition of patterns in charts, because over the course of time, charts express their personalities, and an aspect of that is, do they do anything after a pattern or not? And it's in a way very helpful to see charts like Costco, which don't do anything after a pattern, which defy the pattern. That in itself is a characteristic that's helpful. In this instance, I don't know what gelled when holding does, but it's just a chart. It's just an example of what I'm speaking of. When we had this prior two major rounded tops, each of which were followed by a big tumble, it would suggest that the third formation would do the same. And sure enough, there we have it, lifetime lows. So just an example, an object lesson, what I'm talking about. Well, let's talk about some things people actually have heard of. NVIDIA. Been a bit obsessed with this lately. And this really goes to the point I was making about reaching levels that are intriguing. So this was this tremendous gap here. NVIDIA made worldwide news based on this gap, and it spent the past few weeks clamoring higher, and yesterday sealed that sucker. And we're up a little now, but we're still nicely below yesterday's high. So long as we stay below the sealed gap, that to me is crucial resistance. And as I keep saying, because it's going to be a red letter day, the earnings, which are like 1 week and 1 hour from now, will be a big deal in the market for NVIDIA. But some other items related to semiconductors also are quite interesting. Broadcom, AVGO. I'm impressed that it actually managed to be down a little bit today. It's down about 0.2%, even though semiconductors have been crazy strong today. So good for you, Broadcom. On semiconductor has been annoyingly strong. This had plunged really hard as of a little more than a week ago. So here's the top. And it fell away from that quite hard. And of late, particularly here and especially today, huge gains on this. But you know me in gaps, it's all the same thing. There we are. We're pushing up toward that gap, looking to possibly seal that, or maybe even not. Maybe today's high was it. But long term, it still looks sensational. Short term, the bears have gotten smacked in the face because that was a really big counter-trend rally. But you can see the pattern is, to say it's still intact is an understatement. This is just got counter-trend rally written all over it. which Intel enjoyed yesterday. And I had made mention because everyone was running around screaming about Intel yesterday because of some partnership. And my, not allegation, that sounds too negative, my assertion was that this gap would really be a terminus for any sort of rise and may not even get that far. And that's the case so far. We're down over 5% right now. It's given up, like right in the middle of that bar, it's given up half of yesterday's zany rally. So, because, Intel is not a healthy company. Just look at that. This is not what a healthy stock looks like. It looks like something with extraordinary strategic issues. And if you get a launch like this, where it goes very swiftly higher, by like 50% in a matter of days, it doesn't change the long-term trajectory of the place. So no shock there. But all in all, regarding semiconductors, oh, hello, not there. Get back to where you're going. I won't do my sound effects this time. SMH is really what I'm focused on because this is the composite across the board, and our gap friends just beckoning that price to get up there. It has been, with one exception, just green, 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 green all the way, and there's the gap. I would appreciate if we didn't have to necessarily get that high. I'm kind of tired of these ascents, but I don't get a vote in this. In any case, that gap is very important and has not been violated on SMH. And even a leveraged instrument like SOXL, I forget if it's 1.5x or 2x, but it's leveraged somehow. This is also being quite obedient with respect to the gap, right? Like so. So the semiconductor sector is very interesting right now with respect to that particular chart phenomenon. Staying kind of in the tech theme, IBM, God bless it, showing a little bit of red today. I've got puts on this. I added yesterday to that. We are very close to lifetime highs on this. And I'm even shedding June puts at this point. It's basically September run forward for me at this point. So tons of time on this stuff. But IBM is one of those aforementioned 12 bearish positions. Also, Nucor, kind of an interesting critter here. This was a beautiful head and shoulder. I say was past tense only because we do have some violation of that. We don't have the pure crystal water that we had before. We got a little bit of a piercing into that, so that's a little bit of a shame. But the preponderance of the pattern is still intact, and that might be it. Just like we got a little bit of a violation of the gap yesterday with NVIDIA, it's not the end of the world. And so that's still looking interesting for NUE. And a new one for me, which I haven't touched in a coon's age, as we say in Louisiana, is Supermicro, SMCI. I hate for you to think gaps are the only thing I follow, but it's kind of a big deal these days for me. So the gap, let's be honest chartists here. Let's lay that down exactly where it belongs. The gap itself is right like so. So that was 86 cents over here. The high was, we're talking pennies. It's just like a pixel higher than that. So among friends, we can accept that. But this is what I was hoping for and looking for. Let's not jump the gun. What I'm hoping for is at this point, it'll start sinking. But to get in, this is the level I was hoping for. And so SMCI has sealed the gap after months of effort in this respect. And nicely, we have also tagged and violated a little bit this descending trend line. What I'm trying to say is that I think this is a crackerjack time to be going bearish on SMCI, especially when it was like way up in the ionosphere here. I added some to my position at pretty good prices there. So fingers crossed, looking like a beauty of a setup. Maple Bear. We've said bullish things about this in the past. It's a younger stock. It doesn't have much history to it, but it's doing nicely. We're at a lifetime high on this. This is better known as Instacart. And another one I said good things about here is Compass, COMP. And that is, it's not at lifetime highs because it really got slammed during the brief 2022 bear market, but it is up quite handsomely from the levels we've been discussing. We first talked about it when it was emerging from that green tinted zone, and it's been doing a series of higher highs and just kind of flatlined here, but it's been making good progress, and today in particular getting a good rally on that. And in sharp contrast to this, a bearish item, which I did not fully partake in, is Wingstop. We've talked about this before too. WING. This one, more gaps. There's the gap here. And today you're getting slammed. I don't know if they had earnings out or what have you, but down about 15% toward a new multi-year low. So Wingstop doing very, very well on the short side. As far as Tesla goes, having a badly needed green day, but I believe we have switched from an uptrend to a downtrend on this because we had this maniacal lift that peaked at almost 490 back in mid-December. And Fibonacci's, see, I'm off the gaps now. We're about Fibonacci's at this point. Those are ruling the roost. And so I believe that we're one to be long this. The closer we get to this zone here, around 385 or so, the more prudent it might be to get out. And I think subsequent to that, we've got a real chance of some sinkage down to almost 300. So I think we're in a downtrend on that one. Its competitor Rivian, and this kind of goes to what I was saying earlier about personalities. These bullish setups just don't tend to pan out. They might so briefly here and here a little bit, but they just sputter away. And that's endemic, I think, to the Rivian personality. So I think we'll have the same thing going. Okay, got a couple minutes. Yay. Commodities, these are looking like the way to go. These are looking, you and I used to look at DBC every day. I haven't seen it for months now, but this has really emerged from its channel. It's got a nice base here. We're pushing higher in this. Basically, anything you can hold in your hand, oil, I guess you could try, it's looking better and better. And precious metals, of course, are part of that, but commodities looking quite strong. And specifically, one we've talked about a lot is natural gas, our old cycle. I look at thousands of charts. This is the only one that seems to line up nicely with a sine wave. But boy, does it work nicely so far. I mean, we're talking years and years and years of reliable upward downward motion, and it is definitely in a bull run right now. It's got plenty to go. So natural gas doing great, and we can see this again today. We had a double-digit gain in oil yesterday. Same deal. Getting a nice gain in oil today. And oh gosh, I'm out of time. That's a good place to end it. We'll end it on a boil. So I'll be here tomorrow. Hope you're doing all right. And there's just little in the way of economic news or anything like that. So we'll just let the chips fall where they may. I'll see you on Thursday. Bye-bye.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
right together, spin it around. Yup. And you want to clap. And then strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, leave, shuffle, rock, shimmy, lasso.
this is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got got the bag. You got everything.
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God.
You watched the debate, you knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a
in order to
blank
see it later?
VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised, Sadlov. It's been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was they had the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Soz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Ring the alarm, hey, ring the alarm. Boys, turn up the charm. Listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for the last call here on Tasty Live. Even the S&P is kind of quiet, up 12 handles, 877,000 cars have traded today. Pretty light volume, pretty tight range. NASDAQ up 2, basically unchanged. Russell down 6, basically unchanged. And the Dow up 36, doing the same. Volatility in by 23 cents to 1690 or so, trading near its lows of the day, and bonds are unchanged, 114.21, but they're closer to their highs of the day, which are 114.25. Bitcoin been up $2,500 all day. It still is on the futures, 96,500 and change. Oil up 34 cents. It too had a fairly tight range, sitting right there in the middle of its range at 72.17. Gold is off of its highs, off of its lows, pretty mid-range, only up $2.40. Sadnoff, nat gas is your big mover, up almost 7% again. When does nat gas die? Go.
First of all, doesn't it seem weird that Bitcoin's up a lot and Coinbase and MSTR are both down big for the second straight day?
Yeah, Coin is down $6 and MSTR was down double digits, wasn't it?
It's like down 15 or something.
Yeah, down 15. Yeah. Totally agree.
Yeah,
Because it
nat
was down
gas
yesterday too. It wasn't like a bucker yesterday.
Nat gas, man, I fought it all day. I tried to hang in there. I couldn't.
I don't blame you. 7% move is huge.
Yeah, I know. 2 days in a row. They got me, little bastards.
Not as big as this 10% move that you pointed out to me in Palantir, down almost $13. Sadov, that stock traded all the way up to $125 today. It's $112 right now.
Yeah, it was super weird. I was sitting here and I'm like, what the hell just happened to my equity? It dropped, I have a position on in Palantir. It's not even that big. I have a position on and I was looking at it. I'm looking at my stuff and I'm like, what the hell just happened? And yeah, the stock just fell out of bed. I don't know what to do here going to the close. I think I'm going to just recenter. Yeah, crazy move,
good
huh?
IV rank of 60. Yes, crazy move. I totally agree. Palantir has a good IV rank of 68. Markets could be 15, 20 cents wide.
Yeah, it's not the greatest. And
not the greatest trading vehicle, you're saying.
Oh, hold on. Let me turn my volume on. Sound on. I did just get short. I got short the market, SPOO's up 14 on that last rally just a second ago, because I thought that they would, they goosed them up so much on the close yesterday that I thought they would hit them on the close today. And so I sold.
Yeah, you sold E-mini S&P. Sold E-mini S&Ps about $5 higher than where they are right now at 61.
Yeah, I have not covered yet. Yeah, Palantir, crazy move. Stock dropped I don't even know how much it was up, maybe $3. So it dropped $16. And SMCI was up 8. And I had to make an adjustment in there because you took me down yesterday. And then it dropped.
All you got to do is hold on, Sadnov. If it's up $2, it's perfect. Just leave it alone. You're talking about SMCI?
I know.
Listen, if you're going to get into the trades that I tell you to get into, you can't butcher them, at the first sight of,
I didn't. I waited all day, and then I figured, I might as well just be smart here.
Well, evidently you didn't wait all day.
I thought I'd butterfly it off and be a hero. Didn't quite work. Other than that,
my Taiwanese sources just told me Nvidia has some of the lowest volume in weeks. 2 million options have traded in Nvidia.
That doesn't seem like a lot for what's been going on in there. Earnings tonight, very small plays for us. I
got some new ones for you.
I did a small, tiny little trade in Walmart. Sold some naked calls. I munched on them. Sold some strangles. I munched on them. Nothing in Walmart. And a very small trade I put on in Toast.
Toast?
TOST.
Who cares about that? Don't you got Baba and Shaq?
Oh, I don't have Shaq. I have Baba. Is Baba? Oh yeah, Baba. Baba was good to us today. Baba came in a little bit.
Down $1.16. Ivy ranked 73.
Yeah, what do you think here?
Markets are good too. They're good. They're 6-7 cents wide.
Yeah, the calls got crushed in Baba today. Puts didn't do anything. Puts didn't do anything. The calls got crushed.
Baba's on a little bit of a tear. Plenty of open interest across all the board here.
Yeah, what does the new subscriber do?
Baba expected move of $8 tonight.
$8. $8. Make you holler. What do you want to do?
I don't know. I don't know. I know you're bullish, or you were bullish on Baba. It just had too much of a run for me. I don't know, Sadnov. I can't get behind it.
I can appreciate that, actually. I have the 110. What the hell do I have on? 110, 165. No, that's in March. Feb, I have nothing. I was short some premium in Feb today all day. It worked. I took it off. What do you think for Feb? Where's the risk in Baba? The upside, right? Has to be. Stock's been hyperbolic.
I don't know about the risk being the upside here, Tom. And it has been hyperbolic. I don't know.
There's only 2 days left. There's only 2 days left. There can't be any downside risk, right?
Only 2 days left. What could happen?
Right. Right.
Just about an $8 expected move, like I told you. Dollar wide strikes, pick your poison.
I honestly don't know what to do in here. 2 days left to go. What?
You can abstain.
Yeah, I think I'm going to. I'm going to just be short a couple out of the money puts and nothing else. That's it.
You sold the 14.5 puts. How'd you get to that? By selling the 14 and the 15 puts.
Yeah, just have a little. I don't know. I got some March strangles on. I'm okay, Baba.
How about Shaq?
Nah. Does it trade at all?
It's not bad. Down $4. It's on its butt. It's got a good IB rank of 76. Taking a look at the markets, I mean, if you go to March, there's not a lot of open interest. 10-cent wide markets, maybe a little bit wider.
What's the stock? What does the stock trade for?
$111 and change, down $4 today.
Man, my last Shake Shack meal was so bad. I don't know. I'm tainted.
You know what? I can't with you. How about Carvana, CVNA?
Ooh, where's that trading?
Where do you think?
I'm going to say 120. I have no idea.
$283, Sadnov. Stock hasn't had a downtick since the beginning of the year. That's right, Sadnov. Started the year somewhere around 200, and it's 283.
CVNA. I guess I haven't looked at it in a long time.
$34 expected move over the last 2 days. That's a huge move.
Oh my God. The volatility in there is front month is 216.
It's big.
It's big by big. Yeah, you got it. You got to trade this. This one you got to trade. You just got to sell.
You could go 2 times the expected move here and get $3 in 2 days.
No, it's 2 times the expected move. No. $1.20.
$70.
Yeah.
Okay, brings you down to what?
It's 90 cents.
What are you looking at, the 210s?
No, 2 times the expected move. It's 280. The expected move is 285. It's $70, 255. It takes you it's about 95 cents on the calls.
I was looking at the puts and the calls together, and I was saying you can get around $3 if you go $5 outside the 2 times the expected move.
Right. 2 times the expected move is $70. 70 plus 285 is 355. Those calls are 95 cents. That's rich for 2 days.
Yeah, and the puts are trading the same. I was just doing both sides. Sorry.
Oh, got it. Anyway, I just sold the calls at 95 cents. That I like.
Right, because this stock never goes higher.
No, this stock goes a lot higher, but I'd rather collect 95 cents. And
I like your direction. I like your directional plays. I don't care if you're right or wrong. I like your directional plays for earnings. It's okay. You got no argument from me.
Yeah. So okay. Well, now you got me in Carvana. That's the only one I got risk on now.
You care about Cake? CAKE?
No. What is Cake?
Oh, come on. That's one of your favorite stores. You know that. Cheesecake Factory.
Oh no.
You're a Cheesecake Factory boy. You know that. You're always good for a nice cheesecake.
No.
You're more traditional, just a plain, maybe some strawberries, that's it.
No. Toast, Carvana. What else did you say the other one? Oh, Walmart. All right.
And
No,
Baba, and Baba.
I got Baba ready. I'm all locked and loaded, Sparky.
Okay.
Let's see. What else do we got here? Yeah, that's it. I'm good. Good. So
you did a lot.
I thought they might hit them a little into the close, but they did not. They hit my P&L a little into the close, so something must have got ugly.
Couple of stocks came off of their highs. I mean, you mentioned Palantir.
Palantir is down more now. It's down 15. And ooh, ugly. You ugly. Yeah, this is all a Palantir kind of sell-off. I think I can't find anything else.
It's wiping out the last week or so, going back to $109 Palantir.
Yeah. Took away my money. Go find my
Tesla
money.
up $6 or $7. Netflix up $5. Microsoft up $5. Those stocks have been getting beaten up the last couple of days. Have come back a little bit.
Yeah, those stocks have been strong all day, and they haven't gone anywhere. It's been a very
Meta's down $14. MSTR down $15.
Meta hasn't had an uptick all day. MSTR hasn't had an uptick all day. Looks like a little rotation today. I guess.
Hard to say. Volatility's still in. I mean, it hasn't gotten out of its own way. We really didn't have any movement here today, Tom.
There wasn't much movement, but I traded more for some reason. I don't know why. Maybe we got some trades on it. What's your assumption? And maybe I just did more stuff today, but
that's a good thing.
Yeah. No, I'm betting on the close today that they're going to Dewey, Wackham, and Howe. Taking my Dewey, Wackham, and Howe shot after yesterday's 15-point rally on the close. I figured today's got to be good for a 5-point sell-off, or not.
Well, you still got about 12 minutes, so you might get it.
A lot of time. I know. A lot of time. Anyway, let's see. Do we have any announcements? No, nothing really. Just nothing, except if you haven't signed up at tastylive.com/events, Jim Schultz, this Saturday we're doing a digital collectible. So if you want to sign up for it, you've only got 2 days left. That's the big thing.
2 days, don't say you haven't been warned.
Yeah, don't say. You've been warned. There you go.
There you go. Beginner trader, do it.
tastylive.com/events. You got to sign up before Saturday morning. We're playing it at 10 o'clock Saturday morning. You do not want to miss this. Dr. Jimmy Schultz. Do you think anybody calls him Jimmy?
Not to his face. They'd be afraid.
Yeah, I'd be scared. Dr. Jim Schultz. I like that. Anyway, that's all we got for. Oh yeah, we got this too.
Oh no, and you got your partnership here with Threadless.
It's not really a partnership, but we're now open, the Tasty Trade store, tastytrade.threadless.com. If you would like to buy anything tasty, you can buy it now at the store. It's the first time we've ever had a store. All net proceeds will be donated to One Tail at a Time. It's a Chicago-based charity for homeless pets. It's a shelter. And we've supported it for a long time, and we're very happy to donate to them. So One Tail at a Time. We are not taking a penny from any of these sales.
I like it. Good job, Andrew.
All right. What else do we got here? Taking a look at my watch list just to see if there's anything that's kind of, you mentioned natural gas, crazy move today.
It is a crazy move.
Bonds, actually a pretty good move today. They were down 15 pre-market, and they've rallied all the way back to unchanged. Looking at some other stocks here, just going kind of, again, I wouldn't say limping into the close today, but not really doing much.
What do you think of this volatility this year so far? We're in the middle of February, Thomas, and volatility, I mean, we had 1 or 2 spikes, and that's really been about it. We've had plenty of new news to digest, plenty of findings, new administration, the whole thing. Pretty complacent for all of the chatter and the noise. You agree?
Market likes market likes a little wall of worry, likes a little uncertainty, likes a little confusion. Market doesn't like it when everything is copacetic, everything is perfect, and everything is all laid out. What do we say? When all the pieces, when we have all the pieces together.
I'm going to listen to you. I don't know what we say, but I'm going to listen to you butcher it right now. You are like the Yogi Berra of financial, talk waves. I mean, you really butcher sayings like nobody's business.
All the pieces have come together. There you go.
together.
So,
okay.
Do you know what I hate? Speaking of all the pieces come together, you know what drives me crazy more than anything else? Is
what?
Is like a jigsaw puzzle. Like those crazy jigsaw puzzles. Like
I don't see you being a big jigsaw guy.
No, I hate them. But like my wife,
Like
and
you
my
never like when you were a kid, you never did a jigsaw puzzle and then put like the white paste on it to save it. You never did that. Shellac or anything like that. You never did that, right?
Never ever. But my wife and my daughter.
You never completed a jigsaw puzzle.
No,
right?
no. But my wife and my daughter, they will sit there and they will do those puzzles like with 500 pieces. It's like all black. You can't even tell the difference because it's a challenge. And they think it's like, they want to finish them. Yeah. I'll always take like a piece out and put it in my pocket.
So really what you're saying is your wife and daughter just found something that you won't participate in and you'll go in the other room and they can get rid of you. And then the two of them can talk and have a good time.
Kind of, because I have no interest in crossword puzzles. Yes. I mean, in jigsaw puzzles. All right. Well, I'm not loving this close here today. I don't know what happened.
It hasn't done anything. It's moved $1. I mean, it has to.
I know, but I don't know what happened. It cost me some money. I think you took some of my money away. And the S&Ps didn't go down. I had it all planned out. They were going to go down and close down on the day. I had that all planned out. It didn't happen.
Are you going to cover those? You're right there. You're just about $1 winner.
No, I'm not covering.
Don't turn a winner into a loser, Sadnoff.
I am not covering. I am a stubborn prick, and I'm not covering.
Yes, you are. Yes, you are.
Yes. Huh? So anyway, so tomorrow we got a packed day on the network. Hopefully you'll be able to join us. We've got Trades from the research team in the morning. Then we've got Mr. Victor Jones himself coming on for a little Hear Me Out. Then Tony and I have a very good market measure put together by the team. So we got a lot of stuff tomorrow. Should be good. You know what, though, Sosnoff? You're talking about tomorrow. You're forgetting a special event that's happening today. Today?
That's right. The Bat is joining the overtime crew, Sosnoff. That's right. I'm going to bring in my man Ilya right now if I can. That's right. Ilya, how are you?
That looks like Chris.
The Bat is classing up. What?
That's Chris.
Oh, sorry. I'm going to bring in Chris right now. Thank you. Sorry. Ilya, I'm filling in for Ilya is what I meant to say.
Of course you did. Of course you did. Yeah.
That's what I meant.
Chris is the Italian kid. Ilya's the Russian kid.
One's slightly better looking than the other one.
And where's Mr. Radigan?
He's on Dylan time.
Oh. He's got the Victor flu. Is what he's got. He's got. Chris, it's okay, Chris.
When Dylan comes on,
it only hurts for a second.
When Dylan comes on today, make sure you tell him that his skin looks really good. He was very proud of it earlier today when I did a podcast with him. So you might want to mention it to him without me having to say something, and then see if he's very appreciative. See,
did he get a facial or something?
Say, hey, Dylan, you doing something with your skin? It looks great.
It's glowing. Are you pregnant?
All right, boys. Well, Chris, what do you make of this?
We're gonna have fun at the top of the hour, Chris. On overtime. It's gonna be a good time.
Is it just the two of you?
I'll be on my best behavior.
Is it just the two of you?
And Dylan.
Oh, okay. Mm-hmm. The twos of you, I was gonna say. All right, Chris, what do you make of this? Anything?
Yeah, the FOMC minutes came out today, and that helped things. I thought the one interesting note in there was that they said that they want to slow down their balance sheet runoff, and both bonds and stocks jumped. So, look, stocks are going to be closing. SPY's going to be closing at all-time highs, so are the triple Qs. What's not to like, Tom?
Well, the funny thing about all that is that they didn't really get the bonds rallied back a little bit, but they didn't really get them up on the day. They got the notes up. The notes are about 10 ticks higher than they were this morning. We bought them at 22, and now they're 31.5. So the notes had a nice rally, but bonds, on the other hand, they got back to unchanged, and that's about it.
That's good enough on a day like today. They were down pretty heavy this morning with those 25% tariff talks. But look, vol is staying low in bonds. I think it's a really difficult trade to jump into to justify anything right now. Mm-hmm. So, Tom, as much as
I couldn't agree with you more. In fact, if you take natural gas out of the equation, there's not a lot of premium in any of the futures options unless you go to some of the unless you go to some of the ones like the currencies, which you can't make money at. It's hard to make money unless you're directional anyway. So what I have found over the course of the last week or two is that the best money that we've made in the last 2 weeks has been on earnings plays, just evaporating.
Interesting. Yeah. Well, earnings, we've talked about this on Let Me Explain, but companies are seeing if they're performing poorly, they're getting crushed, but vol's getting taken across the board. And so ultimately, if you're selling vol around these earnings reports, it's been a very, very favorable environment. For me, I'm not trading it that way, but I've just been staying long stocks and can't be unhappy with the close here, Mr. Sosnoff, despite your positioning.
I'm a little unhappy because the Russell is my only long and it's actually down. So it didn't do what I needed it to do today. The Russell's been weak all day, though. It never has had an uptick the whole day.
It was strongest yesterday. It's been that kind of thing.
Yeah, a little bit. I mean, at the end of the day, they rallied the S&Ps more than the Russell. But the Russell was the strongest yesterday. It's by far the weakest today. And the rest of the indices, like I said, they upticked them so much yesterday. I thought they would downtick them on the close today. They didn't really do anything. So, little not necessarily misread. Oh, here's Mr. Radigan.
I just have this hollow, empty feeling, and maybe because Ilya's not here to celebrate the all-time highs, so it's like they're not really happening.
Sounds like it's a little bit of maybe psychosomatic.
No, I think it's that the world likes a big bad bully, and everybody's like, all right, finally, no more Mr. Nice Guy. We're just taking.
What are you talking about? He's cutting defense. What big bad bully? He came out and said he's going to cut defense.
I'm talking about Sosnoff. I'm not talking about...
Sosnoff. Yeah, he's a big bad bully, 100%. I'm with you on that one. 100%, Dylan. You're my man. I love you again. Dylan, man, what's going on with you? You look like 5 years younger or something. You do some
Italian skincare, bro. I got an Italian skincare regime. I was already promising it to Sosnoff for his birthday. See that, Tom? Tony noticed.
Yeah, he looks good.
I'm gonna hook you up. I got Italian skincare going.
Hook me up. Don't
can
leave me out
set you
here
up.
hanging.
I got the. I'm gonna make a special trip to Chicago just for you.
Hey, Radigan.
I love it.
Radigan, you're so easy. You're so easy.
I'm gonna have one of my couriers.
When you're doing your eyes at night before you go to bed, you got to get in there with the stem cells. It works real nice.
I'm going to have one of my couriers come out to Milan next week for Fashion Week. Meet you out there. You could give it to her, and she'll bring it back home for me.
The sneaker company's doing its first spring preview, day 2. You're invited.
I love it. Thank you, Mr. Radigan. Appreciate it. Well, we can talk more about that on Overtime in a minute, Dylan, because I'm going to be joining you guys with Chris, Ilya, and Dylan Radigan. Sound good to you guys? Sounds good to me, too.
Brother.
Nope.
Right.
No Sosnoff either. Peace.
Thank God.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Two and a half Italians walk into a bar. It is Wednesday, February 19th, 2025. This is Overtime. I'm your host, Chris Vecchio, in New York. We have Tony Battista joining us for the first time in Chicago. Dylan Radigan in Milan to finish up this hour. Futures market closes at the top. If you're on YouTube, come join us on the website, the platform, tastylive.com. See what we're all about. If you're already on the website and the platform, come over to the YouTube chat. Tell us what you're trading today, what you think of that weird close. Market bumped lower by about 5 or 6 points there, right as the market reaches 4 p.m. Eastern. But that's not really the talk of the town here, guys. The talk of the town is how good Dylan Radigan's skin looks. Dylan, do you think the market
Listen,
feels
I got
as
an
good
Italian
as you look?
skincare company for you. You're looking to make a couple of bucks. I got no conflict of interest. I have no financial interest. I'm just an advocate. So if you're looking for a recommendation, you just hit me on Twitter after the show. I'll point you in the right direction. Okay, Vecchio?
I could use it. I know that. Vecchio's still young enough.
You're going to get a personal care package, Tony. I got you.
Thank you, brother. Appreciate it.
I will take one too. I see my future in both of you guys.
I'll tell you real quick. It's the rose petal face wash. Oh, so nice. And then it's like a GH. I don't even know. It's some sort of set of letters. It's related to a stem cell. And then it's like the stem cells of a baby Italian goat, I think. And then they put that. And
no animals were harmed in the making of this product.
No, the animals are fine at the end. It's okay.
Most certainly harmed.
Anyway,
for Dylan's youth serum.
Save it for later.
Tony, if you told me that Robinhood brought Dylan on the show to talk about rose petal moisturizer to kill attendance, I wouldn't be shocked at this point in time. But
you think this is some sort of a betrayal of the institution?
But my question is that tee up is to say, like, markets here are pretty much closing at or near all-time highs. SPY certainly did. Triple Q certainly did. Dylan, what's the reason why we're finally, trudging through the muck here and poking into new all-time highs after several months of just churning sideways?
The end of global conflict as we know it. I mean, it's a changing. People can be as critical as they want to be, but at the end of the day, less war is good for peace, is good for markets. And I think that what you're seeing rhetorically and practically with the normalization of diplomatic relations between the United States and Russia, setting aside whatever other personal or political or diplomatic issues may be, I believe that normalizing relations with Russia is a step away from escalated global conflict, and that a step away from escalated global conflict is net positive for global economic activity, and I think the stock market reflects it.
Tony, do you think?
Wait, I'm going to give you that. I'm going to give you that, Dylan. But you got to go to the other side too. War is good for the market too, because 6 months ago, when we were full on and everybody was still doing their thing, then we're at market highs. It's just a cyclical rotation of things. That's really what it comes down to. I'm sorry, Chris. Go ahead.
But what does that mean? What does that mean? Cyclical rotation of things. I mean, that's a lot.
Well, I mean, here you saw it in Palantir today. It's been a stock that's been going nuts to the upside, and you get one. Hey, we're going to cut back by 8%. Big deal on defense by Trump today, and then you got Palantir sell off 10-15 handles and then rally back a little bit. I mean, you just go from oil-related stocks into consumer stocks now into something else. There's a market everywhere all the time. You could spin it any way you want, but really what is going on in this market, you're right. It likes the slop. It likes the complacency. Nothing's changed. Everybody still has their rights. It's business as usual. Until it's not, and we don't know when that day comes. So until that day comes, you got to play it as business as usual.
Yeah, defense contractors today. There's a few different ETFs that track these kind of things, but Shield is one of them. SHLD. I suppose that's a good name for a defense contractor ETF. Down 1.23%. Palantir, you mentioned, Tony, was off by 10.08%, and they've had just a remarkable run. It's one of the few companies that have just exploded higher here in recent weeks. Including a name like Hims. Tony, I think this stock is really hurting your son because he keeps sending me messages early in the morning about how he needs Hims and Carvana to go down. This is more of a question about like market mechanics, I suppose. But when you see something that was trading in more of a, kind of a consolidative range or meandering around for a few months like a Hims or a Palantir, and then it goes exponential like it has over the past few weeks.
Yeah.
How do you approach that when the vol shoots up and you reflexively want to just sell the calls?
Yeah, Hims is it's acting like a short squeeze to me. I mean, these last 3-4 days, they don't end well, but they're certainly real painful on the way there. And if you have an existing position already that brings you some short delta, even if you started out as delta neutral, you got to buy the guts and sell the wings again, or change it to a call ratio spread if you still want to lean with a little bit of short delta, or change it to a diagonal spread, something that has defined risk to it. You just mentioned Hims. When you look at that front month vol with 2 days to go, it's around 180 or whatever, and back month vol is under 100. So there are intelligent trades to make in a stock like this that's gone parabolic to one side, but you're probably going to have to do it with some sort of defined risk. You still can have plenty of risk on, but defined risk. The hard part about this stock is if you have an existing trade. If you have an existing trade, one of the hardest things to do is close it and open something else, and I think that's what you have to do.
Yeah, sometimes you're just going to have to take the L.
Very hard thing for me to do. Very hard thing, I think, for anybody to do. New trader or old trader. We like to stick with things. I mean, because you want to be right. It's just human nature.
No, it is. We're all very loss averse. And, the studies on traders show that if we can gain $10 or lose 20, that's basically the break even point, right?
Yep.
But hey, like if I'd rather almost not lose 20 than to make 10. And,
earnings in 5 days in Hims too, February 24th.
Yeah, February 24th, right around the corner. Carvana has earnings coming up today after the close, so hopefully let's get that here. I haven't seen those yet.
It's $279. I don't think it's come out yet. Maybe it has. It's down $3 or $4. On a $30 some odd expected move. I don't think Carvana's come out yet.
No, I don't think it's come out yet either. Dylan, you're our big Superglide fan. The Nasdaq's been holding up here and pushing higher. We're a few weeks removed from DeepSeek Monday and the transition from phase 1 to phase 2, but the semiconductors have roared back. Should we no longer be concerned about the chat CCP threat?
You can never not be concerned. I think it's less about are you concerned and what's going on with the semis. And I like to look at Meta, because I just think that of the AI names, Meta is actually the one that's the best positioned to exploit both the adoption, but also the second generation. Now, the interesting thing is you can see in that Meta chart that as NVIDIA's come back, Meta's come in a touch, whatever. I don't know if that's 2 days worth of action or whatever it is, but it's a reversal from the big post DeepSeek rally. So certainly if you look at the NVIDIA bump and the Meta reversal, it would suggest that anxiety about DeepSeek is, or anxiety that DeepSeek has torpedoed the CapEx value of the first phase of AI is less concerning today than it was a week ago. I also wonder the degree to which the Grok, whatever V3 Grok hype has benefited the sort of OG AI names as evidence of the fact that whatever DeepSeek may be an interesting carnival trick, but at the end of the day, it's the big multi-hundred billion trillion dollar infrastructure play that is dependent on the NVIDIA H100 supercluster that's going to ultimately set the agenda, and that the Grok action is where the action is. I still would rather own Meta than NVIDIA right now if it has an AI play.
So you bring up Grok 3, and I want to revisit that immediately here as one of my points of note for overtime today, because we were discussing this as well recently, and I think there needs to be some correction on my part, if only because the results that were shared the other day seem now perhaps less accurate given independent testers. Artificial Analysis, which is a great follow on X, analysis at the end is ANLYS. They are the firm that put out the DeepSeek V3 and the DeepSeek R1 testing model results that ultimately helped spark this, wave of confusion and fear back at the end of January. So where do they put Grok 3? These test results were released last night. Their Grok 3 reasoning beta is basically on par with ChatGPT 03, and their Grok 3 non-reasoning model is basically on par with O1 Mini. Why do these things matter? Why do we care about them? Well, it would mean Grok 3 is the best non-reasoning model in the market right now, and it would mean the Grok 3 reasoning model is perhaps the second best one, closer to 03 than DeepSeek R1 is. And it goes to show, I think, the bigger picture story there, Dylan, Tony, is that if you have the money and you can buy the infrastructure, you have the compute to build a successful model very, very quickly. Now, what comes after that, who knows? But Elon Musk just started doing this 18 months ago, and the only way he got there was by building this supercluster with 100,000 GPUs, soon to be 200K. They're planning one that's 5 times bigger. That's fantastic. And Satya Nadella, the CEO of Microsoft, is out here today's session talking about what this means for the world of compute. When you have AI that can go out there and create its own agents, those agents are creating other programs and tasks for other agents to do, new software being written, the turtles all the way down. And you need scale and scale and scale and scale to build for that kind of automated future on a computational basis. So, if tech stocks are, benefiting, broadly speaking, from the AI trade, that's part and parcel to the price action we've seen. It's hard to doubt the narrative right now. I mean, Tony, you're not much of a narrative guy. You look at the prices and what the options market's telling you. Mm-hmm. What do you make of the price action this week, though, given the fact that it's the second half of February with OPEX around the corner?
Sure.
Do you find that the market should be a little bit stuck the way that it has been the past 2 days?
No, I didn't think it would be stuck the way it is. I thought we'd have a lot more back and forth action than we've had. I didn't think volatility would be near its lows. It is expiration week. It doesn't mean too much these days, but you and Tom have both talked about it being kind of a weakish week. But really, that's the last day, Thursday into Friday. So I'm not unhappy with what's going on, but I'm a little I'm glad that Tesla sold off it and we're able to buy a little bit of a dip in there. I'm glad that Meta sold off its highs. I can't stand Zuckerberg. I think if Tom can hate Elon, I can hate Zuckerberg. But I wanted to ask you both, because you were just talking about Grok and DeepSeek. Dylan, did you download DeepSeek?
No.
Okay, Chris,
I'm a terrible. I don't download anything. You know what I use? I use Bing.
I remember when I met you. You had like basically an analog phone. You had
I'm a late adopter, Tony. I'm a late adopter. I use Bing. Okay.
Okay, that's fine.
I use that. Just so you understand, my level of AI utilization is Bing, and I do use the grok a little bit on the Twitter.
Yeah, but I don't think. But I think you're actually a perfect example for what I'm going to get to in a moment, and I'll tell you why. Because you wouldn't download DeepSeek, and Christopher, did you download DeepSeek?
Asterisk through Perplexity, right? You can run a jailbroken that's not the CCP version because it's the model sits in U.S. servers through Perplexity AI. So yes,
it's like
I have
a mirror of
experimented with-
DeepSeek. You're saying it's a mirrored version.
Okay,
Yeah,
so you went around the back end because you were worried about what was going on at DeepSeek to get DeepSeek. Great example of what I'm going to come up with too. Dylan Radigan, you have Twitter, you have X, correct? I talk to you all the time on X.
It is my predominant social media application as a consumer of information.
And a news source for you too, I would assume?
It is my primary news source.
It has Grok on there. Like
that's the only location where I use Grok.
That's the accessibility to it is what's going to make it so popular. Chris, you're looking at it from the back end about how good it is.
So you're saying distribution is the future of AI, not performance.
150%. And if you can do it from a quote unquote trusted source, I mean, if the man can have your social security number, he certainly can have your AI ability. Sure, why not? That's all you need, and that's what's going to make it good. Whether it's a 67 versus a 70 or a 60 versus a 70, you can get it. It's right there. You can use it. It's easy and it's trusted. End of story. It becomes number one.
That's a really interesting point. I mean, if you think about ChatGPT and then the wrapper that's Microsoft Copilot around it, the two of them cumulatively have about 150 million users per day. According to ChatGPT's deep research model, Twitter, as of last month, had 245 million active users worldwide per day. So, you talk about Grok 3 being able to bootstrap on all the information that's coming through X. That's a big pool of data that it can train on.
Yep, 100%.
Mostly slop. I would argue that the content on X has become sloppier. The bots have died down a little bit in the past few weeks, which, maybe I miss them. But really, I mean, Grok has a chance to now it's a top model, though, already. It's sitting near the frontier. And is it perfect? No, just like ChatGPT is not perfect, nor is Claude 3.5 Sonnet or DeepSeek. But we see that there's importance here to this compute, and so the DeepSeek gaps in these markets have closed. Dylan, now that they've closed, you were saying something at the end of last call there that the markets are liking what they're seeing in the geopolitical stage. I know there's probably a good deal of people out there saying, we're betraying Ukraine. The market doesn't seem to care about that. The market seems to have a bigger picture in mind right now. What is that big picture?
You're asking me, or
I'm
is that
asking
rhetorical, or is that?
No, I'm asking
the big picture is
what is the big picture?
A global peace between China, Russia, and the United States, which I'm skeptical that it's going to happen. But that is the carrot that's being hung. The optimistic interpretation of this moment in history is that you have the three most powerful nuclear armed nations in the world posturing to reduce the collective nuclear threat. The cynical view, and that's a win for humanity, full stop, and it's certainly for the economy. The cynical view is any version of 100 interpretations of gamesmanship and manipulation and posturing, and because the other version is, the United States is attempting to manipulate Russia to create it. The United States is concerned about the proximity of Russia and China as an alliance relative to the United States, and the real enemy of the United States, or the real adversary of the United States, is China. It's not Russia. And that China is the weak third pawn in a battle between America and China. And so if Russia is the buddy of China because they have the physical, geographic incentive, and then also recent shared self-interest, if you will, relative to resources and oil and all that jazz, that it's a strategic move by the United States to bring Russia away from China and in the direction of the United States as a way to weaken China's position. That's the most credible, cynical interpretation of the maneuver, which is not necessarily eliminate the more optimistic view, which is move away from global nuclear holocaust. Now, here's the really cynical version of it, which is if Ukraine had nukes, they wouldn't be in this situation. North Korea would never be in this situation because they do have nukes. And now if you're a country that's not one of the big three, get your nukes out, because if you don't get your nukes out, no one's going to protect you. And Ukraine is a cautionary tale. So now everybody's got to get a nuke. Because
you get a nuke.
Yeah, because Ukraine gave up their nukes in exchange for protection. The protection wasn't there when they needed it, which proves that if you do one of these mamby-pamby deals where you give up your nukes, there ain't nobody, the cavalry's not coming when you need it. So you best get your nukes out when you can. And we're going to be all nuked up as a result. That's the most cynical interpretation.
I asked ChatGPT what kind of companies would benefit from Dylan's thesis of nuclear weapons proliferation, and ChatGPT tells me this is a highly sensitive and controversial topic with significant ethical, lethal, legal,
Grok answers anything.
Security implications. They're like, instead of focusing on companies that might benefit from proliferation, it's more constructive to consider the industries that would work towards non-proliferation, and provided me a list of those. So Grok 3 may be the answer for this, but Dylan, always thinking in the trader's perspective, what is the trade there? That is perhaps why for the past 2 days, I've seen some people in the chat saying, what do we do with LMT? Right? Lockheed Martin here. I have a hard time wrapping my head around this. Europe just does not have the capacity right now to field a standing army on its own. It does not have the weapons manufacturers to build up the armament that it needs on its own. And one of Trump's proposals is that the U.S. security umbrella will remain there if you buy American. That may not be how I would conduct policy, Dylan, Tony, maybe you guys would or would not the other way, but the fact matters, this is the world we're living in. And so I can't see how Germany, a deindustrialized Germany, is all of a sudden going to flip the switch and be able to fill the gap if it wants to maintain this front in Eastern Europe. So, Tony, this is like catching a falling knife. It's 102.1 IBR in LMT, but it would be one of the companies that, yeah, the budget cuts are coming, yada, yada, yada. Maybe the worst is over.
How about this? I'm sorry. I've been talking to Grok over here. I got a new idea.
Oh, God, go ahead.
Crypto's a big thing. I heard about it. I don't know if you heard. It's going to be a thing.
It's been around the block.
AI apparently also a thing.
Yeah. What monster are you creating?
More conservative. How do I describe a political environment that's a little bit less that's evolving in a different way? I'll let everybody decide to have their adjectives. And that a prime beneficiary of the new political environment plus the AI plus the crypto is just nuclear power. It doesn't have to be nuclear weapons. But if there's ever a time to get long nuclear power derivative trades, because there's not the anti-nuke power political factions are less powerful, and electricity demand is, spiraling higher.
Yeah, I think that's kind of been the play even leading into this administration, hasn't it? I mean, that's something that.
No. I mean, obviously, yes. It's just whether the new administrative regime, the whole deregulation vibe, the whole let the dogs run free vibes, more easier permitting.
Yeah, I mean, it makes sense if we're not to get political here, but if we're making sense again, if we're making sense again, your argument makes sense. Like Lockheed Martin, markets aren't great in either one of those products. So both of them for me have been something that I haven't traded. I mean, I don't like trading bonds. I don't like trading commodities. So my world is a lot smaller than a lot of people's. I don't like trading currencies that much. I don't like the tick size in there. I don't like the small movement in there. I can't get a feel for the market. So I try to stay away. I try to stay away from those and stay more into the equity plays. I mean, getting back to Palantir, I was reading that the CEO wants to sell 1.2 billion shares of stock or notional value of stock. I don't know for sure. I didn't read it well enough, but I mean, that's another reason for the stock to go lower. I read another article where only insiders were selling stock at PLTR, but PLTR hasn't had a downtick in 2 weeks. So is that information even good information, right? I mean, maybe it's good today, but it wasn't good for the last 2 weeks. So for me, you just really got to kind of trade what's there and in front of you. Going with the why of things makes it a lot harder for me. Chris, Ilya, Dylan, you do a much better job of that. I like to listen to what you have to say and then try to come up with something for that. I don't have an original idea. Like, I really don't. Like, the market gives me my ideas. Tom gives me my ideas. You guys give me my ideas, and I go from there, and I make a small assumption.
When you say this is what I've never understood when these big floor traders, these really big deal, big famous floor traders like yourself, kind of swagger into the room with your sort of false humility. You're like, what do I know? I don't know. I don't even know. I can't even tell my left shoe, my right shoe. I don't know. What do I know? I just do what's in front of me.
That's true.
I just trade what's there.
That's right. Yes.
So where I come from, upstate New York, they call that bullshit. Okay.
Okay.
See.
Okay.
Just to be clear.
So I like to be clear.
So when you say you trade what's in front of you, or you trade what's there, what's in front of you? What's in front of you going into tomorrow? What's there right now? What do you see that's there?
Sure. Like in SMCI, which was rallying big on Tuesday, I did a call ratio spread in there because it had upside call skew, which means further out of the money calls are extremely expensive relative to out of the money puts. So I bought an $18 wide call spread for free. And SMCI
because the deep out of the money call was so rich, it paid for everything.
Because the far out of the money calls, not deep in the money, far out of the money call, out of
the money call.
Yep.
So you sold the way out of the money call because it was so rich that it paid for your whole operation.
Pretty much. And and the stock had to make new highs. It's closer to lows than highs. It had to go up to $130. The stock is, $60. It was $55 when I put it on. And by new highs, I mean highs in the last calendar year. I mean, I can't go back into the dawn of time. I mean, I only care about it's a 30-day window for me. That's the type of trade I make. That's the type of thing I would have done in Palantir. But to go back to my argument, I might have made that same trade a week or two ago in Palantir, and I'd be underwater today. Now, maybe after this 10-point move, I'd be back to even, but that's what I would do. I trade what's in front of me.
In terms of looking, but what I'm interested in was when your radar of looking for what's in front of you, you're filtering for distortions or unusual pricing of implied volatility.
I'm looking for what volatility is doing, and then I'm trying to find a strategy that kind of piggybacks what it's doing. So volatility, if you got call skew, I'll give you another example in Tesla. Tesla last week was going straight down. Now, what usually happens to volatility in an equity, not in an ETF, in an equity, when it goes down? Volatility usually goes down with it because it goes down. In equities, volatility usually goes down, like in a Tesla or a Meta or a Netflix. What volatility expands on the way up because all the euphoria and all the, hey, I want to own this stock. People want to buy options. Volatility goes up on the way up in equities, and it goes up on the way down in ETFs like SPY and Qs because everybody's worried about the downside. They say, I have to have downside protection, so they bid up puts. Tesla, just a couple of days ago, you can see by that little spike up there about 3 or 4 days ago when it was making new lows, volatility actually started upticking. So I said to myself, okay, Tesla's gotten killed. It usually only goes higher. Volatility usually goes lower when the stock goes lower. It's now having a little bit of an uptick. I want to do a strategy with long delta in Tesla. So that's what I did on the follow page for all those reasons. It's exactly what I wrote in the description. Just see I don't know, but I'm just trading what's in front of me. Those are two examples of trading what's in front of me. Now, you somebody could understand or believe they have an assumption why Tesla turned around. Maybe somebody who follows charts, like a Tim Knight, might say, hey, it filled this gap, or this is a triple bottom, or something else like that. And that's how they get to their conclusion. It doesn't matter how you get to your conclusion, as long as you do something that's logical, that you believe in. And if you believe in the noise of, hey, going back to your idea of nuclear power, if you think that that's the reason why to do it, great. Let's look for a product or a stock that hasn't participated in it and look to buy that. Like that's the assumption that I want to go with. That's trading in front of me.
Okay.
Speaking of trading what's in front of you, Jim Cramer tweets out, Palantir will be back. Tony.
Okay, that's the end of Palantir as we know it. You can now, I don't want to get on him. I've actually met him. Dylan, you may not know this. When you were on CNBC, I was actually also ran to do a show in there with Options Action. I was the fourth alternate to your partners there.
They're lost, Tony. They're lost. They're too bad for them, sir.
Thank you.
Too bad for them.
Thank you. I appreciate it. I think they were better. They were more eloquent speakers than I was. So I think they won pretty easily.
Bad for them.
But Jim's been having a hard run lately when he starts doing these things, when he puts it out there like this. And he really is the type of guy that likes to, buy high and sell higher. You know what I mean? Kind of thing. And when you get a turnaround on a stock like Palantir, it'll be really interesting to see how it behaves in the next 3 or 4 days. If it doesn't immediately bounce back, you could have seen the top in Palantir, at least the velocity to the move in Palantir to the upside. It may go sideways for quite some time, but the upside or that euphoria that we had is over if it doesn't regain its highs.
Yeah, Kramer's a big Eagles fan. He said the Eagles are going to win. The Eagles won. That's kind of thrown my whole, is the Kramer curse broken?
Yeah.
Right? Is he no longer inverse Kramer? What do I do here? So I don't know what to do with that. But yeah, it is this is kind of like a top piercing moment. And from that technician perspective, just a word of caution. We saw this recently, right? That's an outside engulfing bar right at the high, which means it's a key reversal. That does signal a top. It's really difficult to get bulled up into the new highs here at the 72.8 IVR, right? We may be looking at a bunch of chop here. And it comes on the back of that defense spending news. A new House Appropriations bill is coming around the corner. We have some changes in where the money's going to be flowing, but it looks like $4.5 trillion of new debt. Dylan, is this, I guess, speaks to the Doge initiative. I'm watching and following the trackers. Polymarket actually right now is running a Doge tracker, which a Doge savings tracker, which is fairly useful if you want to cut through the noise of everything going on, right? Forget all the tweets. Right now, $55 billion, according to Polymarket, from the math that they've been doing behind the scenes. $55 billion in savings is not a lot compared to $4.5 trillion of debt. Should we not be worried about the government spending stopping anytime soon? That's supposed to be a deflationary impulse to markets, Mr. Radigan?
Try that again. Try that one more time.
Government spending looks like it's going to continue. Only $55 billion in savings from Doge, according to Polymarket thus far. And they're tracking this behind the scenes, looking through all the data that's being produced, because, of course, there are betting markets around it.
Would you rather not have the $55 billion and just have the spending?
So this is the conversation I keep getting back and forth with Victor, and I think we're talking past each other on this. I, as a trader, only care about this through the lens of, is the government spending more money or less money moving forward? Because if they're spending more money, that tends to boost asset prices. And if they're going to be spending a little bit of less money, that could bring down asset prices.
Fair enough. But would you answer my question?
No. So right now, Doge, it looks like it's not saving a lot of money because it's $55 billion against $4.5 trillion of new debt. So that's the government's going to spend still. This is, I think actually Alex Karp, Palantir said it today. We should we shouldn't want our taxpayer dollars going to waste. Who's for wasting our own money? What is that about? What? No, we should all want an efficient government. But
so I'll give you the problem that they're going to run into. Okay. And it's currencies. And again, I don't understand them that well, and you understand them a lot better than me. So help me here. Maybe I have it wrong. maybe I have it right. When Trump first did this in his first presidency, you had a dollar that wasn't as strong as it is right now. Like the dollar is extremely strong right now. So you were able to kind of offset a little bit of inflation with such a strong dollar. I don't think you're going to be able to keep the dollar higher the way it is now. And you're going to have the spending, and that's what you're going to get to see a little bit more inflation. Do I have that correct? Like, does that make sense? I mean, I think that's the canary in the coal mine, that he doesn't have the market in the currencies that he had in the very beginning of his first 4 years for the policies that he might use if they're exactly the same this 4 years.
Right. And like back then, the Federal Reserve was already tilting into cutting. And so they're cutting, and then the dollar's weakening. So while he's, raising tariffs, is it really hurting corporate earnings? No, because like 61% of S&P 500 revenues come from abroad for the Mag 7 companies. And so a weaker dollar helps them. Right. And so you don't see a stock market that falls down. But at this juncture, right, the dollar is actually very, very strong. Right. And if we're going to have these tariffs, the Fed is not cutting rates this time, which is a huge difference, right? And like the trajectory of which way interest rates are going from the Fed is a big determining factor. Right. And if all these other countries are going to see weaker economies because they're now shut off from the U.S. consumer to an extent, that means the dollar probably stays strong. Right. I actually don't know how it's going to work out, but that's what the Fed minute said today. But yeah, I mean, Tony, like as a trader, I have my own political personal beliefs about what should be cut, what shouldn't be cut. Macro level is the government still spending a lot of money. That's the only answer we need. And the
government always spends money. That's what moves the world.
But I think that's the point, right? Like we've been told.
But we've been worrying about the budget for 50 years.
And it never comes home to roost.
Never comes home to roost. So why are we worrying about it now?
Exactly. Anybody who ever talks about the budget is to me somebody who's not serious.
Yeah, I agree. 100%.
You only talk about the budget when it's politically convenient for you in that moment. And when it's not politically convenient, you don't talk about it, because budgets are irrelevant in the United States, utterly and absolutely, which is why there's no reason to reconcile tax revenue with expenditures. The whole thing is a manipulation that is a way to extract taxation from the poorest and the middle class and the upper middle class, even the W-2 class, I'll call them. And in the meantime, create massive tax giveaways to the capital gains class. Regardless, the budget, and the reason the budget doesn't matter is because the dollar is a reserve currency. And so the entire thing is an illusion up until the currency ultimately takes a hit, which is an abstract future moment, which is a derivative of not of our own currency, but of an alternative emerging, which would require geopolitical events that are unimaginable at this time.
Yeah. I mean, I think that's kind of right. Like these things don't really matter for the market is where I'm landing right now. Through the Biden years, when we had these continuing resolutions, it just meant that spending continued along its current track. So the market said, okay, the government's still going to be pumping a lot of money, no problem for us. And that's what it looks like right now. So, as someone who, and we've talked before, Dylan, like, oh, if we have significant spending cuts, then is that something that could help with bonds? Well, if there's less government spending, that's less growth. So that takes the growth premium out of the curve, right? That could be good for bonds. So we got to keep an eye on this story if we want to be directionally long bonds. I just don't see the narrative pulling together the way that would justify having a trade predicated on that possibility of an outcome right now. That bill will apparently get a House vote tomorrow, so we should be keeping an eye on that. I suppose somewhat tangentially here, guys, what's going on with Bitcoin and crypto generally speaking? Tony, this has gone nowhere for weeks. Usually we think about like Bitcoin being the high beta NASDAQ. What do you make of this?
Yeah, nowhere fast. And I think Tom mentioned it, how Coin over the last couple of days hasn't really participated in the same realm that Bitcoin has. Like Coin's actually been even weaker than Bitcoin has. Bitcoin going nowhere, coin kind of going to the low end of its range. I think last time we were together, I mentioned to you how I thought Bitcoin had seen its shining moment for this short period of time here. The next 3, 6, maybe year. I think all of the ETFs, I think all of the noise from the administration about how good cryptocurrency is going to be and Bitcoin and everything else that they're embracing it. It seems like when they really talk about these things, it does not make new highs or have the boom that it almost seems like a pump and dump environment to me. And I think Bitcoin's going to get a little bit weaker. So I don't know about coin itself, the stock, but Bitcoin, MSTR, I think they got a little bit of rough sales to go for the next 3 to 6 months at least.
Why do you think that?
Because again, Dylan, I'll trade what's in front of me. Give me the environment for Bitcoin. It's phenomenal. I mean, better these past 3-4 months with this administration than it was the last 3 or 4 years with the last administration, right? I mean,
best of all time.
That's my news for you. That's my if it's all out already and everybody talks about it every day, it's too old, it's too long in the tooth. I look at it as the play is done. I think the velocity to the upside is done in Bitcoin for the short period of time. I'm not putting a line in the sand and saying this is done. I own some Bitcoin myself. I don't own as much as I have in the past. I've lightened up, but I think it's too much good news. It's just too much good news. The market likes a little bit of a wall of worry. Too much good news here in Bitcoin. Too much good news.
Would you go with MSTR puts or some sort of negative directional trade on MSTR, or you just get out of? I
don't have a position in MSTR. Thankfully, the markets are way too wide in there. I would have gotten killed over the last year.
Mm-hmm. Oh yeah, MSTR is a tough thing to trade right now. But outside of MSTR as a Bitcoin name or crypto name, generally speaking, I can't help but notice that these intermediaries, like if you want Bitcoin right now and you don't want to have your own wallet, you could just buy iBit. Why even go into coin? Why even go to get a proxy like Riot, for example? So when crypto's going up, these things are going up too, but not as much. And when we're moving sideways to lower in BTC and ETH, these things are falling a little bit harder. I don't have any positions in coin, Riot, any of MicroStrategy, soon to be just called Strategy. But I don't think these are great vehicles to, quite frankly, trade if I'm looking for Bitcoin exposure. I would just go to the Bitcoin itself. iBit is right there. It's highly liquid. There's Bitcoin futures. There's Tasty Crypto, right? So many options.
Yeah, you're right.
MicroStrategy also, just one last thing, like this Bitcoin yield play that he's doing. Yeah, if the market wants to keep giving him, like letting him short $1 to buy 3 back, like for his shareholders, he has to do that every day of the week. But like, is that if you want the Bitcoin exposure, just trade the crypto itself. Don't mess with Michael Saylor.
I agree with you. I agree with you there, 100%.
Yeah, there are better ways to skin that cat. So guys, we look at this market here as we go into the final 15 minutes. Mostly a green day, not necessarily in the bigger names in the market, but a lot of solid distribution here across the board. When we take a look at the various sector performance, we like to say we track 25 here on overtime. Not that many were in the red here today. Those that were in the red, 1, 2, 3, 4, 5. We'll call it 10 in the red, 1 unchanged, and that leaves 14 on the board as in the green. Top performer, healthcare, XLV. And XLV. And
another product that's a tough one for me. I mean,
right. And the big name in there is UNH. So I suppose that's the place you could look. They announced potential for layoffs, job cuts. People tend to like when companies spend less money on things. Tony, please don't get any ideas about me or Dylan in upcoming reviews. What do you think about UNH? Obviously, it's been in the news a lot. It still has sustained higher volatility. It feels like a Boeing market from last year with all the negative headlines. But again, how are you seeing this market in front of you, given that it's the largest name in, say, the Dow?
Yeah, I've traded UNH from time to time. It has earnings coming out in April. I think the middle of April. Some of the out of the money calls and puts markets get a little bit wide there. It's a $500 stock, so I'm always kind of looking for a defined risk trade. So if I could sell a little bit, I like to sell UNH put spreads as just as a small play more than selling call spreads at this juncture. I don't know. To me, UNH is a fringe player at best, but a nice wide put spread. They trade kind of by appointment. You got to go $10, $20 wide. You can get about $3 at around the 20-ish delta. If you look at like March or April options, I would probably stay away from April because of earnings and stay in March with 30 days to go. So for me, I'm a little bit of and not because the stock is up $10 today, because the stock has gone down yesterday and the day before that actually gapped down pretty good. But I would look to sell put spreads on a down move in UNH. I think it's probably seen its worst for the time being.
Yeah, the market's in a bunch of support, and I stand corrected. I didn't recognize Goldman Sachs' recent game. They have now become the largest component of the Dow Jones, which banks are on an absolute fire here. BKX, the KBW Bank Index, is just a stone throws away from a new all-time high. XLF is basically already there right now. I mean, Dylan, is this the era of deregulation? Is that what this is all about? Are banks just
No, I mean, yes, it's about deregulation, but it's not what it's all about. I think it's all about an era of or a moment, I should say, of optimism for economic activity that is supported by activity in technology, activity in energy, activity. You're getting all the deregulation creates more activity in energy, creates more velocity in technology. It creates more velocity in real estate. It creates more velocity in insurance. And all of those things create, and then you have the deregulation that then supports the actual velocity in finance. And so I think it's too simplistic to say, oh, well, there's more leverage coming into the financial markets. And because there's more leverage coming into the financial markets, the banks are going higher. I think that the banks going higher is a broader sentiment to the overall sense of expedited permitting and a heightened level of economic activity that transcends the banking sector itself. And the KRE has a nice thing to slap up in front of us, because I do think that the real estate markets in general are among the areas of the world that will benefit from a real estate developer president who's advocating for expedited permitting and less bureaucracy.
Yeah, you mentioned that there's permitting getting out of the way. There was something big that happened yesterday. Again, if you're a nerd like me and pay attention to this stuff, the White House decided to take a step back from an administrative ruling related to the CEQ framework for implementing NEPA. NEPA is the framework that everyone loves to hate if you're a developer. It was the regulations first granted by Jimmy Carter in 1977. It is basically the maximum pressure that the administration can achieve in moving forward with permitting reform without going through an act of Congress. So if we think about various projects that have struggled to get off the ground in recent years, if they're data centers, if they're new power facilities, if it's permitting for building out the electrical grid, forget nuclear or natural gas, but actual transmission lines, some of that stuff now can move forward a little bit more quickly, which, again, depending upon where you sit, you may like, you may hate, but that is now the world we're living in here. So, guys, I guess the question is, what are we doing in the second half of this week? We have Thursday, we have Friday coming up around the corner. We have OPEX coming up right here, Tony. Markets are a little bit softer here after hours, 61.55 in ES. How are you approaching the second half of this shortened holiday week?
Yeah, Carvana came out down at expected move, down around $30. I don't think that's going to move the market that much here. The broader market, what you're talking about here.
Your son's going to be very happy, though.
Is he? That's right. You said he needed it lower. He needed Carvana, and what was the other one? Did you say Palantir also?
Hims. He said he needed Carvana at zero to break even. So
right. He's got a little way to go.
A little bit more.
Volatility seems low. /VX under $17. Every time we have a downtick in the market, it doesn't lift its head up. If volatility doesn't lift its head up, again, Dylan, trading what's in front of me. If volatility doesn't lift its head up, then you can't have any extended down move. I would key on /VX. I like watching /VX. I like watching /VX when it goes higher and the market is going lower and then it stops. It gives you about an hour usually before the market kind of turns around and gives you a little bit of a play to the upside, or if you're looking to nibble on some stock that's gotten beaten up that you've kind of missed in the past. So for me, I think for the rest of the week, it looks like it's going to, it's setting up. I think the public call, which Sadov would call me right now, is to say more of the same. Nothing's on the horizon. I'm going to say volatility is a little bit lower. You might even be surprised with a little bit of an upward move here in the market for the expiration that usually goes to the downside.
It feels like everyone came into this week expecting some semblance of softness, even me. Like, I'm going to stay long, but I'm fully aware that this is a week where things could go sideways. You don't really trade the commodities much. Do you trade any of the individual names like FCX or
SPX?
FCX or like a Freeport McMoRan or like a BHP?
No, I haven't traded Freeport since I was on the floor of the CBOE. Got to go back to about 1986 to 93 or so.
That's a few years ago.
It's a few years ago. Yes.
Yeah. Time is moving forward here quickly. And like that. Yeah,
you had stocks like Netflix that's been a leader in the market here. Trade down to 1,025 earlier today. It's back up to 1,040 and change, actually up on the day. Meta stayed a little bit weaker. Apple's kind of been a non-event here. But even when these stocks were going lower on yesterday and today, the market chugged along like the rest of the market put it on its back. I don't see there's nothing on the horizon that I see that's going to shake anything right now. Not this week.
Yeah, equal-weighted S&P leads the pack today, outperforming SPY. Dylan, you and me are more of the commodity-centric folks in this room here. What do you think of this move?
My thing is I look at the Russia peace play. I say that somewhat tongue-in-cheek, I guess, but I do have to wonder about an oil short, and I do have to wonder about a Dubai long position. I still just think you go back to, we've been jabbering for a few months about the Russian, peace trade. And Dubai being the mega winner, which the chart probably already has it. India being the mega loser, the chart looks like it probably has it. If anything, on the buy the rumor, sell the news, maybe you're actually buying India here and selling Dubai after all this obvious anticipation thereof. I do wonder if you're getting short oil, though.
Yeah, Tony, we've had a thesis here for the past few months since the election that in a world where there is an end to the Russia-Ukraine war, the neutral intermediary states that have served as finance hubs over the past years would actually see expedited growth, because all of this money that's been trapped in Europe, thanks to the sanctions, is absolutely going to leave European shores once it's frozen. Russians aren't going to trust these European governments to not lock up their funds ever again. Right. So where's the money going to go? It's going to go to the places like Turkey, right? Istanbul. It's going to go to the UAE, Dubai. And then on the flip side, the countries that have made off really well because they've been the intermediaries for the trade as a Russian pass-through, Russia's no longer going to need them as a pass-through. So India would be the flip side of this, and their equity market actually has been hurt pretty badly since the elections over the past few weeks. They're up a touch here today, 0.38%, but the ETF is down from 54 to about 49.75 now. So we'll call it a 10% move. And we're seeing things like that play out. So consistent with that, we're trying to figure out then what happens with oil, because if the sanctions are gone and all the supply is coming back into the market, does it mean that the market is going to see all the supply being sold at market prices now, as opposed to, say, at $50 a barrel? Or does it mean that there's way much oversupply coming in and oil is going to drop down into a midpoint between the shadow fleets and the real ones? It's not your way of talking about the market, but this is like a theme that we've been talking through here for like the past 4 months.
No, but I like it to go back to the whole commodity and currency theme that we gave, that maybe these tariffs aren't going to have the best effect as they had 4 years ago when he first kind of in his first administration, when he mentioned it, because the dollar is where it is. If you get oil lower, that's money straight to the consumer's pocket every week. Because listen, there's no better way that everybody gets in their car. This is America. We all drive everywhere. If it costs you $25 a week instead of $50 a week, that's $25 straight to your pocket every week. That's $100 a month. If you can get oil lower, as he has touted many times in the past, that could be a little bit of a boom for not only, him, but policies that he projects. Again, just playing devil's advocate here. I would love to see oil lower just as a consumer. I think everybody wants to see any commodity that we use lower. Nat gas, I got to heat my pool this year. I don't want to see nat gas where it is right now. I mean, everybody's selfish in their own ways.
I would prefer to, yes, they just refilled my oil tank today, but thankfully I was able to lock in the price 2 weeks ago for today's delivery. So I avoided this big uptick here. That feels pretty good. You mentioned gas prices. Gas prices have been stable. Everyone's lower gas prices. We've been kind of just trading around the RBH5 contract. Unfortunately, not going to find an options market here. But in terms of just an indicator, if we think about inflation trades, which way the bond market's going to move, gas prices have been stable. They're sitting right at $3.164 nationwide. A month ago, they were $3.12. A year ago, they were $3.279 for regular. That's according to AAA. So they've been stable, right? Would we like them lower? Of course. But they have been stable here. So that is something that is maybe helping bonds. Tony, while we wrap this up, you and I found ourselves on opposite ends of gold recently. I've been staying long. I know that you saw a move higher and sold some calls. It feels like we've both been right to an extent because the market hasn't.
No, you win.
I mean, I was gonna say like you've been like selling some upside here, and the market hasn't done anything in like 5 or 6 days. So like how are you approaching this now?
It's bullshit. I'll tell you what it is. It's bullshit. They're just making me feel like I sold the top and I can hang in here, which I have hung in there right now. I'm still down a couple of dollars on my trade, but I feel good, which means I'm about to get my keister handed to me here in the coming days. I would love to see gold lower because I have a short position in gold.
That's it. Dylan, we're replacing the US dollar with Bitcoin and gold. Are you getting on board?
I moved to Italy.
All right. Well, with that, overtime is out of
euros.
Time. But you still get paid in U.S. dollars. That's very smart, sir. Yeah, right? Yeah, you move to a foreign country where the currency's weakening. You're good, You're good, Overtime's out of time for this Wednesday, February 19th, 2025. We'll be back, of course, after this with a video on demand of Macro Money. I'm on later today with Victor Jones for The Price of Truth in about an hour, so be sure to come back then. So for our star fill-in, Tony Batista in Chicago, and our usual friend, Dylan Radigan in Milan, I've been your mediocre host, Chris Vecchio in New York. We'll see you soon. Good luck trading.
Thank you so much for having me.
Thanks, Tony.
What a year it has been. 2024 has obviously been a year of many, many headlines, tons of market volatility, explosive moves for a whole host of financial markets, and it now winds up on a quiet week with not much macro to speak of and a holiday in the middle for most global markets. So what we're going to do here on Macro Money is look ahead to what is coming for 2025. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is first, we will review how the year has progressed so far. Take a look at some almost over statistics for market performance, and then see how things begin to look as we enter the next calendar year. So this is the performance year to date. This is December the 23rd that we are looking at this 2024. So not quite the full year, but almost certainly, and comparing it to 2023. So we can see stocks on the whole had another year and a year of similar performance in 2023 versus 2024. Looking at the S&P 500, NASDAQ, for all of everybody's screaming and stomping about its outperformance, it's actually done less well this year than last, though of course still a very impressive rise of nearly 28%. Risk sentiment at the other end of the spectrum getting a big boost, looking at Bitcoin up 120% as compared with the prior year's 157 almost. So a bit of a slowdown there, but certainly a dramatic increase again. And that speaking to the risk appetite on display in stock markets, but of course amplified by a less liquid speculative assets volatility profile. The interesting thing here happening in the meat of the table, though, so we can see yields basically unchanged at the front end, but a touch higher on a year when the Fed is actually cutting interest rates. The 2-year up 2.3% on last year. That's most likely because, of course, speculation for rate cuts was already well underway toward the end of last year. And this year we got just about the rate cuts we were expecting. So yields are even a touch higher. The 10-year showing a much more significant rise. So rates at the longer end of the curve steeply higher by comparison, 18.8%, almost 19%. Curiously, in that environment, the dollar is stronger. Euro down 5.7%. The yen, the most interest rate sensitive of the bunch, down 10.4%, even as the Bank of Japan started raising rates, the only major central bank to do so. And even stranger still, against an environment where yields are higher and the dollar is stronger, gold up 26.8, almost 27%. This is an asset that hates a stronger dollar, hates higher yields because it is a natural foil for fiat currency, and it yields nothing. So when interest rates go up, gold is typically on the receiving end of selling pressure. Not this year, though. There's an interesting recharging here happening, and the mix of assets here seemingly telling us an interesting story. Crude oil, before we go on here, down for the second consecutive year, albeit less so, and that's despite ongoing geopolitical stress. This telling us that perhaps that geopolitical stress, not much of a disruptor for crude oil markets beyond general media headlines. And so the implications probably limited now that geopolitical risk seems biased to be more contained going into 2025 versus less at the beginning of the previous year. The situation in the Middle East, the situation in the Russia-Ukraine theater seemingly not inspiring any kind of concern for crude oil, and it's marching to the beat of its own drum, and that beat is leading it a touch lower. But the story in stocks, coupled with the story in rates, coupled with the story in currencies and gold, tells an interesting tale. It tells a story of a robust U.S. economy, which despite Fed rate cuts has driven up yields because economic activity has demanded that rates be higher, especially down at the longer end of the curve. The dollar has continued to benefit from those higher yields as its yield profile against other currencies has looked more attractive. And gold has seemingly found a reason to go up, disconnected from geopolitics, because, of course, if it was a haven and if it was behaving as one, it would show up in crude oil gains. That, of course, the chief geopolitical risk on the board this year. And clearly, if oil doesn't care, why should gold? And indeed, gold is up with stock markets. Not much of a haven then. But gold seems to have found its support in the situation happening in China. They've bought a ton for their reserve account. They have resumed buying in November after a pause from April. And that's been an important reason why gold has managed to hold up, even as the dollar has strengthened, even as yields have gone up. But that increase in yields and that stronger dollar with stronger stocks seems to speak to the very impressive performance of the U.S. economy. As we look here, we can see as of December, the U.S. economy raging higher. The performance here being estimated by PMI numbers. They're more timely than GDP. We can see here that toward the end of the year, the composite index, which takes in both manufacturing and services, it's moving aggressively to the top right side of the chart. As a matter of fact, that is the fastest growth that we have seen in the U.S. since March of 2022. So a very significant acceleration here. As ever, these PMI numbers work around a center line of 50, where that's neutral. Above 50 is growth, below 50 is contraction. Manufacturing, we can see, is still in contraction, albeit at a modest speed. The further you go under 50, the faster the contraction. The further you go above 50, the faster the growth. So we can see a very buoyant service sector is pulling the U.S. economy higher, and slight contraction in manufacturing is not holding it back. That ostensibly helps to explain how you get very strong stock markets, you get higher yields and a stronger dollar, even as the Fed cuts rates. But when we look at the situation globally, we find something much more circumspect. Take a look from the beginning of this year for the global PMI numbers that include the US, of course, but also the other economies. And what we find is we haven't done a whole lot. The composite index here, only very little change. There was a pop in the first half of the year. That pop has since fizzled. And so the pace of economic growth is just about where we started the year. It has seemingly stopped improving. And that's because the global service sector has taken quite a few steps back since the middle of the year. And manufacturing, although it was much worse earlier than it is now, it seemingly has returned back to the neutral reading of 50. It nevertheless remains downbeat the world over. So what's going on here? Well, we see here, of course, that the U.S. is mainly powered by its service sector, and we know that most of U.S. imports, that is, from the world at large, are on the good side. Services are mainly furnished by domestic firms. So a lot of this boom is staying inside the U.S. and not spilling over, even to very close proximity, very integrated economies like Canada. And so this is why the global picture looks much more anemic than the U.S. one. Now, global GDP growth is mainly dependent on three core economies. The U.S. is, of course, the biggest one. Then there is the Eurozone and China. We can see here that the remaining 42%, to those three economies, 58%, are mainly vendors that depend on demand from the former three. So think Canada and the U.S., or Mexico and the U.S. Think Southeast Asia, or the commodity exporting countries in South America, Australia as well, New Zealand as well, and China. Think Central Europe, Nordic Europe as vendors for the Eurozone. And you can see that these three economies are really the linchpins of where growth comes from. And We've already seen that the U.S. is very strong. The situation in the Eurozone is much more sobering, as we can see. The regional economy shrinking for the past 2 months, the composite index sub 50, even as services rebound in December. The situation in manufacturing, as it is globally, anemic, but the rebound that we saw in the first half of the year, arguably a big reason why this global number started to pop by mid-year, that has fallen away. And now the economy is again flirting with recession-like conditions. The situation in China is one of standstill. These numbers run through November. We haven't seen December's figures yet, but as we can see, these are official figures here. This is China's reopening from zero COVID restrictions. We get a brief pop in service sector and composite demand. The pop in manufacturing much more modest. And since then, after just basically a quarter of an initial upswing, the economy drops and settles into standstill. These numbers are barely removed from the center line at 50. So in one major node outside of the US, we've gone basically nowhere in 6 quarters. Indeed, the economy is in deflation mode, where real GDP is outpacing nominal, suggesting that there is virtually no demand to speak of. And in the other, we've returned to what can become recession-like dynamics. Once again, after this shallow recession-like dip late last year. So the world is operating on what is essentially one leg of the stool. It is the US that is powering global growth, and there is no plan B as we go into 2025. Where this becomes a challenge is in the US, inflation has stopped cooling and is starting to tick up a little bit. The most recent numbers for the Fed's favorite inflation gauge, the PCE index, showing that we're holding at 2.8% on core, and the headline number even moving higher, albeit a little bit less than expected, to 2.4%. Now, this is, as ever, we can see having to do with the service sector being as strong as it is, core services where that inflation lives, core goods still slightly negative in their contribution to price, which of course tells you why the US boom isn't spilling over, as we've just mentioned, and housing still largely locked up by what the Fed has done with hiking rates as sharply as it did in 2022. So that bit is waiting for the central bank to cut rates more and perhaps unlock this market. But as we start to get a tick up in core inflation, and indeed at 2.8%, what this means is essentially we have not seen disinflation in the US of any kind since June. June was the last time that we ticked down on core year-on-year PCE. Since then, for the subsequent 5 months, inflation has not fallen. And so what we understandably have seen as a response is the Fed has become more hawkish. The markets have called for it, and the Fed has responded. We can see here that where the policy curve looked like it was going in September has been adjusted substantially to a more hawkish setting, even as the Fed began to cut a little bit in the waning quarter of the year here. Of course, 50 basis points cut in September, a 25 basis point cut in November and December, respectively. Nevertheless, the path forward now much shallower. Rates expected to be a full 100 plus basis points higher, closer to 4 than 3 by the end of the year, because inflation has proven stickier. Now, It's possible that the markets have overcooked this a little bit because we can see that since mid-November, U.S. economic data has actually been cooling relative to forecasts. So maybe this adjustment has gone a little far. Maybe the markets are a little bit too hawkish, bonds a little bit too weak, rates and the dollar a little bit too high. But none of that changes the inflationary path. So although the markets might be wrong by a little, they're probably not wrong by a lot, and they're probably not wrong about the trend of adjustment here. So we're looking at structurally higher rates next year in the U.S. than we thought even 3 months ago, 4 months ago, and by a significant margin. This, of course, represents a problem not just for the U.S., but for the world over. So we can see here in the latest numbers from the Bank of International Settlements, and 2022 is the last time they had an update. There'll be another one next year. They do this every 3 years. But these numbers don't change terribly, especially when the disparity is this large. Notice, almost all global monetary transactions are settled in the U.S. dollar. Those of you that have heard various chatter about the BRICS maybe coming up with an alternative should look at this sobering total here. This is all of the turnover moving through the BRICS, of which, as we can see very clearly here, most is China. And everything else, India or Russia or indeed some of the others are clearly a pittance comparatively. Here's South Africa right here. So, and of course, there's Brazil. So most of what's here is settled in dollars, and that's because the dollar is so liquid that it is sometimes cheaper, even when there is a bilateral deal to transact from one non-US dollar economy to another. It is cheaper sometimes to trade that currency for dollars and dollars into the third currency versus to do a bilateral deal, because the liquidity of the dollar is so abundant that that's the cheaper way of trading. So not surprisingly, almost all global commerce is settled ultimately in dollars. And what this means is that if the Fed gets a little bit more hawkish and rates don't come down by nearly as much and dollar credit is more expensive, then global credit costs are higher in general. And we can see that as we look at the way that an average of interest rates from the key economies in Europe and the Asia-Pacific region, Germany, UK, Australia, Japan, the top 4 outside of the US, how their interest rates have moved in lockstep with the US 10-year, even as central banks in the UK and in Germany have cut. The Bank of Japan has hiked. The Bank of the central bank in Australia, the RBA, they've done nothing. But even as that has happened, the rise in U.S. yields has brought a rise in the average of the other 4 of the alternatives. And that just tells you how ubiquitous the dollar is in global trade. That, of course, sets up a very interesting situation for 2025, where the robust performance in the U.S. means higher rates in the U.S., but also higher rates on weak economies that are not seeing the boom that the U.S. is seeing. Moreover, since the world is dependent on a single point of failure, the U.S. economy's economic strength, it is certainly a point of interest that interest rates are set to be higher there, even just locally, because, of course, that would perhaps start to hold back U.S. growth, and to that extent, hold back global growth because there is no backup. So the risk to global economic performance is a significant thing to keep an eye on, and a significant risk for markets as the calendar turns to 2025. Moreover, the stock of global growth is huge by any stretch of the imagination at a time when interest rates are going to end up higher than expected, it would seem. We can see here the full breakdown from the IMF. We find that in debt to GDP terms, because of course, debt is not scary in absolute, it is only scary if you can't afford it. And debt to GDP tells you how affordable is the debt, are you producing enough economic growth to service it? And of course, in the COVID years, we can see there's a massive surge for global debt as well as for the major economies, the emerging markets, the US and China. The change in global debt was significantly lower in the subsequent years because inflation was roaring and inflating that debt away relative to growth. Well, that seems to have stopped for the world in 2023, where public debt is starting to grow a bit. That's mainly powered by what's going on in the US, of course, and China, and to some extent, emerging markets. But we are now in a place where inflation has come down a lot, almost everywhere, from double digits or close to them, to levels that are much closer, if not quite at, central banks' targets in the sort of 1 to 3% range, depending where you look. And with that, the shaving away of debt relative to GDP, so the affordability improvement that we saw here and here and here and here is ostensibly over. If you were to find yourself in a global scenario where the US buckles under higher rates, where already weak economies outside of the US have to deal with those higher rates without the benefit of stronger growth, you start to see how a treacherous debt risk starts to emerge. This is made that much worse because this particular US tightening cycle has been unique since the modern era. This is a chart from The Economist going back to 1972. Very important look back period because that's right around when the modern financial system as we know it is born, with the uncoupling of gold and the US dollar and the dawn of the fiat era. So what we find here is that in every other tightening cycle, they're listed here, the outlays by non-financial firms, that is regular businesses, on credit increase when the Fed raises rates. That's, of course, exactly the idea. The Fed is looking to slow inflation, slow the economy, and so it's raising rates to increase how much firms are spending to borrow, to discourage them from borrowing, and cool the business cycle. The 2021 to 2023 rate cut cycle has not done that. And the reason it's not, the reason that actually credit outlays mysteriously are falling even as rates go up, is because during the COVID years, everybody gorged on cheap credit. Well, that cheap credit comes due mainly next year and 2026, and at interest rates that are 200, 300, 400 times those that were incurred. If this happens at a time when GDP growth slows because rates are already high and going to be higher than previously anticipated, then of course debt affordability is that much scarier. Couple that with the most bullish disposition for risk sentiment that could be imagined. A survey here from the conference board showing in the US the percent of respondents expecting stock prices to be higher next year, off the charts. The allocation to equities has only been higher all the way back here at the start of the global financial crisis, and then back in the dot-com era. The allocation to cash has never been lower, looking all the way back to 19 the second half of the 1990s. And so what we find here is tremendously robust risk appetite, which of course is clearly on display when we look at this performance. Now, given the risks, one has to wonder. Optimism is always highest at the peak. This is by definition the peak. But is this the peak? Or could optimism continue to build? It certainly could. But the way the table is set, one does have to wonder if indeed we've reached that peak or close to it, and if equities are in for a rude awakening next year as markets digest all of what's ahead. And that is macro money for today. As ever, we are here right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. It is a holiday-shortened week, but we will be back on Thursday after market closures around most of the world, and we'll have 2 shows for you next week as well around the New Year's holiday before we come back to regular scheduling. You can follow me here and, of course, opining on the platforms formerly known as Twitter, as well as now on Blue Sky at Ilya Spivak. Thanks for watching. Have a great holiday, whatever you happen to be celebrating. Macro Money will be back on Thursday to finish out the week.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures there after that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions, and we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We're back. Tasty Crypto Show. I'm Ryan Grace. Of course, she's Shelly Van. Almost slipped up there, Shelly. Apologies. She's Shelly Van. It's like a tongue twister, you know. Tasty Crypto Show. It's Wednesday. We're getting through it. How you doing?
I'm doing really well. I'm excited.
Good.
Although I was just telling you off air that like I have that feeling that I'm forgetting something.
Oh no.
Forever. It's haunting me all day and it's just been getting worse. Normally it's like, oh yeah, it was just something stupid. Like, but this is just a lurker feeling that I can't quite shake. So.
Do you have to get gas in your car before you drive home?
I mean, no.
Groceries?
I've run through all the like logical things. It's something, I think it's like a task.
Have you bought your crypto today?
I did buy some crypto.
Okay. Check the box.
Yeah. Grumpy Mike is here. Hello. Dino in the house. Shout out to the chat. But yeah.
Hopefully more people show up soon.
Hopefully more people. Yeah. Say what's up.
Some of the gang is here.
Some of the gang. Do we have a question for the chat? What am I forgetting? That would be, oh, is this live now, Mom? Hi, Mom.
I don't have a question. Do you have a question?
What am I forgetting?
Okay, yeah, that is a good question.
Lovely.
Jose, what up?
What
Sorry.
up, Jose? No, that's why we're here. Let's see. Favorite? We've done all the like sweet things. What about savory? Like salty snacks. Do you have a favorite salty snack?
Can it be sweet and savory? Because I love chocolate-covered pretzels.
Ooh.
But if we're just going pretzels, you know those ones that I think it's like, it was probably a genius idea by the company. I can't remember what the brand is, but they're these honey mustard like pretzel pieces.
Nibs.
It's from the same company that makes the giant pretzels, but these must have been like the broken ones, and then they just mixed them up.
Snyder's?
Yeah, that's it, Snyder's. Yeah, that's my savory snack.
Okay. All right, that's
And
a good
Chex Mix, I like that too. I like all the snacks.
You are a child.
I am, at heart, yeah.
Popcorn will be the death of me.
Okay, yeah.
All forms, cheesy.
You drench it in butter.
I do like some, buttery popcorn, but really it's cheese, the cheesy popcorn. Like I dedicate a hand to turning orange.
Oh, you have to, yeah.
This is
Make
my
the
filthy-
sacrifice.
Yeah, like, okay, I just won't touch anything with this hand until this whole session is over. But yeah.
Well, let us know, chat. What is your favorite savory snack? And, they're starting to show up now. Love that blob. Laura's here. That's your mom, right?
That is my mom.
Osborne Graves. Ben.
Sub-Zero.
Hell yeah.
What's up, everybody?
So before we kick things off, Shelly, we've got to talk about your new show. You and Dan launched a show, kicked it off this morning. It was awesome.
Thank you.
If everybody missed it, is there an on-demand recording? Can you go back and watch, or do you just have to tune in again on Friday?
You can. It is replayable on X and YouTube. So we will be streaming to Facebook eventually, but I forgot that we don't have 100 followers yet because it's a brand new account. So everybody here, please go like Tasty Crypto on Facebook because we will be live streaming over there once we build out that account a little bit more. But yeah, we will be doing the bookends of the week, Mondays and Fridays in the morning. And that was so much fun this morning. That was our pilot episode. Little hiccups here and there, but we made it fun. It's all part of being live and running lots of giveaways.
Yeah, I was going to say, you guys are giving away money on the show.
We are.
And crypto.
We are.
And NFTs.
Yeah.
And other prizes.
Uh-huh. It's darn fun, a variety show. We're going to have some really cool guests that we've already got lined up, some founders in the space, some really cool projects, and we're going to do some real-time exploration. It's going to be awesome. I downloaded or updated OpenSea today. That was a trip. Did it live on air, so it was like anything can happen, but it was really cool.
Been a while since you were on there with all of your collection.
It hasn't. This is actually pretty new for that platform. Like I don't know when it went live. It's only been in the last like maybe couple of weeks. So yeah, and I got to use it today because I was transferring prizes from my wallet. So there's new features in there that are really cool.
So if you're watching the show, you can win your NFTs, and you have quite the collection, I understand.
Yeah, I could be proud, but there's a hint of embarrassment because it's a little excessive. But I'm proud of my collection, and I'm willing to share it with new friends.
I love it. Well, I think I got to catch a bit of the show this morning. It is awesome. I highly recommend it. Get over to our channel on X or follow us on X. Get over to our channel on Tasty Crypto on YouTube. And yeah, the next episode is on Friday morning.
Yeah.
Looking forward to it. Beans. With Shelly and Dan. Shelly Van and Dan. You're pulling double duty here today. What do you want to talk about first? We can go to the market, which honestly hasn't changed since 6 a.m. when we put together our market update. We've got a lot of great questions that we've been receiving in the Tasty Crypto support inbox. So if you're using Tasty Trade, you kind of have a broad, we can't help you with your account, but you have a big, broad kind of crypto question, we're happy to help out. If you have a question related to the Tasty Crypto app or just anything crypto related in general, hit us up. We've had a lot of questions recently about kind of the connection between Tasty Crypto and Tasty Trade, a few questions on the app. So we can go and do a bit of a demo day, I suppose, but leave it up to you, Shelly. Guide us. Where do you want to go first?
Let's get some price action. Even though it's not exciting, let's like get that over with. We got to know.
Yeah, let's do it. Let's jump into our slides really quickly. Have our performance dashboard just to take a quick peek at this. A couple things maybe stand out. Also, this is the same dashboard that was in the morning email. So if you don't receive that on Wednesdays and you want to, sign up over at tastycrypto.com. That goes for the Saturday email we send out as well. But yeah, just looking at where we are here, I mean, it's been pretty bearish. It feels like, at least for the majority of this month as we're making it through. It's the 19th, but last few weeks, it's just been pretty poor, I don't know, boring, but just frustrating price action.
I've received some very concerned questions around Solana from people deep in the trenches, that maybe this is their first season in the trenches. So that can be alarming for those of us that have been around in crypto for a while. It's like that roller coaster of like the whee isn't so dramatic. We're kind of like, yeah, we're going down. This happens. It'll come back up. We're good. Just long game view. But for anybody holding a big bag of Solana, what is your advice? Or not advice. We don't give financial advice. What is your opinion?
Yeah, in terms of how I think about it, I mean, I get where there's a lot of short-term selling pressure. A lot of what's happened that has probably made Solana interesting, and you look at some of the fundamental data that we've talked about that's been exciting around the fees that the chain is generating, the amount of new users, all of these meme coins or the tokens that have been launched on chain. That excitement has waned, and I think given what's happened recently with the Libra token, some of the other rugs, the blatant frauds that have kind of been launched, unfortunately, which, you know, is not specific to crypto when we think about fraud, but, you know, very quickly kind of bad actors emerge, and you've seen that on this platform. It's left a bad taste in people's mouth, and you've seen some selling pressure, but I think that's going to be short-lived in terms of we'll move past this. It's not like it's Solana crashing on its own. Everything has traded pretty poorly here. I think there's some macro drivers. You know, it can't go up every day, obviously. You're looking for a bigger catalyst. Most of that is kind of priced in. There's a lot that's happening, not necessarily specific to Solana, but in crypto, when we look at institutional adoption, I think there's a lot of bullish drivers that are out there. But for many people, the time horizon is like overnight.
Yeah.
And so I get it. I don't think this is specific to Solana. And I think we also forget how volatile these things are until they go down. You experience more volatility actually on the upside, but it feels good. And you forget, how big those moves can be to the downside. So we look at Solana here at 170, 174, actually 167 if we have an updated price. It's kind of hanging out towards the bottom of a recent range. Whether it holds on there or not, it is not trading very well. The other way that I would look at this is against ETH, against Bitcoin, and we can jump over to that in just a second. But yeah, you can clearly see here that it's been one of the relative underperformers against Bitcoin. But that said, not much has outperformed. Maybe bizarrely to me, Litecoin has outperformed, whispers of an ETF. Ripple, love it or hate it. I don't know what justifies the valuation, but that doesn't matter. That's been a fantastic outperformer. But Bitcoin Cash, Doge, ETH, ETH has been trading pretty poorly for a long time now, and we're starting to see that spill over into Solana. Bitcoin's held up okay, but I wouldn't be too worried about this long term. I don't think this is it for Solana.
Yeah. Jose loves Solana at this price.
There you go.
Sounds like he's buying.
Yeah, I've been buying some. I'm not putting everything I've got into it, but when you pull back to these levels and you look at something that was 280, 290 or so, we're about $100 lower than where we were just a few weeks ago. Maybe there's an attractive opportunity. Hopefully it goes back up. This stuff is, again, just very volatile. We forget how volatile it is until it goes down. So I don't know if that's helpful to anybody, but
I think it's reassuring.
Well, what we've seen is, this has been breaking down and we're getting these price momentum signals that we've gone from bullish to neutral on the weekly, and that's one step away from going to bearish. And when those things happen, you can see it here with ETH, maybe less of a reason to buy it while it's kind of trending lower. Doesn't mean it's going to stay there, but that's just how we use these signals. So
we have a question, JMG 1001, what justifies the SOL valuation?
Yeah, I think that, when you look at what's happening on Solana, what justifies any valuation here from a fundamental perspective, I would look at the fees or the revenue that's being generated on the chain, right? You have to pay a transaction fee to interact with the network to process a transaction. So if we see fees going up, that's going to be, pretty good representation of more users. Can that fee revenue be maintained if we're not seeing new meme tokens launching all the time? We'll see. But that's a use case that kind of popped up here recently. I don't think it's going to go away. There will be more use cases, but ultimately it's, what is happening on chain in terms of development activity? Does that lead to more utility, more use cases that then brings in more users that then supports us from a fundamental perspective in terms of revenue generation, if you think about it as a business? And when you look at it from that perspective, there's a lot of positive signs. Now, it doesn't mean that it's going to go up every single day, and we know that these things are wildly volatile. But if I'm looking at the fundamental picture, it looks pretty good. But at the same time, what matters today is the price, and the price action has been a bit disappointing. But just a month ago, we were $100 higher.
Right.
And maybe in another month, we could be $100 lower. That wouldn't be good. But my point is that these things can change in an instant.
Yeah.
So the one thing I will just kind of throw out there for anybody that's looking to kind of dig into some of this a bit more, DeFi Llama, Token Terminal, if you go to some of those dashboards, you can get a good sense of what we're talking about. You can see the fees. You can see TVL on Solana. You can see the amount of stablecoin trading volumes and activity on the chain. And if those things are going up and to the right, regardless of the price, I think it to some extent justifies kind of the future outlook.
Very good. So we have 10 minutes left.
Oh, wow.
We have to get to the demo, but we do have one quick question from Demi Moonbeam. What's the minimum amount of Solana you need to participate in liquidity pools?
I have actually never created any pools on Solana. You can do that through Radium or Jupiter. Given that, I think the only thing that really holds anybody back is just the transaction fees, or with ETH, the gas fees. I look at Solana, though it's an L1, the economics in terms of the fees going to be similar to an L2. So I don't know. I mean, $100 is probably the minimum, or $50 is kind of an arbitrary amount, but I don't think you need much. Whereas if I'm going to do something on ETH, and it's definitely changed, but it's hard to create a liquidity pool even with $1,000 if it costs $50 to deploy the pool,
Right.
Versus the fees you're going to generate off of that that capital. So with Solana, I don't know, $10 maybe, but your return in dollar terms isn't going to be that large.
Right. All right.
So hopefully that answers the question.
My partner in crime, Dan, is here, and he's saying join the Discord. Yes, join the Tasty Crypto Discord, please. That is where we are reactivating the Tasty fam, the crypto fam. Everybody's welcome.
I'm excited about that.
It's going to be really fun.
Yeah, we can finally support it, hopefully foster community in there. I know there were a lot of people early on that were showing up, and I apologize, we weren't at the same time, but we're bringing it back.
Bringing it back.
Dan's leading the charge, and you guys are doing a fantastic job of that, so I'm excited.
So what else do we have here? Expected moves, and then we can dive into platform.
Yeah, let's jump over to the Tasty Crypto app in just a second. But before we do that, let's just quickly take a look at expected moves here. I think this is good just to set expectations for the week, given where spot price is and volatility. If you've been following the show, these expected moves have come in quite a bit. So previously, and really around these same spot prices, we were closer to about an $8,000 expected weekly move for Bitcoin. And that's just a one standard deviation move. Expectation is that you're going to trade within that range for 2/3 of the time, basically. ETH has been a bit sticky at 250, but the tighter range here with Bitcoin is just a function of volatility absolutely collapsing. And that is something to take note of. Implied vol in here is actually, the updated vol is 49%. So we ran the numbers earlier at 51%. Realized is 33 on a 1 month basis if we annualize it. And when you rank that, and what we're doing there is just looking at, okay, the implied volatility of 51%, where is that number relative to all the levels it's traded at over a 3-month period, 6-month period, or a year? It's close to zero. What that means then is that these levels of implied volatility, option premium, what traders expect in terms of movement, are at some of the lowest levels on the year, certainly some of the lowest levels in the last 3 months, which is a function of just how wildly volatile it was with the election and everything that's happened in the past couple of months. So you can't read into that shorter time period too much, but volatility has come in a bit. Will it go back up? Maybe. It can go a lot lower. Just know that characteristically, this is pretty low for what we typically see with Bitcoin.
Mm-hmm.
So tighter ranges when volatility comes down, volatility widens, you're going to get bigger ranges.
Makes sense. Makes sense.
So yeah, that's where we're at with the expected moves. A little bit of the performance dashboard, but really, again, it's been pretty boring out there. Frustrating for both the bulls and I guess even more so recently, if you're short the bears, it's not really going down either when we look at Bitcoin.
Yeah. Grumpy Mike, more users, as in some application for the coin generating the fees, or is it just more speculative buy-sell generating fees?
I would look at it as more users on chain. Are more users participating in the Solana ecosystem, on the Solana network, however you want to think about it, right? You have a blockchain that decentralized applications can run on top of. More users of those applications is synonymous with more users of that chain. Mm-hmm. And I think generally speaking, this is true of everything, right? If more people use Bitcoin, there's increased demand, there's limited supply. More people use ETH, Solana, et cetera, it should have a positive impact on the price. It's not necessarily going to be one for one, but if there's increased demand for something and you need Solana to pay transactions, it's part of the ecosystem, trading pairs are based in it, you're going to likely see the price go up.
Mm-hmm.
If people are shunning Solana because of something that's happened on chain recently, well, price is going to go down. But I think, again, that's temporary. The one other thing I would add to that is that there is a lot that's going on in the ETF space where it is seemingly likely that we're going to get a Solana ETF sooner than later. It seems as if we will get for sure a decision on the Solana ETFs that are in review right now. Hopefully they're approved, but that is another potential catalyst. So again, I wouldn't read too much into just the short-term volatility here.
Yeah.
I'm not of the view that this was it for Solana, and it's going back to FTX prices. This is something that has survived the very worst of what we've seen thus far in crypto.
Okay, pressure's on. 4-minute,
I don't think we can do it. I think we're gonna have to kick it to another day. I guess we can show and talk about a couple things in the app. Let's do that.
Yeah.
So if we can throw the app up on the screen, and I think it's up there, but let me just double check. Yes, beautiful. So we've got the Tasty Crypto app here on the screen. This is for iOS and Android. And the one thing that I do want to answer, Shelly, is just to show everybody how you can connect this to your Tasty Trade account. Once you've connected it to your Tasty Trade account, you can transfer crypto that you have with Tasty Trade or with Zero Hash to the wallet address that you control here with the application. The new version that's coming out will also allow you to buy it right here in the app. Now, that will still be in your Tasty Trade account, but you can do it all with one interface, one platform. So that's pretty cool in my opinion.
Super swanky.
Here's how you do it. So this is already connected, but all you need to do, you have the Tasty Crypto app. This is on chain. This is your self-custody wallet. You want to connect it to your Tasty Trade account. This is assuming you've got crypto trading enabled, you've got crypto transfers enabled. All you need to do is you go to the menu and you're going to go to Tasty Trade. And I have previously logged in. So now I'm active. When I click on this, it's going to tell me that I'm already logged in. So I'm in here now. And now that I have the connection, if I go to click on add and I click on Tasty Trade, you can see the balances that you have here. It's going to take a second to load up. I know that this one at the bottom is the one that I have the crypto trading enabled on, and also the transfers. And so this is going to give me the ability to withdraw crypto. And the two assets that I hold with Tasty Trade right now that I can bring over to the wallet, so you can move over Bitcoin, ETH, and Solana. The wallet itself doesn't yet support Litecoin, Bitcoin Cash, or Doge, or Ripple, all separate chains, things that we can add. Primarily an Ethereum-based wallet. We do have Solana. You got L2s on here like Base and Optimism Arbitrum, and of course, Bitcoin. But what I hold right now at Tasty Trade is just ETH and Solana, so a little bit of each one here, not quite an ETH. If I want to move this over, I just click on it, and let's say that I want to transfer $5. So I can put in, that's 5 in ETH, but let's go 0.0005. So not quite $5, but $1.36 for this purpose. Let's go a little bit more there. So there we go, $2, review transfer. And actually, you know what? I can't open it up on this because I have my other authenticator on my phone, but we can walk through what this would do. You would go in and you have to have 2FA, so two-factor authentication turned on in your account for security purposes. Type that code in. If I had the ability to do that here right on the show, not prepared, apologies. But once I put that code in, it would take me to another screen, and then you just confirm the transaction, and everything else is gonna happen under the hood, and your crypto will be withdrawn from Tasty Trade to the address that you control here, and you'll see that balance eventually after that occurs. If I get all the way back to the home screen here, you'll see that Ethereum balance then update. You can see that in your activity. You can then trade that for other tokens.
Yeah, you're on Party Island.
You are on Party Island once you move that ETH over. Yeah, and so there's a lot that we're working to improve the experience, build better bridges to Party Island. But today, when you're logged into your brokerage account with Tasty Trade, you have crypto enabled, you got the 2FA turned on, you got the transfers taken care of. But you've gone through that process, and you only really have to do that once. But once you've done that, then you're free to move crypto back and forth, use the exchange functionality that exists via Tasty Trade and Zero Hash. But when you bring that, that crypto on chain, you can stake it via Lido. You can create a liquidity pool, Uniswap, or directly in the app, you can swap it. And so if anyone isn't familiar with how this works, and this is across multiple blockchains too, it's not just on Ethereum, but you can see here some of the different token balances that I have. Let's say that on the Base network, jumping from L1 to L2, I have $100 or so in USDC on Base. If I even want to buy more ETH on Base or another token, Virtuals Protocol, for example, one of the AI launch pads that we've talked about, you can do all of that right here directly in the wallet. So if I wanted to swap all $110, I'm going to end up with a little bit less. There's a little bit of slippage, there's a little bit of a fee in here, but this is a way that you can swap, and this is all happening directly on chain, which is cool. This is outside of the brokerage ecosystem. If you want to move it back into your brokerage account and then subsequently back into your bank account, you just have to deposit it back at tastytrade. But once you move it out, you can do whatever you want. Your keys, your crypto, right?
That's right.
Party Island.
Party Island.
Wasn't quite a full demo, but I think we covered a couple things. And again, that's how you would go in and just connect to tastytrade within the Tasty Crypto wallet application. There's a lot more coming soon.
So much more. We almost spilled some very big beans on the show this morning.
Oh, no.
Yeah. So
You're letting the secrets out, huh? That's okay.
it's the point. Beans.
Yeah.
Spill them.
What did you, I mean, I guess
Well, yeah, I can't really tell you, but
new features, new things coming to the, what were you alluding to? Okay.
Yeah. Tasty traders specifically will be very excited.
Ah, gotcha. Okay. I think I know what you're talking about. Yeah. Shelly and Dan are cooking up some really cool stuff in the cave. We should get that out, I would imagine, in the next couple of weeks.
Yeah.
So some cool things there. Can't really speak to it other than saying we're doing cool things. But on the wallet app side, there should be a new update that goes to the iOS and Android stores this week. And then next week, presumably, it's approved. It's available for download. That'll have the ability to buy crypto. Some really nice improvements. I know we've had a few bug reports recently, so thank you everyone for that. We've got the fixes in place, and some nice, updates to the swap, and then that watch list feature that's got a really cool new news component. So we'll do a more in-depth demo once that's available.
Yeah.
But I think we've run out of time.
We have. But that was a good speed round. Well done.
Yeah. Sorry we spent so much time just talking about the market not moving.
That's fun stuff.
Next time. Well, Shelly, as always, thank you for coming on the show. And again, if you have not checked out Beans, get over to the Tasty Crypto YouTube channel, subscribe to the channel. The show is every Monday and Friday, 8:30 a.m.?
9 a.m.
9 a.m.
Central.
9 a.m. Central Time. It's an awesome show. It's a lot better than whatever I'm doing here with this. So make sure you check it out. But I will be back next Wednesday, so I'll be off on Monday. Shelly will be back with Beans on Friday. Until then, I'm Ryan.
I'm Shelly.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Calling all traders.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was.